Good morning, sir. It's Monday. How are you?
Good. Monday.
Really? That's the best yet? Good?
You're
not excited?
I'm very excited.
Yeah,
very excited
I can tell.
for this week.
What's going on with the hair?
It's actually not looking bad. It's not looking bad.
Okay.
It was. I couldn't wake up this morning. It was really hard to wake up this morning.
Was it?
I don't know why.
Well,
very
you were all
tired.
curled up with your special someone and.
Something like that. You're talking about Scout?
Yes.
Okay. Yeah.
See, it's so freeing knowing that she doesn't watch. It's. You can
do whatever.
Yeah.
The sun is rising earlier. It was a beautiful Sunday, and I think it's supposed to be a beautiful Monday here in Chicago. And for whatever reason, I just couldn't get myself out of bed. It might be because I watched 6 hours of Dune.
Oh.
Have you heard of this movie Dune before?
Dune, the old Dune or the new Dune?
I didn't even know there was an old Dune.
There's like a 1980s Dune that
Definitely
like
didn't watch. And Chalamet, I don't know if his parents were alive for that one, but
and
I loved it. What?
Okay, good. Because it's really good. Yeah, it's really good.
So you like Dune?
Absolutely, love it.
I would have bet a healthy sum of money you wouldn't have liked.
I was
Dune.
up 3:10 Sunday morning, and I was like, okay, I'm going to do it. I'm going to turn on Mission Impossible.
Fallout? Which one did you watch?
I don't know which one it was. I want to say 7, but okay, here's shocking. There was a 20-minute car chase. They all have 20-minute. They are all they are is a series of 20-minute car chases.
You love action movies, though.
But
thought.
It's got to have a plot.
Yeah, it doesn't. The plot doesn't really matter.
There was a bot that was in a submarine, and the submarine.
Yeah, that's
crashed.
the most recent one. That's part 1 of. They're about to put out part 2, in 3 weeks. Yeah,
that was painful.
You didn't like it?
There's no plot.
It's not as good as the one before. It's Fallout. I think is the one that everyone at this point is like that's the best one.
He races the cars through Venice. It's either Venice or Florence or whatever.
Yeah. Again, it doesn't really matter.
Okay. All right. Well, I know he's going to escape because there's 80 more minutes a minute movie. So.
Yeah, you're right. That is the one where he gets into like a small car.
Yeah, gets in the tiny car after
he's
out of the Aston Martin or Ferrari or whatever he was in.
Yeah, not as good that one.
No, it just was. I couldn't do it.
I can't believe that you like Dune though, because there's like 20-minute stretches of like we're just playing in sand. Like there's not a lot of action. There's not a lot of talking.
It's good.
What is it about it?
It's good. I mean,
it's 3 hours. They're both like 3 hours.
Yeah, but there's enough plot and enough twists. I thought it was really
I didn't think you
interesting.
were a plot guy. I thought you were just a straight up action guy.
I watched James Bond this morning.
Okay.
And
which one? Who's James Bond?
Spectre.
So this is the recent one.
No, it's not the most recent one. It was like the one before, I think. I'm not sure, but at least it's got like.
But it's the recent guy. Who's the
Daniel
James
Craig,
Bond? Craig.
Who retired.
Okay.
Yes.
Yeah. And they haven't done any James Bond since Craig retired.
No, I don't think they've announced who the next. It's possibly going to be a woman. It's possibly going to be.
Well, now that Trump's in the White House, I think they're gonna nix that.
I don't know. It's just, I don't think they've announced who the next James Bond is going to be. So
I'm just joking. But yeah, I really liked Dune. I liked Chalamet. I liked.
So you watched them back to back.
Who was the guy?
That's
he's
a
like,
lot of movie time.
He's like the creepy guy. Batista? Is he the first one?
Tony Batista?
Not
That's
Tony Batista. No, who's like the big muscular guy? He plays like the first bad guy. He's still around.
The guy with the beard who played Aquaman? No.
Forget it. But then I didn't know that
because the guy Justin,
Austin Butler.
Austin Butler,
because he's like his brother or cousin or whatever in the second one.
Oh, that guy, yeah. He was good in that too.
I couldn't believe that it was him.
Yeah.
Callie had to tell me like an hour or two into. They'd already done like the Coliseum scene and everything, and I was just like, "That's him."
Yeah.
Totally couldn't tell.
And you got the guy who was in Deadpool. The older guy who was like the.
I'm the worst at this.
He taught the young. He taught Chalamet how to fight.
Rebecca Ferguson of Mission Impossible fame. She's
Josh Brolin.
She's the mom. Javier Bardem.
Yeah, Josh Brolin.
Josh Brolin.
Yeah, it was good. Yeah, they're all good.
Skarsgård is even good.
Yeah.
I couldn't believe that. But yeah, I don't know.
And Jason Momoa was good. They were all good. It's good plot and everything.
I just couldn't believe. I would have imagined, just looking at the timing on the film, that you would have been out instantly.
I don't think I would have watched 6.5, 7 hours of it, but again, I don't have the luxury of your scheduling. So
well, because I spent $1 million on that Japan trip, I actually can't go anywhere for the next at least 3 to 5 years. So I just sit. It is a funny concept though, because we pay so much for these different streaming things. Like
yeah,
I
I got my Comcast bill and I actually printed it out, and I'm like, this is all wrong.
Because are you buying like pay-per-view rentals?
I've got
$4 to watch this.
I got the 184 channel package, which is, I'm sure, a lot of NASCAR or Bake-Off stuff that I'm not interested in. And then I've got supposedly the 1 gig up and down, which I tested, which is like 432 megs. And I'm like, this is not, and it's a huge bill. So it's all, and if you have a box in each room,
oh gosh,
you got to pay for the box.
How many rooms are you watching TV in?
We have a family room, and then there's like a porch area, and then the bedroom, and one upstairs. So it just, it's like, it just.
I got a solution for you. One big room. I'll knock out all you and me. We knock out all the walls.
Sounds good.
One room, one box.
No, I spent 2.5 hours yesterday fixing leaks in my basement. I turned on.
Jeez, your life.
I turned on all the water to the faucets outside, and of course, one of them, the little connectors, soldered, started leaking. And then Michelle taps me on the shoulders, and she says, "By the way, did you see that pool of water over there by the dehumidifier?" And I'm like, "No, I'll get on that next." So it's been a wonderful
Does part
weekend.
of you get excited when something like that happens, where it's like, oh, dang, a leak, like that sucks, that's annoying. But then how long does it take you to convert to like, oh, but I am excited to get to my tools?
No, because I put both these things in.
Okay.
So they should work flawlessly forever and never break.
Oh, wow.
So that's my problem.
Got it. So it's like a competitive thing.
Yeah. And it was one of the pipes had gotten nudged when stuff was being moved in the basement. So that was what caused a little leak there.
Man, I'm sorry
it's
about
really
that.
Exciting.
No, I was able to watch just 6 hours of Chalamet in the desert. It was pretty sweet.
Look at you, Olivia. See, that's my target.
He drinks that blue
moving
water.
to a box in the sky.
Yeah. It's just beautiful. That director, pretty cool. You ever seen that Sicario movie?
I love Sicario, both of them.
Yeah. Wait, what? There's 2 Sicarios?
Yeah. Dawn of the Dead, I think it's what it's called.
How many? I need to get Claude in here.
Oh, God, you and Claude. I'm surprised you can find your way in without Claude's our AI tool.
There's 2 Sicario movies. I didn't know that.
Didn't I say that 30 seconds ago?
I didn't believe you. It's funny because I texted my dad.
They both have Josh Brolin and Javier Bardem. No.
What's his name? Benicio del Toro. He's unbelievable.
He's
in that
good in
movie.
both of them.
Really?
Yeah, he's really good.
I didn't
in
know
both.
that there was a second one.
Yeah.
It's funny because I texted my dad, my biological dad.
Emily Blunt wasn't in the second one.
No, they couldn't get the contract worked out.
I can't believe they haven't made a third, to tell you the truth.
Really?
Because they were crowd pleasers.
Is it the same director that does both of them?
I don't know.
I texted my dad, my biological dad, loves Dune, and he was like, I was like, oh, have you seen Sicario or Arrival is the other one that this director, I don't know if you like Arrival.
Is that with the thing in the whale swimming in the water?
It's not I don't know if there's a whale.
Well, there's creatures swimming in water.
There's like big creatures.
Yeah.
And he responded.
See, they're not enough plot. Too much whale.
And he responded, "Yeah, I like both Sicarios." And I went to Cali.
We're gonna go.
I think we're gonna have to find a home for my dad.
Yeah, we're gonna go make fun of old man. See, unbelievable.
All right, let's get into it. It's not getting any better.
Okay, let's make fun of this.
Relatively unchanged. Equity. I saw everything kind of dip last night. A little bit of comeback for some stuff, but yeah, quiet first handful of hours before the U.S. session. Only thing that I can really tell is a slight continuation of dollar strength
Cable's still good
against euro and against Swiss franc here.
Yeah.
But that being said, not really moving to any new levels. Strong week last week, obviously for a handful of assets, right. U.S. dollar included. What are you thinking with all we really have is confidence going into this week that they haven't sold into it? Because you go back here throughout April, and I know we're about to wrap up April, and you haven't seen more than 1 or 2 days of continued dollar strength, equity strength, crypto strength, anything. Well, and now we've seen 4 or 5, a full week, I guess.
We had 4 days of up equity moves in the U.S. Crypto, Bitcoin back above 90, well above 90.
Yeah.
Close to 100 before it gave back some ground last night.
Yeah.
But that out of everything has truly been Teflon.
Yeah.
I mean, everybody, next step is into the mid-60s. And not quite the case.
For the Bitcoin piece, yeah.
Yeah. And I think what we're seeing is gold, 3,300, got down to 3,280 last night. Mm-hmm. But again, $250 off its highs. So a big move, 8%. But no sense that, hey, we're going to take the freight train right back down to $3,000. Sure. So I think what we're going to do is markets get tired. I know that sounds trite to say, but you're going to see them be a little less elastic than last week, I think. Still some back and forth, but I think the idea of seeing new highs and lows in anything is going to be much more challenging. And that's good if you're looking to trade ranges. I think you have to accept the fact that, the low end of the euro maybe is slightly below 113, not 105. And I don't see us, there's a BOJ meeting this week. Non-farm payrolls start on Friday.
Yep.
Again, worst number in the world to actually gauge anything from. But we may get some movement off of that because no one can figure out if all the firings that took place in...
How meaningful it is for the U.S. economy.
Yeah, because there's now, the courts are coming back and saying all these people the government laid off actually have contracts and you can't just terminate them in that fashion. So I don't know. Will that move us? I doubt in any meaningful way.
Yeah, it doesn't feel like
the T word doesn't seem to be that interesting. The president spoke at 1 o'clock on Friday. They knocked equities down. NASDAQ broke 150 points from the highs. So it was like, they're going to roll it over. And he was talking, I am talking to China at the same time China's saying, nobody's talking to you. Mm-hmm. They brought it back up to the highs.
Immediate.
Yeah.
It was like...
We got half an hour.
It's funny because it looked like... It was like, okay, this is the exact timeline for, 1 to 3 days of strength in all these assets.
Shake it out.
And then now they're going to take it all the way back down. And it was all of an hour, if that. They bounced everything into close last week.
I think practically we start to go back and look at have our friend Glenn run us the latest 1 standard deviation daily ranges.
Because up here, we're getting tighter.
And we're going to start to look at those as being a little bit more for, I don't want to say the more aggressive trader, but the more engaged trader, the more back and forth trader. We're going to start to use those to determine where, for the last 2 weeks, we've been talking about we're adding more to it. There's more general volatility. That's a 30-day average. We're in a higher volatility.
You're coming off these moves.
Right.
You've got a handful of data points in here that are 100-plus point moves. If you're looking at now the last 20-ish days, you have maybe 200-point days, and then you have a lot of 30, 40, not even. Look at the closeout last week. You have 1, 2, 3 days, 1, 2, 3, and then to start this week here, Sunday, Monday.
And that's not bad. It's just
20, 30, 40 points.
After periods of vol like this, markets get a little tired.
Yeah.
Everybody kind of steps back a little bit. Doesn't mean we can't trade 112 or back up to 115.
We'll take a look in March here, coming off of that first week, and then we saw plenty of nice moves up above 109 all the way down under 108.
Right. And I think the for any of us who are stuck, in other words, that 108 to 110 range, which works so well, we got stubborn and we still have them. The idea that, okay, the market's tired now, that means we're going to revert right back to 111, and eventually I'm going to be able to scratch those. That's going to be a tougher sale. That's going to be a tougher trade.
Sure.
I'm more inclined to accept the ranges as where they are and trade around them a little bit. I think you're getting a little bit here where if we look at this, we're trading towards the bottom end of it. If we go over to cable, though, we're seeing a slightly different story.
And the cap on that piece, if you think about, if you're saying, okay, well, Pete and Frank, well, if it was 108 and 110, what are you looking at now in this environment? Because we also we are a little bit, we'll get to the schedule in just a second. FOMC is about 10 trading days out, 7 or 8 trading days out, a week from this Wednesday. And so that also is kind of looming in my mind of like, how many huge moves are we going to get leading up to that FOMC? To your point, the non-farm, it's non-farm on Friday. How big of a move is it going to be with the idea that in 2 days, 2 trading days from that non-farm, we have, the first Fed meeting since Trump has been calling for Powell's head. You take out this one day in here where we stayed above 114, and 114 we've traded several times and been unable to stay above it. 113 to the downside here, we've hit a few times in the last couple of weeks and been unable to stay below it. Now that's a 100-point range, but I'm looking at that 114 and 113, maybe down to 112, whatever you want to say, as essentially
it's your new value area.
Where it might be interesting, and we'll have Glenn crunch the numbers for tomorrow, looking more like 30, 40, 50-point days as opposed to 2 weeks ago, we were looking at 60, 70, 80-point days.
Right.
But let's take a look at that cable market in here, because this one you're infatuated with a little bit.
Well, just the euro, the first thing I'm looking at is what sets up easily is, to me, 112.90, 113, because you know where you're getting out. Anything below 112.5 means, they're going to try.
Maybe they're going to try to take this down.
Maybe.
Yeah.
Here, if you're dying to sell something that's been on a run, I mean, where 133.70 to 134 gives you that same setup, and if you're wrong, it's 134.35, and you're pulling the trigger. So this is not one where I would say, here, I want to buy the 133s on the pullback.
It's interesting, to your point, one of the only ones on the board that is stronger here against the U.S. dollar going into this week. Like we noted, euro giving back a little ground, Swiss franc giving back a little ground out of those European currencies. But, 134 is the pretty much stone cold high in this market, and we're 133.40 right now.
So let's look at euro sterling. We just talked about the two outrights. Let's look at the non-dollar pairs, just the relationship of the two.
Because, obviously you're going to have this huge euro strength in here.
Right.
In those first couple weeks of April where euro was outperforming everything. But, man, this sterling has been the strong piece closing out April pretty much probably against every asset. I bet it would be the same thing when you're looking at pound yen as well.
Now here, it's basically, I don't mind buying the euro here, I sell in sterling here. I could trade both those in a single trade right here, and then this setup around 85 cents, 84.90, 85 cents. I think this, in terms of, we tried the highs, we've pulled back this level 1, 2, 3, 4 times. Kind of the around 84.80 to 85 was the old high. Structure-wise, this sets up out of the three. I guess if I was to pick them, I'd probably be selling cable first, buying this second, and then figuring out. And in essence, this gives me both those trades. So let's me buy euro at the low end, let's me sell cable at the higher end. And if you like that, doesn't mean you can't trade either one of those. You just tuck this one proportionally. You've got this exposure, and you don't have to figure out, do I need 2 of these futures against one of those futures? Or I'm not bashing futures. It's just the nature. Every product comes with good and bad. The ability to express your opinion on product is a little bit easier with these right now. So.
Well, and also, if you're taking that concept of, all right, in April, everything in the Forex space moved to new territory.
Right.
Okay. But now to close out April, we've seen kind of a conclusion to that run. And I'll run through it for the U.S. dollar pairs really quick.
Yeah, that's a little bit. It's a normalization trade a little bit. Yeah.
U.S. dollar, Japanese yen gets down all the way below. I mean, breaking down below 150 was a goal in and of itself. Getting all the way down to 140. Now it's kind of split the difference back to 144. Dollar Swissy gets all the way down close to 80 cents, which is, I think, the low going back the last decade plus. Now bounces back to about 83. Okay. Euro, new range, all the way up to close to 116, and that's going to be the highest in at least the last couple of years. Now back down to 113.5. Sterling, one of the only ones that isn't giving back that much ground, not kind of normalizing out. So if you were looking for, let's say, dollar value, and you're saying to yourself, well, I missed it. I missed the dollar low 2 weeks ago. This is the one that maybe has the greatest dollar value. But if you're looking at the rest of these and you're like, man, I don't know how much opinion I have of the dollar, but I do respect that we're in new territory. This cross here, this non-dollar cross, out of all of these markets that moved to a new territory here, has given back, out of everything I just showed, the most ground on a percentage basis. I mean, going from this old high of 84 up to 87, a 300-point move outside of that old high in this market, and giving back about 200 points of that, 2/3 of that move, that's way bigger than this dollar yen.
It's a nicer pullback in terms of percentages than any of these. Absolutely.
And it takes that dollar piece out of it if you are, stuck in a dollar yen trade or a Swiss franc or even if you're stuck short cable right here. This at least lightens up some of that dollar exposure if you're looking to long this and be short that pound against the dollar.
Right, and as U.S. traders, we're used to seeing everything priced in dollars. And again, we're trading two non-dollar things here, euro, sterling. The great news is platform does all the work for you.
Yeah.
So your P&L will be showing to you in dollars in real time, which makes it very easy to track. Again, they're all scalable. You want to take a quick pick at the calendar or commodity currencies?
Well, yeah, and just so you have your non-dollar pairs all down here. You could take a look at that. And yeah, I just did want to highlight, though it is a busy week as we get into the middle of it, we got the JOLTS number tomorrow. We've got a slew of European GDPs on Wednesday, and the U.S. GDP and the U.S. personal income and PCE on Wednesday. It gets lighter towards we have a BOJ Wednesday night.
This is surprisingly heavy for an end of the month.
It's a good amount of numbers.
You get a good start of the month.
The only thing that I am a little bit, if you're looking for big ranges, I just look at this FOMC that's on the 7th.
They haven't built anything into that, though, have they?
Not really.
It's all about the 130.
It got as far as maybe like 20 or 30%. We'll take a look at it. Chance of a cut, but I think maybe just a lot of people, maybe a little bit of a vol quiet period leading into that. But we'll see. I mean, plenty of data around Europe and the U.S. Throughout this week. But we'll have to look at the ranges with Glenn tomorrow because I have a feeling that, they're tightening. You just see, this is the daily chart and not a lot of huge days. So if you're looking for 60, 70 point moves in euro dollar, I don't know if this is the week that you're going to get them, but we'll take a look at the math.
We'll see. Yeah. And we can always have the T help us out.
The T?
The tariff. Tweet. The TT.
It's been good for vol so far, but with that, we will pass it on to Tom, Tony, and Vanetta coming up next. Stay tuned, everybody. Peace.
Stephen and Lan, thank you so much for holding.
My pleasure, guys. And let me go on record as saying I think you've got Tasty Trade is the best brokerage, and you guys have the best content, and I'm not here just schmoozing. Y'all are the best on the planet, period, for what you do. Go on record as saying that. Tom,
Thanks.
You were the great disruptor when it came to forming Thinkorswim and then Tasty Trade. You're an innovator.
I appreciate you calling in. Good stuff as always. Thanks, man. the market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to tastytrade. So spread the word and earn rewards. Terms and conditions apply.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at tastylive.
Forbes called us best online for options trading. With stockbrokers.com, we're number one for options and futures trading. So what else can we say other than boom? Trade like a trader. tastytrade. Make your move.
Craig in New York City, what's up?
I just want to say, I've been with you since the very early days of Thinkorswim, and traded all kinds of markets here and there. And I got to say, I could be off so much worse if it wasn't for what you guys have sort of drilled into me over years and years and years. And so I just want to thank you, because you could have easily just taken the money and run when you sold Thinkorswim, and you didn't, and you started this. And you basically have just given me this full education in this thing that was completely foreign to me many, many years ago. And so even though I've lost money in the last few days, you've saved me a lot at the end of things. It's like losses could have been catastrophic, and they're not. Cool. So I appreciate you.
I hear you.
I appreciate you guys. Thanks so much.
Thank you, man. And I appreciate you holding on the line to say that to us. So thank you.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
I'm just gonna wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people want to buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants the stock at lows. But it's hard to buy high and sell higher, rather than buy low and sell high. There is a phrase for this. When the time comes to buy, you won't want to.
So I started trading in the equities market when I was 18. Real basic ETFs, mutual funds. I didn't discover options and really tastylive until about 2012. It made sense to me from a risk perspective. And so I started trading and never really have looked back. The people you see that's who they are. They're trying to be as open and clear as they can with the trades that they're putting on. Teaching a methodology, like teaching the logic behind things. It is tried, true, and tested. They back it up with research. They share that research. It's not just trust us and do this, which is a very dangerous thing in the financial world. But learning about that in the tasty universe it starts to prove itself out, right? When you follow the methodology, you'll see those profits, and you'll understand why a position did what it did. You know, sometimes the market wins, and sometimes you have a 90% winner, and you don't know, why don't I do this every day, right? This is easy. But you kind of have to reset that and just go, okay, close the trade and move on to the next one, which is really what Tasty's about.
Now don't screw up. You're the weakest link here.
You guys introduce yourselves.
I'm Tony Batista. He's Tom Sosnoff. You didn't know that? I don't have any idea why you watch. I'm Tony Batista. He's Tom Sosnoff.
41, you got it!
See that? We knew it. Pretty good. Baseball field. Baseball game. It was a wonderful evening.
It was a warm summer day, 1982.
It was around
82, 83, I don't know, sometime around there.
Yeah, 83.
83, let's say.
It was 83. I remember because I was dating somebody else at that time. 1983, yes. It was a wonderful day.
No, we were playing. We played softball on the same team.
16-inch?
12-inch.
With gloves. Because we were hand models at the time.
Yes. I played third base, Tony played right field.
You've been dying to say that, haven't you?
We took him to use a charity case.
Come on, you know it, can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Sorry for the late start. We don't have John today, so I apologize. Happy Monday to you, Sosnoff.
Yeah, we're having some technical issues with Vanetta, but she's here. But
she's not here, and I cannot believe she didn't come in for what will be known as Scott Monday. I mean, Scott is in town. You must come to see. I mean, this is like the new Pope. Scott is going to be in the Scott Sheridan Studios. For the first time in months.
He could be the new Pope.
What's that?
He could be the new Pope.
Yeah, well, yeah. If they change the criteria, he could be the new Pope. Yeah,
sure. Why not?
I can't believe she's not here. I mean, wow, that's so disrespectful. She must have a lot of job security. I don't have it.
Well, I'm here. That's all.
I'm here too, Sosnoff. How are you, my friend? Did you have a nice weekend? Thank you for asking. I had a great weekend, Sosnoff. I know you want to hear about it. I didn't get a chance to clean out my garage, but my neighbors were out in force this weekend. I planted some flowers in front, some mandevilles, beautiful mandevilles, as my friend would say.
I don't even know what a mandeville is.
It's more of a tropical plant. Beautiful white flowers, pink flower, any kind of flower color you want. Almost vine-like in nature.
Nope.
Very nice. Tropical.
I don't have any flowers yet. It's too early.
It's because you're Johnny. I have a walk-in closet that I'm redesigning, Sosnoff, all myself. Unbelievable. Amazing. Drilling. Designing. Was beautiful.
That sounds like such torture.
Well, I already did the pantry and the kitchen. That one came out.
Okay.
Amazing, as they would say.
Okay.
Now I'm doing the upstairs walk-in.
It's exciting. I'm
unbelievable.
Between the flower plant,
long hanging, short.
Between the flower
shelves.
Between the flower planting and the closet redesign.
I took care of all family business this weekend, Sosnoff. All family business. I even put the pool together. We did everything. Took care of all family business.
Not what I was thinking of.
New water in the hot tub.
Not what I was thinking.
All family business.
About time
took
after
care of
a couple of years of that nasty hot tub. But I mean, that's not when I think of taking care of
15-year-old kids are going in there. Who cares?
15-year-old kids? You don't know. I don't know what 15-year-old kids do.
Took care of all family business this weekend, Sosnoff. Cleaned house. Cleaned out the closet. Literally and figuratively.
That's not my idea of taking care of family business.
What'd you do? What'd you do that was so spectacular?
What I do?
Yeah. No, the frog in your pocket. Yeah, what'd you do?
I don't remember.
You don't remember. That's how good it was.
Where was I this weekend?
You can't even remember. Look at you. Look at you.
I know. It's scary.
There's nothing better than spending an afternoon with 4 women in a Container Store trying to figure out what shelves and unit.
4 women?
Well, it's mostly all women that work at the Container Store.
Oh.
And they have to design everything with you. Nothing is better, Saz. Nothing is more torturous than having 3 or 4 wives with you at the same time. It's amazing. It's amazing.
Oh my God.
You haven't lived until you've done that, Sadnov.
Yeah, I haven't lived till I've done that for sure. I won't.
It was
not
amazing.
go to the Container
I
Store.
wish Vanetta was here because she would.
For the rest of my life, if I never go to a Container Store, I'll be.
No, you'd much rather spend it with Carlos in the basement trying to fix your air conditioning. Did he get it done?
Oh yeah, that's who was over Saturday. Carlos. Yeah, I couldn't think where the hell. What?
Boy, have you fallen! I
know.
mean, for $300, you could have anybody come over. You got Carlos, but go ahead. What do you got?
They fixed it.
You have air conditioning?
I have air conditioning.
Did he have to call in Carlos number 1 though? Do you have to call the dad? The dad had to do it.
Yeah.
You always got to go old school.
Yeah, you got to go old school. But he fixed it. I got air conditioning. It's probably the first time that I actually have air conditioning.
So this is the first time you actually have HVAC.
Yeah.
Heating and air conditioning.
It's the first time.
First time in what, a decade?
Like 12 years. So it all works perfect. I mean, I'm sure it's not going to stay that way, but at this point, it all works perfect.
Beautiful thing. Beautiful thing.
Yeah. So we're in awfully good shape right now.
Shoot.
House is freezing.
On all cylinders.
35 degrees outside. I got air conditioning blasting.
Beautiful.
Yeah, it was good. It was a good weekend.
Very nice.
But I don't know what I did. I logged a lot of hours watching hockey, I think.
Oh my God, the hockey games were great. I mean,
yeah.
Capital game had some huge hits in it.
Yeah.
I mean, all the games had big hits in it, but Capital game, I watched that one from bell to bell. I mean, it was a great.
Yeah, the first thing I said to you was, Ovechkin, he's a badass. He doesn't back down on anybody.
No. I mean,
I do think it was a cheap shot, but I also
it was a cheap. I mean, cheap shot. I mean, yeah, it was a hard. We got a penalty, so I mean, it was a cheap shot. I mean, all penalties, I guess, are cheap shots. But yeah. He leaned his hip into him a little bit. I mean, he could have avoided him.
He leaned his shoulder into him.
Yeah. Mm-hmm.
But
I couldn't stay up for the Oiler game though.
I couldn't either.
I thought they were going to go down. Yeah, I thought they were going to be, on the brink of elimination. But I guess not. I mean, they would have been down 3-1 or whatever.
Yeah,
beautiful.
I don't know actually what I did all weekend. I was running around the whole stupid weekend. I was out and about. I wanted to play golf yesterday, but I couldn't find anybody to play with.
Beautiful day.
Not in the city. It was kind of cold.
Oh, really?
Yeah.
It's a nice day in the suburbs. You could come a little further north.
Yeah, I couldn't find anybody to play with there. Everyone was had stuff to do. I was like, all right.
They had lives and families and stuff like that. Ugh,
who wants to spend time with your family?
Ugh, that's ridiculous.
Who wants to do that? Who wants to?
Nobody.
Yeah. That's what I didn't understand.
Yep.
I had breakfast with my daughter and we bonded.
You had breakfast with your daughter and the little guy?
No.
Mini-me? No mini-me? Oh.
And so
cute little kid.
Yeah, he's
seen pictures.
So we just
all babies are cute, except for Nick.
I was a cute. I was actually a model, and then it fell apart.
And Vinny wasn't cute either. I gotta be honest with you. Neither one of them. You were a baby model. You were like when you turned 3. Like before that, you were all head too. Like you were all head.
I was all head
until you could hold up your head.
My son was all head. My son Cole was all head. He
was all head.
He was just a giant head. He was like Stewie.
He had the same lid as you. Yeah.
He was like Stewie from Family Guy. Huh?
I hear you. I can hear you. I can't see you.
Can't see you.
You're like a voice from above. You're like a baby from a babies are a gift.
What in the heck did I interrupt? You guys are just talking about babies?
Yeah, it's The View. This is The View. We're talking about babies right now.
Dude, that's brutal. Good Lord. Why are you talking about children's head sizes?
I was just saying my son was like Stewie from Family Guy.
He was.
He had a giant head.
He was. And he had your same hair. Right?
And he used to and now when I tell him that, he's like, Dad, stop it.
Did you spend time with your grandson this weekend? Is that why you're talking about babies?
No, I did spend some time with my daughter, but no. No.
But she was without her child? I find that hard to believe.
She was a what?
She was without her child?
She was. She got the Goya to stay home and watch him.
Wow.
Very nice.
Yeah. All I had to do was buy him some cinnamon rolls, and I was good. I was good to go.
It worked. Sadno, if you have money on you today.
Why? What do you need?
I just want to make sure you're going to pay my son.
Oh, yeah, that little grifter.
I mean,
I lost $20 to him.
Yeah, just make
What
sure.
is this for?
no, I don't.
I have change of 100. I knew this is what you were going to say. I knew this is what you were going to say. So I have change of 100. Hold on, 20, 40, 60, 80, 100. There's 520s. There's 520s for you. If you have a $100 bill, I have 520s for you. I knew this. I planned this out this weekend. There you go.
Oh,
there's 520s for you. So you pay my son.
Shouldn't you give him Shouldn't you give him 420s for the 100? That's how that math works.
No, Nikki. No. Believe me, Nikki trusts getting money from me more than from him.
Oh, for sure. He has to pay him himself. It's the art of being paid. That really is.
That was the little Cam Scattaboo bet.
Yeah, he went at like 100 and something. And Shiloh, whatever his name is, didn't go at all, right? Didn't he?
Shador.
Whatever it is.
No, he went in the 5th round to Cleveland.
He went to the Browns.
He went to the Browns in the 5th round, but
I have it for news.
Cam Scattaboo went 105th. I said he would go under 80.
80, yeah.
Giants got him. He's going to be good. I wish the Bears had got him. The Bears took a running back in the last round. They took the kid from Rutgers. I forgot his last name. He's got a weird last name, but it's I watched him play once, and I'm like, this kid's really good. Oh, I don't know how good he was.
Yeah,
I saw one game.
You remembered him.
I remember.
I've never seen him run.
But they drafted.
I'm sorry. How tough is Rutgers?
Well, they play Rutgers in the Big Ten.
Are they?
Yeah, they're in the Big Ten now.
Didn't we have another runner from like Yale or something, or was that? Am I thinking defense?
From Yale? Well,
yeah. Well,
you're the only running back that I ever remember from Yale that played in the NFL was Calvin Hill. Who was
Dallas, wasn't it? Calvin Hill.
Calvin Hill went to Dallas as a safety, I think, but Calvin Hill was a running back at Yale. But his son, played in the NBA. But Calvin Hill, his dad played at Yale back in the 70s.
No,
Gary Fensick went to Yale.
Maybe I'm thinking Gary Fensick. That's
He's a safety.
Yes,
Bears.
defense. Yeah.
And who's the big giant guy? Offensive.
Oh, big giant guy plays football.
The big giant guy, offensive lineman on the Bears. Oh no, he went to Harvard. That was and he was teaming
Matt
with Mike
Burke.
No, he was teaming with Mike North.
Matt Burke went to Harvard. He played for the Vikings.
No.
No, glasses.
Dan. Oh my God.
No, you make me look it up.
North and Jiggets.
Jiggets, there you go. Dan Jiggets, there you go.
Jiggets went to Harvard.
Yeah.
And I always loved the pairing of Mike North and Dan Jiggets. They were
like yin and yang.
They were freaking great. I was listening to Mike on the radio this weekend. He was doing a bit with Carmen DeFalco, and he's great. Talking sports, he's the best.
Sweet. Do you have a generator at your house?
Yes.
You do?
Yes, on my roof.
Oh.
Why? What do you want to know?
I just want to make sure. I want to make sure you have heat and air conditioning all the time now.
I don't know if it works, but I got one.
It should test every day, like once a week. Like
I haven't tested it in 10 years.
You don't have to test it. It's an automatic test. So if you go up on your roof, which I'm sure you're not going to.
I don't go on my roof.
Should have a green light. If it has a red light, that's not working.
I got to get somebody to go up there and check it out. But I do have a...
Why don't you get your wife?
I do have a generator.
Hey, honey, go up on a roof and check out my generator for me.
I do have a generator.
But you don't have air conditioning.
No, I do now. They fixed it on Saturday.
Oh, you do now? Oh, this is a breaking news development.
Fixed it on Saturday. Carlos and team.
Carlos it's going to be like 80 degrees today.
They want to get paid. They wanted to get paid, finally.
Well, you should pay them.
Ooh, Baby Shark, I just saw it late. He was free for golf this weekend.
I know, I heard. You told me too late, though. It was too late.
Oh.
Yeah, Slappy.
Oh, did you play?
I did not.
Oh.
Slappy was free, but, it's too late.
Slappy is always free.
That's true. That's true. I went and got food. I went to dinner with Slappy and Butchie.
You went to dinner?
Yeah.
With Slappy and Butchie? You went as a threesome?
Yeah.
And you didn't even think about calling me?
No, because you're too
My
busy.
kid's got a busted thumb now. It's a permanent, like OK sign. I'm free. What do you got?
Would you have gone out Saturday night for veal chops?
Hell yeah! Right down the street.
Where did you go?
Went
Where
to
did you
EJ's,
go?
Went to EJ's for veal chops.
That's like in his backyard.
Wow. I'm hurt.
I was told you were putting together a closet.
I was very busy. I was.
Well, you guys are top-notch communicators. I did not know you were going to be in office today, so thanks for that.
Well, we shouldn't have to tell you. You know, Mr. Scott Sheridan from the Scott Sheridan Studios is going to be in-house today, and I cannot believe you opted to stay home and not for the job security of saying hi in person to Mr. Sheridan today.
I would have been there if you had told me, Jamokes.
We shouldn't have to tell you. Scott's in-house, all hands on deck. Show some respect.
I hate both of you. I hate everything about this.
Big mistake. Big mistake.
So very much. Hey, we got a great show for you today. That is true. Scott Sheridan should be live from the still unnamed studio. It's been over a year, Tom. See, you said that you were going to have the name of the studio.
I have the name of the studio. I just haven't. You know what?
It's the Scott Sheridan Studios. We had a.
I don't like you guys.
Yeah.
Yeah, I know the little scam you guys are trying to pull,
but it's been the Scott Sheridan Studio for over a year now, so those are squatters' rights.
I know what you're trying to pull, but
But what? But what? You're all puffy chested because you're over there. Say it to my face. We have a good show. The studio is still unnamed, but still going to be a good show. The top of the 8 o'clock hour, we got Research Corner. Kai is coming in to recap or give a preview, of everything that's coming up for the week. Then 8:20, Dr. Jim in the house, the Skinny on Options abstract application, a zero drift world. What does that mean?
Yeah, what does that mean?
A zero drip world?
Drift.
Yeah, zero drift world. That's why I thought you said drip. A zero drift world?
Yes.
Yeah, that just means what happens if we don't have positive drift.
Oh, okay. Okay. That will be at 8:20 with Dr. Jim. 9 a.m. we got a market measures. Why trade small and often? If you've been participating in these markets at all since Liberation Day, you know why staying small is very deeply, crucially, pertinently important. But we are going to delve into why staying small and trading often is a benefit. Basically, it's the first. It's the first testament of the Tasty mechanics. And then we got live from the trade desk. Big boy Scotty asked, live in studio. Did you actually confirm that his plane made it to O'Hare?
Yep.
Oh, you did? Okay. So he's in Illinois proper. He's in Chicago. He's in Cook County.
He is in Cook County. He's alive and well and ready to come on air.
Okay. That's very exciting. So Scott Sheridan's counting down the top trending tickers over at Tasty Trade today. That's going to be at around 9:20, so stay tuned for that. But hey, in the meantime and in between time, it took an engineering miracle to get my audio on the show. I'm not going to waste it. You want your daily dose? Let's go.
Our leading story, breaking news,
Coming
across the wire. Leading story, top story, just in.
In today's headline,
This just in. Breaking news.
All right, everybody. Today is a magnificent Monday. It's April the 28th. This is the part of the show I like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Ready for the news.
Any earnings up for today, Mr. Bat?
We've got a bunch coming here, some of the Mag 7 stocks, but not right yet.
No.
But two that Sadnop is going to want to know about is Spot and General Motors. Honeywell, Royal Caribbean, Coke, PayPal, Mo, UPS.
Spot's not a big deal for me. Just
you have a position.
I know.
Oh, so now you don't care when you have a position.
I have a
earnings.
I
So
have
I'm
a position.
abstained. I don't have any obligation to
I have a
tell you
position.
your positions.
I have a position and I do care, but it's not that interesting.
It's a lot like you.
Getting to the first headline on the economic front, updates on inflation and economic growth in the first quarter will be in focus for the release of the April jobs report. That's going to head out on Friday. In corporate news, 180 S&P companies are expected to report their quarterly financial results, headlined by, like Bat said, those Mag 7 companies, Apple and Amazon and Microsoft and Meta, also reporting this week. Pharmaceutical manufacturer Eli Lilly and Chevron and Coca-Cola. So a ton of big names. Google kind of opening the door last week to show what is possible in this tariff-saturated environment with a very decisive beat to their earnings. Tom, what is your prediction for the rest of the meaty part of the Mag 7 reporting this week?
180 to add to what you just said. 180 of the S&P companies are reporting this.
I said that.
Yeah. Did you say 180? I'm sorry, I didn't hear it. Apologize.
I said 180 new hearing aids.
I don't think it really.
If you're in here, I would hear you.
I don't think it matters. I mean, I don't really. I
don't think it matters since we've rallied back almost completely.
I don't think.
Lost.
I don't think it. I don't think any of it.
We're back by half. We're not completely by half, but yes, we're.
I don't think it matters
back.
to explain. I just don't think it matters. I think I think it's
What
going to be.
are you going to do in these 4 stocks then?
I think it's going to be completely random. I'm going to just trade them. I mean, we don't really trade a lot of Meta to start with, to be fair. Apple and Amazon will trade for sure. Meta will be very small, and Microsoft. Meta and Microsoft are not my 2 favorite trading stocks, so we'll see.
Mm-hmm.
Okay. And then, of course, that big jobs report number is coming out there Friday, so just be aware of that. Be mindful of that. There's a much higher risk of stagflation than recession in the U.S. economy over the next year, while the asset class most expected to outperform in 2025 is cash. That's according to the results of a new JP Morgan survey that was published on Friday. 3 in 5 respondents believe U.S. economic growth will stall and that inflation will remain above the 2% Fed Reserve target, with 1 in 5 respondents expecting inflation above 3.5%. Where would you slot yourself in, the two of yous?
I mean, what's your question? Do we think there's going to be stagflation?
My question is, if you had to lay odds, if you had to lay pot odds, if you had to lay pot odds on something, would you say we're more at risk of stagflation or a recession? I know no one knows, but if you had to lay pot odds, and then where do you think we finish in an inflationary sense? Is it still just a little bit over that 2%, 3.5%? You guys have the experience. What do you think?
Well, our experience is not as a loser economist. Our experience is as traders. So, I mean,
as loser traders, yes.
I mean,
yes, we're loser traders.
Well, I mean, this is like such a ridiculous question. I mean, yeah, I would bet on a recession.
It's not a ridiculous question. Like, you have opinions, you're full of them. I can't shut you up most of the time.
I mean, I would bet on recession before stagflation if those are my 2 choices. But
okay,
I mean,
and what about for inflation? Where do you see it sort of falling in for the rest of the year?
I mean, you're asking questions about things I don't really give a rat's ass about. I mean,
No, but you're a consumer. You pay for things. You're affected by it. Like we're all affected by it.
There's a saying that I like to use. It's called control the things that you can control. What I can control, is what I do with my life. What I can't control is the price of something else.
It's what Tony does in his
spiritual, and you would
garage.
like the wisdom to know the difference. I think it's a biblical verse, or no? Wait, is it from AA? I think that's from AA.
I believe you control the things and you worry about the things that you can control. I don't think there's a successful person in the world that's sitting back right now going, "Oh man, worrying about inflation."
The S&P for this month is down 1.5% after being
care.
down double digits. If we can get to positive, it'll be the fastest move.
I don't care.
I'm just saying. I'm just giving you the other side. It'll be the fastest move back.
What? I'm not saying anything negative.
I know. I'm just
saying. All I'm saying is I don't care. I mean, whatever it is, we just trade what's in front of you.
And right now you got high implied volatility, 23.5.
Yes.
What does?
You got high implied volatility, 23.5.
Gotcha. What are you doing in treasuries?
Treasuries are down 3 ticks. Sorry to interrupt you over there. 115.23. I mean, they're basically unchanged.
They're basically unchanged. They were up 12 last night. They're down. They were up 12 to 15 last night. They're down 3 this morning. It's been a very quiet overnight session. They're all trading kind of flat.
Okay. Hey, in other news, column funds hold bullish corn and soybean bets steady as trade talks await clarity. Speculators held on to bullish bets in Chicago corn and soybeans last week in hopes that U.S. talks with trading partners might progress. I just wanted to check in on the softs as we start the week but end the month. Ooh.
Yeah, it's been pretty slim pickings in softs. I mean, we have positions.
They've been off the radar because the market's been so hot. I mean, there's been so much volatility in the market, so much, whether you want to go to bonds, you want to go to the equities, you want to go to oil. I mean, there's so many other things to be trading. Gold.
Yeah, I mean, we're just, we have positions on in all three, corn, wheat, and soybeans. We're just short premium in all of them. We're long a little deltas in all of them, too.
Okay.
So we're playing them all to the upside small. It's coming up summer, whatever.
Okay.
Coming up summer, what is
It is not coming up summer. Like, it just turned, you wrote that in your cherry bomb, and I had to, correct it because you always want to capitalize the seasons. Seasons aren't capitalized. But I'm like, it's not summer, girl. It's not even spring. But I didn't correct that.
I like to capitalize seasons. I'm sorry.
He goes by the futures month that he's trading.
Seasons.
Grammatically, the seasons are not capitalized. So you can't just invent a new grammar rule. I'm sorry.
I'm sorry, but seasons should be capitalized.
Seasons change, Vanetta.
They're not, sweetie. It's just take it up with the board of grammarians. I'm not on board with this. Seasons should be capitalized. It's like gravity. You don't have to be on board with it. It's just the law.
I'm just telling you.
Okay. I hate it here.
No, you don't.
In other news, let's talk oil. Oil edges up despite murky economic outlook and a potential hike by OPEC Plus. What are you guys doing in sweet crude oil?
Sweet crude oil, we got no position.
Basically unchanged, hanging out at 63. Gas pump prices haven't changed since oil was in the 70s or the 50s. Sad enough.
Guess what?
Sucks.
Gas price pumps have not changed since oil's been in the 70s and in the 50s. It's 63.
Yes.
Price of oil is 63 a barrel.
Yeah.
It's been as high as 70 this month. It's been as low as in the 50s this month.
Yeah.
The price at the pump hasn't changed.
I wouldn't know. I drive electric.
Okay, great. Good job out of you. You have a hybrid.
Oh, I drive electric.
One of them is a hybrid, yeah. Anyway.
Good to be king, me lord.
Keeping it moving.
Good to be king.
Keeping it moving, investment firms specializing in Bitcoin are positioning themselves to lead the way to push towards a potential shift in a global shift in currency systems. They're basically looking to form Bitcoin treasuries, and they are advancing what some call hyper-Bitcoinization, a future where Bitcoin would overtake fiat currencies globally, and that shift could see Bitcoin's market cap soar to more than $200 trillion. I say let's all pump the brakes. But what's Bitcoin doing to start the week?
Bitcoin's the most stable currency in the entire world. Going
down
from
$25.
It is, yeah, basically unchanged. Going from around, the mid-70s this month to the mid-90s, 96 and change.
What's Coinbase doing?
Oh, good question. You got me again.
It's down $1.
You are right. 208 and change, down $1.
Tom, what are you doing in Bitcoin? What number are you looking for in Bitcoin right now?
Nothing. I haven't done anything in Bitcoin. I haven't done anything in Bitcoin really in a month. I've just bought a little bit.
I know. What number are you looking for?
I'm not looking for anything. I'm just holding it forever.
Oh, but what would get you to do more trades? And am I not being clear? I feel like
I mean, if it dropped down to, 50,000,
50,000 maybe. I'm not sure.
Okay, see now we're having a conversation here. See, okay.
I mean, I find
you kids be friends.
I find Bitcoin and digital assets right now to be the most uninteresting asset class there is. Like if there's anything, there could be nothing to me. I mean, I don't know what you feel. I feel
there's no two-sided action.
There's
no
nothing more boring than digital assets
stable.
right now. Compared to stocks and commodities, these are absolutely dead money, and it's not even worth trading.
Hey, here's a crazy story. The market volatility and tariff uncertainty is spilling over into the home shopping season. Normally, spring is a great time for home sales, but deal cancellations are ticking up. In the 4 weeks between March 17th and April 13th, more than 14% of all home purchase agreements were canceled. That's the highest level for this time of year since 2020, when the early days of the COVID-19 pandemic froze the housing market. One realtor shared a story where this buyer put in an offer for a house. Then his company was like, hey, we might have to have layoffs. So the guy was like, okay, I'm going to pull out, lost his 3% deposit. Again, the highest this has been since COVID. What are your thoughts about this? 14% of deals getting canceled in a week seems concerning.
You know, it does, but I'm not exactly sure where this is. Like in Chicago right now. Now, the Midwest doesn't have big real estate fluctuations like other parts of the country. Like in California, New York, Florida, I think there's pretty big real estate fluctuations. In the Midwest, it's pretty stable. And from all I can tell, the market here in Chicago is absolutely booming right now because there's been no new construction, no spec houses being built. And so
everything goes cyclical.
Everything's cyclical.
Upside,
and
downside.
We don't get the booms and we don't get the busts. But in Chicago right now.
Also, you can't build houses here in the winter. I mean, you can, but it's really hard.
The problem with building new houses right now is that it's very, very expensive to build something, especially a spec house. So houses are trading for what we would say under theoretical, because it costs more to build a house than you can buy it for cheaper than you can build it. And so
keeping prices steady.
Yeah, keeping prices.
Existing homes.
So housing prices in Chicago, I can only speak for here, are really strong. Everything's selling at on the offer or at last price. Everything's selling on the high end and they're selling really fast. If you drive around, there's no for sale signs right now. It's the craziest thing.
Why don't we turn our old office space into residential?
Zoning. I mean, I've been here 40 years. I've been in Chicago a little over 40 years. I have never seen it where there is no for sale signs. None.
Dude, that's bonkers.
It's bonkers.
Now, he only travels 4 blocks, so he's only...
I'm only in the city, but I'm just saying.
In other news, Eli Lilly set to report their earnings this week, but a 25% U.S. tariff on pharmaceutical imports would increase U.S. drug costs by nearly $51 billion annually, boosting U.S. prices by as much as around 13% if passed on. That seems terrible. The analysis was conducted by Ernst & Young, and it found that the U.S. imported $203 billion in pharmaceutical products in 2023, with 73% coming from Europe, primarily Ireland, Germany, and Switzerland. So got that on the horizon.
There you go.
There you go. But like I said, Lilly's set to report this week, so do with that what you want.
We don't really trade Lilly much. It's a very expensive stock. I mean, I hope if it would split, it'd be a good trading vehicle. But right now, it's a stupid expensive stock. That's it.
Hey, some good news in the global trade war. China appears to have quietly rolled back retaliatory tariffs of 125% on some semiconductors made in the U.S. The exemptions apply to integrated circuits, also known as microchips or semiconductors. Let's talk your chip stocks. Good news for them.
NVIDIA closed at 111. Looks like it's 109 and change, down about $1.50 or so.
Yeah, everything.
Hated it.
To be fair, everything's really flat this morning.
Okay. Nothing in AMD,
AMD's down
SMH,
small
SMIC.
also, maybe a
Yeah, they're all like, I mean, NVIDIA's down a little bit, but the rest are all flat. It's pretty flat.
Okay. Well, Apple, which has earnings this week, is having to shift some of its production. Apple's reportedly has a plan to scale back China sourcing. They're now hoping to shift output of all U.S. destined phones to India by the end of 2026. The Silicon Valley giant is due to report their results this week. What are you doing in Apple in the meantime?
Oh, we're pretty flat at right here. We have like a tiny bit of a tiny bit of short delta. That's it.
Good Ivy rank of 40 in Apple. Nowhere near its lows of around 170, nowhere near its highs of around 260. It's sitting at 209 and change.
The AI data center boom isn't going bust, but the pause is trending at big tech companies. Microsoft, which also reports this week, they were the first. Their decision to pull their plug on a data center in Ohio, and then a Wall Street report saying Amazon was pausing some leases, boosted market fears about an AI data center bust. But recent earnings from data center supplier Vertiv and Alphabet, as well as commentary from Amazon, suggests the fears are slightly overstated. Do we think we got out over our skis here in terms of like we're going to spend $80 billion on data centers and then they've walked that back?
Yeah, I think they got out over their skis. I think everybody got so, I listen.
Everybody had to have one.
It may not even. It may
yeah, but
not.
then DeepSeek exposed what a shell game it was.
It may have been more of just about. It may have just been more about PR firms and playing a game of just dumbass PR. Like sometimes I don't feel like these companies really wanted to say all that stuff, but it was just a lot of media exposure, a lot of PR exposure. I don't know. They recognized probably right away it was a mistake.
Well, we will see what happens, and there might be some insight on Microsoft's earnings call. Staying in the AI sphere, Elon Musk's XAI is in discussions with investors to raise $20 billion. The funding round would value the company at over $120 billion. Musk was looking to assign proper value to XAI. What do you think of the surging value for XAI as the value of Tesla kind of falters?
Well, I don't know if it has anything to do with Tesla, but if he can get the money, he should get it. I wouldn't give him a dime, but it's not my money.
Well, it's still his brand, like it's still his name. So
I understand,
that's why
but I'm saying
interesting
it sounds
comparison,
ridiculous.
That's all.
I don't think
Tesla half to 287.
I don't think they built anything yet at XAI, but who knows? I don't know.
And didn't he merge X into XAI?
I think so. That's above my. I'm not corporate.
That was a little shady. See, like I call things the way I see them. Like that seemed a little
shady.
That seemed a little shady. Okay.
Whatever it is, I don't really care. We're not investing in this.
But Grok does.
I got shown the deal, Sosnoff. I got shown.
You get shown all the deals you want.
Grok is a functional product of XAI.
Good luck. Go invest all you want.
No one's listening to me.
Get in on the cheap.
Get in on the cheap.
Mm-hmm.
What's Tesla doing this morning? We can talk about that.
It's up $1 or $2.
Mm-hmm.
Okay. Hey, this is crazy. The hottest AI job of 2023 is already obsolete. Interesting read in the Wall Street Journal over the weekend. But do you guys remember this? They were like, oh, we need people to be prompt engineers. And it was basically a person that had the ability to craft the perfect input to send to a large language model. And they're like, oh, these are going to be the hottest jobs. You can make $200,000 by being an AI whisperer. But now basically the role is obsolete thanks to the breakneck speed of AI development and companies' own maturity in terms of understanding how to use the technology. Companies say they're training a wide range of employees across functions. The large language models aren't as finicky. I had to input all of the prompts to make your action figures, but I was able to do it last week. But how wild that this job that didn't exist came on the scene and is now already obsolete. obsolete. What are your thoughts?
I mean, things move at crazy paces now. You know, at a crazy pace.
It's this fast though in 2 years?
Yeah, sure. Well, I mean, that's the pace that things move right now. You get paid more, you take more risk, and things get obsolete very fast.
Mm-hmm.
I guess
like Sadnov.
I'm not that surprised. Probably because I didn't even understand what this job was to start with.
I just thought it was really interesting. That's all. Keeping it moving, a new American EV company is taking on Elon Musk with a $20,000 truck. A Jeff Bezos-backed startup called Slate has unveiled a cheap, no-frills, lightweight electric pickup truck priced at just $20,000. But people were pointing out that Slate is an anagram of Tesla, and they're like, this is really just Elon Musk with a mustache on. Because
it's ugly.
So I'm here
but
for all
it's
the
cheap.
conspiracy theories.
Yeah, but you know what? I hope they finally do it because the Tesla was supposed to be a cheap vehicle, electric vehicle too.
The Tesla's the Cybertruck's a bust.
Yeah, Cybertruck's a bust. But when Tesla first came out, it was supposed to be an affordable electric vehicle, much more in the genre of a General Motors vehicle.
I agree.
And it became a $100,000 vehicle.
$20,000, it's not bad, but I don't know what it looks like. I don't know what it does.
Nice roll up windows. I get it. Let it be whatever it is. But if it could be,
this is what it looks like. What do you think? I put a picture up here.
It looks like something. Well, they all have their rendering.
Inside. I said inside, but yeah, for $20,000, if I could have a pickup truck in the city, I'd buy one of those. Just have it.
Yep.
And what are you going to put in there, sweetie? All of your
stuff.
soup dumplings?
Yeah, I carry
from
stuff in
Trader Joe's?
pickup trucks. I got a lot of stuff I got to haul.
All right. I'm skipping
dirt,
a couple. I'm skipping a couple of stories here.
Lumber.
Beth. Okay. Hey. Plane tickets are getting cheaper as domestic travel demand weakens. Major carriers are turning to off-peak fare sales and cutting excess capacity in the second half of the year. Airfare dropped in March, according to the latest inflation readings, and airline CEOs warned Wall Street that passengers' appetite for domestic trips is coming in lighter than they had hoped. So if you are looking to take a trip, now may be the time. Not sure if you're doing anything in any of the airlines.
I don't know what they're talking about because I looked at some flights lately and they haven't come down, at least what I was looking at.
When did you last? You were looking at flights before spring break. Have you looked after
this
spring
weekend.
break?
I looked down to
Where are you going?
Vegas. I looked into Florida. I looked in everywhere. They all seem high to me.
You couldn't find a cheap flight
They
to
seem
Vegas?
they seem like they're the same as they've always been.
Same as it always was. Same.
I can tell you right now, international flights are not cheap.
I didn't say international flights.
I know. Domestic flights.
Also, deadline looming May 7th. You need a real ID. If you're going to travel domestically, make sure your license has the star at the top. Or if you're... I'm talking to the people.
I got the star, and I didn't even have to go in to get it again. I could do it all online. They did it.
The star, you can do it online?
Well, I had the star.
Oh, okay.
But I didn't have to go back in to renew it. My birthday, July 12th, so I don't know if it's expiring.
I didn't have to either.
Hey, skipping a story here. Nike is being sued over the closure of its crypto business. Nike was sued Friday by purchasers of Nike-themed NFTs and other crypto assets who said they suffered significant losses when the athletic wear company abruptly closed the business that created their NFTs.
Well, I would assume if they close their NFT business that they're not worth that much. Unless you're going to put them away for the next 25 years, or unless you get Michael Jordan's signature on it somehow.
I don't know what to tell you. What are you doing in Nike?
I'm long it. I didn't even know they had a crypto business, but we're long Nike. We're short.
They had kind of like Top Shot. They had sports related NFTs.
Yeah, I know. We're long Nike. We're short the.
I'm short the 47 and a half put stocks, 57 and a half. So I'm looking to close them. I need a nice 44 cents.
I'm short the 50 puts and the 55 puts and the 65 puts.
Okay. Finally, today for my sports story, the wildest thing to come out of the draft this weekend is that the Atlanta Falcons defensive coordinator's son, Jax Ulbrich, is the one responsible for the Shedeur Sanders prank phone call. All of the draft prospects are given a brand new phone that no one has the number of to be on standby for draft night, and so only the teams know these new phones, obviously, because they need to talk to prospects. So it finally came out. They're like, so a bunch of frat boys at Ole Miss prank called Shedeur, saying that he'd been drafted earlier than it's just a terrible, just like a mean prank.
It was Bush League, but that guy's going to be in big trouble for getting it to his son.
He's not facing any trouble from the Falcons, from what I've read, unless it's changed overnight. Now,
his son might be facing some. I mean,
but the defensive coordinator, not so much.
No, well, the defensive coordinator probably had no freaking idea. It's all his son.
No, but at first they thought it might be the daughter of like the GM of the Giants, because I guess she also goes to Ole Miss. I have no idea, but like the whole thing is just like, how did this even? Come on, dude, what is going on with kids these days?
Yeah, it's a little Bush League, but they're kids.
Anyway. Finally today for my
I would have done that, just for the record, I would have done that to Tony if I could have, for sure.
It's just mean.
I know, but I would have done it.
There's so much.
He would have done it.
I would not. I know you're going to say that. I would not have done that to you. I don't toy with people.
He would have done it to me for sure.
I never would have done that. I don't toy with people's emotions.
There's just so much riding on that. It's like, I don't know. Anyway, finally today for my viral video of the day, something magical happens when you become a dad. You get dad-like reflexes, and whether it's catching a ball while also holding your baby and a beer, or it's being able to scoop up your kid before he face plants into your swimming pool. Dad speed and dad strength is the stuff of lore. Check out this cool dad video. Watch this. It's like these kids are about to be bowling pins.
Oh, he's gonna cut right.
No, he's going up and over.
Oh man! Nice one.
That's pretty good.
That's great.
That's a power move.
Good for him. I thought he was gonna jig left, cut right.
Those kids are going right at it too. They want it to be wiped out. Those kids wanted to be.
They didn't want to go to school.
Those kids aren't even moving. They wanted to get wiped out.
It's like when a wave would hit you. Nice move. Nice move.
That's pretty good.
Good work, Poppy.
Anyway,
good work.
Good luck with the rest of your reindeer
Have you
games
ever been
today,
wiped
you
out
boomers.
by a runaway sled?
Oh, 100 times. Reese Park. 100 times. 100 times. 100 times. Tobogganing. 100 times. 100 times.
I was once wiped out by a guy on skiing. I was standing there looking down the mountain, and somebody just took me out from
never
behind.
On skis. Never.
Somebody took me out from behind.
Gwyneth Paltrow?
No, I was just standing there. On
minding your own business.
Minding my own business.
Posing.
Some guy just came barreling into
duck face going.
Took me out. Man, went halfway down. It was ugly.
Beautiful.
I thought I was dead. Because you don't expect it. You're not looking.
When you least expect it, expect it. We're going to take a quick
and
90
you don't even wear a helmet.
Nobody
wore helmets back
Helmets are for wusses.
Okay. What's coming up next?
That's just because Tom couldn't find one to fit his giant bulbous head.
There was no such thing as a helmet back in those days.
We're going to take a quick 90-second break and come back. We got more Tasty Live after this. What do we got coming up next? That's right. Confirm and send. We'll be back in 90 seconds. Tasty Live. Good job, buddy.
Helmets.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on tastylive.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. Guess what else is back? That's right, the market is back, sound off after being red all night long. Even the S&P is trading near their highs, up $3. NASDAQ up $8. Russell up...
Can't keep a good spoo down.
No, you cannot. Russell up $2, 20 cents. The Dow up 35, basically unchanged, but they were significantly lower by about 40 handles on the EM and the S&Ps. Volatility going nowhere, sound off, nowhere fast. 2340, though it is on the lower end of its range. Bond down 9, 115.17. Bitcoin on its highs recently, 96,300. Oil doing nothing, $63 mid-range. Gold up $8 and change, over 3,300, 33.06, trying to keep its head above water. Sound enough. Hard to say that when it's at basically at all-time highs. Close enough. Silver down 10 cents, doing the opposite of gold. Some of the stocks in the news, I guess Tesla up around $3-4, trading just under 288 and change. Sound enough. That's all I got.
That sounds like enough for me.
I guess Sanders wasn't the only one pranked. My Taiwanese sources, Brad tells me, Tyler Warren of the Colts was too.
Yeah, I mean, yeah, that's too bad. But I guess if I was in college and those were my friends, we'd prank them too. So I don't know. I can't really blame a college kid for pranking his buddies.
Really? I guess not.
What, you think that would be not?
I don't like to toy with people's emotions.
Really? You would prank somebody when you were 50?
No, I don't like prank sounds. Don't you remember Trader Confessions? I hated those things.
Yeah, right.
It made me do it.
You would have done it when, seriously, at any age. It's embarrassing. I like when people say, I never would have done that. Yes, you would have. Everybody would have.
Yeah.
You and all your degenerate friends, for sure. Let's do it. Confirm and send. Emails that came in to us overnight. This is a busy week for economic data and earnings. When you have a lot of binary events like this, does it change the way you trade or the way you think about volatility contraction?
No. I mean, I don't know how else to put it. No. I didn't even know. I mean, I knew earnings were coming. I don't know the days that they're coming. I do try to avoid stocks with earnings, try to do them post earnings, but other than that, no.
The bottom line here is that when you have a lot of binary events like this week, it doesn't change the way we trade. It doesn't change the way we think about volatility contraction, but we do take into account the earnings plays for sure. I mean, absolutely. We'll play the earnings or it'll change the way we trade some of the products for sure. The economic data, not so much. You know, economic data is not going to change anything that we do.
Nope.
Let's go to the next slide. But we are aware of it all. It's all part of the game.
Some things are good to know. Some things make you money. This is good to know.
Yeah, I mean, it's just like anything else. Like if you're sitting there and you're watching, you know, a baseball game, for example, you're aware of the time clock. If you're watching baseball, you're aware of the weather. There's lots of things like that. When you're trading, you're aware of earnings. You're aware of economic stuff. When you roll out in time and you recenter a trade,
What's your goal with respect to your position deltas? Do you skew the adjustment to account for possible price reversion?
I guess ever so slightly. I
Sure.
mean,
Why wouldn't you?
Yeah, 7 times out of 10. You know, there are other times I go delta neutral. But if I have a position on, I've been rolling up the untested side, and now I'm getting near that 21 days, which was Friday last week, and I'm looking to roll to the next month. I might skew it in the same amount, not the same amount of delta, but in the directional delta that I had going into the trade. Yeah, sure. Why not?
There is no question.
Markets move, things change.
There's no question that we roll out in time, we recenter. Our goal with respect to the position delta is going to be to reduce the delta exposure, but not to eliminate it. It's always about reduction, but not elimination. And do you skew the adjustments? Yes, that's exactly what we do. It's about reduction, not elimination. So, and the reason that we reduce the delta risk is exactly for what it says here, possible price mean reversion. Because you don't want to get double whammied.
Yeah, of course.
And so you want to give yourself, hey, what if I was right the first time? You want to give yourself a little bit of room. That's what it is. Unless your total assumption has changed, unless your original assumption has changed, then you can just flatten out or go the other direction. But we don't rarely do that. We don't usually do that. We rarely do that. We usually just account for, we usually just make an adjustment and we skew it. Let's go to the next slide. When selling covered strangles, which we don't do a lot of, but it's definitely a trade that a lot of people make. When selling covered strangles, that means you buy the stock, okay, and then you sell a strangle.
Yep.
That's a covered strangle.
Yep.
So naked on the put side and shares to cover the calls.
Options to cover the...
Well, just like what they wrote here.
Okay.
Naked on the put side and shares to cover the calls.
Fine.
Calls are naked, shares are long. Do you adjust the calls when the strike is being challenged? That's the first question. What about the put side? Do you adjust that if it's being challenged? And if the underlying moves higher, do you just roll up or do you close it?
I mean, it's a bullish strategy. So if I'm being mechanical, I'm managing winners. Any of those scenarios where the stock goes higher, I'm probably closing, recentering, going to the next month, closing the trade altogether, booking my profit, looking for something else to go. If I'm going to the downside on that bullish strategy, I'm probably looking to adjust those positions, the put and the calls.
Yeah, I mean, covered strangle,
let's
let's be fair about a covered strangle. It's like a double bullish position. You have a covered call on, which is delta long, and you have a naked put, which is delta long. So if the stock's going up, I mean, we take profits.
We're happy.
We take profits.
Fat City.
If the stock is going down, we're going to adjust. You got to roll the calls. You got to roll the calls down. You got to be aggressive about it because you're going to be in deep doo-doo very fast. Just like you're going to make money at the upside very fast. So, yeah, sure. If it goes up, we close it and take profits. If it goes down, we adjust fast. We don't do a lot of covered strangles, though. To be fair, it's not I know a lot of...
But I think you hit the nail on the head. It's a double long.
Yeah, a lot of Tasty customers like this strategy. It's not something we're crazy about. Let's go to the next slide. It would have worked nice for this last rally, that's for sure.
Sure, would have.
What do you think about selling a put ratio spread and a call ratio spread at the same time? Is that a good strategy?
Yeah, I love it. A very high probability. Let's assume that you have liquid markets, high IV rank. Yeah, I love it. You can skew it closer to collect more credit, skew it further to have a higher probability of success, less credit, good use of capital, delta neutral strategy. It's kind of like a iron condor on steroids. Yeah, I like it.
There is, we have no issue at all with this. It's called a Batman because it looks like a
Thank you for saying
Batman.
it. I didn't think you wanted to.
And a call ratio spread, a put ratio spread at the same time. It's a four-legged trade. You can do any ratio you want. It's one click on Tasty. Sure, very high probability profit trade. Risk in both directions, high probability profit trade.
Yep.
Let's go to the next slide. It seems like some underlyings are seeing their IVR fall because they had a major spike in volatility recently. In other words, the IV is still high, but the IVR makes it seem like it's low. I remember this happening with COVID, and at the time, we lowered the IVR at which we would sell premium. Do you think this is a similar environment where selling the 15 to 20 IVR is still okay?
I mean, I know we skewed it for COVID. I hate to skew anything. I love to stick to the mechanics, but you do have to take into consideration what's going on in the overall market. And you will see this phenomenon a little bit. And you had earnings that are going to spike it too. So you had a kind of a big event for spiking IV rank and keeping implied volatility IV, the monthly IV, elevated. I still think you could find, I'm not having a hard time finding stocks in the 30, 40, 50 range of IV rank to do something with. So
I think
I haven't gotten there yet.
Sorry. I think we had a question like this last week and another one very similar. And to be fair, our response is going to remain the exact same, which is there's still a lot of opportunities out there. And we're not at the point yet where we're going to make any adjustments to our mechanics.
Yep.
And at 15 to 20 IVR, we'd be covering, not opening. We'd be closing, not opening. So there's still plenty of things out there to do with high implied volatility between earnings and everything else. There's no way are we flipping the cards over here. Not ready.
That's enough. Love is never having to say you're sorry, so don't worry about that anymore, okay?
I'm not sure what this has to do with love.
Well, you just
Let's
said,
go
I'm
to the next
sorry.
slide.
You interrupted me. You always interrupt me. Never say you're sorry. Don't say you're sorry. Love is never having to say you're sorry.
It's only Monday. Hang in there, Tom. You're gonna do it. You're gonna do it. Will you roll a position if you can only do it for a debit? If yes, is there a maximum debit you would pay?
I mean, there are many times we roll stuff for debit. If we're buying the guts and selling the wings, and if we're buying the guts and selling the wings in the other month, we're always doing it for a debit. So yeah, there's times I'll do it. I do it all the time. If I have the position on, I want the position. I'm going to extend the duration.
Yeah. So first of all, we have no reservations about rolling like a credit spread for a debit. I mean, you're not going to an individual option. You're not going to roll for a debit unless you're adjusting the strikes. So unless you're diagonalizing it, if it's a credit spread, we'll roll for a small debit. I will. Tony might not. If you're buying the guts and selling the wings, you're always going to do that for a debit. But yeah, sure, we have no issue. Is there a maximum debit you pay? Well, for a credit spread, yeah, there is. I probably wouldn't pay more than,
Guy like you, 25 cents?
20 cents, 25 cents, that kind of thing. Probably wouldn't pay more than that. But if it's a buy the wings, I'm sorry, buy the guts and sell the wings, there's no debit. I mean, could be $20. I don't know. Doesn't matter.
Why even throw a number out there? But
yeah, I'm just saying, it could be anything.
We're going to take a quick 90-second break. Sound enough? You know why?
Not really.
Because we got an option jive. Going to slap you in the face like a mackerel. We'll be back in 90 seconds with Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
When somebody says tape action, what do you think of?
To me, tape action is a little bit of a historical term because that's how they used to relay the different information for all the different underlyings that you could trade. They would share like the price, the volume. So it'd be a way for people to kind of get a gauge for different markets. But now I just kind of think of it as that little line of information on your screen when you're watching your financial news outlets and seeing what all the different products are currently trading for.
What's a Johnny trader?
A Johnny trader is defined as Nick Batista and myself. We are smaller traders, smaller accounts, mid-sized accounts where we can't sling anything we want. We can't do multiple contracts of anything we want. We are really defined to specific parameters in trading in a small way. So a Johnny trader is just someone that might be doing one lots, one contract here and there, or trading smaller price products.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards, become a trading mastermind. Get the guide at tastylive.com/guide.
It's option jive. That's right, Sadnov. It is time for an option jive. And we're joined by this man, Kai. What's up, Kai?
How are you doing? I'm doing great this morning.
Doing good. How you doing?
Not bad, not bad, not bad. Just
Right.
checking
Kai's
the market.
not bad,
Nothing-
Sadnov. You're not bad. I'm not bad. It's not bad.
We're ready.
What you got for us today, Kai?
Nothing crazy come out. So it's good morning.
Nothing crazy. Vanessa just told me there's earnings galore. There's debt cross or something else. I mean, what do you mean nothing?
We're gonna talk. We're gonna talk about it. We have some.
All
beautiful
right,
charts.
well, give it to me.
Yeah. All right. So last week, let's take a look at the. This is a summary of what happened last week. Pretty much, the main theme is the decreasing implied volatility. One reason is the market rallied quickly. The S&P/X rallied 4.6% in the last week. This is the second largest rally in the past year. Only after April 11th. So we have that huge rally on Thursday, the 2 weeks before. This is the second largest one. It's still one of the largest rally in years. So the VIX, then the VIX dropped below 25. This is actually lower than the April 2nd's level. We're back to the February March's level. And the last one is gold silver ratio finally dropped below 100.
Yep.
Yeah. Lived it. I mean, it's a little bit above it now, but yeah.
Yeah. It was trading 99.9 for 2 days.
I'm going to check.
99.9.
Yeah, I'll check real fast, see where it is right now. Go ahead. You keep talking. I'll just do it.
All right. So last week for indices, let's take a look at the SPX increased 4.6%. Nasdaq's definitely benefits the most, 6.4%. That's a lot. Dow's a little bit behind, only 2.5%. But overall, it was a great week if everyone is still holding their stocks.
It's green, Sosnoff.
Green. It's the green machine. It is 99.36.
Right now, okay, so it dropped a little bit more.
Yeah. Gold silver ratio, 99.36. I needed it 92. Can you make that happen, Kai?
Okay. Yeah. For sure.
Do something about it. Do something.
Yeah, if Trump says something, anything can happen, right?
This is true.
I don't know if that's going to affect it.
120 on 98.
I don't know that Trump can affect the gold silver ratio. I think that's a different. I think that's a different animal.
He can do anything.
He can do anything he puts his mind to. He's amazing.
Right.
Yeah.
So everything was out of the expected move last week. It doesn't matter as indices, individual stocks, or anything. So if we take a look at the expected move from the beginning of last week, can we go to the next slide? The expected move was 3% up or down. That was actually a pretty big number. But
yeah, you lied to me. You lied to me last week, Kai, because we went outside that expected move on the first day. You lied to me.
So you're going to blame Kai?
I'm going to blame Kai. Kai, this is all your fault. You presented it. You own it. It's yours.
No, when we talked about what he said, we said we were already halfway off the expected range, right?
Yeah, I don't want to care. We talked, but you said 150 some odd points. We were well out of that on Monday. I'm sick and tired of your stuff, Kai. Do a better job.
Okay, I'll try. These numbers are pulled from the platform.
Thank you, Kai. Appreciate it.
So this week, the expected move number is even smaller. It's 2.5%. Yeah, 2.5% seems big if we look at 3 months ago.
Historically, that's a big number.
Right now, it can happen any day.
Yeah, I mean, historically, that is a big number.
It is. So the end of last week, VIX actually closed below 25. So that's why the expected move number is slightly smaller. Right now, it's trading just above 25 still. On average, this is a large number. VIX trading at 25, but because of right now we're at some crazy period. So any day we can see 2%.
I don't have where's the VIX 1 day? I'm going to see that. VIX is 25.20. The VIX 1 day. Wow, 24. Yeah. Okay. Thanks.
Yeah. All right. IVR. In the past 2 weeks, pretty much everything IVR dropped. Last week we saw, other than the crude oil, all the IVRs dropped again. So right now it's much lower than 2 weeks ago.
Yeah, but let's talk about this for a moment. Still not getting paid, right? I mean, volatility in the 23 handle. If you put stuff on in the last week or so, yeah, maybe you caught 28, 29 implied volatility. If you put it on the prior week before that, you were in the teens. I mean, you're still not, maximizing implied volatility contraction. Yeah, we haven't had it yet, is my point.
Sure.
Yep.
Yeah, it's all about if you got lucky. I mean, there's no way to plan that.
Yeah. It's tough, especially for zero DTs. The swing is huge.
Yep.
Yeah, I saw a lot of bad news online trading zero DTs. You got to be careful.
Don't listen to that online stuff.
I'm just reading online articles or whatever.
Don't. Knowledge is power, but not when it comes to those silly articles.
Okay. All right, so next one. Some big movers or interesting charts from last week. The first one, definitely the decreasing implied volatility. VIX trading below 25, actually. So this is back to the pre-tariff level. We're back into the kind of a March level right now. So 25. Just for information.
Yeah, it's kind of crazy, but yes, we're very aware of this one for sure.
Yeah.
See that white line? See that white line? I mean,
that's 25.
You need it under that to be paid, I think, in my opinion.
Yeah, somebody just wrote to me and said, the VIX has dropped a lot and IVR's come down a lot, but they haven't been paid.
Yeah, that's exactly what I'm talking about.
What do you think it is?
I think we need to be below this white line, and you're right at that white line. I would normally consider this high implied volatility. I think this is still high. You had to have powder dry to put on positions after.
First of all, 25 is still high, of course. Yeah. But the other thing is, when you get what'd you say the rally in the SPs was last 4.6%?
4.6% last week, yeah.
Right. So here's the thing. If you had vol drop as much as it wouldn't have dropped as much if we hadn't rallied 4.6%. Whenever you get a 4.6% rally, what happens is that rally takes away a little bit of your, it's
delta.
It's going to also
delta.
It's going to suck away some of that premium that you're making because you're going to lose
that you're anticipating to make because the move is so big.
Because you're going to lose on the delta
side.
So
you're losing on the delta.
Yeah, you're going to lose on the delta. So what happens is it's usually the next week or so when things start to normalize. In other words, when you get that volatility contraction, but it happens on a big, huge up move, like a 4.6% up move,
then what happens is you get
we probably move too far.
We move too far too fast. Is the bottom line. If we'd stayed inside the expected range, which let's just say was 2.5%.
This is one of the fastest moves in history back.
I understand.
I'm trying to give you.
That's why I'm explaining it. If we move 2.5%,
it is less than 0.5%.
You're not doing a good job of explaining it, so I'm trying to help you. But go ahead.
If we move 2.5% or less, all the vol comes in. When you go to 4.5%, you're playing catch up on the deltas. I think this week you'll see that vol, that IVR drop, start to come in.
This is why we both thought last week near the end of the week, which we didn't get, we would get a little bit of a sell-off in the market. You actually got a little bit of a drift up, which didn't help.
Yep.
Go ahead, Kai.
Cool. All right, so next slide. Gold silver ratio. We already talked a little bit. So gold silver ratio in the past months, it's been trading above 100 for 12 days. We talked a little bit last week. So the longest consecutive trading days that this ratio trading above 100 is just after COVID started. It was 40, 44, or 45 days, calendar days in a row. So this is the second longest trading in a row. And now it was trading like a 99.9 for Friday, Thursday. Wednesday we're trading 99.8. So right now you said 98 something?
99.36.
Oh, okay. So
that's not the story here. The story about this is that if you go back to COVID when it had the 14 straight days above that, the whole story.
No, 45.
45 days. I'm sorry. When you had the 45 days COVID when it traded above 100, the whole story is it went down faster than it went up. It basically crashed after COVID when things normalized. So I think the reason that you're in this trade is not because it's been up for 12 days in a row, whatever it is. It's that when this thing does turn around, it has a history of like crashing.
Do you think it's going to be the same this time?
100%. I don't know if it's going to be 45 days from now, if it's going to be tomorrow, but yeah.
Okay.
Don't get in front of. Let's put it this way: if it starts falling, don't get in front of it.
Sure.
Big F.
All right, so next, let's talk about the earnings. So last week we had a lot of earnings.
Can you take a picture of this so you don't have to ask me every day? He's got it right here. Okay, can you do that? Take a little screenshot of that, will you? Hold on one second. Southern's going to take a screenshot of this, and he's not going to blame me all week for not knowing what has earnings. Southern, okay?
Got it.
No, this is last week. This is last week.
Oh, is it last week? Oh, you're going to screw Southern up so big. Oh, because you do a week in review. We didn't have to tell him. He would have been looking for IBM.
No, I would have figured it out.
I don't think.
No, IBM's last.
Oh, this is last week. Yeah, I don't want to care about last week. Go ahead.
No, just talking about last week. So all these companies, only the EMPH had a post earnings downside of 15% move. The rest of the companies rarely see a more than 6% move.
No, I mean IBM was down like $15.
Not at the close, probably intraday, right?
No, it opened and stayed down all day, like $16, $17 all day long.
Oh, is that?
Yep.
Probably.
IBM did. Chipotle opened down and then rallied a little bit. The other ones, I don't know. We traded them. Oh, Intel was down. Intel was down all day. So there was a couple. I mean, Intel was down. IBM was down. Yeah, and Enphase was down.
Okay, I'll double check that. So last week, at the end of last week, we're already seeing 600 companies announce the earnings, roughly. Let's take a look at the next slide. So completely flipped the results from the week before. The week before, on average, we saw more losers. The average returns negative 1.5%. 1.5% for the average earnings. 1 day return is actually a pretty big negative number. So last week, it completely turned that over, and there's more winners, 55%, and average return from all these 600 companies turns to the positive 0.1%. So this is close to the historical long-term average number right now.
Okay, good.
Only week 2.
We're back, baby.
We're back.
Yeah. All right, so
50-50 or a little positive drift, 55-45. We're back, baby.
I think
earnings
the reason we have more winners
we've had, so yeah.
I think the last week we had more winners is because the overall market just drifted higher.
Yeah,
everything
it was a good week. It was a good week for earnings.
Yeah. Okay. All right. So last slide. That's the one you want to take a picture. We have.
He's taking a picture. There's no way he's going to remember
what? I'm going to do this on my slide. On my screen, it's better. I can see it.
So we have.
I'm taking a picture.
Take pictures. Now you don't have to ask me all week. My job here is done.
There's nothing today.
I gave you the equivalent of what Beth did to me years ago. She gave me a carafe of coffee to keep at my desk, so I wouldn't have to ask her. Do you have to take a picture with your tongue sticking out? It's kind of creepy.
There you go. I'm not going to trade.
Now don't ask me about earnings. You have it.
I'm not going to trade MGM today.
It was before the market opens on Monday. You couldn't trade it, okay? Okay.
Tomorrow, SoFi, PayPal, Spotify.
That's UPS. You couldn't read that? You didn't know what the UPS meant?
What do you mean? What I say?
Probably Spotify.
You skipped it.
I don't have a position on there.
Oh.
Visa, Snap, Starbucks.
So you don't put on positions in stocks for earnings that you don't have positions in?
I don't put in positions in stocks that don't trade, and UPS is one of those. Thank you so much for your help. I really like you when you help me with my trading. It's so beneficial.
It really is.
These are the companies has three or four liquidity stars. Pretty liquid. Now UPS probably not your favorite, but these are more liquid than the other earnings companies. Sure. I didn't put on a lot. These are the most important one, most traded one. So this week is probably one of the most important earnings week. We have roughly 1/3 of the S&P 500 companies announced earnings this week, only this week. So a lot of important companies: Microsoft, Meta, Amazon, Apple, all these, right?
Tony's favorite company, Fubo.
FUPA, I call it. I call it FUPA.
FUPA? FUPA on Friday.
FUPA on Friday.
Don't they got bought out by somebody? Didn't they get bought out by Disney or something?
FUPA?
Fubo? Didn't they get bought out by somebody? I don't know. Maybe I'm wrong. I thought they were under a deal.
I
don't know. They were wrong.
FUBO and Disney and Hulu. Yes, you are correct. Disney acquired a 70% stake in the combined company.
Anyway, it's good stuff, Kai. Thank you.
Beautiful.
Good
Happy
stuff,
trading.
Kai. Thank you. Times 2 squared. We're going to take a quick 90-second break and come back. We got more Tasty Live. I'm going to have him do the show one time in Mandarin for me so that I could not understand his jokes. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. Good job, Kai. You get another week.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building. the amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts. Some people say it's insane. That's what I do.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Trade size varies between traders. In a larger sized account, a trader might trade 10 contracts per transaction. In a smaller sized account, a trader might only trade 1 contract per transaction. The term tranche allows us to quantify and size to a common denominator. 1 tranche would represent normal trading quantity. 2 tranches would represent 2 times the normal quantity, signifying a larger trade size. Of course, trade sizing is immensely important. We recommend a tranche being far less than your max exposure.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Tomas, we are back, my friend. We got more Tasty Live. That's right, with the opening bell in less than a minute, Sadnov. So I'm not going to quote too much because we're going to open here. Even the S&Ps have turned green, solid by $10.
Yes, that surprised you? They were down, 30 last night?
Yes. Does it surprise me? I'm looking. I think I said this to you on Friday that I'm leaning pretty much delta neutral, looking for a sell-off to get a little bit of delta, and that's what I think the majority of people are doing, and it's not coming, Sadnov. That's the problem.
Yeah. Hey, I don't know if you have a silver position on, but I just got to notice that got
Time to roll.
Time to roll.
Silver May has 29 days. So I think you have
the futures.
I'm looking at the futures.
Well, it said first notice. My second first notice. So.
Your second first notice?
Yes.
Your second?
So
let me digest that. It's your second first notice. That's like being a little pregnant. Your second first notice.
Okay, I'm not listening to you.
There's the opening bell. Sadnov saved by the bell.
I just rolled my silver, so I don't have to listen to you.
On your second.
On my second first notice. Bang, 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 bang.
On your second first notice. Even the S&P is still solid green by 8. NASDAQ turned unchanged for a second. It's up slightly. That's 2. The Russell, I guess the strongest of the group, up 35.
I don't like gold rallying here, so make it stop, please.
Gold up 13, silver down a penny and change. Let's see some of the movers here.
But they are killing gold premium. I will tell you that much. Myrtleizing it.
Gold premium.
Gold premium. Myrtleizing.
64. Let's take a look at what's going on. Yeah, I don't know about that. Yes, enough. We will see. Lilly down 15 and change. Microsoft down 2 and change. Coin down 2, surprising with Bitcoin basically unchanged. MU down $1, Marvell down $1, Nvidia down $1, just rounded.
NASDAQ seems a little softer than
As it
The
just caught a
S&Ps.
bit, it's up 30. But yeah, I understand what
Which
you're
one?
saying. NASDAQ.
Yeah.
Meta up 9, Netflix up 9, Boeing up 6. What happened to Boeing? Tesla up about 5. Royal Caribbean, which has earnings tomorrow, sounding off in the morning, up $4 and change.
Well, can I tell you some things? There's a
I don't think I
lot
can
of
stop you.
there's a lot of big movers in the stocks that are post earnings. And so I feel like it's an interesting phenomenon what's happening. They're kind of muted going into earnings and on earnings, and it seems like they have the explosion after earnings for whatever reason. Maybe the numbers don't come out total, whatever it is, but like Boeing's a perfect example.
Agreed.
There's more than just Boeing. Netflix is a perfect example. But there's even more than that. I just can't think of them right offhand. But all these are pretty damn interesting. I am taking a quick look at kind of what we have going on here. I want to say it's kind of like a quiet opening, but I feel like the S&P's up 17.
Quiet open continued to the upside, right? I mean, we've had 5 days here. I mean, we started the week somewhere around 5,200. The last 5 trading days, 5,200. Here we are at 55, 65, sound enough. That's a big move going to the expected move, 150 points last week, 130 points this week. Not a lot for the movement that we've had, sounds enough.
Like I said, I feel like it's a big move for a That's a big move. I'll leave it there.
As foretold, Sadnov, you foretold it. Even the S&Ps might be up, but the Nasdaq's down, Sadnov, down by 8. As you know what? Seriously,
I just told you I thought
there's
the
those little nuggets that you just don't get everywhere, Sadnov. Sometimes, even on a Monday, you're firing on all cylinders.
I just told you the Nasdaq looks super weak. Really.
You are amazing, man. When I grow up, I want to be just like you someday, without the limp.
I said nobody ever. All right, let's see what else we got.
That was limp, not limb.
Yeah, I heard you the first time. Without the limb. I want to be just like you without the limb. No, you'd want that limb.
Volatility by 18 cents. Sadnov. Bonds, Sadnov down 2 ticks, 115.24, pretty much mid-range.
Yeah.
Give me something. Net gas is up. I'm trying to heat the pool. This is ridiculous.
Yeah, the Nasdaq looks a little weak here. But it's good for my position, so I'm not going to do anything crazy. I didn't roll any Nasdaq. We're a little short here. All right, I need some opening trades. Our theta numbers, because we rolled a lot on Friday. Friday was 21 DT, right?
Yes.
Friday was 21 DT, so we rolled a lot.
Flattens out your delta.
Flattens out our deltas, flattens out our theta, flattens out our extrinsic. And in addition to that, took a few positions off. We need to add some new positions.
Okay.
And I need to get...
You need delta one way or the other. What's your delta look like right now?
I'm a little short. Not that much.
Oh.
Yeah, a little short. Mostly short NASDAQ, so it's a good morning. Nothing there.
Good to be you. Spotify down 20. So I'm not going into earnings.
It's my biggest winner this morning, but Spotify has been our biggest loser lately. So I have an inverted crappy position on. What'd you say at earnings today? Spotify, what else?
Spotify and GM for you, Sadnov, if that's all you care about. Those are the 2 you have positions in.
Let me tell you something.
Also have Honeywell, RCL, Coke, Pfizer, PayPal. Not a good Mo.
Okay, so here's a couple things. Spotify.
If you have a spotty inverted position and it's your best position of the day, you probably should take it off.
Godspeed trying to do something in Spotify. The markets are wide, and it's a very expensive stock.
And you're still in May with 18 days to go. You got lucky. But you are right. Markets are $4 or $5 wide in the air. Your best day could quickly turn into nothing, Sadnov, because those are wide markets.
What do you do in GM?
What do you do in GM? Well, Sadnov, I have a Denali. It's a whisper, quiet car. I kind of like
that car.
I like it. I like it a lot.
It's huge.
It is. It's what she said.
But yes,
That's not what she said.
It is huge. Yes, it is. My wife has said it's huge. Yes, it is. It is.
I'd like to call your wife right now. I'd like to use my phone a friend, and I'd like to call your wife for confirmation because I don't think that I'm going to get I don't think you're going to get the confirmation.
You want me to call her?
What?
You want me to call her?
Ask her if the Denali's huge.
I'll ask her if it's huge.
No.
You want me to?
No, I don't want to embarrass.
Okay. Don't threaten me.
I don't want you to embarrass her.
GM's had a rally over the last 10 days, sound off. Well, even more than that, from 41 to 47. Good IV rank of 44.
I'm in the GM. I'm in the June GM. I'm in the June 42.52.
I mean, 53 days to go. Your earnings aren't gonna, with a $3 expected move, shouldn't affect your trade too much.
42.52. But Spotify is my problem child. But here's the issue. Okay, I have an inverted trade, right?
Mm-hmm.
The market on the puts is $6 wide.
Yeah.
The markets on the calls is $7 wide.
Yeah.
How do I uninvert that?
That's what you don't. You look to close it if you're having a good day in there.
I know, but how do you close it?
I don't know. Go in below mid price, and then watch mid price for the next half an hour or so.
I mean, I don't think, even if you wanted to trade.
No, but I'm giving you the answer. Go in below mid price, $1 below mid.
I heard you the first time.
Well, maybe the audience would like to know.
Let's say you want to go to May.
You don't have the answer.
Let's say you want to go to May in Spotify.
I just got the email of the day, Sadnov.
Hold on a second. Let's say you go to May in Spotify, and you wanted to trade the 2 times the expected move, $140 away, right? 740 calls in May.
740 calls in May, 18 days to go. That's a market Sadnov would make on the floor $2.35 wide.
Yeah, it's 335. It's 335, 530. You can't do anything.
What's the open interest?
You can't do anything.
Yeah, there's nothing. In May with 18 days to go, you've got at single digits pretty much across every board. Every option cycle. You
can't do anything.
Can't do it. So that's why I'd be looking to close. So never going to be more liquid than it is right now, probably, for your chance to get out. Can I read the email of the day? I think I read it to you on the break. Can I read it to the crowd?
Can you read the email of the day?
Can I read the email of the day from my Taiwanese source, Sean?
If you must. Okay. Sean, you're going to pay for this because whatever it is, he's not reading an email that says how great I am. Yeah, so give it to me.
I'm having difficulty deciding which tasty promo I like the most, which I can understand because we have so many great ones. The one where Dylan Ratigan kisses Tom's ass? You're making too much sense, Tom. Or the one where Tom kisses his own ass? Some people say it's crazy, but it's what I do. Quote Tom Sadnov. I mean,
I didn't say that.
Evidently, we play it, and you do. You do. I know you don't listen to yourself sometimes, and you wonder how I've made it so long. But yes, I think that's good. I tweeted out to Dylan. We'll see what he has to say.
I don't know this. Mm-hmm. I don't know this.
You don't know this. You don't know a lot.
I think this guy Sean, there's something wrong with him.
He's got good ears. All right, Sadnov, you know what? Nothing says Monday. I don't think you're going to find any trades because of this man, but nothing says Monday like this man. Dr. Jim, you have something to say? I can see it.
No.
You sure? Because your eyes aren't like two piss holes in the snow. They were open.
Goodbye.
We're going to go to the Skinny on Options, Abstract Applications with my friend Dr. Jim right after this. Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
I tend to call myself a lonely options trader because I really don't have a lot of people that I can share stories of wins and losses with. Like Tasty Live plays the whole day at my house. I love that they've made everything really easy to digest and take in. I love that you can easily send an email if you have any questions and Tom will be quick to respond to you, or if somebody else, Nick, Tony. I really enjoy that it's a customer focused and it's a customer centric system that you guys have here. And tastylive has definitely changed my life financially because I'm able to determine how and where I can make my gains and not be a passive investor where you're just relying on the markets to do something for you. You could actually go out there and do it yourself.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Dr. Jim, we are back, my friend. Nothing says Monday like you, my friend. And no Tom Sadnoff. Do you want to know why, Dr. Jim?
Man, I would love to know why.
He's incontinent. It's Monday. Mondays are very tough for him, and he needed to take a little potty break. So I'm sure he'll come back shortly. Hopefully, he'll take time to get all his business done so that they're zooming in on me right now. There they go. They're making me the same size as you, Dr. Jim. Does that make you? I didn't even work out. They made me the same size as you. See that?
Did you see that? Did you see that guy? There was that kid on the draft that when they called him to be drafted, he was actually he was in the restroom.
He was in the restroom. He was pulling a Tom
Sadnoff.
Yes,
Did you see that?
Yes, I did see that.
Yeah.
That's how Sadnoff would get drafted too. The same way. Yep.
I mean, that's 100% right.
Yeah.
Man,
Tom will be back.
right.
Don't worry. There's nothing wrong with Tom. Nothing wrong with Tom. He's just having a little bit of a potty break.
There you go. All right. So, hey, man, you're back on the road in May. Is that not correct?
I am back on the road. Could we throw up that slide there for me? I should know with all the alerts I've gotten. May 30th in Atlanta. You know what? If signups don't go well, Dr. Jim, we might have to fly you in so that people will come see Tom and I. That's right. Doors open at 8 a.m. May 30th. It's a Friday. We call it At Work by 11 because you will be back at work by 11. So just tell them that you got a meeting early in the morning or something like that, or you got to bring your kid to school, or your dog ate your homework, or whatever you got to tell them. But you'll be back at work by 11. We'll be done by 11. You got to reserve your tickets. Go to tastylive.com/events. It's the First time I've been out on the road for a couple of years. Might be the last time I'm out on the road for a couple of years. I don't know, Dr. Jim.
So you're gonna fly me in? So wait, just so I understand, you're gonna fly me in to help to boost attendance, or you're gonna fly me in because the attendance is so bad that you're throwing the C squad at them? Like, which one is it?
All of it. I might not show up if the attendance is bad, and we'll have you go with Tom. So make it.
Hey,
make
I'm
it
ready,
easier that
man.
way.
Atlanta's my people, man. Like Atlanta is absolutely my people.
I did years ago, Dr. Jim. They promoted this event from from another company that I worked with Tom and JJ, and JJ was going out on the road, and they promoted JJ and Tom, JJ of CNBC fame. I mean, they talked it up. It was amazing. And something came up where JJ couldn't make it, so they went to the lefty in the bullpen, and I went there and did his presentation. They threw tomatoes at me. They never, you would have thought I ruined everything. Everything, bait and switch. It was horrible. I said I would never do that again. So, Dr. Jim, I would not put you in that position. If signups weren't good, which they've been very strong, we'd love to have you. We still got a couple of seats open. Love to have you. But if they weren't, I wouldn't put you in that situation, as other people have done to me, because I know how it feels. There's the whole lineup. We've only got the first three, I believe, open right now: Atlanta, London, and Milano. Those in the know.
Yeah, well, mine are open, so you've got mine too. So, if people want to come see
is that
Dr.
why they
Jim,
put that up here? I don't share the spotlight with anybody but Tom Sosnoff.
Nah, he's not even here. Like, this is what happens when you don't show up. I mean, this is what happens, right?
This is true.
July 13th, we're in Boston. October 19th, we're in Detroit. And then December 7th, we're in Tampa, which is just, that's just a light jog across the Skyway there. And so, that's gonna be good, man. I'm excited. We're gonna do Options Crash Course live. It's gonna be amazing. So I'm curious. Was that the beginning of your stardom?
Yeah.
Like, was that your Wally Pitt moment?
This is it. Kicking it off in Atlanta. Sorry.
That's exciting. No, I mean back in the JJ. Yeah, back in the JJ days. Like,
no. That was I had done many presentations prior to that. I was a seasoned veteran. By then, when they did the bait and switch and they put the bat in there instead of they didn't even change. They didn't tell anybody. It was like a kind of a game day decision. Threw me in there. He couldn't make it for whatever reason, and it was one of the saddest days of my life. Disappointing, 400 or 500 people in a room. It was, and I did one of my best presentations. I was going to shine. I basically did soft shoe, and when I was done, I gave him and it was crickets. It's crickets.
Yep.
Yeah, I have my best stuff.
Yeah, I know that feeling well.
Yeah,
I know that feeling very well.
It happens.
And so, of course, it does. But if I'm not mistaken, what you guys are doing is going to be very different from what we've done.
Oh yeah. No, this is
going to be
all about trading and trading from bell to bell.
Man, that's great. Live trading, like that's going to be awesome.
Mm-hmm.
Yeah.
Mm-hmm.
Yeah.
Try my best. All right, listen, we stalled enough. He must be doing number 2. I thought he only had to do number 1. Why don't we get to the segment?
No, let's do it. Just a Dr. Jim and a Tony Batista? Man, this is going to be good. All right, Tony. A zero drift world.
I get the drift.
Like, are you ready for this?
I'm ready.
Zero drift world. This is very different from the way that we typically view equity, assets and risky assets. And so I'll be curious to hear what you think here. So, all right, Beth, go ahead and cue us up here on the intro slide. So positive drift in equities is a characteristic of the financial global markets that is about as reliable as they come. And this makes sense because of the growth and creativity and innovation that companies strive for year after year. But would it ever make sense to actually assume a zero drift world in regards to financial assets? So when it comes to positive drift, does it make sense to you that positive drift is so reliable?
Does it make sense to me? I mean, it has to make sense because I've lived it for the last 40 years. I mean, so yeah, it makes sense. I mean, the phenomenon of basically soft selling your company, like, yeah, we're doing great, but who knows, kind of thing, and then overperforming those numbers because you want to give yourself a little bit of cushion, and because the public and everybody is looking to invest, not looking to get short. Most people can't short. Not most people, but it's harder for people to short. It takes a lot more buying power, especially before any kind of derivative product. So no, it doesn't surprise me. But if you ask me what the market does, I would say it's a 50-50 game on any one day.
Okay, that's very interesting. The last thing you said is it's very interesting. We'll come back to that in a second. I do think it's very interesting that the first thing that you went to when it comes to positive drift,
you said very incorrect.
Well, no. The last thing you
very
said,
incorrect. I mean, listen. Treat me like you treat Tom. I could be incorrect. I could be wrong.
I can't do
but
that.
Please don't make me very incorrect or very wrong. I mean, that's just obnoxious.
I mean, speaking of bait and switches, I mean, you guys keep doing this to me, man. A month ago, it was supposed to be me, Tom, and Julia. Julia's gone. It's me and Tom. Today, it's supposed to be me, you, and Tom.
Well, you scared
Tom's
Julia
gone,
away.
It's you and me. I mean, before long, it's going to be me and John McGloin, which I would love, by the way, just for the record. But you guys got to prep me for these things. Like, I can't be expected to do this on the fly. But what's interesting is the first thing you went to was with positive drift. You kind of went to the actions that a company would very typically take. I agree with you, and that they're kind of, they're kind of soft selling, and they're kind of like, mums about the word, and then they overperform on the earnings calls or whatever. And so do you think that kind of, I mean, it's kind of a bait and switch. Do you think that bait and switch is actually one of the longer term determining factors of positive drift?
Yeah, I do.
Okay.
That's why I said it.
Well, when I unpacked it for you and kind of tried to
gently you cleaned it up. You put a nice bow on it.
I just tried to gently
you're a better
show you how
speaker
wrong
than
it was.
but I speak the truth.
I was kind of hoping you might change your course. All right, that's interesting. I think that has no impact at all. Long term, no, that has zero impact.
Really?
I mean, short term. Oh yeah, no. Long term, it doesn't matter. No, long term, it's not going to matter.
Okay, so hold on. So I'm going to agree to disagree with you, and I'll tell you why. What is your time frame? Like, I'm not a long-term investor. Was it a year, 3 years, 10 years, 25 years? I guess I'm a long-term investor in the big nut. Okay, you don't have to slam the door when you walk in. Okay, I mean, did everything come out all right? Did you
Yes.
write?
What?
Good. I only thought you had to do number one. I mean, you obviously had to do number two. Everything good?
No, I'm totally fine. I didn't have to do that. I had to take a telephone call, if you mind.
Sure. See how he ruins everything, because I was just about to make a big point. But my time frame is short. I mean, my time frame is 45-ish days, 30-ish days. I mean, that's my time frame. So yeah, I'm going to agree to disagree. But go ahead. We're talking about positive
really
drift.
Tom, welcome to the show.
Do you know that I built my whole life around positive drift? I think Jim is just doing this.
Sazo, you are the most unpositive drift guy I've ever met in my entire life.
You never
Which
heard
is so funny, by the way, because now if you read the cherry bombs, which of course I do every morning, and Penelope and I practice our reading, and Eli practices his reading now, reading the cherry bomb. It's always so funny to me now that it's all about positive drift. It's all about playing the upside. It's like, man, you've changed. Like you've got
It has changed. It has changed.
I've been a positive. I've given lectures on positive drift now for 12 years.
So if you'd have your money where your mouth is, you'd be so
on it,
short right now, your head wouldn't spin. You'd take 3 months of heat to make 2 weeks of positive drift on the downside.
I love a little positive drift.
That's so funny. But let me get back to Tony's point.
Tony had a point?
So
when you're not here, enough, and I have to fill in.
Tony had a point? What the hell? Did hell freeze over?
Tony told me that this is kind of like back in the day when he had to fill in for JJ last minute and it did not go well. He said, I mean, you're not here. He's got to kind of run the show. It's been a little slippery, Tom. I got to be honest. These first 8 minutes.
Remember, it was actually like in my backyard too somewhere. It was like on the East Coast, Jersey or something like that. JJ couldn't make it last minute and you sent me to fill in and you had talked it all up about, you promoted JJ of CNBC fame and
Blah, blah, blah,
I don't remember
JJ. Oh, my God.
Is there anything worse than filling in for JJ?
Oh, my God. And I did my best presentation, gave him the soft shoe at the end, and it was crickets. And people said, man, we really missed JJ today. To my face. It was horrible. It was horrible. It was a low point in my life.
That's so good. No, that's so good. But Tony, let me respond to what you were saying. So I think everything you said is 100% fair. In terms of short-term time horizon, 45 days, it's 50-50. We're going to get to all that.
Fair, but very incorrect.
Well, no. Well, no, it's just so if you go back to the slide. So Beth, bring the slide back up.
Okay.
So, and I didn't put this on the slide, and it wasn't an intentional omission or anything. It just didn't fit with the way I wanted it to go. Generally speaking, when you hear the term positive drift, most investors / traders even would probably already assume you're talking about a longer term time horizon, just because that is such a longer term time horizon phenomenon. Like nobody who trades in the market for more than 8 hours actually believes that every single day the market's going to go higher.
I'm going to give you a little bit of pushback here too. I mean, you have daily and weekly options being a humongous volume to the overall market. They're not thinking long term. They're thinking here and now. So I'm going to say markets are evolving. I will say in general, when you're talking public, not the second half of the statement that you said, public that trades every day or is looking at the market is thinking long term. I think the person who's putting money in a 401k and not even knowing what symbol that they have their money in the 401k in is definitely thinking long term.
Okay, I think that's fair. And Tom, you love positive drift, as we've already discussed, right?
Big positive drift guy, Jim.
Okay,
the glass is half full with enough. It's not half empty, Jim.
Big, yeah, right. Okay,
right. Okay, thank you, Dr. Jim.
Big positive drift guy.
Slide. Yeah. Well, that's actually not what we're talking about today. We're using positive drift to set the stage for a zero drift world. And that's kind of where I wanted to go today when you were, doing things that are more important than your shows on the Tasty Live Network. But if you think about positive drift, what's really interesting, and this is something I used to always say, by the way, back in my professor days. So back in my professor days, one of the things I used to always tell my students in the world of finance, and especially investing, every single concept, every single phenomenon that you might come across, there is always a mathematical explanation and there is an intuitive explanation. And the same thing is true for positive drift. I am curious, though, how would you guys feel when you were 21, 22, 20, 19, you walk into college, you walk into your first finance class, and your professor is a 28-year-old Dr. Jim? How would that make you feel?
Wow. One of the things I did write about in my chair bomb last night was that I don't think they offered finance when I went to college.
That explains a lot.
I think I predated a financial degree. I don't think they offered it. They had economics was about it. There was no such thing as finance. But if I had walked into a classroom with a 28-year-old Dr. Jim, and I would be like, what, 18, 19, maybe? 20?
No, it'd be probably 20, yeah.
20? I would have had to question, I would have had to, because back then, we kind of paid for our own school. It wasn't like, I would have had to question everything in life. I probably would have just had to rethink, is this loan really worth it?
Yeah.
Do I need this to be a friend?
Would you have, if you were wearing that T-shirt then that said Luckbox, I would have given you huge credit, and I would have been, and I don't see you as a professor wearing a Luckbox T-shirt. I see you as a professor wearing like a sports coat and something else. And so I think if you wore the T-shirt, I would have bought in.
Well, I appreciate that. No, I couldn't. I couldn't wear T-shirts. They made me wear collars. They made me tuck in my shirt. I mean, it was bad. It was really, really bad. But I never went as far
I don't think
as
I've ever seen Jim with a tucked-in shirt. I don't ever think I've seen you tuck in a shirt.
I can't see that either.
So one thing that's really funny is the only time I think I have tucked in my shirt, and the only reason I remember this is because it was for one of our events.
Because your mommy made you do it?
No, it was actually for one of our geeks, one of our geeks event where we were at that we were at like that university and like that lecture hall. Do you remember that, Tom? It was in Chicago. We're at that university, like that
yeah,
lecture hall.
Yeah. We were at the University of Chicago Booth School, the Booth School of Business.
That's
the
what
graduate school.
Yeah. Yeah, so we did that event, and at the time I was only like 4 or 6 weeks out from a competition.
Yeah.
And so I hadn't eaten in like 12 weeks, and so none of my clothes fit anymore. Like I had these dress shirts, and they would just drape over me like a toga, and so I had to tuck it in because if I didn't tuck it in, it looked kind of dumb. So anyway,
forgive me for not remembering that monumental moment in my life.
It kind of pains me.
I marked it down on the calendar.
Forgive me
for not. That you don't remember my bodybuilding day, my bodybuilding schedule, my bodybuilding shows, the pinnacle of my life. That pains me. You know.
I remember
Anyway,
I remember the disturbing photos of you being all greased up or oiled up, whatever it was.
Oh yeah, and there's gonna be more. There's gonna be more in the spring.
I remember those. I remember that disturbing period of time. But other than that, I'm okay.
There you go.
I mean,
right,
Tony
beautiful.
got the post. Tony won the poster on the office, raffle, but
I kept in the bedroom.
All right, so let's go back to the show. All right, let's go back to the slide. Okay, so Beth, so positive drift, right? It has a mathematical explanation, which you see in the left-hand box there. That's going to be geometric Brownian motion. We've talked about that a million times on the show before. If you're brand new to the program, brand new to the network, welcome aboard. I hope you stick around. Just pop into the old Google machine, pop into Grok, pop into ChatGPT, whatever, and Google tasty geometric Brownian motion. You'll see at least half a dozen segments I've done. But on the right-hand side, it also makes sense that there has to be positive drift baked into the market. Otherwise, there would be no demand for risky assets. Like everybody would just buy T-bills. Like it wouldn't really make any sense if there wasn't this positive risk premium expectation that's built in. Okay, Beth, go to the next slide though. So this is what's interesting, and this is something that Tony kind of said before you joined the program this morning, Tom. So Tony kind of already led us down the path to where we were going. In derivatives pricing, here's what's fascinating. Derivatives pricing models, such as the Black-Scholes model, they assume risk-neutral pricing. They assume a risk-neutral world. Now, that's important because that's different from how most equity models price financial assets, such as the geometric Brownian motion model. They actually assume a level of risk aversion. Now, we've talked about risk aversion on this very show. We've broken down the math. We've kind of worked through the different curves, like looking at like utility curves and consumption curves and things like that. When you move away from risk aversion, which makes a lot of sense in an equity world, by the way, but then you go to risk neutral, it opens up the world to where derivatives pricing actually normally uses what is called a martingale model. A martingale model is actually fairly simple. It might look a little complex on the screen, but it's quite simple. The expected value of X, whatever X might be, think of an options price, of course. The expected value of X over some incremental time movement, so, T plus S, you add time equal T now, you add, S units of time, whether it be hours, days, weeks, whatever. The expected value of X, given the information that you have right now, so all the market metrics that are moving in the market, it's simply going to be equal to whatever X's current value is right now. So in other words, the best estimate of where a given market metric might be going in the derivatives world is where it is right now. So what do you guys think about that from a general standpoint in terms of where the market might be going, where the asset might be going, where the metric might be going?
First of all, I think that's the way it has to be done when you do derivatives, because a positive drift doesn't make any sense on a short-term pricing model. Because positive drift is something that would there's a concept of some future price in there, but when you're pricing options for tomorrow or the next day, positive drift's irrelevant. So I think assuming a risk neutral world is the only way you can do it. That's why they did it that way. It makes sense to me.
Man, look at this guy. You give this guy a 6-minute break, man, he's hitting on all cylinders, Tony.
He can
all
think now. He's not clinching his tuchus.
I'm just saying, he's got astute observations. He's got, wow. Man, that's really, he's hitting it out of the park. Speaking of hitting it out of the park, by the way, did you guys see my Browns? Did we get the biggest steal in NFL draft history was Shadur Sanders in the 5th round? Man, I mean, come on, guys, talk to me about this. Is this not the biggest steal in NFL draft history?
I like what the Browns did in the draft overall, but, you know, you had to give up a generational player to do it. But you're not a Browns fan, so who the hell do you care?
I check the tapes. I've been Browns from day one. I grew up right outside of Cleveland.
Well, to be fair, they're still the Browns, and so they're going to disappoint you no matter what.
I don't know, Tony. What do you think, man? Biggest steal in NFL draft history?
I'm not.
No.
I mean, obviously, I'm paraphrasing somebody else who said it, who watches the NFL draft, completely. They didn't like what they saw. Okay, that's why he went where he went. If they liked what they saw, and it's just plain and simple, it's not a conspiracy or any other bullshit. If they liked what they saw, he would have gone. Because nobody cares. If you think you're getting a number 1 through 10 pick at 150, somebody's taken him before that.
Tom Brady would be.
Tom Brady went 6th round.
A 6th round pick would probably be the greatest steal in draft history.
Yep.
So Shadur Sanders has a long way to go before you can give that title.
Right.
He's about 7 Super Bowls behind.
Sure.
But
Sure.
But right now, I have to give that title to Brady. Okay.
That's fair. That's fair. Well, we got a little time.
I'm glad
we
you
got a
agree
little
with
time.
that.
All right.
Okay.
There you go. All right, fair enough. Okay, all right. So Martin Gamala. Okay, well the crescendo this morning, we're way behind schedule. So Beth, get us on the next slide. This is the main point that I wanted to make this morning. So what does all this mean? Well, believe it or not, but I agree with both of you. Like, it's 100% right. When you're in a short-term world, risk-neutral pricing is the only way to go. And what's really fascinating is because of the risk-neutral pricing and because of the absence of positive drift having a meaningful impact on that pricing, this allows us to kind of, utilize a lot of the things we use strategically every single day. For instance, at the money vertical spreads being 50-50. If positive drift was baked in, they would not be 50-50. Just like we know that over time, the market is not 50-50, it's 53-47, right? And so, but that's not the case when you look at an at-the-money vertical spread, it's 50-50. Expected moves are always symmetric. Like, you don't see them a little bit kind of off to one side because of the positive drift. They're always symmetric. And so, again, that's that's an implication of risk-neutral pricing. And then lastly, put-call parity. Now, put call parity, with the extrinsic values being equal, calls and puts across, the option chain, that's obviously a little bit sticky because you have other elements that impact that as well, such as dividend payments, such as volatility skew. So that one's not as clean to see like right away, but you can go into the market right now and you can look at it at the money vertical. It's going to be 50-50. You can go into the market right now and you can look at, we've got Microsoft earnings this week. We've got Meta earnings this week. We've got Apple, whatever. You can look at the expected moves and they're all going to be symmetric. That's because of risk neutral pricing. And so even if you buy into positive drift, maybe not as much as a Tom Sosnoff, but maybe like 50% of the way there, then zero drift still makes the most sense in a risk neutral option pricing world. And by the way, Tom, speaking of the cherry bomb, I did feel personally attacked this morning at your comment related to lavender lattes. So I would just ask you to please clean that up in the future.
It's funny. Somebody wrote to me. They said, is there really such a thing as lavender lattes? And the answer is
yes, there is.
At Bad Coffee, I think it's our number one selling thing.
I cannot believe that.
A lavender latte.
Really? It really is that? I thought it was just an alliteration move.
No. It was really a
No, I'm not kidding. I think it's the number one selling,
You must have some clientele over there. Oof.
Well, you wouldn't know because you couldn't get in.
The line outside
the door.
All right, let's get them a few takeaways. Let's get them over to market measures. Man, we are so far behind schedule.
How do you even order that?
Man. Pause.
How do you order it with a straight face? Would you order a lavender iced tea?
Would I order? I'm not a big fan of lavender.
What about to go to sleep?
What?
What about to go to sleep?
Go to sleep? What do I need
Spray lavender on your bed and stuff like that to go to sleep. You never heard that?
No.
Maybe you could use that and maybe you won't wake up 2-3 o'clock in the morning and go.
So positive drift is a very reliable function of the global financial marketplace. But
hold on, I'm getting a lesson in life here, Jim. This is a very important life lesson I'm learning.
It actually makes more sense to assume zero drift in the marketplace, such as the derivative space and the option pricing models that we lean on every single day. And I'm actually with Tom on this one too. I'm not a lavender guy. I can't do it.
Yeah, lavender's tough for me.
Yeah. Because there's no getting away from it. Like if there's lavender in anything, like it's all lavender now.
Can
you
I
don't do just a little bit of lavender.
Can I tell you, since we're on the topic of lavender, can I tell you one of my biggest nightmares? Every year we go up to like northern Wisconsin, and up there they have like these lavender farms.
Build 1,000 bridges. One time a year, you got to go up to the lavender farm. One time.
So they have all these lavender farms, and then they have all these lavender stores, and all these sellers, everything with lavender. My wife loves lavender, and I'm trapped. I'm like, I'm not going in that store. I'm not going to that stinking lavender store one more time ever in my entire life. So I will sit in the car, not getting any more of that lavender. I hate lavender stores.
That's pretty good. No, a whole store for lavender, that would be a tough draw.
They have lavender stores. They have lavender farms. At the farmers market here in Chicago, they have lavender stalls. Who buys all this lavender crap?
Who goes to the lavender event?
Yeah.
I wouldn't have
Never
known.
been to a lavender farm?
I've never been to a lavender farm.
I have.
Okay.
It's amazing.
Evidently, you keep going back. I mean, you wouldn't do it if you didn't like it.
Lavender
Everybody does what they
chocolate,
like. So
lavender water, lavender beer, lavender
beer even.
Lavender whiskey, whatever you want. Lavender everything.
Got it. Okay.
Sorry, Jim.
Mm-hmm.
No, I think we made it. I think we made it. And now I've gotten life lessons as well. Lavender Farm. I didn't even know that existed.
Who knew?
Yeah.
Is that it?
I mean, I did the takeaways.
Anticlimactic for you. Next time the first is coming, next time you go for your anniversary, why don't you try a lavender coffee with the wife?
Yeah.
First of all, it's not my anniversary. It's my month-iversary. So now you guys have disappointed me twice. You did not remember my previous bodybuilding season from 2017, and you also totally botched the month-iversary. So I'm not really sure what to believe anymore. Tom wasn't even here to start the segment. So, man, this is really – things are changing, man, and I don't like change.
Well, I mean, the good thing about this is I can let you go.
Happy month-iversary. We do have a month-iversary coming up on Thursday, so happy month-iversary to you guys.
Ciao.
More Tasty Live after this. Even the S&Ps up $1.25. What do we got coming up next, Oz? 14 years we're doing this. Market measure next. We'll be back in 90 seconds. Got to remind them every day.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
I tend to call myself a lonely options trader because I really don't have a lot of people that I can share stories of wins and losses with. Like Tasty Live plays the whole day at my house. I love that they've made everything really easy to digest and take in. I love that you can easily send an email if you have any questions and Tom will be quick to respond to you, or if somebody else, Nick, Tony. I really enjoy that it's a customer focused and it's a customer centric system that you guys have here. And Tasty Live has definitely changed my life financially because I'm able to determine how and where I can make my gains and not be a passive investor where you're just relying on the markets to do something for you. You could actually go out there and do it yourself.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Tomas, we are back, my friend. You know what that means. Time for a little more Tasty Live with a market measure. Before we do, let's take a look at the market. Basically unchanged. So I don't know if Tesla up $4, even the S&P's up $4 and change. NASDAQ went red again. Had a little bit of two-sided action, but muted in between there. Dow up 174. You leave the clubhouse. The Russell sounding off up 14. Bonds over 116, 117.07. They were weak this morning. Remember, they traded down around 115 and change. Almost flirting with going under 115, 14 ticks away. They're now over 116, so enough 116.01. Oil down 74 cents.
Yeah, I don't like the little rally in gold here.
Gold rallying up
loving
almost
that.
$20, 1990.
Not loving the little rally in gold. Other than that, we are in pretty good.
Goldman Sachs up $6.68. I thought they must have made a good trade or something like that.
They must have got some extra money.
They must have ripped somebody off or something like that. I mean,
love
they still honor the trade. They just do it at a lower or higher price, whatever's beneficial to them.
Jesus Christ.
That's how you make 6 points on your stocks, Oz. You slay a whale.
All right, let's see what else do we got going on here.
You ready?
Anything else?
Royal Caribbean up $4.90 for earnings. I don't know if it has earnings after the close today.
I don't trade Royal Caribbean.
I know, but do you remember they were going bankrupt? They're now a bankrupt $57 billion company. So almost 58.
Oh, by the way, I finally got filled in Spotify. Widened out my strikes. Took a small shot for tomorrow.
Just can't stay away. You got low ding over there too, by the way. I mean,
I'm sorry. I'm trying my best.
It's not what she said.
I'm Tom Sosnoff. He's Tony Batista. This is Tasty Live. And thanks for spending your...
Right, it is.
Thanks for spending your morning. Tony's in the studio today, so he's ruining the whole week, just so you know.
I'm here because my friend Scott Sheridan is going to be in studios, and I wanted to welcome him back personally. That's why I'm here. Scott Sheridan Studios, Mr. Scott Sheridan.
You're so happy he's here.
I am happy. You know why, Beth? It was that cake you made, Bunny's Bunt Cake recreation that you made. It was quite good.
The
quite
famous,
delicious.
yes.
Good job, Beth. You are domesticated.
A little.
You think Beth's domesticated?
No.
Yeah, I don't think so.
So did I answer too quickly?
I mean,
give me time to think about it. No, I've had conversations with her. She's not domesticated.
Yeah,
she's
I admit it.
Great mom, just not domesticated.
Yeah, I don't think she's domesticated.
Yeah. Kids aren't lacking anything. She's just not domesticated. The dad makes up for it. It's good. He's domesticated.
Yeah, you guys ruined me.
I believe we did.
I think
your father had a good hand in that.
Yeah.
Teresa made you right. You were right. You're okay. Don't say it.
I got a lot to say. I don't know.
Don't say it. Don't say it. Market Measure, sponsored by the CBOE.
No, I want to say first, Beth, that we're down to the home stretch. Within a couple of weeks, Tony and I are traveling together. It's going to be the beginning of a very long year. I'm going to...
Hot Atlanta. I just mentioned it in the last segment. Yeah, for sure.
Yeah.
That's right. May 30th, Southnoff.
We're going
to... A month away. A month away anniversary.
It's a month away. We're going to be at the Buckhead Theater in Atlanta, Georgia on May 30th.
Been there before.
Plenty of room. Can't wait to see everybody. It's a Friday morning show. This is the first time we've ever done this. Doors open at 8 o'clock. Show starts at 9. It's over at 10:30. You're at work by 11. And
free. Legendary Traders. Who's coming?
Right now, we're trying to find 2 legendary traders. After the last couple of weeks, I don't know if we have any left, but we're going to find 2 legendary traders. You could have,
Saz, I already have it. You have made my life complete.
So
my legacy is being able to watch you for the last 14 years.
Tell you a funny story. So years ago, that's true. 15 years ago, we were doing a show somewhere. It was at the Chicago Convention Center, McCormick Place.
Okay.
It's a big event.
Big.
And there was a lot of different
speakers.
A lot of different speakers. So I went out.
Colin Powell and stuff like that.
Stop yourself. Okay, so I went out and I found a high frequency firm that I'm friends with, the best traders I knew. Said, you know what? I'm going to throw like the craziest, like best traders. They make so much goddamn money. Put them out
funny.
There. What?
Not even funny.
Not even funny. Oh my God, was that show torture? It was painful to watch.
Because they're traders.
I know. So
I do that sometimes.
I was trying to think about it. Like, you had to bring in, like, who would you bring in? You could bring in somebody that, like, I mean, no, really, who would you bring in?
I don't have
other than me.
Saznov. Saznov. I can only prove this one way. 14 years ago, when you started this show, it was supposed to be called Tom and Friends. And you were going to have your friendly traders come in each week, rotate.
No, that was just an idea we were just playing with.
Yeah.
It wasn't like
something. I started. I broke the mold. Nobody could do it any better. And it became Tom and Tony. That's it. End of story. So there are nobody better. Or you would have brought them in.
Well, that's okay. That's what we told you.
Anybody available?
That's what we told you.
That's what we told you.
No, but it was funny. I did want to do a segment once, just so everybody knows. I wanted to do a segment once on like some of the best traders in the world, but people that nobody had ever heard of. Because they're not public.
Yeah, I get it.
And so I went around and I talked to a bunch, and I'm friends with a lot of them. And so I started to talk to them, and I couldn't get not one person.
Because they don't want to talk about what they did.
Not one person.
Right.
And it wasn't that they wouldn't want, remember the time we had Paul on the show?
Yeah.
It's a disaster.
Yeah, and he's amazing.
He's a disaster. It was a disaster.
Yeah.
Well, what do you think about, it's like.
And he's such an unassuming guy, too. Very nice guy.
I know. It's so funny. It just didn't, it doesn't work.
You're cutting into Mr. Scott Sheridan's time here because I don't think you're going to get this done in 6 or 10 minutes.
Okay, anyway. But I'll figure out how to do that. It's really interesting, but there's always people I've wanted to talk to about trading, but I've just never been able to get them to open up to where it's actually interesting.
I'm an open book.
I know.
Everything's on a follow page.
Yeah, somebody asked me today about the follow page. They sent me an email. I said, are those real trades? And I go, yeah, they're real trades.
You like some?
They go, oh. No, they're everything we do on the follow page is totally real. We don't have actually at Tasty, we don't even have a virtual platform. Let's go to the Spooze Up 12. Let's go to the next slide. First slide. And by the way, if you haven't gone to tastylive.com/events, please go visit it and see all the events we have coming up. We need you guys to come out to make it all worthwhile so that makes sense for us to do.
Mm-hmm.
At Tasty Live, we emphasize the importance of managing position size to safeguard your portfolio with the principle, trade small, trade often. This has led many traders from novices to experienced professionals to ask how small positions can be quantified and why they're crucial for effective portfolio management. To answer this question, we conducted a study analyzing different position sizes within a $200,000 portfolio to quantify their impact and results. The $200,000 portfolio can be adjusted to any level you want, multiply by 5, divide by 10. I don't care what it is. We just had to pick a number to get enough stuff in there. I will tell you also that the two things that have had the biggest impact on my trading and Tony's trading over the last 14 years that we never did prior were staying small and managing early. Those are the two biggest takeaways of the last 14 years. The staying small piece was hard for us because that wasn't our background. It's always trade big or whatever.
Yep.
And then, so getting to trade smaller was
big
hard.
go home was definitely.
And then also managing trades early. Whatever it is, managing trades early. And those are the two biggest changes to our trading and the biggest impacts that we've had on our careers. Let's go to the next slide.
Sad enough, Tony from Mexico would be the person that I would like to do a show with. He's the best trader that I know.
Tony from Mexico?
Yes.
He's a damn good trader. He's not the guy I was thinking of. No, I was thinking of like some crazy, like the Kessels of the world.
Understood.
But I couldn't get them to come on.
You mean the guy whose car caught on fire and he decided to just leave it because he didn't want his name in the paper? Yeah. Okay. Yeah. He's not going to come on and open up. No.
Yeah, like the guys who made $1 billion. Those are the guys I want. Like,
yes.
I want Ken Griffith to come on and talk about it, but he's not really as much of a trader. I always thought it'd be fun to interview, I thought, but I can't do it anymore. But I thought like talking to Pettifree would be fun.
Mm-hmm.
Guy that owns Interactive Brokers.
Would you do it in a boxing ring? Where would you do it?
No. But I think it'd be fun just to ask him some questions because he started out, Blair Hall, originally, maybe one of the, like those kind of guys.
Sure.
Kess, LaRock, those guys.
Yeah.
Remember how much fun it was talking to Louis Borsellino?
It's awesome.
Yeah, he
was opened up like a book. He was great.
But he was the only guy that opened up.
Yep.
If you haven't seen it, by the way, we have a documentary out there called Sold. And it's a story of Louis Borsellino, who's the biggest S&P trader back in the, I want to say like 80s and 90s.
Was it bonds?
No, S&Ps.
S&P.
He's the biggest S&P trader at the CME for about a decade. And the documentary is great. If you haven't seen it, just look on our site.
No, nothing was off limits.
Nothing was off limits for him. Story's freaking amazing. And it's about a 40 minute documentary we did on Louis Borsellino. Go check it out if you haven't. He told his story. It's very moving. It's got some amazing highs and some incredible lows. And I didn't even know this guy. I just heard about him.
Yep.
So he was the biggest S&P trader for a long time. I mean, taking down the equivalent of 1,000 lots of S&Ps then, which is the equivalent of 5,000 or 10,000 contracts today at a clip.
Because it's split adjusted,
Yeah. So anyway, 2015 to 2025, 16 Delta short strangles, 45 days to expiration, managed a 21 DT. And we looked at taking 1%, 3%, 5%, and 10% of the portfolio on a single trade. On a $200,000 portfolio, if we're talking about 16 Delta short strangles, where would Tony Batista be allocation-wise? Now remember, here's the details. 16 Delta strangle, so it's undefined risk, and it's a $200,000 portfolio. It's not portfolio margin.
And we're using SPY. And it's not portfolio margin, although it qualifies for
it doesn't matter what you use, it matters how much of the portfolio you're using on a trade.
How many contracts?
No, what percent?
What percent of my money?
Oh my God, read the screen.
I am reading the screen. But
1, 3, 5, or 10. Those are your choices. You get 4 choices. It's multiple choice. You want to do what you did in high school? Just pick C.
I would be 10%, although that's not going to be the right answer.
What?
I would pick 10%, but that's not going to be the right answer.
No, it's not the right answer.
I know that.
Well, eliminate 10. Now go back to pick 1, 3, or 5.
It's going to be closer to 3 to 5%.
In a portfolio of a $200,000 portfolio, if you're talking about, where would we be? I'm going to guess based on the fact that this segment is called Trade Small, Trade Often, and based on where I like to be myself, if you had written me an email on this topic, I would have
Say
eliminated
3%.
1, I would have eliminated 10, and I would have said this number is going to be on a $200,000 portfolio between 3 and 5. And
You asked me what I would do.
but I realized quickly that was a mistake. And so then I went back to just saying between 3 and 5, closer to 3. Let's go next slide. See, I know quickly when I make a mistake.
No, you don't.
Smaller position sizes can have a major impact. A $200,000 portfolio, $2,000 positions, 1% delivered an 81% win rate, significantly outperforming $6,000 positions, 3% at 69 and so on. The 12% difference demonstrates how proper position sizing can dramatically improve trading success. Okay, that surprises me. So using 1% delivered an 81% win rate on the strangle, whereas using 6,000 delivered a 69% win rate. Boy, that blows my mind. I'm not
Never
kidding.
thought it would have been that great a disparity.
No, I did not. I knew that 10 was out. I figured 6 was out. I thought it would be, I'm sorry, I figured 5 was out. I figured it would be
3 to 5.
1. I figured 3 to 5, but it's actually 1 to 3 in a big way. Let's go next slide. God, that's an interesting slide. By considering market direction, the 2K positions maintained strong win rates in both up markets and down markets, 82 and 80 respectively, while the $6,000 position saw a sharp drop, 18% in downtrends, showing that the magnitude of the move did matter to the downside. Fascinating. I'm not kidding. I'm not saying this just to throw a little kudos to the research team, but this is really interesting because I figured that 6%, I'm sorry, that 3% of 200,000 was still low, when in reality, it's actually high. Let's go to the next slide. By analyzing the return on investment and risk through the coefficient of variation, which measures volatility relative to expected return, the 2K positions delivered 1.2% return on investment with a low of 2.45 CV. In comparison, the $6,000 positions returned just 0.15. That is just incredible, with a much higher 31.07 CV, which measures volatility relative to expected return. Proving smaller sizing drives higher returns with greater consistency. This is really surprising to me because I have been answering people in that 3 to 5% range, and the real answer is 1 to 3, Tony. 1 to 2. 1. I can't believe the size of the numbers, and especially on up moves and down moves versus just down moves on the bigger. This explains why you get in trouble when your positions are too big into a down move like we had a couple of weeks ago. Let's go to the next slide. For risk-adjusted returns, that's the Sharpe ratio, small positions delivered a standout Sharpe of 0.81. Wow. 13 times higher than the 0.06 achieved by the 6K positions. Clearly showing that smaller sizing not only boosted returns, but also kept volatility firmly under control. This piece needs to have a book written about it.
So again, you don't know how big small really is.
This piece needs to be framed. It's really good. I had no idea that these numbers played out like this. And I mean, we've done this for so long. I can't believe that it's this much of a difference. We haven't looked at it this way. Let's go to the next slide. It's crazy. With a $200,000 portfolio, the 2K positions had 0 large losses, over 1,000, and concentrated most trades in the profit range of 0 to 500. Larger positions had significantly more catastrophic losses, which negated their profitable trades over time. Amazing. Really an amazing piece of research. It means we got to trade smaller and put on more positions. That's hard. We got to do it. Let's go next slide.
Anybody can do it, you can.
Some of the takeaways. Nothing hurts your portfolio more than trading too large. We've said this a million times. Do you know when genius fails? based on size. With undefined risk strategies with a $200,000 portfolio, it's important to keep your position size at 1% and not exceed 3% of your total portfolio. That's why we always say trade small, trade often. Over the past 10 years, analyzing 16 Delta Strangles with a $200,000 portfolio, small positions 1% have outperformed larger ones 3% and above. 81% win rate to 69%, 8 times higher return on capital, 13 times better Sharpe ratio, and 0 catastrophic losses. Smaller positions just don't reduce risk. They actively improve returns by keeping you in the game during market turbulence. The data proves that playing small is actually the mathematically optimal approach for consistent profitability. So how do you manage $100 million then? It's hard.
And yes, it is hard. And if you think about it, I mean, a $200,000 account, one strangle in SPY is going to use $8,000.
Oh yeah. No, that would require buying wings to.
It would require buying wings on a $200,000 account.
Yeah. No, I understand.
That's
it's
small.
Really challenging to get to these, numbers. It's almost impossible on a 16 Delta Strangle. You have to go super wide and you have to buy the wings.
Or you're going closer and buying the wings and making
whatever. But it's 16 Delta.
I understand they use 16 Delta. I mean, so you only
remember that in trading, it's not about how much you make when you're right. It's about how little you lose when you're wrong. Thank you. Great piece.
Good job. Good job out of the team. Good job out of you. But you know what? A good job out of this man, Mr. Scott Sheriff of the Tasty Trade World Headquarters. That's right here in Chicago. We'll be back in 90 seconds with Tasty Live.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap. Bat, how about you? What did you get up to last night? Any shenanigans?
Watched a little hockey. Watched my pool get filled up with water.
That must be exciting. When it goes to each level, what do you do?
we have a party.
You have a party?
Little party.
Do you fill it with cold, crisp bottles of Saratoga Springs?
No, you use Fiji water, don't you?
Evian?
No. Hose water, Sosnoff, so I'm going to tell the kids not to drink it. All right. Put up this picture. Can you please put the picture of me as an action figure? It looks
Did you
like
put him in a tracksuit. Is that tracksuit?
Tracksuit works. I don't really have tracksuits, but I do wear a lot of leisure stuff on the weekends, so I'll be good. The tricolor cookie is absolutely spot on. The coffee cup is spot on. The trading card is spot on.
It's a pink sheet, yeah. Like
a disco
card.
ball, I can handle it. What I have a problem with is, how did Dylan Radigan get in my jeans? It looks like a collab between Tony and Dylan Radigan. It looks like Tom. Like, that's Tom. I mean,
that's because I did this one.
Right, that's Tom as a gnome. You're perfect. You did you, right?
Of course I did me.
Yeah, of course. I could have told you that.
So I have a can of Diet Coke. Liz and Jenny.
Can't say anything bad about that.
They have the zebra and the jade lizard. Jenny, of course, has a glass of wine. I did Jenny's. And her boat, her sailboat.
Yeah. You were very kind.
Also, I'm no dummy. I typed in the prompt, make her look younger and slimmer. I did Dr. Jones. So he has the dumbbell, a cold plunge pool, a calculator, and he's Florida man.
Jamal, perfect. The basketball, the football, the video games.
And the gears, because he's an engineer. Yeah, I did Julia's.
Yeah, perfect. She looks
She's
great.
The cat. So the thing, people think it's a chandelier. It's a quantum computer.
Mikey Butler's perfect.
Yeah,
Very
he's
good.
got the snowboard, the Chinese takeout, the dumbbell.
Yeah,
golf
perfect.
ball.
Mikey must have done Mikey. Let's go next one. Okay, who did my son dirty?
It was not me.
Okay.
It was not me. The same person that did yours did your son's.
Okay, they don't like Batista, so that's what I figured from the very beginning. Katie McGurgle's beautiful, perfect.
Katie is stunning. She is an icon. She has a Harry Potter wand, cowboy boots. If you haven't seen Katie try to teach Tom how to line dance, it's on our social. And then
Okay, now I know who did the Batistas. It's Gus. Okay, Gus did the Batistas. All of a sudden, he's all buff and What the? This is Gus did the Batistas, I'm 100% sure. And Gus, I will be coming for you.
This should have been me.
Yeah, He looks like The Rock. Yeah.
Mommy and Daddy are fighting, okay? And you guys are not getting along. I am not going to come in here and try to mend this broken bridge.
He's just having John withdrawals. That's all.
With you, it's hard.
She always has her A game. Wait, go ahead. I'll take the pressure. I'll take the heat. What do I do? I love this.
What's the line you always use? It's hard to fly like a turkey.
Fly like an eagle. It's hard to soar like an eagle when you're working with turkeys. Turkeys don't fly. We're like, I cannot with him. I just sometimes.
Wild turkeys
Did you just
fly.
call me a turkey?
What's that? Wild turkeys do not fly.
Yes, Beth. I think you and me.
Did you call me a
this was
turkey?
more.
I didn't call you. I'm calling Scott.
Turkeys don't fly. They can get airborne for a second.
I called him a wild turkey.
You can get airborne. Well, you couldn't get airborne.
Turkeys
for anything.
fly. Turkeys fly. I've seen turkeys fly.
Turkeys do not fly.
A wild turkey doesn't fly, you're telling me?
You've seen a turkey fly.
When Tom's out on those survival missions that he frequently goes out on with just a knife, and he hunts.
When I'm
he
taking a
sees
hike
wild
in the
turkey
woods, I've seen wild turkeys flying all over the place.
Mm-hmm.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Tomas, we are back, my friend, but enough out of you. You've been so long-winded today because you're trying to steal this man's thunder. That's right, the Tasty Trade World Headquarters, your friend of mine, Mr. Scott Sheridan. Mr. Scott Sheridan, show that plaque.
This is what I walk into. Now, I'm just starting off with the thought that counts, not the size.
That's what she said.
That's right. Zoom in on that. It says it's the Scott Sheridan Studios.
And
I'm
it's
not proud.
And it's the thought, Beth, I love you. Thank you very much. It's the thought that counts. It took a year plus, but we got it.
We got it.
Better
It's a
late
year.
than
It's
better.
been over a year. There you go. There you go. Right there. You can just hold it up right there. Beautiful. No. We're gonna put it right there. I'm gonna have it glued to the bar.
Just don't tell Tom where it is, because then he's gonna rip it off one day.
Or
He'll
maybe
love it.
maybe one of the next to the is there still maybe next to the alligator
What
behind
do you think would happen if you ate some of these cherries?
You die.
Oh, you'd be fine. You'd be fine.
You die when they were fresh.
No, seriously. What do you think?
That's formaldehyde in there.
I don't know what.
Just try it. Stop being a wuss.
Did you try one?
Yeah, I've had them.
Let's see. Best before.
Stop
Hold
being
on.
a wuss. Interesting.
That's actually not bad.
We have them every day.
They expired last July 5th. That's not bad.
You're fine.
That's right in your wheelhouse.
Give me a number and I'll eat them.
Okay, first of all,
seriously,
they're not good for you. We wouldn't ask.
How about the $20 you owe Nick for the?
It's not worth it for $20. Can I?
Hey, what does he owe Nicky $20 for? Did you tell Nick he's never getting paid?
Football draft pick.
Oh, who'd you go with?
I went with Cam Scattaboo.
Yeah.
Oh, over
Drafting
who?
under 80.
Did he?
No, he went like
Oh, you lost.
Yeah.
Who took him?
Of course he lost.
Who took him?
Nick
Giants.
faded him. Giants took him.
See, that's odd to me because that kid looked like, I only saw him in the playoffs. He looked like he was amazing.
He is amazing.
5'9" on that's
Yeah, but his legs, it's hard to bring that guy down.
Hard to bring have you ever seen
Gonna be playing with
an
NFL
running
players,
back?
not-
It's not hard to bring down. Do you think you can bring down an NFL running back?
No, I couldn't.
Any one of them?
I couldn't, but I mean,
He could have brought down Tom Sadnoff in his heyday.
They can take down Brandon Jacobs. It was like a truck hitting you at 100 miles an hour. These guys
they're big.
They're monsters.
Yeah, but why'd he drop to 80?
Because obviously they didn't think he had the talent to be any higher.
No. There's other reasons.
What? Why
No,
did he
there's
drop
just
to 80?
well, like Sanders, the whole reason that he dropped was because
No,
he's not supposed to, like, nobody likes him.
no,
Like his teammates don't like him.
no,
No, what?
no. He dropped because they didn't see the talent. That's it. There's no other bullcrap.
No.
Scott, let me ask you.
Unidentified sources.
Let me ask you a quick question.
Yeah.
You're a football owner.
Yeah.
You got a guy who you think's going to be in the top 10, top 25, top.
So why didn't the Bears take Jalen Carter last year? He's the best player he's the best defensive player by far. He turned out to be rookie of the year, best defensive rookie of the year. He's a game
stupid.
changer. What?
Because they're stupid.
Okay, so they do that. Why didn't anybody take Warren Sapp? People don't always take the best player.
And because you're worried about the attitude, you're worried about cancer.
Right.
You're worried about a cancer in the clubhouse.
That's right.
And if you have a cancer,
Strongly
if you have a
disagree with
cancer,
you.
if you
If you think a guy is a top 10, he's not going undrafted.
Well, the Bears didn't take him. They could have taken him last year, and they took that offensive lineman. The guy stinks. And then Jalen Carter.
Because they try to reinvent the wheel.
Jalen Carter from Alabama. He's the kid from Alabama.
Yeah, he's a kid from Alabama.
Ginormous.
He's ginormous. He's unstoppable. He's
on the Jets?
No, he's on the Eagles.
The Eagles.
He's unstoppable.
Yeah.
He's a monster. He's a literal monster.
Yeah.
And with the Bears he was available the 9th pick because of character issues.
Character issues. That's what I'm saying. You don't want a cancer in the clubhouse. Now, I shouldn't call this out.
What?
Skronsky's still playing.
Skronsky?
Pete Skronsky. Remember Bob's kid that went to the Titans?
Oh yeah.
We had a chance to pick him when we as a Bear, and we went with the guy you just talked about.
Okay, I need some help with Slappy.
What do you need?
Well, he's in the hockey zone right now because this is his prime time.
Playoffs, man. It's been,
but this is and
You haven't
Slappy.
been watching?
No,
you missed a great.
I don't
game.
watch
Two
hockey.
great
I mean,
games.
That'd be great.
You missed every great game.
If the Hawks are playing, I'll watch it. I'm not high. I'd rather watch basketball.
I had dinner with him.
Hawks ain't gonna be in the
Saturday
playoffs
night.
for 5 years.
I understand that, but I prefer to watch basketball playoffs. Like to me, there's some
playoffs.
Oh no, there's some good games of basketball. I need some help.
What's the matter?
Because Steve was yapping this morning, but just because I got back, I didn't want to pick on him.
Who was he yapping about?
What do you give him? A day?
No, lunch.
One day?
After lunch.
After lunch, you pick on him?
He's fair game after
Good,
lunch.
I just want to make sure when we can pick
So
up.
here's what he's saying. Some guy, I
Does
guess.
anybody here know who you are even still?
No. People ask me. They asked me what I was doing.
Yeah.
Like I was a visitor. They want to know if I needed a tour. Okay. So I guess the Hawks traded somebody to Washington. And I guess he's killing it on Washington. Who is it? I don't know. He just said he's playing with Ovechkin. He's playing on that line. Is that not right?
No, Perry's with what's his face?
Whatever. And he's saying, how do you have a guy that sucked when they were with the Hawks and now is killing it? He's like, it has to be the organization.
Or it could be Ovechkin.
Or it could be.
The Hawks don't exactly.
Or the whole team.
The Hawks don't exactly have Ovechkin on one side. Connor Bedard would be really good if he had Ovechkin on the wing.
Connor Bedard would be really good.
Because then everybody.
Kempney?
I don't know.
No.
Yeah.
No.
I don't know. But somebody, whatever.
And there's a kid on Washington that used to be on the Hawks.
Yeah.
He wasn't very good on the Hawks.
Right. And he said he's killing it.
Well, what does that mean?
Well, he was just saying how bad the Hawks organization is. And I said, but I think it's, again, your point. You put him with Ovechkin,
And sometimes it takes time. I mean, the Bulls had Larry Markkinen. They thought he stunk. Now he's an all-star.
I mean, you just talked about chemistry 90 seconds ago.
No, I didn't say chemistry. What I said was
You said cancer
in the
which is
clubhouse.
part of being chemistry.
But there is
in the
chemistry.
clubhouse. Maybe this kid brought some chemistry to the clubhouse. Who knows?
Oh, you're a little testy. See, like,
love having you back.
I don't think if you're on a line with Ovechkin and you're a kid, you say anything. You just shut up and play hockey. It's like you don't tell Ovechkin where to be.
I mean, think about
you're supposed to be over here.
Like Phil Jackson, to me, he wasn't a great X and O's coach, but he knew how to motivate people. He knew how to get those guys to play.
Like Tom South.
Yeah, you knew how to motivate people. Hey, Mike, go in there.
Come on.
Hey, Mike, you take
Mike,
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 don't pass. Don't pass.
Okay, come on.
Hey, Mike.
He got a lot out of guys. I mean, you take Rodman on that team, that easily could have gone south. All right, whatever.
You know what? You talked about basketball playoffs. I saw like LeBron James.
There's some good basketball. There is some good basketball. There is some good
basketball. If you
basketball.
have Jordan on your team, okay,
you're in good
at the end
shape.
of the game, you're going to be a great coach. Okay, because you're going to be like.
What do you think we should do?
Yeah.
Give Mike the ball. I agree.
Okay.
But when the chips were on the line, they didn't.
When he passed back to Paxson at one time?
Yeah.
Okay, one time. But
Kerr, Paxson.
Yeah.
And then
Horace. No, Horace.
No. Oh my God. The Croatian. The Croatian.
Tony Kukoc.
Tony Kukoc. Kicked it out to Tony once. He had to share the wealth a little bit.
The first championship they won, Michael dished it out to Paxson, and the second one, I'm sorry, Horace dished it out to Paxson. The second one, he dished it to Steve Kerr. And Steve Kerr, in one of the great
comments, he said Michael said he didn't want to take it.
in one of the great speeches ever,
right.
when he gave it in Grant Park.
Right.
Said,
yeah. Michael didn't feel like he was able to. He said,
so
"Can you do it?"
Give it to Steve.
And actually, watching Michael's reaction, priceless.
That is one of the great speeches ever.
Great. All right. By the way, I'm giving like 2.5, 3 stars on the lunch choice today. I thought Tori could have done a little bit better.
It's like my
for your first day pack, K-Fire.
That's your
is not
favorite
what, I mean,
place.
I don't know if likes it because it has.
It's
hot
a bowl of rice.
It's a bowl of rice with 3 pieces of chicken.
Not even big pieces of chicken, but it does have hot sauce.
If you put hot sauce all over the rice, you can make believe you're eating protein.
It's my favorite place
because it'll taste the
it has
same as
all
the protein.
It has all the condiments.
And because he can't tell his teeth, he can't tell the texture.
Yeah,
same
doesn't matter.
It has condiments, and you put the
It all
condiments
tastes like
on.
chicken.
You have to put the condiments on.
Put all the like the mushrooms.
Yes.
And the
Yeah, it's
corn
good.
And the kimchi. It's great. It's one of the best. In fact, here's a little known fact. On Yelp, that place is the 4th rated barbecue place in Chicago.
That's crazy. I'm with that. Talking about barbecue, the driver that took us to the airport. Saturday
Do you have a driver?
Of service that took us.
Oh, I wanted to pick you up.
We were in Scottsdale going to the Phoenix airport. Thank you. But you could have picked me up here. I would appreciate it.
Did you get Frankie? He was in transit back then.
He has a barbecue place. I got to check it out when I get back.
The Uber driver has a barbecue.
He was an NFL running back in the 70s. Okay.
What can't this guy do?
He's got a limo service. He's got restaurants. He knows everybody. So the 6 said something about Little Miss Barbecue.
He said it sucks.
He's like, no. He's like, I like her. She's like, she bought my original spot, but it hasn't opened it. So our third one hasn't opened it. He's like, he wanted to buy, do you remember the Magic Kiss, the carpet cleaning company? Magic Kiss, they had the big lips.
No.
You don't remember that? Was that a Midwest thing? Tony, you remember?
No.
Might be a Midwest thing. Anyway, he wanted to buy the giant neon sign. I guess I went out of business. He has a restaurant. He's got a barbecue restaurant, and his tagline is something like, meat so tender you don't need teeth.
That's good.
Right?
That's good.
Meat so tender, I'm thinking when he said it, I'm like, this would be Tom's spot. Right?
Meat so tender you don't need teeth.
Yeah.
Are we allowed to say that? Because we were younger. We used to say miso something else. I can't remember what it was. Miso.
Not miso.
No.
Right, sorry.
You're
No.
good. We're good.
Oh, Beth, you say it too?
I know that one.
That still water runs real deep over there, Beth. Real deep.
Yeah. So I'll check it out next time I go
Calm
back.
down, Sparky.
He said it's amazing.
There you go. You're learning all this stuff.
And his son played for Patriots for 10 years, won 3 rings.
Who's this guy? You don't even remember his name? His son won 3 rings?
Phillips? DJ Phillips? Is that possible? He played for the St. Louis Cardinals and 2 other teams. He had a 5-year career. He didn't have a long career. He's from Colombia. Married to the same woman, 52 years, has 10 dogs. He has a little 25 acres, 10 dogs. He's got to set up his dogs. I said, you're not worried about the animals? He's like, no, I don't mess with them. He's like, yeah, bobcats on the house, but they respect each other. Anyway, that's my story. I'll report back next year.
Bobcats don't mess with big dogs.
I don't think bobcats would.
No, not a big dog.
Mountain lions would. Yeah, mountain lion would.
Depends if you have one of those big like rancher dogs,
He's got a couple pit bulls, he's got some big
not pit bulls, but one of those big dogs. The one TP has. The big those big white dogs,
Oh, the
big white dog?
Yeah. I can't think what they're called.
I know what you're saying.
They're guardian dogs. They're
Beth, what was it?
A Great Pyrenees.
Great Pyrenees.
Great Pyrenees. They're livestock guardian dogs.
I know what he had.
Yeah.
It's funny because I know somebody that's had 2 of them. And they said they're super friendly.
Oh, they're super friendly.
Like crazy friendly.
They live outside.
Friendly till you stick your hand in.
They live outside. They live outside and they just watch the animals. They live with the animals. They say they're the best because coyotes are.
So why don't you have them at your house?
Should. Coyotes are scared to death of them.
So they would attack a coyote?
Oh, they'll kill a coyote.
That's crazy.
They'll kill a wolf.
That's crazy.
Oh my God.
Coyotes and wolves. I mean,
what? They'll kill Mike Ditka.
Ditka. Hurricane. Ditka. A hurricane named Ditka. Ditka. Hurricane.
How many of you seen Attack a Wolf that you're basing this on? Just out of curiosity.
On TikTok.
On TikTok. This is part of your feed.
Yeah, it's part of my feed.
He said some stuff that's so out there. I just don't get with confidence too. Yeah.
I like guardian.
They kill a sheep and a wolf.
And a wolf.
I like guardian dogs, and they're good.
Oh my God.
So you should get one of those as opposed to the what was that thing you're getting? The Italian.
No, because I need a big lazy dog. I don't want a working dog.
Oh, they got to work.
They got to work.
Oh, that's bad.
They're working dogs.
No, if they have to work, that's not
unless
good.
you live with the Prestons, then you're not a working dog.
Yeah, you don't want that. What are you getting again?
I'm not telling.
Last episode, what was it called? What was it? Tony, what kind of dogs again? King Corso. King. Have you found a breeder?
Kills a bear.
Dylan Strom. Is that the guy you're talking about? Somebody just wrote me.
What'd you say?
Could be. Could be. DJ. Could be. He's 72 or 73 years old now.
This is the guy on the Capitals.
Oh, the Capitals? I don't know. I don't know, whatever.
What did I say wrong?
He said it was Dylan Strom, the guy they were talking about trading the Hawks to Capitals.
Oh, no.
I don't remember him.
Anyway. All right, let's get to some business.
Let's do your list before we run out of time here.
I'm having fun. I'm enjoying being back. Okay, don't push me.
James wanted me to tell you that, okay? James, our producer.
James, I thought we had something going. That hurts. All right.
Just in a mood.
I thought we had something going. All right. Top 15 symbols going through the system. First 40 minutes today. No more obvious indices or futures. Time for you, number 15. Netflix. By the way, do you know?
Are you allowed to interrupt your own interruption?
Maybe. I don't know. Okay. But I'm going to. Okay. That the president, the family, president, they have to pay for their own food. They get the staff, but they have to pay for their own food.
Where's this?
President.
In the White House?
Yeah.
I had no idea.
They had to pay. We had, what's his face on the show?
We had their cook for Obama on the show.
I mean, they don't pay for like state dinners and stuff.
No, not a state dinner, but when they're eating, just as a family, they get the staff, they get everything. They have to pay for their own food. Didn't know that.
They just got to pay for the product. They don't have to pay for the presentation of the cooking.
Correct. They don't
That's
pay for
kind of
that.
chintzy.
So if you watch the show I was talking about, which you didn't want to watch because you said I don't give you good suggestions, a little hurt, but okay.
Wow. Steve, he's going to be coming for you if he's coming for me. Watch out, Steve.
All right, so Netflix is number 15.
He's coming for you.
For everybody else, Tesla to 41, NVIDIA to 33, PLTR to 68, Meta at a 54, Apple at a 39, SoFi at a 42, MSTR at a 22, Amazon at a 47, TSLL at a 27, GLD at a 57, Intel at a 32, Goog with an L at a 29, AMD at a 42, TQQQ at a 42, and number 15 for Tom. Netflix at a 24, rounding out the next 10. iBid at a 44, Hood at a 49, Microsoft at a 40, HIMS at a 55, MU at a 36, and TLT at a 42.
Good job out of you? It's a question. I'm asking you to
I think
answer.
it was a good job.
Great job out of you. We're going to take a quick 90-second break. Side off. Say something profound. Good job out of you. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. Liz and Jay next. Peace.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, Did we mention that it's free? Get back testing at Tasty Trade. What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Everybody, and welcome to the Monday edition of the Liz and Jenny Show. My name is Liz Durkin. That beautiful brunette is Jenny Andrews. How you doing, Jenny?
I'm great, Liz. Look at you, looking good. How was prom weekend?
Prom weekend was very eventful. It was long. I can't believe they did it on a Sunday. It's kind of mean to do to the parents because I was up till 3 a.m. making sure everybody got to their secured locations. They're all fine. I trust everybody, but I'm still a psycho mom who wants to make sure that they're alive on prom night.
When I went to bed last night, I thought of you. I thought this is probably just getting started. She's got another few hours in before she can go to bed.
This is true. This is true. It's so true.
Yeah, it is kind of crazy on a Sunday.
I'm going to go, if we could pop in. Hold on, let me get out of this. I want to see if I can get out. There we go. If we want to pop into Twitter, here we go. I'll show some prom pictures.
Prom pics.
So here, I'll start with my kids. So there's JD and Annabelle. Hold on, let me turn this off. It was beautiful. It was awesome. It was so much fun.
That was so cute.
There's JD and Annabelle. There's JD and Annabelle. There's and then this is JD's date, which is hysterical because she is a miniature version of his sister, which he doesn't like me saying, but she really is. And then there's the Annabelle's date. So they had fun. A good time was had by all.
Wait, go back to the picture of just the two of your kids. Oh, the one on the deck. The one on your deck.
Okay.
I want to see. I was looking for the weasel.
Oh, I should post that.
Yes.
I'm actually going to do that. At some point, I'm going to post this. So I think it's a weasel. I'm actually going to. I watched that video in slow motion. I'm almost sure it's a weasel. And did you see the weasel video I sent you from Zootopia of the weasel? Well, I googled if ferrets were native to Illinois, and it said no. If you think it's a ferret, it's probably a weasel. I thought it was like a loose ferret.
Well, number one, so over the weekend, besides being prom, Liz ended up snapping pictures of, besides the prom kids, a coyote running past her front door and a weasel on her back porch.
It was like Animal Planet at my house this weekend. I'm posting the picture of the weasel because that was out of control.
So I've never seen a weasel around town, but watching that video over and over and Google searching, I think that's all it could be. It must be. So, and I wonder if that's why the coyote was lurking around your house trying to catch the weasel.
For those of you who don't know what a weasel is, I mean, to say I was like taken back, it was on my top deck, which means it went up 2 flights of stairs to come to my door.
Oh, I bet, you know what? You know how you have all those birds' nests under that deck? I bet it was like getting the bird. I don't know what a weasel eats, but I'm going to guess maybe the birds or something. You have all those nests right there on that deck.
Okay, I did do a deep dive into weasels in Illinois, and I know exactly where this weasel is living.
Where?
So you know how I have like that fireplace wall outside?
Yeah.
So I have like stone. It's stone that's holding up a wall, and then there's a fireplace in it. And I had it rebuilt last year. Do you remember when I almost went my eye? I blamed that on my eye, being like, "What did you do?" And they took my stone wall down. Well, when they rebuilt it, they put kind of like holes in the stone wall that are bigger because they couldn't piece it back together right. And weasels live in holes in rock.
Come on.
No,
He's living in your fireplace.
We call it Weasel Town now because I'm pretty sure there's like a whole family of them living in there.
Oh my.
Yeah, that's where they live. But the good news is they kill mice and voles.
Yeah.
Just worried about Will Ferrell out there, but it was Animal Planet this weekend. I totally blocked that out because then prom came. But
well, when I saw that picture of the deck, it was all I could think of was the weasel running by.
Yeah. I can't even go out there. I'm scared of it. It's little, but I'm still scared of it.
Hey, I don't know. It would be afraid of you. I think it would run away from you.
How do I do this? I want to post it on Twitter. Can you post the video on Twitter?
Oh yeah, I'll do it. You let's pop in the platform to see what the market's doing. It's a busy.
I can't believe you brought back up the weasel. Like I couldn't. Well, I've been staring outside at that deck trying to see it again. And it was very ballsy, by the way. Like it stopped. This was the second attempt when she posted this. This was the second attempt. It was just like hanging out there. And I was like, is there a kitten on my deck? Because it's kind of the cross between a kitten and a squirrel.
The weasel?
Yes. Like when at first glance, I was like, what is that? Do you know what I mean? I was like, that's not a squirrel. It's not a cat. But it's a combination of both. That's why I was like, what the hell is that?
I mean, it just kind of looked like someone's family ferret got out, but I think it's wild for sure.
Okay, but we are in.
Right,
while she's posting that, I'm just going to say the Spoos have taken a turn. They are now down on the day. They were up. The Russell is leading the charge today, and I wonder why. They're up 0.3%. But we do have some good news, Jenny, while you are posting that, because I do want to go back into there. We also have a lot of earnings today.
A lot of earnings today, a lot of earnings this week. A lot to do. Okay, and I did post it. So you can go to Twitter, and I did post it with the question, what is this? Because maybe other people will have, there it is.
Yes. And now keep in mind, I have a walkout. So this is my second story. So it came up 2 flights of stairs.
There he is. There he goes.
What the heck is that? If anybody knows, or if I should be afraid of it, let me know.
Yeah, can Liz go sit out on her deck this afternoon? It's gonna be 83 degrees.
I mean, I have so much work to do out there. I know you got it all done. That's why I'm kind of embarrassed I'm putting this out. There's so much work to be done out there. Everything needs to be cleaned, but you know.
I didn't power wash yet. All I did was get all the furniture uncovered and get the fountain up and running. I'm not done. I need my power washer to come out.
And I don't know, I'm not going to press this, but if anybody's watching this, the audio is me being like, oh my God. And my son just laughing at me.
I know. But it's definitely, it's not something we usually see every day.
No. But that's why I was like, what the hell is that? And so I believe
you go, like if someone pauses and goes slow motion, you get a better glimpse of him.
Yeah, I'm going to move on. Okay, so Jenny, we've got a very jam-packed show for you today. I'm very excited to be reunited with you. We have a full week of shows this week, although you're taking a break midweek.
Yeah, I got it. I don't want to surprise John, but I'm going to send an email today. I did not realize Thursday was the Mother's Day Mass and luncheon at my daughter's school. So TP is going to fill in for me on Thursday while I'm at the Mother's Day Mass and luncheon. Other than that, tomorrow we're starting Tuesdays. Now we're going to be at the SIBO live Tuesdays and Wednesdays back to back at the SIBO.
Back to back.
Living the dream.
Live action behind us. We are living the dream. It's going to be fun. So you are taking a slight break on Thursday, but other than that, we've got a jam-packed week of programming, which I feel like we haven't done in a while because I feel like I don't have any vacations on deck. You don't have any vacations on deck.
Not until Memorial Day weekend.
Right. There you go. Okay. So
although it's weird because my daughter's like, oh, Thursday morning we have Mother's Day Mass, Mother's Day luncheon, and then done. Like they leave with their moms, and then there's no school Friday. I was like, you didn't have school Thursday or Friday? I wish I would have known that. Maybe we could have gone somewhere.
You can miss the Mother's Day Mass and go somewhere.
I know, and she doesn't have, I know, they don't, yeah, that's all they have at school on Thursday. Mother's Day's Mass and luncheon, and then no school Friday.
So
it's our prom. It's our prom weekend. That's why they're off on Friday.
Oh, gotcha. Okay, so they probably have it earlier. My kids are off today, and then senior ditch day is tomorrow.
Oh.
Yeah, so I don't know if he's ditching or not ditching. I think he's got to go to school because we took him to Germany.
I senior ditch day, Logan went to school, even though it was senior ditch day. And honestly, he had fun, and the teachers all appreciated the kids that were there.
Yeah.
I think they got extra credit. I think kids who actually showed up on senior ditch day got extra credit.
Well, and half the school is going to be there because if you play baseball, which half our school does, you can't go to practice unless you're at school. So they'll all be there. I mean, it's not as fun as it used to be. Okay, but that being said, Jenny, Andrews, let's take a look at this. And I said earnings today. There are a lot today, but I mean, I think it's just a heavy week, right? So we've got to Bob's list. Bob on Fire, thank you very much. He says to show more, and we're only on Wednesday. Like this is Monday, Tuesday, and Wednesday of all this stuff.
So today, as far as today goes, we have position like you, me, our show account, I think, has positions in SoFi. I have positions in Pfizer. You have positions in Royal Caribbean.
No, I don't. I only do it right before I go on a cruise. I have nothing right now. I never have anything in Royal Caribbean.
Okay, I'm curious to look at Spotify. So there are definitely things I want to look at today. I don't know. And anything else jump out at you on that list?
No, I mean, honestly, that's good. Well, we can kind of pop back and forth on this. I want to see, because I know you said SoFi. I thought so too. We don't have a SoFi position.
Oh, it must have just come off. I think we had short puts in SoFi. We must have taken them off.
Let's take a gander, shall we? Okay, so
sure.
SoFi, I'll go with 60 days. So yeah, they just came off. And they were the 12 put. It expired. So they just came off. It was March, April. They're gone, expired. Okay. So SoFi.
They have earnings. Expect to move $1.40, which is decent. We could sell the 12 put for 40 cents.
You could sell the 12
Isn't that what did we? Is that what we had?
No, but it is expired. So we had April. This is now.
Yeah, right.
We had the 12 put that we sold for 95 cents and took it off for 24.
So we could sell the 12 put, or you can go out a little bit further in time to get a little more than 40 cents. I'm not sure what the May will give you.
Go to the 18-day. Let's get
bad.
65 cents. Yeah. Oh, wait, hold on. I clear this. I'm just going to do one of them. We'll go 12 put, May 65.
Mm-hmm. Yeah. So that's easy. First earnings trade, naked put in SoFi. What's with the, you looked a little leery of that.
Of the naked put in SoFi?
Yeah.
No, I just glanced, and so people think it's a ferret or someone's pet.
I didn't know what you were looking at. Oh, so
I was like, if it's someone's pet, whose pet? Who's got a loose ferret in my neighborhood? I have no idea.
At first I thought like a muskrat. I don't know what a muskrat looks like, but.
Oh no! But upon Googling, don't you think it's a weasel?
Yeah.
Yeah, me too. But I trust everybody else's judgment. Okay, we're gonna go back and do some more earnings, Jenny. But I did want to get to this just because I don't want to forget about it. You and I have looked at this. Ooh, it's only 88 cents now. You and I have looked at this day after day after day. This you all.
I'm not even looking because I'm pushing out our SoFi trade, but I'm guessing you're talking about you all.
Yes, our U-All. So here we've got the downside ratio spread in U-All. It was up $100. Now it's only up 90. Okay, whatever. Same thing, 90. So I'm just going to review the tape here real quick, Jenny. So we've got a downside ratio spread. We've had it on for 12 days. We can take it off for a $90 profit. Great, right? And we're buying it back for 60 cents. So
we're paying 60 cents.
Yeah, we're buying it. We'd be buying it back for 60 cents. So we sold it for $150. We'd be paying 60 cents to buy it back, taking in a $90 profit. We're going to look, we've done it every day, to butterfly this off to see if we can get it for wrapped around the same price. And this morning we could have. So it's the 65, 62 and a half. So you'd go to the 60 and try to buy that. We'd be paying 60 cents to buy it back or 79 cents to butterfly it off.
And earlier today when we looked at this, it was like 68 cents to buy it back. And we were like, 100%. We'd rather pay 68 cents to butterfly this off. We're still guaranteed a profit, or take it off and pay 60 cents to take it off. We would rather pay the 60 cents to have this free shot. And I'm fine paying the 79 cents. We're giving up a little bit of that $90 because if we took in $1.50 and we're paying this 79 cents, well, now we only have about $70 in profit potential instead of that 90, or we only have guaranteed $70, but we've got that free butterfly on.
Yeah.
That'll be worth something. If you all pulls back, it'll be worth something.
Yeah, let's just do it. We've been talking about it for so long.
Yeah, I'm tired of talking about it. We can't time it perfect. We can't time these trades perfectly. Like, it's tough because right before the show, it was the same. Same to butterfly it off or take it off. Yes.
Right. It was perfect before the show. And to your point, we could have done it and then look what we did. But we on this show do what we do live on the show, you know?
Yeah.
So, okay, perfect. So I've got that in. I'm not going to pay up for it. We'll see if we can get filled on that. I wanted to see if there's anything else to manage before we go back into earnings. Our CMG.
Oh, I thought I saw something to close.
CMG, I'm going to close this 37% 4 days. And that was, I believe, an earnings trade. And it's June.
So, I mean, CMG again, we had a short put that was deep in the money. We turned it into a long call on earnings. The long call, it didn't work out because it didn't really move up much during our show. By the end of the day, it was up quite a bit, which is why we're getting that put off. CMG 38 rank. We just took off the June put. I don't know what to say.
It was in June. It gave us back some buying power. So that's why I was just like, I'm not going to overthink this. 4 days, 40%, I'm taking it off. I mean,
this goes back to TP of like your P&L doesn't know where the money's coming from.
Yeah, so, I like that.
Yeah, okay. You can talk to him about it on Thursday.
Okay, and take a look at this. We butterflied off our UL position, and it's still showing a profit because we did lock in a profit in that.
Yeah. I mean, that butterfly right now it's worth 18 cents, and we're still seeing that $90 profit. If we sell that butterfly for market's pulling back a little bit. Maybe you all pull back. We've got 18 days. We're going to hope for a little pullback, and maybe that butterfly will be worth even more.
Yeah. True. You know what? I want to take a look because I think it's kind of going crazy today again. Gold and silver are going crazy again today. So
pull up the chart so we could get like an image of how crazy is crazy.
Look at that bar, Jenny. Crazy.
It's crazy.
It's crazy, man. Okay, so there's our crazy move in. But I mean, it's not even a full percent, but $2.43 in that. I want to see what silver's doing because I'd heard silver was. Oh, look at that crazy move.
That's crazy.
Crazy. But we had kind of talked about it yesterday, the gold and silver ratio. So I wanted to look at those. Snap has earnings. Hold on. Is that today?
Spot. No, it's Spot, SoFi, Pfizer, Royal Caribbean. Snap is not on today's list.
But it's soon. I know that. Hold on. It is on
Why were you snapping on Friday? Why were you doing this on Friday?
Because we did something in Snap. We had to, I think we were trying to.
Hold it, close it.
Yeah, roll it, hold it, or close it.
Spoo's down 15. I would like a little bit of a pullback. Friday, I closed a lot of positions on Friday. I don't have a lot on right now.
I know.
Because if you look at the SPY chart, we had update. So after 4 updates in a row, do you remember those studies? Like after so many updates in a row, what's the chance of the next day being an update? But we had quite a few updates in a row, and I felt like,
yeah.
I'll take my chances.
Because we are just back to where to the bottom of my vacation.
April 1st?
Yeah. And then, so we're just back to like the bottom of my vacation. And then I was like, you're not going to believe how crazy this down move was. And then Jenny leaves.
Oh, not Germany, not Germany, your cruise.
Yeah, the cruise. We're right back to the cruise where it was a debacle. Like this was my down move. And no, this is when you were gone here. And then, yes. And then I left here. So we're just at the bottom of where you got back. And I was like, you're not going to believe the bloodbath that we lived through. And then it got even worse.
It's funny because like years from now, we're gonna remember this as far as when like, Jenny, do you remember when you were on vacation and the market dropped and I thought it was terrible and I told you, you're not going to believe what happened. And then you went away and it was really, I mean, look at how much bigger of a move that was.
Oh, it was massive. And so, like I said, we just bought our way back from that.
But then that giant green bar day, the biggest up day in history, I remember sitting on the train as that was happening. That was a Wednesday.
It was a Wednesday.
Yep. Speaking of the train, I did get long some Marriott in honor of our conductor. Let's take a look at what Marriott's doing. He's long Marriott. That's one of his bigger positions.
Marriott and JD. So it's going in the right direction. I just want to take a look.
They have earnings coming.
Let's take a look. And then I want to look at the VIX, if that's okay. Then we'll go back to the earnings trades. I know there's lots of tweets that are coming in. They have earnings May 6th, so they're on deck. I mean, I think everything's
we'll
kind of
keep an eye. I do want to keep an eye on that for him. Maybe we get in with the put spread or something.
Yeah. Okay, so VIX is up a little bit. It's at 26.
Up 82 cents. That's decent. Up 82 cents. That's a decent move.
Is it?
3.3%. Hey, up 82 cents. Honestly, I don't think that's nothing to shake a stick at.
No, I agree with you, but it's just like my husband always says, you can do anything you want to with data. So up 82 cents sounds like it's a big move. 3% sounds like it's a big move. You look at it on the chart, not so much.
Compared to the moves it's been having.
Yes, you know what I mean? So it's so funny. You can kind of take any piece you want. If you wanted to say it's not that big of a move, look at the chart. If you want to say it's a big move, look at the numbers, right?
But, we've seen days where, I don't know. I think like on the old days, VIX up almost $1 now. It's Spoos down 22. Close all watertight doors. Here we go.
Choice. We could be getting two-way action today, ladies and gentlemen. We'll see, because it was up. We might be down. I did not put in the iron condor today. I don't know why I didn't, but I didn't.
No, I didn't either. I'm like obsessed with this book. I don't know how many hours the book was, audio book, 15 hours or 16 hours, but I have an hour left.
Oh, buckle up. It's a good book.
Don't ask what book it is. One time I was reading a book and it was really good in the beginning. And I was like, oh, you've got to read this book. I was telling people like, this book is so good. You've got to read this book. This book is so good. You've got to read the book. And then I got a little further into the book and it got really raunchy. I'm like, I had to go retract my statement to everybody.
I'm just kidding. Just kidding.
Don't read that book.
That's pretty funny. Okay, so there's where the VIX is. I want to take a look at Royal Caribbean too, because they have earnings.
Yeah.
It's at 214 right now.
Hey, is there a 217.5 strike?
So it was this morning 217. Hold on, let me go to it. Yeah, it traded as high as 218 today.
Yeah, my question is there a 217.5 strike? Is there the chance of doing a 217 calendar? Yeah.
It's going to be kind of expensive. Oh, 140. That's not bad. I'm pressing time.
217 calendar. Slightly bullish.
Slightly bullish. Love it. Okay, so that's in. We'll see if we can get filled.
I know we went through that a little bit quickly. For any newer viewer, earnings calendar, we're just selling this week's, buying next week's. We did the calls. They're out of the money.
It's basically saying it's not going to move, right? So when you're doing a calendar like that, you can sell a strangle, or you can do basically an at the money calendar. This is an at the money calendar.
I think it's not going to move. It could move a little bit up, could move a little bit down, but we need not much movement or slightly up to make money on that calendar. It's a low risk trade. We're only risking what we pay for it. So $140. If we put in that calendar and it said the buying power was like $2,000, then we know we have it in wrong.
You got it in backwards.
We should only use $140 in buying power.
I'm going to throw one in backwards to show. So I'm just doing so there you go. So I put it in backwards, meaning I'm buying the front month, selling the back month, and it uses $4,000.
$4,000.
Yeah.
I was way off with my 2,000 guess.
Yes, you were. Spoos down. Let me get the percentage for you, Jenny, because I know you love your percentages now. Almost 0.5%. It's nothing to shake a stick at.
Hey, is VIX up over 4% now? Let's see. Which isn't, that's, look at that. 4.3%. Went from 3.3 to 4.3 in about 2 minutes.
Yeah.
The fear is setting in.
It's still pretty funny. Okay, so we've got that in. We butterflied off our U-all. I want to take a look. Snap is tomorrow. We've got 2 puts in there, and that's why we were snapping. I think we rolled and added.
Oh, yeah. Let's pop back into Twitter just because then we'll come back to the platform.
Okay, and I do want to look at more of those.
Hibachi. Did I just discover the golden trade long puts when either of you go away, especially on a cruise? P.S. That hair, Jenny, that hair. I don't know what OOOKKUU. What is that?
I love it.
But my hair, like this is me out of the shower if I don't spend time blow drying it.
It looks good though. Yeah, she's got the curls.
I might just do it for now.
I'm not gonna lie to you. If we changed outfits, you look like the girl from Flashdance.
I was gonna say, like we're bringing back the '80s. That outfit, this hair, what?
Oh my God! You know this movie. Please tell me, Jenny.
Oh, this is Caddyshack.
Good job, Mikey. I knew she's got it. Listening to Liz talk about stalking the weasel in her yard, this came to mind. Please. She's got it, Mikey.
I got it, Mikey. I got it. Caddyshack.
She's got it. Okay, now Cupcake Trader, small account strangle. 3 new trades today. Marvel, Iron Condor, Intel.
No. IC. I think IC is just the underlying because they did three trades. Marvel.
Hold on. Marvel, Iron Condor, Intel Strangle, Roblox. 9 trades in total. IVR contraction still shaping setups. Delta -3, positive 11th 8. Let's show more. What else does she say?
Yeah, let's take a look at these. Anyway, I wanted to add a Marvel position last week and we didn't. So let's take a look at those.
Marvel Iron Condor. And I think it's an Iron Condor because
because we
have a foot.
Oh, so we did add one. Good. I wanted to have one.
We added it on Friday, the Marvel put. Okay, so here we go. She's got an Iron Condor.
I
mean, I'm just reviewing. I was just looking at
she's got an Iron Condor.
So Marvel, we did the 47 put. It's trading 57. It's down a little bit. We're down $18. The thing's it's still up $7 on the trade. She's got an Iron Condor. I'm going to assume it's in June.
Right, I would think. So if we put in an Iron Condor and went to the expected move, and the only reason it says 7-cent debit, basically what we know that Iron Condor would give us what we collected on the put. If we're putting this in for even, we'd end up with an Iron Condor. Is we're getting that credit that we collected on that short put.
You know what I'm shocked by? Look at the buying power effect here. So this is just. That's what cheap the put was. The put was cheap to put in then. That's why we have it in. The buying power is not high.
The buying power wasn't bad. Well, if you look at Marvel, and again, Marvel, I don't know, Marvel, how do they pronounce it? It's only a $50-something product, and it's really come down quite a bit.
It has, quite a bit. Yeah. From its highs, which is crazy.
So I don't mind. This is one of my, I've got my list of products I'm in, and now I'm in puts in Marvel.
I have long positions in Marvel too. I mean, I actually
you've been in this for a long time.
I mean, and don't get me wrong, with this move, and I've been bullish. With this move, I've given up a little bit of profit, but it's still not all of it. Marvel's been my one of my golden children.
I don't know if you could read this, but probably not.
I can't. What is it?
You can see the little town, the little Germany towns. I just realized I've got one of my Germany cups, Liz, thinking of you, grabbed it from my kitchen.
Oh, thank you. Thank you for thinking of me.
Have you recovered from your jet lag?
I've recovered from my jet lag. I've not recovered from prom. How about that?
Last Monday, jet lag. This Monday, it's a prom hangover.
Yes. It's pretty funny. But yes. Okay, so we're in Marvel. She's got an Iron Condor. Let's go back. I want to see what else she had. So Intel Strangle, first undefined. Okay. And then Roblox, PCS, Poor Man's Cover Call. Got it.
Oh. Wait. Poor man's covered.
Poor covered stock. Please call Sosnoff. I actually just made up poor man's covered call. I don't know what PCS is.
Oh well, if you go hit that's fine. We'll go with poor.
Yeah, but Roblox does have earnings, so I know Intel. So let's take a look at Intel. I know we have an Intel position.
And she has a strangle on. We might have a strangle on. We might have short puts. What do we have?
Strangle.
No. 2 puts. We have 2 puts.
Oh, 2 puts. I just saw 2 things. Assumed it was a strangle.
You saw the 2017 and the 24, which would look like a normal strangle, but our short put is at the 24 level, so deep in the money. It might as well be a covered call.
So this is almost a this is a covered call with an extra. So this is like a strangle around stock, basically
It's like
synthetic. Oh, thank you. Put credit spread.
Oh, put credit spread. We were way off. Way off.
Put credit spread. Okay. So we have no, she did a naked, which is fine. That's, I mean, we have essentially as if we were long the stock as well. So I don't mind having this. And Intel has stayed within a range. It has not broken out of its range in a very long time, right?
Yeah.
I would say since last July almost. It's been within, you know, 25-18.
We've gotten crazy and have had naked calls in Intel. We don't right now, but I hesitate with 53 days to sell a call for 40 cents.
I know. And that's why we added the put, because we wanted to get some additional premium. This was our trade. It has gone against us, especially through earnings. So we rolled it out in time. And to get additional premium, instead of selling the call, we sold the put.
Right. I didn't, with 53 days, I didn't want the naked call on for that long.
No.
Which, again, it's to each his own. I just didn't want the naked call. We have had naked calls in Intel, but just not right now. We have two puts instead.
Right. Okay. So that's Intel. And then she had Roblox, which we now know is a put credit spread.
Put credit spread. And let's take a look at Roblox because I haven't looked at it in a while.
So I do believe they have earnings May 1st. So that is this week, isn't it? Yes.
Will you go to the chart, please? Is it still like, are kids all just still playing Roblox? Our kids have all aged out of it, so I don't even know.
I don't know either, but I can't imagine this is the only thing they do. Right? I can't imagine Roblox is just that weird game.
Right. They've got to do more than that.
They have to do something else. They might have to have the gaming system or something. Do you know what I mean?
I'll tell you, the one stock, my son was like, oh, buy this stock because I like this game. And it never went down. It really didn't go down when the whole market was falling. It held its own.
Yeah,
it was no it's TTWO.
Oh, Twilio.
No, it's not. It's
Take two. We've been in this before.
And see, the whole time the market was falling, it really didn't.
Wow.
Yeah.
Wow.
Take two.
It really didn't. That's crazy.
I know.
Okay, It's 224. It's been there before.
I don't know. I don't know how the markets are. Check the markets. See what it is, and see when they have earnings. They're probably coming up.
Here, there's 614,000 with a K, not an M shares. So, and then let's pop it out and see how many stars Scott gives it.
Probably two. I guess two.
2 stars. So there's not much. And then if you're going to go into the markets, I'm just going to go to June to take a look at it.
So what do you do? Like, what do you do if your son says, I want to get into to Take Two? Like, I really like this game. I want to get into Take Two.
I think what you did was probably right. I'm assuming he bought shares.
He just bought shares.
Yeah.
But I mean, you could sell put spreads, kind of, how do you thwart like a liquidity to spread it off maybe?
This is pretty illiquid. So, I mean, it's not that bad. It's not the end of the world, but taking a look at this, there are 30 cent wide markets. That's a lot.
I just couldn't believe, like, when the market was falling, that was the only thing that stayed, relatively okay in his account.
So, right. So I know that, it fell a little bit right here because this is when the big fall happened.
Yeah.
But that's nothing. I mean, I guess it went all the way down to 190.
I guess, and it quickly bounced back.
But it quickly bounced back. Like, this is nothing compared to in the grand scheme of things. You know what I mean? This is when we were on our vacations. Right here.
That's why I didn't see it. I only check his account not all the time. So
I get it. Oh my God, that's so funny. Okay. So that's kind of cool though, that he's picked that stock. And I do love the level of engagement if they say they like the product to buy the stock.
Yeah.
Speaking of, can I see where this is? I want to see what my son's doing here. Tesla's down today. It was up a while ago. It was up this morning.
Was it?
Yeah. Yeah. It was up. I just want to take a look at the chart. Yeah, Tesla.
And what did that man we met on the road say?
If it hits 420, it's going to 600. We're filled in our Royal Caribbean.
Filled on our Royal Caribbean calendar. And we were looking at Roblox, but we never got anything on. I don't know if you want to do something in Roblox.
And here, this is 420, and then it went to 480. So as soon as it hit 420, it did skyrocket up to its highest point. Yeah. And then, let's take a look at Roblox. No, Roblox has, she was looking at a put credit spread in Roblox. We were looking at the illiquidity. So I had kind of popped one in, $7 wide. It is pretty illiquid, and they do have earnings on May 1st.
You think it's illiquid? How wide were those markets?
They were 30 cents wide each. Oh, well, no, what were we in?
You're thinking of Take Two.
I was thinking of Take Two. I'm sorry. Thank you very much. So these are, not that bad, I guess. 14 cents, 10 cents. It's not that bad. And you've got an M instead of a K. It was Take Two that we were talking about liquidity. This is 1.82 million shares. Let's see at the stars.
Yeah, we've traded Roblox before. We could trade Roblox.
And 3 stars.
3 stars? Sure, I don't mind. Go ahead. We can join her. We've got an Intel position. We can join her in.
So here's my question. They have earnings. So they have earnings May 1st. We're doing a put credit spread, which I'm fine with. But usually.
This week. May 1st is this week.
Yeah, so usually if I'm doing put credit spread on something that doesn't have earnings, I'll probably go to June, whatever, because, May is 18 days and June has 53 days. I think I'm going to stick with the 18 today.
And if it goes down, we could roll it out to June.
Yeah. I just want to see how much a naked option is, okay?
Mm-hmm.
See how much this 53 is. It's using $1,300. That's kind of a lot. It's unlike Marvell, which was using, $300. So if I'm going to do a spread, I'm going to bring it up and I'm going to go.
You could just do the 157 for $1.45 and then pay, 50 cents for the, what do we have to pay? 5 for 50 cents, the 50. You can do the 57.50 for $1.
So that's basically a naked option.
This is looking at it like a naked option. Yeah.
I like this. I do like this, Jenny. And I think I'm going to land there, but I was just thinking about pulling it up and going 60.55. Let's see what we get. 122. No, sure. I kind of like the other one. Yeah. I'd rather risk 7 and have it be more like a naked option.
Because if it drops down into the middle of this spread, we'll be able to roll it out unless it blows through, and then it'd be blowing through both spreads.
Yeah, it'd be blowing through both spreads. Here's the 57 level. This is where we are right now. I'm okay with that for 18 days. It is going through earnings. It's our earnings trade.
It's our earnings are this week. It's our earnings trade.
Mm-hmm.
Unless take one quick look. If you're bullish, take one quick look at how expensive the earnings diagonal is, which. Again,
okay, so going to the 4-day, I'm selling the 75, for 125, because there's plenty of time there. Yeah. And I'm going to go to the 86 or 87. To make it cheaper, I'm going to the 87. You're spending $290. That's not bad.
Yeah, so it's the 67. So 67.75. So you've got $8 wide for $290. That checks all the boxes of we're only paying a little more than a third for it.
So we said if it goes down, I like this a lot better.
Well, it's just
that means you're bullish.
risk.
That means you're bullish through earnings, right?
Right. This or my other go-to for these earnings trades with a little less risk is, buy a call spread and sell a put spread to pay for it. And you can go in the weekly and you can buy just like $1 call spread for 50 cents. You could buy $1 call spread for 50 cents and then sell. So
hold on, I'll go.
Because this would be your earnings trade. And then sell a put spread, a $2 wide put spread. So your risk is only $2.
Oh, there you go.
You're only here. We only have $2 in risk, but we're only going to make $100.
That's not bad.
No, it's like a baby way to get in on earnings.
That's not bad.
But it's a very, very low risk way.
Yeah, but Cupcake Trader was trying to sell put credit spreads in here. This is yes and yes. Like we've got a put credit spread coupled with a long call spread. I'm going to pay 5 cents for this room.
We have a little bit of room. We're only going to make $100 if it goes up, but we have some room. I don't know. It's like when you don't want to risk too much when they have earnings coming up, you've got to get creative.
So I will say this doesn't look that bad as far as that goes, but it's 10-cent credit at 21-cent debit. I'm trying to pay 5 cents for it. So that's in there.
Don't chase it.
No, that's what I was going to say is we'll see if we can get filled because that's 4 legs.
Because the only difference with this, this in the diagonal, if Roblox goes down a little, we don't lose anything on this. Where if Roblox goes down a little, we could lose the 290 on the diagonal if it doesn't pop back up.
Correct. Okay. So that's good for Roblox. I'm gonna pop back in
Pfizer. I don't want to run. I want to get to Pfizer before the show's over.
Let's do that now then. Pfizer.
So they have earnings. This may have come up when TP was on. So you see they have this dividend date coming up. They're also a company that pays a pretty hefty dividend. If you take a look at their dividend amount,
7%.
Yeah.
So this is an interesting dynamic right here, because what you could do is sell this.
And if you get put the stock, then you've got the dividend coming, and you can just turn it into like a covered call position. And if for people who like to have stocks that have dividends, and then it could just be a covered call position.
7% is a lot.
I know. That's why I have this one in, and I haven't been put the stock yet. I've just been selling puts, but I might I don't know.
So it's $453 to do it. It's got earnings tonight, right?
Yeah, tonight.
So I don't mind selling
tomorrow morning.
Do you want to do this? I don't know that I want to put the stock in this account though.
Well, like this account isn't that kind of account. We're not like, oh, I'm trying to, build up some dividend paying stocks into my portfolio. That's not how this account is. I just thought I would bring this to your attention.
So that is, but this is the original Wheel of Fortune. So years and years and years ago, Jenny and I used to do a segment called Wheel of Fortune. It was very exciting, very, very exciting. And the whole premise was this, and it was just kind of showing how, now this is a different example because you're looking for the dividend here. Do you know what I mean? And the timing of this is fascinating. Well, you can sell this on earnings, or you're either going to keep your 40 cents or you're going to get the stock.
So TP and I talked about this. Like there are people trying to build up dividend portfolios. I was on vacation and I met a man who says, gotta love those dividends rolling in. Like he was on another vacation and he's older, been building up a portfolio of stocks that pay dividends, and he just has his, dividends rolling in every year. And there are people who want that. I think for us, we say a better way to get into that is start with selling puts, because if you keep selling puts every month and keeping that put credit, you're making more money on that put credit than you're getting paid in that dividend. So, start with selling puts. If you get put the stock, fine, and you want to keep that, then you could sell out of the money calls and keep rolling your out of the money calls every month. This is just how we would initially start. And I have been selling puts in here, and I have not been put the stock yet. So I'm not going to chase it. I'm not going to be like, oh, I've got to force this stock in. I'll keep selling puts as long as I can.
Right. Absolutely. And and I'm kind of being facetious when I say this, but it's just like my Royal Caribbean, where they give you something that's like the dividend, right? So I was like, I'd rather keep the credit from selling these puts than ever get put the stock to get the credit.
Right. Yeah. So just from selling puts, I'm up more than that 7% of their yearly dividend in my Pfizer position. So it pays off. Like selling puts will pay you more if you can keep doing it month after month after month.
Right.
Mm-hmm.
Okay. So that's pretty interesting.
Or week after week after week, or however you want to do it.
So no, I know that we're not going to take the stock. Do you want to sell the put in here, or are we just talking about this?
I don't know.
I don't know that I would want to, because we can't take the stock in this account.
Yeah,
we're not going to take the stock in this account. So
the rank is 40. What if you go out beyond 4 days? If you go out beyond 4 days and the rank is 40, the 18-day, you can go to the 22.5 for 50 cents, 54 cents.
And also keep in mind, the stock, there's no gaming of the system. The stock will be decremented by the amount of the dividend on the X date.
Let's say stock closes at 23.08 and the dividend is 10 cents. Well, the next morning the stock will be decremented by that 10 cents and it will be, 22.98 instead of 23.08. And there is no gaming of the system, but there are people, and we get emails, there are viewers who like to have these plenty of people have more of their portfolio than just their options positions. than their trading.
And looking at it from that perspective, no, I know Bob on Fire is a huge dividend collector, meaning like he likes to acquire stocks with dividends. You know, I've talked to him about this before in there, which I love. And he's a great person there and, you know, great personality that we've had. And he's doing very, very well. These dividend stocks, like I said, there is no gaming of the system, but you are kind of hoping for that positive drift as well, right? So you can make it twofold. You're looking for the stock to positive drift. Were you watching Dr. Jim today with them?
Yes, but you know what? We never really got the takeaways, right? They started talking about other things and the lavender store and the lavender, like we never really got the takeaways of, does Dr. Jim think there's no positive drift anymore?
Well, I was dying because Tom's like a big, huge positive drift guy. Huge. Love positive drift. I was like, oh my God. And it's so funny because nobody but knuckleheads like us understand that humor. Do you know what I mean? But they went off the rails, right? They went from, I was waiting for Dr. Jim's takeaway of, does he believe there's no such thing as positive drift anymore? And we never got it. All we got was Tom hates lavender and they hates going to the lavender store and the lavender farm and having lavender beer and lavender this and lavender that. But he does sell lavender coffee. Oh my gosh, I had so much stuff going on this weekend. I failed to mention something to you. So Annabelle's birthday is coming up, but she's super, super busy because she's in a play. It always happens this year where like her birthday is around a play. So she said, she's like, can we go shopping for my birthday? I said, yes. So we went to Oak Brook Mall, whatever day it was. Saturday, I don't know. Honestly, my days are blending. So I go to Oak Brook Mall with my daughter. We park, we go into the Gap. And some guy was like, are you Liz from the Liz and Ginny show on Tasty Live?
Funny.
Well, yes, I am. So I sat there and talked with him for a while. He was a very, very nice guy. But for that one moment in time, my daughter's like, oh, Mom, what do you think of this? Oh, Mom, what do you think of this?
Oh, she finally appreciates your opinion because she thinks you're a local celebrity.
Yes, it was pretty funny.
Isn't
that hysterical?
That is funny. I can't believe you didn't text me.
I can't believe I forgot. It was this weekend was a lot. We had a lot of stuff going on. So that's
So also, can you believe you have a daughter who's almost 17?
No, I mean, I got one going to college, one who's 17. I mean, it's out of control. How is parenting almost done?
I don't know.
Yeah.
I don't know.
I know. I mean, what kills me, because I always feel like I take Logan harder than you do, is he's going to be a senior in college.
This summer, he's going to be living the life of Riley, thinking it's his last summer. Everything is like, this is the last summer, right? So he thinks he's going to just be enjoying every minute of his last summer.
Yeah, he will. He's home this summer, right? Because I know last summer he wasn't.
He's home this summer, and in order to graduate next May and finish, he's in summer school taking 2 classes, which really are going to take up most of his time because chemistry goes from 8 to noon every single day.
Oh, I mean, he's off at noon. You really can't complain.
No, but then he has calculus. So he's like chemistry from 8 to noon and then calculus. Like he's locked and loaded with summer school. It was either pay for him to take summer school and also support his lifestyle because he's not really going to be working much and have him graduate on time, or pay for another year of college. So the math was easy. It's way cheaper for him to do this than take another semester of college.
Oh, for sure. So that's good.
Yeah. So anyway, it's his last summer. Wow. Is what he keeps saying.
It is true. Because you never get a summer again. Once you start working, you never get a summer again.
Yeah, right. You don't have a summer vacation.
Yeah, I mean, you get to go on. You can vacation like Liz and Jenny, where we go away every couple of weeks.
I saw someone like how to get 40-something days of vacation with 11 days off, and we've managed to do it with all of our long weekends. We just take every bank holiday and add on a couple days.
Yeah, there you go. Mm-hmm. Bank holiday, expand. And then there you go. Yep. But it's never a long duration. Okay. We have, let's see, I want to look at the time. We've got about 7 or 8 minutes left. I do want to get back into here because anything else that we want to, what is happening here?
Well done, Jenny. Double points if you could name this movie, that's Charlie Sheen, and is that Emilio Estevez? Is that the two of them together?
Yes. But hold on. I'm sorry. I'm not trying to not let you answer that, Jenny, but look at this. This is the fake. This is the Jenny's smutty book recommendations.
No, I'm telling you, Mikey, there was this book, Start Out Totally Normal. Someone told me to get it. Started out totally normal. So I was recommending it to people. And then I got a little bit further into the book and I had to go retract my statement to everybody. Don't read that book.
Well, the one you're reading now. Our friend recommended it, and she goes, "You've got teenagers in the house. Read it with headphones on, or listen to it with headphones on." I was like, "Okay, all right, okay." So funny.
And you know what's the worst is like if I'm listening to something, whatever I'm listening to, and someone pulls in or out in one of the cars, it automatically goes from like my book or my phone into the car.
Oh,
whoever's driving the car. You know, like when they're
Lily's gonna get an earful. Oh, wow.
All
yeah,
right.
No, I get it. Okay, I want to make sure we got to everything. So today, NXPI, don't care about. NUE, don't care about. SoFi, we looked at, right? We put them in. PayPal, I want to look at. UPS, Spot. Okay, that's where we are. Spot,
Spot.
UPS.
I want to look at Spot, UPS, and PayPal. And we have 9 minutes to do it.
Okay. Spot. Spot is $600.
Pass.
What
I'm done with.
What happened there?
I'm done with trading $600 products. Let's go on to something else.
I mean, Jenny, take a look at this. If we would have bought it in 2023, it was $70.
And I'm a big fan of Spotify.
You would always be like, yeah, I love Spotify.
We blew it, Liz. We blew it. We could have been something.
Okay, Spot. What was the other one?
UPS.
Who's at my door every day? Oh, guess what? This is not for everybody else. Remember how I thought my farmer's dog got delivered while I was in Germany? It did not. It got delayed. It's delayed. It's coming May 2nd, so I'm very excited.
Oh, good. Okay, so let's take a look at UPS. Only $97, which it's really fallen from.
It has fallen from grace. Take a look at this. I'm just kind of taking a walk back on memory lane. UPS was super high.
Yeah, let's sell some puts in here. We could afford it now.
I mean, how is UPS not? I mean, it's everywhere I go. You see as my kids call it, the UPS truck.
Is it, or is it? I switched to only use FedEx for certain deliveries because I seem to have had better luck with FedEx than UPS.
Yeah, but Amazon is exclusively UPS, and I swear I have an Amazon package at my house every single day.
I don't know because they have their own Amazon trucks.
True.
Anyway, I'm all in. I'll sell puts. I don't care.
You know what? Maybe I'm thinking you can return everything you want to from Amazon and UPS.
Yeah, you go to UPS to return everything.
Yeah. Okay. Either way, 666 is the expected move, Jenny. Dun, dun, dun. Wait,
that's terrifying.
I want to see how much a put is. I'm going to just grab a put for $1 to see how much capital it is. 100, not too bad.
Not too bad. And then what about if we did a downside ratio? I'm like, I've got you on my mind between my German cup and the downside ratio spread. Can we get $1 on a downside ratio spread?
Well, you can get 64 cents and it brings your break even pretty far. I would be willing to take that.
Yeah. Yeah, sure.
So this is what I was going to say. You're getting 64 cents. It's typically wrapped around where you would get 64, 70 cents anyway. There is no gaming up system. But this way, if it goes down, we stand to make more money. It brings our break even to, 88.40 or whatever. So let's take a look. 88.40 right here. I'm cool with that.
All right. Yeah, let's do that.
Now, granted, we're not going to make that much money if it goes up, but I'm happy.
No, if it goes up, we're only making $64, but whatever. It's a slow grind back.
I was willing to sell a put for $1. I'd be happy with $64 with the chance of making more if it goes down.
Sure.
Okay.
Send that. Okay.
Yeah. And then what was the last one?
PayPal. And actually, like we talk about how we don't really, I use PayPal. I use Venmo constantly, but I used PayPal this week and I had to pay someone with PayPal only.
Who was that?
I transferred those Disney Vacation Club points, and I had to use PayPal. They would only take PayPal.
Because hopefully he's not watching, but he was 86.
No, it's not. It wasn't his rules. It was like there's a mediator. There's like a mediator of the transfers.
Okay.
Yeah. Yeah.
So now you're back in the PayPal train.
So, well, no, I'm just saying I had to use PayPal. So I did use PayPal this weekend, but I believe PayPal owns Venmo too. Is that correct?
You are saying words I do not know. But PayPal has been beaten down as well. Take a look at this, like kind of a walk
Yeah,
down.
$64. Go ahead, sell another put or another ratio spread.
Let's take a look. Now, it might be harder with the ratio spread because it is cheaper, but let's take a look. So you've got a $4.85 expected move. I just want to see how much a put is. I'm not selling it. So we're using $800 here. This is,
I don't mind that either. $1 on the 60 put. I'm fine with that.
You can do $1 on 60 put, but I just want to see, like, you can also, and I know I'm not doing a $2 wide, I'm doing a $1 wide because it's a cheaper product. Let's see what you can get. You're getting 67 cents.
Sure. Ship it.
Then it just brings your break even down. You're giving up a little bit of your profits by selling that put, but there's an odd chance, although it is a Monday.
I know it's a Monday. It's a long time to wait. Then we got to wait on these all week. But
yeah, so let's just sell the put.
Let's just get 90 cents.
Or Jenny Andrews.
I know a Jade Lizard, but if it shoots up, then we don't make anything. I love a Jade Lizard as a durational trade. I don't love a Jade Lizard on earnings.
Okay, so let's go with the 60 put for 90 cents, 92 cents.
Yeah.
Okay.
All right, good.
So
Okay,
we
did a lot. We did a lot today.
That's what I was going to say. I'm going to go to our activity today, all symbols today, and you can be pushing it out while I'm doing this. I'm going to go bottoms up, okay? So SoFi, we sold a put in the May. They do have earnings, but the SoFi put. We closed our CMG. We can look to get back in there at another time. We butterflied off our UOL by taking it and locking in about an $80 profit, which was pretty good. Royal Caribbean earnings, 217 calendar. Thank you very much. Love Royal Caribbean, and 217 is Liz upside down, so that's kind of a fun trade. We only paid $1.40 for it. Roblox, and I think I'm saying it right, we bought a dollar wide call spread and sold a $2 wide put spread to pay for it. That is an earnings trade. UPS, we did a downside ratio spread, the 91.93 for earnings. PayPal, we sold the 60 put for earnings. So we have quite a bit of earnings trades on today.
We did quite a bit. I got everything out. I'm curious, go to any product and try to sell something. I want to see how much buying power we have. If you just go to, we're not going to even be able to afford this. Go to something cheaper. And if you sell a put, hit review and send. Option buying power 9,400. So we did quite a bit, and we have a couple naked options in the mix today, and we still have almost $10,000 in buying power.
And it was great that we did take off. Like CMG gave us back some money. You all butterflying it off gave us back $800. That kind of releases capital. Right. And so I didn't mind giving up a little bit of money in you all to either close it or butterfly it off.
Okay. All right.
So give us back like $800. What time is it? Yes, we're done.
So tomorrow I will see you at the train. We'll be live from the SEMO.
Do you know what's so funny? This is just for us, but it's raining. It's supposed to rain Tuesday and Wednesday. You're going to see me in my hood again. Yep. True story.
I don't know what this hair is going to look like in the rain. It'll be this big. I told you, 1 year I was Slash for Halloween.
Ooh, oh, Slash. For some other reason, I thought you said Flash. All right. Jenny, you have a wonderful afternoon. Go enjoy your 80-degree weather.
Let's try to get some rest. Maybe go lounge in the sun next to the weasel.
Oh, now I can never land my pool again. Now I can't because I heard they're really good swimmers too. It's over. Now I'm never going back out there again. Okay,
right,
everybody, have a wonderful day, and remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We will see you tomorrow.
See you tomorrow, everybody.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
If you missed the live show, here's our cherry on top weekly recap. Bat, how about you? What did you get up to last night? Any shenanigans?
Watched a little hockey. Watched my pool get filled up with water.
That must be exciting. When it goes to each level, what do you do?
We have a party.
You have a party?
Have a party.
Do you fill it with cold, crisp bottles of Saratoga Springs?
No, you use Fiji water, don't you?
Evian?
No. Hose water, Sosnoff, so I'm going to tell the kids not to drink it. All right. Put up this picture. Can you please put the picture of me as an action figure? It looks
Did you put him in a tracksuit? Is that tracksuit?
Tracksuit works. I don't really have tracksuits, but I do wear a lot of leisure stuff on the weekends, so I'll be good with the tricolor cookie is absolutely spot on. The coffee cup is spot on. The trading card is spot on.
Pink sheet, yeah, like a
disco
card.
ball, I can handle it. What I have a problem with is how did Dylan Radigan get in my jeans? It looks like a collab between Tony and Dylan Radigan. Tom it looks like Tom. Like, that's Tom. I mean,
that's because I did this one.
Right, that's Tom as a gnome. You're perfect. You did you, right?
Of course I did me.
Yeah, of course. I could have told you that.
So I have a can of Diet Coke. Liz and Jenny.
Can't say anything bad about that.
They have the zebra and the jade lizard. Jenny, of course, has a glass of wine. I did Jenny's. And her boat, her sailboat.
Yeah. You were very kind.
Also, I'm no dummy. I typed in the prompt, make her look younger and slimmer. I did Dr. Jones. So he has the dumbbell, a cold plunge pool, a calculator, and he's Florida man.
Jamal, perfect. The basketball, the football, the video games.
And the gears, because he's an engineer. Yeah, I did Julia's.
Yeah, perfect. She looks
She's
great.
the cat. So the thing, people think it's a chandelier. It's a quantum computer.
Mikey Butler's perfect.
Yeah,
Very
he's got the
good.
snowboard, the Chinese takeout, the dumbbell,
Yeah,
golf
perfect.
ball.
Mikey must have done Mikey. Let's go next one. Okay, who did my son dirty?
It was not me. It was not me. The same person that did yours did your son's.
Okay, they don't like Batista, so that's what I figured from the very beginning. Katie McGurgle's beautiful, perfect.
Katie is stunning. She is an icon. She has a Harry Potter wand, cowboy boots. If you haven't seen Katie try to teach Tom how to line dance, it's on our social. And then
Okay, now I know who did the Batistas. It's Gus. Okay, Gus did the Batistas. All of a sudden, he's all buff and What the? This is not. This is. Gus did the Batistas, I'm 100% sure. And Gus, I will be coming for you.
I should have been. This should have been me.
Yeah, he looks like The Rock. Yeah.
Mommy and Daddy are fighting, okay? And you guys are not getting along. I am not going to come in here and try to mend this broken bridge.
He's just having John withdrawals, that's all.
With you, it's hard.
She always has her A game. Wait, go ahead. I'll take the pressure. I'll take the heat. What do? I love this.
What's the line you always use? It's hard to fly like a turkey.
Fly like an eagle. It's hard to soar like an eagle when you're working with turkeys. Turkeys don't fly. We're like, I cannot with him. I just sometimes.
Wild turkeys
Did you just
fly.
call me a turkey?
What's that? Wild turkeys do not fly.
Yes, Beth. I think you and
Did
me.
you call
I
me
think
a
this was
turkey?
more.
I didn't call you. I'm calling
No, I think
Scott.
Turkeys
it was
don't
me.
fly. They can get airborne for a second.
I called him a wild
fly.
turkey.
You can get airborne. Well, you couldn't get airborne.
Turkeys
for anything.
fly. Turkeys fly. I've seen turkeys fly.
Turkeys do not fly.
A wild turkey doesn't fly, you're telling me?
You've seen a turkey fly.
When Tom's out on those survival missions that he frequently goes out on with just a knife, and he hunts.
When I'm
yeah,
taking
he
a
sees
hike
wild
in the
turkey.
woods, I've seen wild turkeys flying all over the place.
Mm-hmm.
Get the full scoop by checking out the archives at tastylive.com.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. Got my man, Mikey Butler, and of course, Mr. Ryan Grace with us back for our crypto takeovers. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day, I get to spend it with my buddies, Mike and Mr. Ryan Grace. How are you, sir?
I'm doing well. Nice to see you both. How
missed
were
you.
your weekends? I know we've been off for a couple of weeks here.
You're a busy man. We've been hyping up how busy you are. All these things you're working on, all these things. You're coding, you got Tasty Crypto. He's all over the place. A busy man.
It's good to be back with you guys, though. How was the weekend?
It's good. Got a little local brewery tour in the booth. Went to all those breweries on Fulton, whatever, Hallstatt, all those places. One of them's closing down. We walked in there
Which
like,
one?
third something. On Tour. Yeah, On Tour Brewing.
That's not the one with the barbecue place in it, is it?
I don't know.
No, it's around the corner from the one with the barbecue place in it.
Is it the one on Ashland?
On Tour is on the other side of Ashland, yeah.
Okay.
Yes.
Yeah, On Tour is apparently closing like forever.
Sad.
Oh, that's sad.
It's always sad when a brewery
bought out
closes.
by some other brewery, so maybe it'll just be a replacement of something else.
All right. I did a little Chinatown excursion Nice. Yeah, went to QXY, the soup dumplings.
Yeah.
Beautiful.
Yeah. That's the spot.
Ate about 60 of them. Those things just go down so easy. You just pop them. They're just easy.
I like that
Delicious.
spot.
Yeah.
Yeah, the spicy cucumber salad too. That's real nice.
Oh, we got the mushrooms.
Probably similar.
Yeah. It was delicious.
Yeah.
This is the best start to a show.
Okay, come on. This is what we, you've listened to Tom and Tony in the morning session. It's all about food.
Yeah.
3.5, 4 hours of food.
We got to prime the
give them
people.
5 minutes.
With some
10 minutes.
tasty info, you know?
Yeah. Speaking of food, K-Fire.
I actually love it. I'm so glad it's K-Fire today.
This is
A house divided.
this is prison food. K-Fire is
Jeez, prison food. And Mike, you love it.
It's clean prison food. That's what we need. After a debaucherous weekend, there's nothing better than some meat, some veggies, and some rice, you know? But yes, it's not like a fried chicken joint where you're getting flavors. It's more about the cleanliness. But I also skew Asian food. Like 10 out of 10.
It's just
always.
You don't feel terrible after you
Exactly.
eat K-Fire.
Yeah, the portions.
You might actually feel energized after you eat it.
Yeah.
They
feel a little
portion-
buzz.
Yeah.
They really they make you eat a. You can't.
Correct portion.
Yeah, it is the correct portion. But I'm a fat American. I want variety.
That's fair.
Gluttonous.
I had Peace Pizza, Small Cheval, Tilly's Bagels.
Oh,
nice.
Oh, did that place open?
It did.
Is that the West Loop one?
Yes.
How was it?
Very good.
Good.
Yeah, my wife waited in line, so she brought some home.
It's one of those.
It's one of
For now,
those.
a couple of weeks it'll be normal, I assume.
Oh.
But I welcome the clean K-Fire here today.
Yeah, today you're feeling a little bit. Yeah, like a little
bit
lethargic.
slower start. Yeah,
it's fair.
Okay, good.
Gluttonous weekend.
Yes, I like that.
Gotta do
well,
it.
you deserve it.
Yeah, I mean it's one of the few things to do in Chicago. There was good weather this weekend.
Yeah, it was okay. It's almost golf season for us.
Yeah,
getting ready for it.
But if you aren't eating at the restaurants, what are you doing?
Yes.
Truly.
Hey, we have a nice little link in the YouTube chat for a forum for a little feedback for the Tasty Crypto crew. What are you looking for on that?
Anything and
numbers,
everything. Yeah, social security
credit
number
cards.
first and foremost.
Yes.
So give us all of your personal information, and we'll run a background check, and then we have a few questions about crypto. Just trying to understand where everybody's at. Are they beginners? Are they advanced traders? What products do they trade? How do they use the products? And one thing here that we'd like to do is talk to some people over a video chat. So we'll have a
sweet.
Compensation, I guess. I want to say monetary reward, but it's not exactly a reward. But if you talk to us, we're happy to compensate you for your time. So we're looking for some people to just run through the survey. And if you're interested in giving us some more details, we would really appreciate it. But just, again, trying to learn a little bit more about the user base so that we can build the best products possible for everybody to use.
That's how we do it here at Tasty. So please fill out the feedback. Is it a sign up, or is it like, there's a question that says like, hey, would you be?
Yeah, there's just a question at the end. So it's a quick survey. You don't have to participate in any interviews or anything like that. But if you want to, we will compensate you for your time and would like to talk to anybody that's interested in talking to us.
And if you do it and they confirm it, we'll shout you out here too.
Absolutely.
Obviously. And if you're an Option Trading Concepts Live supporter, you should be lining up at the door for this.
And that shout out's priceless.
Yeah, you get to talk to Ryan. Come on.
Yeah, right.
Look how handsome he is.
Yeah, that's it.
Yeah.
Appreciate it.
But yeah, join us on the YouTube channel, Tasty Live. We're streaming live. That link is pinned to the top of the chat, and it will be for the next hour.
One more quick announcement too. We have a very esteemed special guest
yes.
coming up later this week.
Ooh.
It's the second coming of the mayor of Margin Island, Mr. Klink.
Yes.
We have Mr. Klink on Wednesday. Peter Klink for all you out there. He's going to be doing deep dive into span margins. So on Wednesday, if you have questions on span margin or you just want to learn a little bit more about it, join us. We're going to have Klink in studio. It's always fun with him. He's a massive brain of knowledge that we will try to extract throughout the show. He's awesome. So
make sure to tune into that one.
Yes.
But yeah, very important concept to know, especially in these volatile markets. You got to be aware of how these things can change and how things have changed, really.
Yes.
That's what we'll be walking through.
Yes. Quick little market update, then we'll get into crypto.
Yeah.
E-minis down 44. The lows of the session, been kind of a grind lower. Had a little bit of weakness into the overnight session. They rallied them all the way back into the open. We're basically flat on the open. This is basically the low of the day here, 55.03, the low of the session. About a 70-point intraday range. Volatility has been pretty contained here, though, so far to start the week. Big week for earnings. You have Apple, Microsoft, Amazon,
Meta.
Meta. That's the other one that I'm forgetting. So big week for earnings. I know there's employment numbers, there's GDP numbers coming out. I don't know if there's a Fed. I think Fed is next week, if I remember, one of the FOMCs. But regardless, big week for earnings. So
next week.
Next
May
week,
7th.
May 7th, Fed. NASDAQ down 248 here. You've got the Dow down 132 and the Russell down 10. The Russell was actually strongest of the group in the early morning session. It has given up some of those gains. Oil selling off /CL 61.80 down $1.22. You got volatility futures at 24.15. They have bid from this morning, but we're at kind of the recent lows to start the session. Bonds up 10 ticks. They've had a real nice rally to the upside. Gold kind of poking its head back up $47. It was down. We've had about a 70 or 80 point intraday range in gold, in the gold futures. They were down like 30 or 40 at one point in the overnight session. They've rallied all the way back up 47. Silver kind of stuck in the mud here. It's basically unchanged. Bitcoin down 1,900 on the future, spot down 100 and change, but it has had a very, very nice rally, a kind of flipping correlations last week with Bitcoin, relatively stronger than really moving kind of like gold was moving the prior week. It was kind of like it felt like a little bit of a catch-up trade there. Lots of news out there on the crypto space. Saw the Jack Mallers' new venture 21. Have you seen this?
I have seen this.
Interesting prospect.
Yeah, another vehicle to basically acquire more Bitcoin.
Yeah. ETH
Similar
options
to-
launched too, or I don't know if that was early, but yes.
Yeah, you've got the ETH options on the ETFs. I think still not super liquid, but yeah, a lot that's happening. Seeing some decent flows into those ETFs as well, into the Bitcoin ETFs.
Yeah.
So a lot of positive signs.
Yeah. What do you think about the Jack Mallers thing? Because I have thoughts.
Yeah, I think additional vehicles where you're going to see large institutions, possibly sovereigns, come in and acquire Bitcoin via these vehicles. You look at who's involved here. If you're talking about Cantor Fitzgerald, you're talking about Tether. Names. I think you're going to see some support for prices from some of these vehicles. Obviously, if they continue to buy, you're seeing continued buying from MicroStrategy. Why would you pay a premium for some of these? Because basically you're accessing their ability to kind of leverage their balance sheet and to some extent the financial engineering that's involved in order to stack more Bitcoin, basically, versus just stacking it up yourself. But I think given the demand seems to exist here, then they should do pretty well.
Yeah, I find it interesting that it's less of like a hold type company like a MicroStrategy where it's just like buy more and that's it. They've kind of spun the idea that there's some sort of like investment, like building of crypto related businesses to yield more capital to then buy Bitcoin, as opposed to like the MicroStrategy, which is just like offer debt, buy it with cash. I like the angle. It almost gives me like a to relate it to stock market, like a growth ETF, like whereas like MicroStrategy is more of like, your passive S&P 500 type thing, like just numbers go up. This is kind of like a more growthy angle to the Bitcoin crypto space, which I think is interesting.
Yeah, you kind of almost have this active management component to it.
Where there's some unknown in the future where, there could be some sort of company or product or whatever that kind of ties into some sort of revenue. I think it's an interesting thing. Yeah, but it tells you that the space is still moving.
Oh, absolutely.
Like it's more confirmation that things are are being built in that space.
Yes.
Despite the downside we've seen in the market as a whole.
Yeah, you've seen volatility in equities. You've seen volatility at times in Bitcoin, though, as you mentioned, and a little bit of a decoupling there when you look at crypto versus the chop that is ongoing in, let's say, the S&P. Though that volatility that materialized in the S&P in no way, showed up in Bitcoin in the same manner at all. You did get a rise in volatility, did get some selling pressure. I think we went down to about 75 or so. Quickly bounced back, but you didn't see that extreme move where the VIX went close to 60, vol went over 150. You didn't see as much kind of the violence, I suppose, in crypto markets.
Yeah.
But then again, prior to that, they had in some cases already drawn down by significant amounts. You look at meme coins, you look at just the bubble bursting there. Some stuff is now 70, 80%.
Yeah.
So nice bounce here. And to your point, a lot of positive signs. We can go through the signals as well if you want.
Well, one coin, the Trump coin, is up. I don't know if you're in the top 200 holders.
I'm not.
For the dinner.
No dinner for
not
you.
yet.
No dinner party for you, unfortunately. So
yeah, big move there off of it's called $9 to about 16 or so.
Amazing.
Yeah, I mean, regardless of what the underlying token is, I love this space because there are a lot of trades to be had.
Yes. Do you feel the realized volatility? And there's places to find realized volatility, I would say. I mean, even
totally.
Like Solana was down to like 110-ish, kind of at the lows, and I think it's trading like 150, 160 now. There's only so many places you can find a 30, 40%, peak to trough in a 1 week period.
Yeah, most of this stuff is still trading around 100 vol when it goes to the lows of the realized volatility ranges. You're looking at more of like a 70, 80 vol. And then when it does explode to the upside, you're seeing this in SWE, for example. We'll talk about that.
Ooh.
You've got volatilities that are well above 100%. Not a lot of ways to get exposure beyond just owning the underlying token. But when you see very low realized volatility and implied volatility levels in something like Bitcoin, you can express that view simply by just buying, right tail kind of upside call options. Doesn't mean that they can't get cheaper, but arguably at these vols, it's pretty cheap.
Yeah.
Historically.
Yeah. I like it. Should we jump into the slides real quick? Get through those. And then if you have any crypto-related questions, shoot them in the chat.
Yeah.
We'll pitch them to our main man, Ryan, over here. The insider. SWE is one that you've been kind of talked about.
It's been on my radar, absolutely. Yeah, and one that is now offered.
Hey, no pats. Okay?
No
high
pats.
fives this time.
No pets yet. We got to get there first.
Yeah.
We're nice little rally off of the lows, but we are still well off of the highs, which we'll talk through.
The problem is if we get there, we probably won't have you on the show anymore because you'll be off somewhere
on my
else.
island.
You're not going to be, hobnobbing with the peasants here.
I'll be jet skiing.
Yes,
Around
jet skiing, Miami.
Yeah.
There you go.
All right, guys, if we want to throw up our performance update, couple things to call out here. So I think there's a high probability. Nothing is 100% certain, obviously, but dealing in probabilities, I think there's a high probability that you have seen Bitcoin bottom locally at 75. Doesn't mean that we won't chop around. You can't get back into the 80s. Implied vol right now would indicate that or imply that on a 1 week basis. But I think, unless something disastrous happens, the unknown, I think you've probably bottomed.
I like that. Okay.
What are we seeing? We've seen a shift in that very bearish performance momentum back to bullish. We got the shift from neutral now on the weekly time frame to bullish for Bitcoin. So you can see the green across the daily, weekly, and monthly time frames that we track. ETH went from bearish to neutral to bullish now. Hopefully it can hold for all of the ETH holders, but trading right around 18, or it was earlier, down a little bit lower now, but back to bullish on the daily. So you can see that there's a lot of momentum behind this recent move here, and this is true across most of the alts. I still think that the trade is to stick with Bitcoin at this stage until we see this shift on the weekly basis. We want to go from bearish to neutral, but we have seen that with Bitcoin. Bitcoin volatility, we'll talk about in a second, is nearing the lows. Performance has been pretty good for all tokens across the last week, though when you look at this on a 1 month and 3 month basis, there's still a lot that is trying to get up off the floor. We are down 30, 40% in some cases still over those 1 and 3 month periods where you just had these massive drawdowns off of the levels that we came off of going back to February. So keeping an eye on this, but when you look at what's happening with crypto, it is looking a lot better with Bitcoin kind of leading the way here. Bitcoin market cap dominance above 64%. It's been stuck there for what seems like forever, but momentum is certainly back in Bitcoin's favor.
I think the last time we had John, these were all red.
Yes.
I mean, like this was, is it just the price influencing sentiment, or do you think it's like, more relatable to just the situation in stock market as well as just, world situation right now with like the way things have moved in terms of like, we had a nice little bounce. We're kind of in the middle of the range. Now it's a little bit less panicky.
Yeah, absolutely. I think price is leading sentiment here. Feels a lot better when you're back at $95,000 versus $20,000 lower just a month ago or so. I think the move in the volatility space, when you look at the VIX, you look at vol, you've seen that come off of the highs. Now, I want to caution that it's still going to be very choppy out there, but you're not in that same kind of market environment where the VIX is 50. You've seen, some momentum shift to the downside there, that kind of selling in volatility, a little bit of a mean reversion, but you are still in a market environment that we should expect these sorts of reversals as we've seen today or the chop continue really. And I don't think that Bitcoin is 100% immune from that. You'll see with the correlation, still strong positive correlation to just about everything and inverse correlation to volatility in the equity space, so the VIX. But for now, I think there's a high probability that the bottom is in. And so you're more, I think, more likely in that environment to step in to buy those dips when you look at, that you're at the bottom of the range. Maybe you get back below 90 for a second. I feel a lot better about buying dips when you know that you have the trend kind of moving in your favor still.
Yeah, and in volatility futures, a couple weeks ago, we had a 7-8 point backwardation. Now they're pretty flat and in the low 20s. So very different environment, at least for now, than what we were seeing a couple weeks ago.
Yeah, it's interesting to see. It almost feels like, not just in the crypto space, but just in markets and volatility and just everything markets, that the whole like tariff situation, just the news cycle has started to get like in markets dulled and at least digested. It's almost like, okay, we know that the news is going to be chaos and that, now it's kind of like, been there, done that. We've already seen this sort of craziness. No need to freak out anymore. And that's what it kind of feels like in markets, which scares me a little bit. Yeah, because it is so flip-floppy. Yeah. Nobody knows what's happening. I was talking to Vecchio about that today of just, the impending unknown that just hangs over your head.
There's still plenty of uncertainty. So yeah, it is a little ominous that the market is kind of pricing out uncertainty, even though nothing has really changed.
Well, that's why I think vol is going to stay relatively high. Like I don't, and Tom, I disagree with like Tom and Tony have talked about it, like, getting back to these, 15, 16 VIX. Like I just don't see that happening, at least in the near future. It just doesn't seem like a thing anymore.
Yeah. Well, I think if you're going to trade that range in the VIX, let's just call it 20 to 40 or 25, 35, 25, 40, whatever it might be, it's come off of those highs. But it's a lot cheaper now to directionally play things in the NASDAQ and the S&P. You can go into the leverage
even
ETFs.
To the upside, too.
Absolutely. So you could, not that we're also always going to advocate for buying tail options, but if you want to buy puts in something like TQQQ, or you just want to buy puts in the SPY, based on the idea that you are still going to chop and you could profit on a shorter term basis from, even just a 2% pullback off of these levels where you get a little bit more of a bounce in volatility, it's a lot cheaper to do that. Now you get run over if this is a one-way move back to 15. But based on what you're saying and, still a degree of uncertainty in the market, maybe there's a trade to be had just being long some downside, put options here in some of the indices.
Yeah, and I think people get caught up, and we talk about it every time we have like these big moves in both directions. Realized volatility can keep volatility will stay bid with realized upside volatility. Like just because market up, VIX down is not a one-to-one correlation. I mean, that's typically what happens is you get this grind higher, volatility contracts, that's typical markets. But when you have big moves, when volatility is realized, even if it's to the upside, volatility can stay bid. And we've seen that over the last week or two, even though we've had a really nice bounce, volatility is still high. Like the VIX is still at 26. That is a high print for VIX. It's not 30, but it's still high.
Yeah, I mean, your range in there had been, let's call it 56 to 48, and it's tightened up a bit now. But if I'm just going off of the chart here and looking at kind of where we've traded over the last couple of weeks, I mean, I would argue that your range is 5150, 5200, back up to 55, 5550.
And we're right here.
There's a few hundred points in there that you could still easily chop within, unless you just think, like usual, V bottom. But what I would call out is that you don't have, and we might be moving towards a more stimulative environment, but you don't exactly have that support in the same way from the Fed, in which we quite often have been used to those V bottoms. I think you probably chop a little bit more here.
I agree.
Yeah, and even with volatility where it's at, significantly lower than where it was before, you've still got for May coming up, the end of May, you still have a almost 300-point range to the upside or downside of the minis. So that's back down to 5,200 or back up to almost 6,000. So still a lot of priced in uncertainty in the near term.
Yeah, it's always fun to think about like now, even with a 40-point move, almost 50-point move, those are big moves, and there were times where we would get 20-point intraday ranges, but they seem like nothing burgers after what we've experienced of like the 200-point. Like this sort of thing seems like it's like nothing's happening. Like this is like a nothing day, but it's almost 1% down move.
Yeah, I agree. I see 40 up or down. I'm just like, who cares?
You're numb.
Doesn't matter.
It's numb to the trade. It's great.
This is the world we live in, people. Yeah.
Let's get back in the slides. What else we got in there?
Yeah, so a few of the altcoins here as well, just to show that, again, when I try to assign probabilities to the market bottoming here, you're seeing this across assets. It's not just Bitcoin made a move or ETH made a move. You're seeing it in the smaller market cap stuff as well. Some big moves to point out here that we'll talk about in a second, but SWI up 72% in the last week. Aave up 20%. Doge is up there. Stellar Lumens, XLM is up there. Vols have come in a little bit, given how much we were whipping around. But again, that weekly or kind of more structural price momentum where you want to see that go from just this bearish trend we've been in over the last few months. We haven't seen that shift even back into kind of more neutral territory yet. Again, just when I look at exponential moving averages, we haven't seen those things cross back over. So the trend still is bearish, though you're getting quite the bounce here, at least in the short term, outside of Bitcoin.
So it's not quite alt season, is what you're saying?
I don't think so. I think you want to stick with Bitcoin. At some point, I do think you'll get some larger moves in a lot of these names, but I don't think that is something that happens until you have a more, I guess, conducive monetary environment, or there's a clearer kind of outlook as to what's going on, whether it's some uncertainty tied to tariffs, but I think more so just uncertainty around like what kind of macroeconomic environment we're in, or getting out of this one where it's been a little bit of a slowdown, or there's fears of recession, I should say. So if you've been in any of these, they continue to move around quite a bit, obviously, as we've come to expect. But I think the other way to look at this is just to price it in Bitcoin too. So if you are trying to find some opportunities, you can look at this price in BTC, and then what is outperforming on a relative basis versus Bitcoin versus what isn't. That might help you, again, stay on the right side of this, where Bitcoin's up 2% year to date. ETH is still getting smoked against Bitcoin. So you might get a bounce here and there, but I'd much rather be in something that, on a 1 month basis, 1 week basis is starting to look a lot better, is trading better versus BTC. Otherwise, just own BTC.
I figured you might even go to the other route and say, there's a catch-up trade.
I think there will be. It's just that you don't really have any signs of it.
Yeah.
I want to see something that indicates we're maybe at the very beginning of that move. I'm just not seeing anything at all. So you might get your timing right. You might be kind of lucky, but I would just rather have some indication that, okay, these couple of signals here are telling me that like the things are moving in that direction.
Do you think it's mainly would be like some sort of regulatory change or just like, change for the space? Or do you think it's like a liquidity thing, like rate cuts or tax cuts or whatever? Like, or both?
Yeah, I think it's more so financial system liquidity. We know that Trump and this administration is a 180 from the Biden administration. We know that it's presumably will be a much better regulatory environment. Clearly, all of the SEC Wells notices, everything has kind of gone away. In that regard, we know that it's likely there are more ETFs coming. I mean, there's a lot of, I guess, known knowns. It's just when do those things happen, and then what is the resulting impact? But no, I think this is more of just a price will lead, and you're probably going to have to see something on the kind of liquidity front. There are signs of that, and I've seen some charts going around on Twitter, and many other people have been talking about this, where Bitcoin prices at times have lagged global M2.
Yeah.
So you have a couple charts that kind of show that on like a 90-day basis. Interesting. Maybe you see a bit of an uptick. We know that it's likely that the Fed cuts, and it's likely that you probably see some stimulus from other global central banks. But there's again going to be a little bit of a lag there. And so I think until you start to see that, it's not necessarily reflected in the market. But it's less about, okay, what happens next from the regulatory standpoint and just what's happening now in terms of flows and rotations as a result.
Okay.
So that said, if you want to jump to the next slide here, a couple things to point out. Again, Bitcoin market cap dominance, it's only going higher. I want to see that roll over. ETH BTC, 1 week basis, ETH's up 1%.
Nice.
I want to see something here that indicates that there's a broader kind of rotation underway. Now that might be driven by a news catalyst or something else, but you're just not seeing it right now. I'd love to see it, and I think when it does happen, you could get a very explosive rally. And so, to some extent, you kind of want to be positioned for that if you're assuming it's going to happen, because otherwise you will be forced to chase, just given how these things move. Like when it moves, I don't think it's going to be lightly.
Yeah.
It's just that there's no sign, of that pending move necessarily. Same thing with Solana versus Bitcoin. Now Solana versus ETH. ETH did bounce a little bit here, but the trades have been to just be long Bitcoin, be long Solana. I know, we all want ETH to go up.
Oh no, you can't capitulate now.
We own it higher. Oh no, I own it a lot higher. I'll be very happy, and I do think that there's a move in ETH where you can see it go right back from let's call it 2. It's obviously under 2 right now, but 2 to 4 has been the broader range in there. Just again, no signs of that yet. Just a little bit of a bounce and everything versus Bitcoin here, but Bitcoin has just been again dominating. Over 64%. It's been hard to find anything that's beat this on a year-to-date basis. But that's a quick look at some kind of relative performance here. If we jump to the next slide, I believe we have the expected moves. So again, just commenting on Bitcoin implied volatility trading at a discount, ETH as well versus what we've seen realized over the last 30 days. IV rank for Bitcoin at basically a 3-month low. Pretty low on a 1-year basis too. Back to my point earlier where there could be an opportunity to buy cheap upside here, but that can always get cheaper. Expected moves, implies an $88,000 potential price on a 1-week basis here, given our spot price that's going to chop around. But you could see the 80s again, certainly, and it's nice to see that big 100 mark there for the top of the range.
Get out the hats.
Yes.
Get the hats back out.
Get them back out, man.
You put them in the closet, now you pull them back out.
That's right.
You know?
It's Bitcoin spring. Yeah. it's nice to see that. It's certainly bullish when we look at how this is traded. I want to see that big up move with the resulting volatility expansion too. Haven't seen much of that. It's just been kind of a grind here. ETH could get you back to 2, possibly. Solana trading at about a $20 expected move here. 167, 129, and then Doge looking for about a 2-cent move. So, you kind of trade that 16 to 20 range in there. XRP, which has been another one. We wrote about this over the weekend in the Next to Orange Tasty Crypto email newsletter. And the company behind XRP, Ripple, is doing a lot. Recent acquisition of Hidden Road, Prime Brokerage, and how they're connecting all of these pieces, whether it's their ledger, it's the XRP token, it's their stable coin, it's now their Prime Brokerage services. Interesting. I think there's a little bit more here that probably can be used to argue or to justify the overall valuation or the market cap of XRP, where I was a bit critical of that previously. So they're doing a lot of things that are positive. In short, looking for a 25-cent expected move there. But again, volatility is near the lows here, but that doesn't mean that it can't get lower.
Yeah, and with these implied volatilities, especially in Bitcoin, like Ryan says, the IV rank of Bitcoin and Bitcoin products are low. Yeah. So it just tells you that extrinsic value, relatively speaking, is near the lower end of the range compared to the last 52 weeks.
It's been a great trade, though.
Yeah, 100%.
I mean, you've been short a ton of volatility in there.
Yeah.
That has been, you've been getting paid on that all year, even with the big moves.
Yeah. Yeah. I mean, I think it speaks to, out of the money calls relative to if you're agnostic of stock price. Obviously, a low IV rank helps you buy that cheaper premium. But like something like IBIT, still, even with IV rank on the lower end, like IBIT actually has a 43 IV rank, but 60% IV all day. Like I don't care what the IV rank is in that environment. I think you can do literally anything you want. I think you just got to be careful with low IV products, which you're not going to have in the crypto world, but low IV products that have a high IV rank. Just be careful of, that doesn't mean you got to sell all the premium in the world, because a 10, 20% IV in any product is still low. I don't care what the IV rank is. So, but luckily in crypto, you have over 50% in pretty much everything, I would say.
I think it's a decent candidate for the wheel strategy. Yeah. I've been trading that myself, selling puts, have not been assigned, but you take assignment of the shares, there's going to be an exercise cost there to be aware of. But, sell the call against it or sell the at-the-money call if you want to, when you have that kind of volatility.
We play into like the diagonal spreads. Or at least I've been doing like, naked put with call ratio spreads, anything that plays into the upside call skew, especially when you're using duration there, because, these things or Bitcoin tends to have the more volatile moves to the upside, get that positive gamma.
Yeah.
It's nice.
Yeah, you could sell a put, finance a call spread.
Yeah.
You could sell a
wide
put, finance
call
a call. Yeah. The Psycho Bull is on the table for IBIT, for sure.
Well, didn't you start with that?
I started with the Strangle.
Oh, really?
Yeah, I started with the Strangle, and
I thought you did like a naked put and then like an at the money call spread or something. That was like in a different expiration.
I had the Butterfly. I legged into the Butterfly. So I had the Strangle. I converted it to just a short put, and then I did the Broke Wing Butterfly, turned it into a free Butterfly twice. Sold out of one of them. But yeah, right now I have the 55-60 Strangle on, and I will maintain that upside bias. So if we get to 60, I'll just shift the strikes up. I want zero upside risk as long as I can maintain that. But yeah, I started with $500 in premium, and now we've got $1,400 in premium, and it's May almost.
Beautiful.
So we're looking good in this position. But yeah, it speaks to the wheel strategy, just selling premium. And even if you want to buy premium, you can help offset that by, taking some more risk or just selling something against it. Then that speaks to the call skew.
Did we skip any slides? Did I miss?
Oh, we got a couple more we could just hit on really quickly. Relative performance, if we bounce back just one. Yeah, so let's look at our biggest gainers. We'll go over in just a second. But just to put things in perspective here, you look at where we are 1 year later. So versus this time last year, how have a few of these tokens performed? ETH's down 43%. year over year. XRP is up 329% to give you the range there. Solana's basically flat, Doge is up 16, and Bitcoin's up almost 50%. So I do think, you could see a little bit of a catch-up trade with ETH still, but like I mentioned earlier, no signs of that yet, but that would be something I'd be playing for.
I like it.
Jump into the next couple that we've got here. Biggest gainers, as I mentioned, SWI up 72% on the week, up 54% over that same time versus Bitcoin. Aave up 20, XLM 17, and Doge 15%.
What are the catalysts here?
So on the SWI side, you've seen a lot more usage and users coming to the chain. I wrote about this and won't go into a ton of detail here, but SWI processes transactions as a network in parallel, or there's parallel execution versus sequentially. So one idea is that this is a blockchain at layer one that is a high performance chain that could be used for gaming. When you think about gaming, let's say that people want to buy a weapon or a skin or something in a game, right? You shouldn't have to wait for everybody else in line to purchase it like you're at a store. Everybody should digitally be able to purchase it simultaneously in parallel. So that's a just kind of basic use case when you think about gaming and what this blockchain network can do in terms of processing different types of transactions versus something that is going to be sequential. Something that's sequential can be extremely fast in terms of how quickly it processes transactions, but it can't process transactions in parallel. So I say all of that because there was, I believe, just a rumor. I haven't seen anything actually confirmed, but this relates to some updates to terms of service with the Pokemon game, as I understand it. And there is some speculation that there's a partnership brewing between Pokemon and possibly the SWI blockchain network. So leveraging that technology for the game would be my assumption. That said, stablecoin volumes, market cap on SWI growing significantly. And that's what you're seeing with stablecoin usage across the space, whether that's on Ethereum, it's on Solana, it's on ETH L2s, it's on SWI. You're seeing more capital flow into the ecosystem. And so I think that's probably the stronger driver here, but everybody loves to attach to the headlines and the narrative. It's an extremely volatile token as well. Yes. This is something that trades at a realized 30-day volatility of 126%. So, partially it's just that. But yeah, SWI is one that, I think a lot of people, again, look at not so much as a Solana killer, but if you were to try to come up with some sort of narrative, Solana competitor, high performance layer one blockchain, uses the Move programming language. It processes transactions in parallel. So there's like technology components that people are interested in this space. But it's also something that, when we look at this, okay, it's up 72%, but I've got it down, I've still got it down 13% on the year. It's still down 10% in the last 3 months. So this was at the high, it's closer to $5.50. Nice move if you bought it at $2, but if you bought it at $5.50, you're still you're underwater. I think it could go higher. But again, you're going to need to see the whole space go higher. They all trade together. But this is one that I have a position in personally and has been on my radar for, well over a year now. Is something that I'm interested in.
Congrats on your wealth.
Oh, well, I own some higher too. Yeah. And, I've been kind of running the DCA approach here. So buying, I own some under $1. I own some a couple dollars higher than where it is here. Right? But yeah, it is a position that I'm personally bullish on. We'll see if that's right. But the signals look a lot better. Went from bearish to neutral very quickly and instantly to bullish. So hopefully we hold on. I think I would look to just trade the range in there, and probably you could see a pullback back to kind of called 325, 320 area.
It is available on the Tasty platform. So
it is available on
buy
Tasty
some
Trade.
if you like it.
Yeah. It's sweet up.
I like that. Yeah, one more slide here for you guys, and this is just updated cross-asset correlations. So as we've just tell, you have seen a divergence and a decoupling in volatility terms, or at least is a lot more relevant probably 2 weeks ago, where you were still getting a lot of selling pressure in equities. These things are moving together again, as indicated, but fortunately, it's been to the upside. As we mentioned, S&P back at the top end of that recent trading range. Strong positive correlation across the board here, even seeing that with the dollar to an extent, and with the long bond from a price perspective when we look at the ETF TLT. And then again, what have we really seen? We've just seen volatility move from, let's call it 60 VIX to 30 VIX, and
go up.
a little bit of a relief valve. Everything goes up.
Yeah, everything goes up when you get a VIX halving.
Yeah.
It's not the halving we usually talk about on this show.
Correct.
But it came. We got one. They're not really on a schedule, but when you get it, it's usually fruitful.
When is the next halving? 2028?
Yes. Yeah. The last halving was in April. I want to say it was April 20th, sometime towards the end of April 2024.
Very nice.
Yeah, so that's a look at crypto markets, guys. And again, I don't know what the big takeaway here is aside from it looks a lot better. The signals are a lot more bullish. You could argue that this is maybe leading in some ways as it was leading to the downside, possibly Bitcoin leading to the upside, crypto markets leading to the upside. I think for myself personally, I'm sticking with Bitcoin, with Solana, SWI, Ethereum, not really adding to the Ethereum position, added enough to that.
The bag is big enough.
Yeah, but the way that I would trade this too, where I have probably the highest degree of confidence is just still in the Bitcoin trading range.
Makes sense.
Any insider info on some workings on in the Tasty Crypto world / crypto offerings here? Anything coming up that you'd like to throw out there?
Yeah, we've got kind of a special release on the Tasty Crypto side that we're planning for the end of May. We'll talk more about that as we get closer to the date. We've got a lot of great improvements that are also coming to the Tasty Trade mobile app on the crypto front. So what was it now? 2 months ago, basically, beginning of March, we released a brand new update to the crypto interface on the Tasty Trade mobile app. Crypto now has its own section, so you can get real-time prices. You can trade or transfer directly from the screen. You can trade ETFs and futures from there as well. So a lot more coming to that, which I'm excited about. So we're going to continuously work on improving our apps and the experiences around them. That's partially why we'd love to get some feedback.
Yes.
So if anybody wants to fill out that survey form, help us out on the UX front a little bit, please do. But again, we are in the process of trying to build out the best crypto trading experience that we can.
Love it. And yes, that form is pinned to the top of the YouTube chat. Pop over to the Tasty Live channel. You'll see this video streaming live. You can click on it. Beautiful. We got some crypto questions in the YouTube chat. What do you think about the lack of volume in the new CME Solana futures market? Is it just not popular because it's a non-BTC futures product? Too new to tell? What do you think?
Do we have them on the platform yet?
I don't think so yet.
We do.
Yeah, probably too new to tell. I mean, I think it's a reflection, again, of where we are in the cycle. If I'm saying that Bitcoin market cap dominance is 64% and the trade still is Bitcoin over everything, I don't think the launch of a futures product from the CME changes that, right? You can trade perpetual futures in Solana globally in much, much greater volumes than are being traded right now on the CME. It's been around for a very long time. So the launch of the CME product is not a game changer. It's a positive thing, don't get me wrong, and it's a conduit for capital flows and participation from not only institutions, but retail to some extent, when it's time. It's just that you're not really seeing that full-blown kind of bull market in Solana either. Nice bounce off of the lows, but you're not seeing the same trend in Bitcoin. And I think until that changes and there's a reason for capital flow into some of these other coins and out of Bitcoin, which has been outperforming, then it's unlikely you're going to see significant volumes around Solana. I also think from an institutional perspective, and this is probably the same issue that the ETH ETF faces, there isn't the best narrative around it, or it doesn't have really like an identity, I think, for a lot of institutions beyond those that are maybe already participating in crypto in a variety of ways. Why are they all of a sudden going to participate in these futures markets? Yeah. It's great that it's there when the time is right, but not surprised, like many of these crypto launches on the CME or on the future side, aren't necessarily going to have explosive volumes out of the gate.
Yeah, I think there not being an ETF of Solana is also a hindrance, because a lot of the trading in Bitcoin futures and even like in the micro Bitcoin is probably tied to hedging / arbing those ETF flows, right? So if you're, statically long IBIT, you can use the Bitcoin micro futures or the big boy futures to sort of hedge or trade around that position without actually liquidating out of the ETF. So you can kind of hedge positions if you are in it. I think a lot of that, the futures volume is probably tied to that sort of dynamic.
Yeah, I think you're right. You see that at times where people will point out only the positioning of the Bitcoin futures or the open interest and just showing that, okay, positioning indicates that there's a massive short position in here.
Yeah.
Well, maybe that is, to your point, the basis trade, and it's against that long position in Bitcoin ETFs.
Yeah.
There are, again, a lot of ways that you can trade Solana futures. So on just this one exchange, seeing low volumes, I don't necessarily think is indicative of anything.
Mhm.
You can trade Solana futures on Coinbase's derivatives exchange as well. You can trade them certainly on the perpetual futures market globally in much, you're seeing much greater volumes there. But I do think having the future, then having ultimately maybe an ETF that is based on the future, like we've seen with Bitcoin, Ethereum, XRP today. Exactly. These are all steps in the direction of possibly getting a Solana future, getting a Solana or an ETF, and then an ETF that passes on those staking rewards.
What's the XRP one? Because I know you mentioned Sol Z, right? Was that it or Sol? Sol Z. Sol. Yeah, it's like a Solana futures ETF, which is, I have to look more into this one specifically, but it probably operates a lot like BITL, where it, uses the futures and then the portion of the leverage is allocated toward treasuries. But this one I'll have to look at more. But is there an XRP one too that is like
there is. I don't know the ticker off the top of my head. I know that recently there were a few more leveraged XRP ETFs that were just approved for trading, but they're based again on the futures. So no spot Solana ETF or spot XRP ETF like you have a spot ETH and spot Bitcoin ETF. But this is a step in that direction.
I saw there was a 2 times short MicroStrategy ETF coming out.
Yeah.
It trades the one time. Like it
Unreal.
Essentially
Inception.
Yeah, you're getting into just some freaky liquidity. But that's when volatility comes. That is what I had a reporter that was asking me about, Newsmax. Like, who cares about that anymore? That was a fun, one day thing. And my response was in general, liquidity and action, the retail traders go to where the action is. They're looking for big moves. They're looking for volatility. And that's why you keep seeing these, MicroStrategy 1x, 2x, 5x, whatever. I'm sure we'll get up to, even higher numbers because liquidity continues to be wrapped around things that move. That's just how, nobody's looking to trade Coca-Cola.
Yeah. You invest in it for the dividend.
Yeah, this is our market.
Right. We're here for the volatility, not the long-term capital appreciation.
Yeah.
Are you kidding me?
I'm looking for taxes here.
Yeah, the Sol Z product, it seeks to replicate price movement through futures contracts and or swaps without holding Solana directly. And you look at the holdings, it's the last one that we have listed is 99.69% of SOL futures for May 25th.
Yeah.
So it says it's a long-term product, which is interesting because a lot of these ones that rotate or have to rebalance all the time are not.
You get some sort of cost to carry. I mean, the biggest drawdown on these is just the management fees. A lot of these are 1 to even 1.5 or even 2%.
Yeah.
Yearly management fees. So that's a big number.
It's interesting because you have, and I'm going to jump on Dan's point here in the chat too. You have this market that has all of these efficiencies that are gained. And then these traditional players come in to insert inefficiencies into that market, right? And maybe that works because it's the only way for large pools of capital to gain access today, but I think that changes over time, whether it's to your point about, some friction in the form of performance management fees, or you look at Solana, and to Dan's point in the chat, okay, why are we maybe not seeing the volumes in some of these traditional products? Well, because they trade on exchanges that are only open for trading, call it, 5 days a week, 24/5, maybe. Yeah. Versus something that truly trades 24/7 globally. It's hard to be in that product that's going to be closed for 2 days when the spot's trading for 2 days, and the futures in other parts of the world are very efficient and trading, during that same period of time while this market that you're on or this exchange you're on is closed. Makes it tough.
I mean, if you've ever been to, like a nightclub, you got to grease the door guy, you got to grease the the bottle service girl, you got to grease, like everybody's got to get their little taste here. This is like what we're dealing with here. So, you got
you want some crypto?
Yeah.
I got a guy.
Yeah, you got to let Kathy Wood get in there with her ETF, get a little 1 or 2% there. BlackRock, you got to give them all a little something.
Yeah. And I think that's the big difference between this product and something like iBit. Because you think of iBit is, number one, very affordable. It's a $50 stock.
Yes.
It's extremely liquid because it gives people not only that smaller price point, but it gives people the ability to get that crypto or Bitcoin exposure pretty much 1-for-1 without having to open a wallet and do the things that maybe not everyone wants to do. But to Ryan's point, it's also closed. So it's like there's that layer for sure.
You can't trade it, once the market closes.
Yeah. But iBit options, I don't really see a reason to go. If you're trying to trade an options market, I think iBit is where you would want to go, just because of liquidity.
Absolutely. Yeah. And I think that you see this change over time, right? Yeah. We will have near 24/7 stock trading. The tokenization of assets can lead to, clearly 24/7 instant settlement. And so I think it gets better from a liquidity perspective over time, from an access perspective for all types of investors. And you will truly have these 24-hour global nonstop markets.
What happened to MicroStrategy qualifying for the S&P 500? So they have to reach a certain benchmark of net income, I believe, or profitability or something.
BTC yield.
Yeah. So Bitcoin had.
The hell does that mean, Ryan?
I can explain.
You can?
Well, a couple things. I think you can structure a fund. Not that MicroStrategy is doing this, but you're seeing Coinbase launch this to institutional investors outside the U.S. But that basis trade can get you BTC yield, right? It's not going to be 100% per year, but they're perfectly correlated. I'm long the underlying spot versus I'm short the derivative against it. I collect that premium. I think the way that MicroStrategy refers to like BTC yield gets back to what I mentioned earlier around why are you paying a premium? Well, you're paying a premium for their ability to leverage their balance sheet and engineer various debt structures so that they can go out and acquire more and more crypto. Otherwise, as an individual retail investor, you probably just buy this yourself. But if you want a higher vol, positively correlated crypto position, it does come with risk, but you could get a little bit more bang for your buck on the upside there. But you're going to pay for it, as we've recently seen on those pullbacks.
Yeah.
I think that's how they refer to BTC yield versus they're not managing a fund where they're going out and selling call options against it or selling short futures against it.
Yeah. God forbid Bitcoin ever goes down below their basis, they'll have a negative yield.
Yeah, in that case, you'd be hurting. Yeah.
Yeah. That's what all the old school Twitter people are saying. They're like, this can't be good once X, Y, and Z happens, but first X, Y, and Z has to happen. Yeah. But yeah, it's nice to see Bitcoin rallying pretty substantially off the lows in not just a couple of days. It's been a strong couple of weeks here with many more green bars than red. So hopefully the pain train has left the station. I think that's it.
Before we go, we need a meme coin of the week here, Ryan.
I don't know if I would call it a meme coin, but Something that has popped up on my radar recently is BitTensor. We've talked about this at times over the years on the Tasty Crypto Show. This is, I don't know how to describe it, a blockchain network that's almost a marketplace for various services, or a competitive marketplace for everything from different networks that are going to be used to train AI and decentralized compute. But you tap into this network of decentralized compute through BitTensor. Tau is a symbol, not something that you can trade directly on Tasty Trade, but that is one that's on my radar as something that I think is interesting. We'll see, but I think it's real in terms of the utility that it provides, what the network actually does versus some of the tokens that we've been in for a lot of fun, right? Maybe there's a development team behind a lot of these tokens and they're going to build something else, but arguably this BitTensor and Tau, this network is a very real thing versus some random kind of coins for fun.
Fantastic.
Incredible stuff. Well, that is all the time we've got for you today. Hopefully that segment was helpful. Always great to have Ryan on, giving us the deets in the crypto world. If you want to follow us on Twitter, you can reach us there. I'm at Trader Mikey B. Nick's at Trader Nicky Bat. Ryan is at Ryan Fred Grace. And definitely give Tasty Crypto a follow as well. Sign up for the newsletter. You can reach that on tastycrypto.com on the homepage. Yes, great stuff. Multiple times a week, totally free. No reason not to have it. But yeah, stay tuned. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. We'll be back same time, same place, 11 a.m. Central tomorrow. We'll see you then. Peace.
Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
It was a great show. It was very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Stop when the clock gets 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
We are back. It is Monday, April 28th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Ilya Spivak. Ilya, we have a big week ahead.
Huge. If ever there was a week to decide whether the world is going into recession, we're going to decide it this week.
We have earnings. Big tech companies are reporting this week. We have significant macro data
Huge
in the days ahead. Of course, capping off the week with non-farm payrolls on Friday, but there's a lot before then.
Yes.
And we have to contend with whatever comes out of the White House. It's worth noting that today the White House held a press briefing at 8:30 a.m. Eastern time. That's also on the agenda for tomorrow at 8:30 a.m. Eastern. Scott Bessent, the Treasury Secretary, will be the guest of honor. So some potential market-moving headlines before the cash equity open. But when we look at today's price action, it feels like kind of a normal-ish risk-off recession in the U.S. kind of day.
Yeah.
Bonds are up, gold's up, stocks are down, the dollar's off a little bit, but not too much. The yen's performing well, oil's off a little bit. It's not a terrible kind of day, but it feels a little bit more like standard recession. There are some things to point out on the sector performance, though, but I don't know how else to describe today, Ilya. It's quiet so far. It's a pretty quiet Monday. It's rough around the edges as we go to turn to these charts. It's not smooth sailing by any stretch of the imagination.
Right. And one of the more interesting things here is that you're looking at what, to your point, I think you hit the nail on the head here, is kind of regular recession vibes. So S&P is down with crude oil, gold is up, the 10-year yield is down in tandem with all of those moves. The dollar is down a bit. All of this feels like, right, so the cycle is going to roll down. We're going to have a slowdown. That'll be less demand for cyclical things. That will be a rockier backdrop for earnings. That will get the Fed to cut interest rates. That's not good for the dollar in relative terms against other currencies. On very kind of regular, not we're jettisoning the dollar in the global financial system or some such madness, but we're just going to have less yield on dollars, and we're going to have a regular textbook page one, this is how FX markets work, adjustment to the exchange rate on that basis. It all looks very orderly today.
Orderly is a good way of putting it. It's not chaotic. The market's moving around headlines, but not freaking out. As we start about this week, where do we stand upon the CME Fed watch? Will the Fed be moving anytime soon? Will they be moving when they meet next week? Curb your enthusiasm. Market saying a 7.66% chance of that happening. Attention still is out to June. But we do have a non-farm payrolls report this week, and I suppose that's worth noting because the payrolls report is not expected to... And GDP, right? But you're not exactly looking at great data for the non-farm payrolls report. Like 130K is the estimate, which is above the replacement rate. In order to keep the unemployment rate at its current level, 4.2%, for the next 12 months, we have to keep jobs growth of about 113,000, just a little bit over that per month, according to the Atlanta Fed jobs calculator. So at 130K, it's jobs coming in enough to replace the people who are leaving, unemployment rate staying on hold, maybe nudging a little bit lower, but that's not enough to get us to a May cut. Could we see a non-farm payrolls number coupled with a GDP report this week that pulls up that May cut odd from 7.66% to not even 100, but say closer to 50, where it becomes a live meeting for the Fed?
Certainly. I think so. Because I think, and I don't think the Fed's going to cut in May, just to be clear. But I think if we can get the cut odds to like 30%, then the tone shift will be official. Because then the Fed will come out and they'll have the forum to basically say, right, so we told you in March that what we wanted was hard data. We told you in March that we want to be cutting, that we see the deterioration in business confidence, consumer confidence, you name it. We too see what you see, markets. But we need to be sure that we're not jumping at the wrong thing and in the wrong direction here, because the reason we see all this deterioration in business confidence, consumer confidence, is people pulling back around uncertainty having to do with fiscal policy. And some of that uncertainty may well be inflationary because tariffs are essentially a sales tax on imports. So prices will just go up on whatever that is. And if you look at how the markets have reckoned with that, they've actually looked through it and seen inflation as likely to come down, not up, because all of those one-off price increases will kill demand, and the recession that follows, or recession-like, and people get all kinds of feathers ruffled when you say the R word, but it doesn't matter. It's some sort of economic downturn strong enough to see inflation come down, not up, because the demand destruction is worse than the one-off price increase and more lasting. The markets have spoken on that score. But the Fed has to do their dance. They have a dual mandate. And so what they need is hard data. We just heard Powell say it at the presser after the last meeting, in 2 speeches thereafter. They need something to hang their hat on here. If you get GDP meaningfully soft, and by the way, the expectations are pretty abysmal. We're looking for standstill in the first quarter, which would be a very sharp come down from where we were in the fourth. And then you get a soft NFP number. Well, yeah, then the Fed has that something that they need to sound credible and say, we are not kowtowing, we are not being manipulated, we're not being forced. Nobody's scared over here that this or that Fed governor or indeed the Fed chair might get fired. We're doing this because there is real evidence to do it in the economy.
Yeah, right now, the GDP expectation that's due out on Wednesday morning, 8:30 a.m. Eastern, 0.4% from 2.4% previous. That's a sharp acceleration, right? We know that the growth trackers right now, depending upon where you look, and it kind of choose your narrative, I suppose. Atlanta Fed GDP now is at minus 2.5%. When they produce their alternative model forecast accounting for the gold imports, it's negative 0.4%. If you head over to
about online.
Yeah, the Fed Nowcast on the New York Fed Nowcast, on the other hand, is a little bit more optimistic. It's currently sitting at 2.63%. So again, you want to split the baby between the two. You're going to get some growth that's marginally north of 0, perhaps, maybe a little bit better than that if you split it between the New York Fed and the alternative Atlanta.
1%-ish maybe.
Yeah, something like 0.5% to 1% seems reasonable. But if you get that plus a softer non-farm payrolls report, where again the expectation for this Friday is sitting around 130K from 228, and the replacement level for jobs is about 113,000. Maybe that's enough there for the Fed to.
It's enough for them to come out dovish in May and say like, hey, in June is go time.
Yeah, but again, rate cuts for the wrong reasons, right? As we talked about in September and I've referenced many times recently, the Fed cuts for basically 3 reasons: maintenance, recession, or emergency. Maintenance is good. Emergency is not good up front, but good longer term because it means the firefighters have arrived. Whereas recession, it typically means that policymakers were late and they missed the boat and they couldn't stop something from occurring. And recessions are nonlinear. So when they go, they kind of just spread like water falling on the floor. In this case today,
sort of what we learned from 08-09, right? It started as a mild downturn well before all of the calamity, but once the growth part of the debt to GDP calculation started to fall out, all of a sudden the debt got to some place where enough areas couldn't digest it, and that's where it starts to snowball. So to your point, you never really know. You take away growth, then all kinds of skeletons start falling out of the closet in places you didn't even think they were.
Stocks today are getting a little bit weaker around key levels for both the S&P 500 and the NASDAQ. We rallied back into the lows mid-March, late March, prior to Liberation Day. And that's where we find some struggle today. 5502 right now in ES. It's a loss of about negative 0.9%. I think we should be on that potential key reversal watch today, Ilya. If we move below Friday's low of 54.80 and a quarter, we already have punched through yesterday, or rather Friday's high. And so that would mark a potential candlestick topping pattern right there at a level where you have former support carved out, and the downtrend from the February, March, and April swing highs. So 1, 2, 3 things that suggest the market has found near-term resistance. If you've been pressing short volatility trades, if you've been leaning along deltas starting in early April or even over the past week, you have to take an earnest look at this and say, technically speaking, if this is any sort of guidepost for how I, inform my trading decisions, the technical guidepost is saying red light. Stop here.
Well, I mean, and this is why I'm short. Having arrived at this juncture and sort of said, okay, we've basically reset all of April's hair on fire. And we're back to where we landed going into April through mid-February and March, where we were in a regular recession sort of thing. Tariff uncertainty started to hit the PMIs, stocks came down, bonds came up, dollar weakened, rate cuts, la-di-da. Regular type of stuff. And then, of course, we get into, with Liberation Day and such, quote unquote, we get to, oh my God, disillusion of the global economic order. And then everything cracks in a much more panicky, hair on fire kind of way. And then you mentioned this, and I think you're spot on. We find what is a bond market put for the administration. And things unclench. Because you get a sense that, okay, there is a reaction function, there is a point of pain, and they do back up when we get there. So, all right, back to our regularly scheduled recession then, cancel the collapse of the American empire. That's not what this is. So we're back to sort of that starting line. And once we got there, just in terms of relative risk reward, it was like, well, I get short here, and if I'm wrong fast, because we break through this level and then you got to go. And if it's a retracement like you would expect in a market stepping down, this should be your line in the sand and you should hold here. And it looks like the markets are exploring this idea. They're exploring it in the S, to your point on the chart here, NASDAQ. Russell looks very similar as well. We're at this point now where we're going to thresh out whether what we just saw off the lows in April was a correction in a down market, as I think it was, or whether we're looking at something more constructive. But we decide now.
We decide now. One piece of information that may actually help the flows in this market here is that because we've made our way through earnings season, a lot of companies who had buybacks planned, their back windows are now reopened. 40% of companies in the S&P 500 starting this week will have the ability to start buying back stock, which after a period of depressed prices, maybe that's something that helps shareholders. That's a common tool in corporate finance to help provide or bring back value to shareholders. So NASDAQ here, S&P 500 here, they're modest losses, right? We haven't cleared the lows from Friday just yet, but like the S&P, if we find ourselves looking below Friday's low of 19,216 and a quarter in the NASDAQ, you have a few things going for you where you fail at the underside of former support turn resistance. You have the topping candle. Then also you have momentum that's improved here. And this is kind of where I find myself looking at this as a bit of a crossroads where this week early up front could be a bit of chop. Momentum has improved here in a meaningful way. Stochastics typically aren't overbought during bear markets, and stochastics have gotten back to that overbought territory. Likewise, MACD, it doesn't go into the territory above its signal line during bear markets, and we're pretty darn close to getting back above our signal line here. And the 5 is above the 21, both with positive rates of change, positive slopes. So technically you can pick your narrative right now at the start of this week. There's signs of topping, but there's not it there yet. The momentum's positive, but it's not exactly giving you the gains today. Look, we're at like the 50% mark, a little bit below there of the year-to-date high to low range. Directionally neutral may just be the way to go as we sort this out, because the next few days could be just messy before broader direction's known.
Yeah, I mean, I think if you look at this with fresh eyes and you don't have exposure yet, then you look at this and you go, all right, make up your mind. Make up your mind. Are we going to break or are we going to turn? We're here now. The level of intensity has seemingly cooled. Famous last words, of course. Let's see now what thing we decide to do. There's not a whole lot of vol here to just straight up say, you know what, I'm going to put on something directionally neutral and just try to be a premium seller. At 34.9 IV, it's not a whole lot here. So, and chances are, by the way, as you're heading into more event risk, that's biased up, not down, in the coming days, depending on sort of how the event risk works out. But what we do know is there's a lot of event risk. And so,
ton of event risk.
So chances are you're not exactly getting ready for a week of smooth sailing in the recent context. Because even if the event risk works out, let's say you get a GDP number that's rocky, probability that the president immediately holds a press conference and starts saying all kinds of things that the markets get a little iffy about, high. You get a bad jobs report, probability that the president holds a press conference and again starts saying all kinds of things that the markets go, whoa, okay, hold on now. High. President's approval ratings are, let's say, aggressively revised to the downside over the past several months. Some of the latest numbers are particularly bad. The polls that came out over the weekend of Republicans are very concerned with the policy rollout so far, clearly. You see it in business confidence, you see it in consumer confidence. If the numbers are bad, the president's going to come out there and talk. So it's not exactly the kind of place where I go, oh yeah, I'm just going to put on an iron condor because vol is going to contract from here. Tough call. So if you don't have anything on, maybe you just don't have anything on right now. But if you are going to have something on, my mind, it makes zero sense to want to be long when you're literally sitting at resistance because the risk reward is awful. So if you're going to do anything, and this is what I'm doing, small, risk defined on the short side.
Yeah, the first 2 days this week really are light on the calendar side of the equation. Economically, we're talking about tomorrow's jolts being the most important thing during the day, which granted is, it's an important event. But Wednesday is when things really pick up. You have the GDP report Wednesday morning. You go into Wednesday afternoon. You're going to get a slew of earnings releases. Microsoft, Meta, even Qualcomm, fairly important company, right? It's not a Microsoft or Meta. You also have Caterpillar kicking off the day. Okay, Caterpillar often seen as a global bellwether. Thursday, of course, Apple, Amazon, and then Friday you're looking at Berkshire, ExxonMobil, Chevron, and then we're going to have non-farm payrolls. So if you were thinking about when like the real risk is to this market, I think today and tomorrow are probably going to be choppy.
Yeah.
Absent
the real risk is Wednesday.
Ceteris paribus. Assuming Trump doesn't say anything, right? Today and tomorrow, the market probably just oscillates today and tomorrow. If he says something good about tariffs, the market's going to go up. He says something bad about tariffs, the market's going to go down. But the event risk here that traders are really waiting for, it starts Wednesday morning. It continues until Friday morning. That 48 hour
and it starts
window.
Wednesday overnight. Really. No, I think you're absolutely right. And it starts Wednesday overnight because we're going to get a view of the entire global growth picture on Wednesday. We're going to get Chinese PMI numbers that are going to start us off. Then we're going to get Eurozone GDP numbers and then US GDP numbers.
Sure.
So we're going to get a view of all three of the world's major growth engines within a matter of hours of each other. This is 58% of global GDP. So if we're going into a global recession of some kind, this is where we're going to learn about it, right here on Wednesday. And then we're going to hear from the BOJ on Thursday what they think about all of it. And then on Friday, we get the cherry on top with NFP. So this is setting up to be a very decisive 3 days at the back end of the week, like from the middle out, to your point. And even if the president says something, unless it's really sort of into the greatest hits collection of market volatility, seems unlikely. Seems to be backing up on all of that. Maybe. Caveat, caveat, star, star. Unless it's something really game-changing, market's probably not even going to care because it's not going to want to front-run the event risk that's coming up unless they have a really, really good reason to. They're going to wait for that conviction.
Well, we look at sector performance as we're past the halfway market today, and it's not anything you want to look for if you're hoping for bulls to stage a second half of the day turnaround. Semis are down 2.31%, your loss leader. Technology, second worst performer, off 1.45%. Discretionary off 1.14%. Retail off.
Good for you, bulls. Take a break. You're tired.
It seems like it here. And then on the flip side, like what's doing well? Utilities, telecom, that's okay. GDX, not exactly a growthy mix overall. No. The Russell here, we haven't really talked about this in recent weeks because it hasn't been something that's showing a lot of gusto to the upside. But as we look at the markets in ES and in Q struggling to breach their downtrends from the February, March, April swing highs, struggling to get back to those March swing lows. It's a similar story here for America's worst 2,000 companies. And
probably rockier.
Probably rock.
Yeah, I'd short this one the longest because it cannot get out of bed here.
It has the potential here, right? You see the February highs, you see the not quite March, but we draw to the April high here, and now also late April. The bearish engulfing bar key reversal that forms under 1937.80 here, so only 13 Russell points. That's not a lot, and that would also bring you back below the 1 week and the 1 month moving averages, which held up as support on Friday intraday.
Yeah.
But today, if you crack below them, you get your key reversal, you get your failure above below that. Liberation Day pause on April 9th. You never get through the March swing lows. It's another indication that equity indexes perhaps, yes, we moved away from the fear stage of this. The bad days are over. The worst days have begun.
Right. I mean, if we go back here into regular recession vibes, much as we did sort of mid-February through mid-March, let's say, before you kind of got into a more digestive state going into Liberation Day. If that's what this is, it's probably the better case scenario, oddly enough, because it's very difficult to imagine how you don't go into a growth slowdown in this situation. I mean, Europe has been anemic and flirting with various forms of contraction since the middle of last year.
Mm-hmm.
They were, of course, in a recession in the end of 2023. They, by hook and by crook, clawed out of it in the first quarter of last year, and then the whole thing fizzled. So they've been in trouble basically going on almost a year. China hasn't had any kind of positivity in its economy for 8 consecutive quarters. That's 2 years of economy-wide deflation. And the gap between real and nominal GDP, to give you a sense of just how pervasive this is, averages somewhere between 80 to 100 percentage, 80 to 100 basis points. Or let's call it 0.8 to 1 percentage point of GDP growth of the world's second largest economy. It's a lot. So we're looking at a situation where already, you and I have talked about this at length, since already the middle of last year, the U.S. service sector was the only game in town for global growth, by and large. And now you're going to get a flat result for U.S. GDP? Where is there not a recession here? How do you not have one? Let's say between the second quarter and the third. So with that in mind, If you get an orderly descent here, great. The problem is you might break all kinds of stuff along the way.
Volatility here as we get ready to turn over to bonds is bouncing back a little bit right now. The fixed term structure is odd. It's kind of humped right now where it declines initially in the near term and then rises back as you look into the expirations that are littered out into the fall, and then declines again as you make your way through the winter and into early next year. I think some of that, as Jamal has discussed here, probably has to do with the timing around the 90-day pause. Right?
Yeah.
Like volatility starts to rise again in the futures market on the other side of the 90-day pause. It makes sense. So we're not out of the woods yet by any stretch of the imagination. And I think this decline in volatility, right? Like we've gone a long way in taking vol off the board here. And you could see almost, not that we do technical analysis on the VIX, but you could see that the post-Liberation Day low in the VIX at 24.93. We got a 24.84 on Friday. We have a low of 24.70 today. You know, are we really ready to say that we've turned the corner? Is everything better since April 2nd? Everything that's been announced since April 2nd, are we out of those woods yet? No.
Not even remotely close.
So vol has done the round trip back to where we were before the market freaked out about the tariffs.
Right.
Maybe
you see this in ES. You see it in the bonds. You see it everywhere. We've reset April, essentially, because the president and the administration showed, in my opinion, signs of market discipline working, and the market said, right, there is a line. We're not just going to burn the house with ourselves in it. There is a line. And across this line, people won't go. And if we can show that XYZ action threatens to cross the line, there will be a response. So this is not a life raft for the global financial system type of situation. This might just be a regular recession.
Chester Garden variety
the
recession.
Price action makes sense.
Yeah. just a recession, which is always works out famously well. But hey,
probably a deep one and probably a painful one because there's again not a whole lot of a safety net from other economies here.
There's not a safety net, and like we're not in the teeth of the reaction still. The move that we're going to see ultimately in the economy is going to come in the second quarter, because we're just starting to see the impact
that's right.
At the ports. Like I saw a report over the weekend and I noted it in this morning's 5 Futures, but I think the company's name is called Port Optimizer. They track shipments around ports nationwide, and they were noting how the ports of Long Beach and Los Angeles for freights booked for the week of May 4th through 11th are down 44% year over year from China and Asian trade in general. 44% year over year.
It's a lot.
That's May 11th when the slowdown starts to occur. That's not next week. That's the week after that all of a sudden goods are not arriving and trucking starts to get impacted and people start to get laid off in trucking and shipping. So like the recession is going to start to be felt really, really soon.
Yeah.
That's why like we talk about having a window here. I would point something out as well that also kind of piques my interest. There's a story over the weekend that Amazon and Walmart have told their suppliers to start shipping goods again after they implemented pauses after the tariffs went into effect. Those executives had meetings with the Trump White House last week. The way that tariffs work out is that if it's shipped from China, I don't pay the tariff until it reaches the U.S. port and I claim that good. So if during the journey, the tariffs are 145%, at any point during that journey before I claim those goods from customs, if the tariffs are dropped, I won't need to pay that high tariff rate. Which is also likewise, if the tariffs are raised while the goods are on the water and I want to claim them from customs, I will have to pay that higher tariff rate unless I'm given an exemption. But the fact that these goods are back on the water with the high tariff rates tells me that maybe they got some indication from the administration that there's going to be another walk back or step down sometime soon, because they realize that the empty shelves are coming if they don't do it otherwise. But that again, recession classic, bonds up.
Yeah.
Still leaning short deltas, short put spread here, directionally neutral in ZN with the short iron condor, but the short put spread is still holding and working. And I think the Trump puts, is in TLT, not SPY. POV has been vindicated here for the past few weeks.
I would agree.
I don't know if it's going to hold forever, but at least first blush, that was the correct view. They don't care about stocks; they care about the bonds.
It certainly seems that way. And on this basis, I mean, I'm certainly still in my positions. I'm in the long end. I was buying calls there when the vol was low, then I was selling puts there when the vol was high. That's helped me to lower the overall cost of the exposure, but I'm long basically from two different angles.
It's not a great setup momentum-wise. You can see that we're still chopping around, and we're basically at the halfway mark of the year-to-date range, which I suppose is ultimately perhaps the prudent observation here, because we're still stuck in this tariff rigmarole. 50% mark is basically 116 and 7 ticks. We are at 116 and 7 ticks. 43.7 IVR right now at the long end of the curve, at least in ZB. ZN was a little bit lighter when I saw it. It was 53.5 today. We'll have a separate discussion on that in a second here, but at least with ZB, which is what transposes over to TLT, this is perhaps the most optimal point if you want to play directionally neutral against the yearly high lows, that you could do so.
Yeah. And again, there's not much vol here at 43.
It's enough.
It's something. It's better than ES. It's a little bit like, if you're going to look for that kind of a thing here, at least you have the sort of narrative benefit working for you. You have some technical evidence. And so worst case, you're looking at something that is, at least, again, in kind of risk-reward terms, is skewed maybe a little bit more your way. But again, with so much event risk, it doesn't seem like this is the place where markets are going to necessarily jump. They're going to look for that data. And by the way, if the markets don't, if they front run the data, that's probably going to make for a really fiery end to the week. Because if the markets are so certain as to be front running already, and then the data backs them, you could get something with real rocket ship potential in a direction.
Yeah, I mean, if you get weak data this week, if GDP craters, if non-farm payrolls miss,
and we're already going there now, and it's Monday.
Yeah, and like that's the direction we're leaning in. If we're going to think about a short iron condor trade in ZB, I would just posit that if we're thinking about the Trump put lows here, wrapped around 110, 111.
That's an interesting idea.
Right, you could get real close up in there, maybe 109, 111. But then you short the high end of the range, which is above the yearly highs, short the 122, buy back the 124. That gives you a 64% probability of profit. It's under a 3-to-1 risk to reward. 63%. That's not, again, it's not bad. Trying to size up, you can give a little bit more on the higher side if we operate around the basis that we have meaningful lows here. You can see that the slope of the 1 month is increasing. The 5-day, the 1 week is obviously positive here. They haven't crossed over yet.
You're clearing the previous swing high.
Yes, and the post-Liberation Day pause high, April 10th.
Yes.
116 and 11 ticks. We're trying to poke through that here today. I think ZN is a little bit of a different story here, though, because it doesn't have that term premium albatross the way that the 30s do. It does to a certain extent, but it's 30, like 3 times the amount of time, 30 years versus 10. Okay, so there's the term premium weighs a little bit more. ZN is pushing past those April 10th highs right now. It's a 53.7 IVR. I'm intrigued by this swing low that we had here last week, which gives you a 110.5 figure. So if we go out to 53 days and you look at an iron condor based around those levels, you can get something similar, maybe even go a little bit further beyond there, going 1 point wide to get something 60% probability of profit under a 2-to-1 risk to reward. Treating recent lows as like a Trump put low with an upside tilt to give it some breathing room if we have bad data later this week.
Yeah. Yeah, I mean, if you wanted to trade this in the vol expansion direction and go, you know what, I'm not going to bet on direction, I'm just going to bet on things getting a little bit feistier, that's not an illogical way to go about this, in my mind.
We're starting to see bonds and notes get a little bit more upside tilt, right? Just looking at the trading range that we've had since the start of the month, taking today out of the equation, right? A simple regression channel. You can see that we're pushing to the top side of it. This accounts for the craziness that we had. It's been a sideways choppy range, but there's clearly some more upside momentum that MACD back above its signal line, stochastics above it median line and accelerating. I think I need to make an adjustment here today, if only because we're at 25 days to expiration. And look how wide I was able to do this a few weeks ago when volatility was through the roof. This is beginning to get to a point where a little bit more, I'm going to want to make this adjustment out of my 25 days, either today or tomorrow, before we go into the teeth of the event risk this week, before GDP and non-farm payrolls and all of the earnings reports. Just because I'm getting so close to falling over the other side of the decay curve, I don't want to go past 21 days here, and might as well give myself the extra duration before the event risk comes and risk losing it. But either way, this is a week where we can make those adjustments, and I think we've learned a lot about recent lows that we can operate around given the administration's tolerance for higher interest rates and their sensitivity to them, more importantly.
Yeah, I mean, I think we're in a place here where there's a deciding line, and the markets are helpfully behaving as you might want them to in a more normal setting. I mean, this is starting to look a little bit more like February, March. Stocks down, bonds up, yields in, dollar's a little bit weaker. This is what you want to see. This is markets operating in normal-ish ways.
Normal-ish recession ways, right? Not the panic, liquidate everything. And we're seeing that bonds are acting as a haven today, and I think metals are serving that purpose too. Gold price is very much off the lows. Earlier today, we hit a low of 32.78. We are now at 33.49. We're closing back above the 1 week moving average. You can see that it has a little bit of an upward tilt here after today. Momentum is giving us a sell signal in MACD, so a lot of chop right now. I'm still leaning short deltas as having flipped from long to short last week on the 22nd here, right after we got up to $3,500 an ounce. I just missed the highs by, a few bucks, but whatever. We've been long, basically all year long. If we're going back into recession mindset, though, gold and bonds are the two places that do the best during recessions. So how long will I hang on short? I think that's going to be tested this week. Could very easily see weaker GDP and weaker non-farm payrolls leading to gold's back to 3,500. I mean, that's like not out of the question. So I don't know how much longer I want to stay short call spreads in this now that vol has come in a fair degree as a price.
Yeah, I mean, you look at this here, and I'm just sizing it up, and there's no real reason to change perspective here, where we've leveled down and we've kind of anchored. But again, you're looking at this massive amount of event risk that's coming down. All of it is relevant for where gold is here. It seems to have found some interim support, but it's not exactly bouncing. Today's candle is going so far as to stay inside the range of Friday. So you're waiting here, and how this uncoils is unclear. But you can sort of envision a range of scenarios, and they all kind of hinge on what the dollar does. if we're back to normal-ish conditions, it's possible that you get a really bad set of numbers and there's aggressive risk aversion and the dollar finds that haven bid, as would be the normal thing. Then gold's going to have some trouble. Alternatively, we could be done with whatever pullback there is, because, again, if we're going back to normal, not hair on fire, but just recession, then you get a set of soggy numbers. Fed looks like it's going to signal in May and go in June, maybe go an extra time this year, as the markets are already kind of flirting with. And, okay, fine, regular. Well, then gold probably goes higher because you get weaker yields, you get a weaker dollar, and maybe this whole thing is done. But there's so much event risk here that if you have exposure, you probably don't do anything with it, and if you don't, you probably don't establish anything new.
You know, the other part of this equation is not just that markets fall off today. There was this morning, right when gold prices start to take a leg up, okay, we see that Pakistan made note that India may be getting ready for a military incursion against it. Last week, after a terrorist attack in Kashmir, India suspended the Indus River Treaty, which provides water to basically 260 million people throughout the region, including many in Pakistan. I think like 63% of the people who get water from the Indus River are on the Pakistan side of the border. India, and then to a smaller extent, Bangladesh. Either way, though, the point is that these are two nuclear armed powers that may be teetering on a more significant conflict. The Pakistani defense minister today noted publicly that a traditional war should not lead to a nuclear exchange. So kind of already trying to lay down some yardsticks of measuring sticks, saying like, this is going to happen. Let's not go too far if this does happen. That I think
that was a very interesting comment. That was like, so as long as we're going to have a traditional war, it's like, whoa, okay, we've already fast forwarded there. All right.
Yeah, and that's, you think about the language used around Russia, Ukraine, where you have these officials saying like, we hope both sides show constraints to avoid nuclear conflict. It's like, okay, so we've come to terms with the fact that conflict is here or coming.
Yeah.
Now we're just
nobody's getting talked off a ledge now. Yeah.
Yeah, we're just trying to keep the toothpaste in the tube. So not exactly there is some geopolitical risk here that's coming into the equation that I don't think we can dismiss. You know, you look at like 10:15 Eastern, stocks don't respond for another half an hour before they start falling off. Gold is the first mover around 10:15, and then kind of everything else follows thereafter. You see it in ZB. ZB gets a haven bid immediately with gold, by the way. Stocks not seeing it. So there's another layer to this. That's the only point of it. What's happening with gold today, it's not necessarily just what's Trump saying, what's the tariff talk. There may be another contour here. Silver prices, copper prices, you could see they have a little bit more of a negative growth disposition today. Silver for me is at a critical threshold. We may have an evening star candlestick pattern here, but we hold the 1 week Friday and today, as well as the 1 month. Are we back in the uptrend from the December, January, February swing lows? Not quite. Not quite.
Not quite.
Depending upon where you measure it, right? I don't want to, smudge the line here. As Edwards McGee would say, you look for like a 3% move on either side of a trend line to get a confirmed break. So fudging it's not going to really matter at this point. But lines in the sand above 34, I think, Ilya, we can make the estimation that silver looks like it's good for the next leg up. You clear out this recent topping pattern. On the other hand, if you really want to get bared up, you got to go below April 23rd's outside engulfing bar low of 32.35.5. Until then, you're kind of just chopping around the next few days, which again comports with what we've said otherwise, which is for the next day or two prior to the event risk, you probably get some range-bound action, and then you get GDP, earnings, non-farm payrolls in the second half of the week.
Especially for something like this, where you have a risk sensitivity. It isn't gold. In that sense, you're a little bit more responsive to what stocks are doing and what sentiment overall is doing. And the same kind of idling that you're seeing in ES, in NQ, in Russell, the same kind of backfilling you're seeing in the bonds, you're seeing it in silver here as well, just over extrapolated volatility because silver is jumpier than all of those things. So, yeah, you probably don't see conviction in risk, so you probably don't see conviction in silver until something happens with these events that we're looking at. And ahead of them, who's going to want to say, oh, yeah, I definitely know where this is going?
No idea. But leaning long deltas here in silver, still short in gold. Copper, still neutral. Oh, gosh, do we really want to try to figure out? We talk about this being a line in the sand, this being an important week for a lot of these assets. Last week when we rallied up above the 618 retracement of the yearly high to April low trading range, we noted that the 618 ratio is the inverse of phi, and that is the technical line in the sand for determining whether or not a rebound is just a rebound or it's the end of that move. If we find resistance at the 618 and lose the uptrend here, you make the case that this was just the retracement in a bear market, and this is actually a great selling point for a return back down to the lows. On the other hand, if you sustain your move to the 618, right, which we are kind of trying to do here, we're not exactly backing off of it as momentum improves, you would then make the case that the correction is over and this is the birth of a new uptrend. We're not through the Rubicon yet, though. We're trying to figure it out. And it's so much like the S&P 500 and the NASDAQ this week, trying to figure out, does it really want to hurdle this resistance, or have we exhausted ourselves and now we're getting back away from, the emergency and the panic, and did we sell too much? Do we buy it back? Okay, no, we're going into regular recession. Copper here, very recession sensitive.
Yeah.
That, we know we have a supply-demand imbalance because of the U.S. consumption versus production anyway, and the tariffs exacerbate that. But recession subsumes that.
Yes.
So this is the line. The copper is at the line in the sand for me. I don't have any position here, but I'm eagerly awaiting to decide what to do.
Well, I think you're absolutely right. In terms of the sort of architecture of the argument, the market is telling you, sitting here now, that term premium in the 10-year as a kind of benchmark hit some kind of a peak on the 21st, which is shock of shocks, Monday last week. We know that was obviously a very ugly day for risk, and has since been coming in. At the same time, we know that over that same period, we got a little bit of a pop in break-evens, but that they have been soggy and heading lower since, let's call it, end of March. And that, in fact, already midweek last week, they started to come in again. So you're seeing the bond market basically tell you, I came into last week worried about some sort of an existential concern for the world economic order. And then things started to unclench. And at first I thought, oh, well, this is good because this, it's better for global growth if the entire architecture of post-war economics doesn't crumble. So that's nice. But the markets have already clearly looked through the tariffs as an inflationary thing and are looking to the growth implications as a disinflationary thing. And that handoff happened at some point between Monday and Wednesday last week. Just looking at the architecture of the 10-year yield. So you can see here where the markets are going. They're going, okay, they've stepped back from, we're going to cut ourselves off at the knees, and now we're just going to have a growth thing. And this week is the data that will show it. That's sort of the underlying logic in the price action here. And then from the treasury yield, the cost of money, the most elemental thing you could possibly imagine, the foundation for everything, you extrapolate across assets and then you see it everywhere.
We turn our attention to the energy market today. Natural gas is having a good session, up over 7.75% right now, but we continue to watch this growth story Copper rebounding and starting to fail. Stocks rebounding to former swing levels in March, starting to fail. Oil here.
Oil
rallies to former swing levels in March and has started to fail. And if you want to look at the uptrend here, you are short this one. I'm not. I'm leaning long deltas, although I'm short a put spread. And that's fine. I don't really care if it goes up. I just need it to stop falling. But no matter how you slice the rebound here, right, we can draw the trend line to any number of swing lows. Just being very generous with ourselves, it's looking weak. Below 61.5, I think we have a pretty clear line in the sand over the past week at least. Below 61.5, you want to get real bared up, by all means, this thing looks like it could crack. If you want to get bulled up, you probably got to get through 64.5, which former lows from March, resistance that we have here in April now, in the later half of the month.
Yeah.
It's a 63.3 IVR. I don't think the Trump administration wants U.S. production to shut down, so if we do get pullbacks into the mid-50s, I'm, again, going to try to sell puts around 50, knowing that the break-evens for existing wells is $49 to $53 a barrel. And moreover, it'd be a great place for the administration to announce efforts to refill the SPR, because the Biden administration changed the DOE rules for refilling the SPR using futures. And hopefully the Trump administration can continue that tradition of having the best oil trader on the planet living at the White House. So
that would be that would be good. That would be one. That would
be a silver lining to this. That would be a silver lining to this. Refill the SPR.
Yes, that would be good. We obviously saw that in very clear terms during the Biden administration. They were very savvy with their buying and selling out of the SPR. Hopefully, we get that continuing. That was a nice little pickup for the taxpayer.
Yeah, and so just to be clear about that, the previous administration sold oil out around 93 a barrel. It was starting to buy back in, I think, an average around 71 when you look at the net transactions. And so obviously right now, if the Trump administration were to continue to refill, it would be refilling at a lower cost than had been sold out, and that would be a good thing, right?
Yes.
That's a good thing. So if the Trump administration does that, that would be one way to help keep domestic production afloat, knowing that we're kind of near range lows where it's already uncomfortable and hot under the collar for producers. If you're looking at the news flow right now, in part because of all of the tariffs, mean replacing existing equipment has become a lot more expensive. The drillers, the equipment that they get for their rigs, that we don't make that here. Among the many things that we don't make here. Ilya, we only have a few minutes left, so let's talk about the dollar backing back down. Where are my arrows today? Why are they doing that? We have a ridiculous blackout in Europe right now. Spain and Portugal, they don't have enough, there wasn't enough inertia in the system in Spain to keep the power system up and running, which is somewhat ironic, obviously, and disheartening, because they just 6 days ago, they announced they hit 100% renewable energy for an entire day. And now the grid's down for what could be up to 10 hours or maybe a week, depending upon what the regulators are saying.
Yeah.
But apparently the Spanish economy and the Portuguese economy is going offline for an indeterminate period of time isn't something that's bad for European growth, because the euro is trading higher today. I guess.
Right. Well,
I guess it's braced in, because it's all braced in.
Yeah, and interestingly, I mean, Spain has been the strongest economy of the kind of G10, let's say, all year last year, and even going into this year. Spain's economy is booming, and uncharacteristically in the Eurozone, where things are very soggy in France, very soggy in Germany, only a little bit better in Italy. Spain has actually been tremendously strong. So this is a disappointing setback for one of the really very few bright spots in the Eurozone right now.
We can see here the yen is the leader on the day today. Lower U.S. yields, weaker stocks, higher gold prices, softer oil. That is just the picture-perfect stew for the Japanese yen.
I started to sell a little bit of it last week, thinking, you know what, this dollar's had a crazy run. Maybe we need to adjust a little bit. And yes, it'll probably lose market share, but let's not kid ourselves. It's not going away as the dominant unit of commercial exchange. I mean, that's just not going to happen. And so,
no,
if you're operating in April on the idea that the empire is self-immolating, and you've decided that it's not, well, then dollar has some room to correct here. Not today, though. It's kind of annoying, but I'm looking for opportunities to be a dollar seller. Again, this was always just a tactical kind of opportunistic thing, and if it doesn't work, so be it. It's small, and I'll be back on the short side quickly because in my mind, the trend is that.
Well, you can see the yen here bouncing former highs that we have right before, after Liberation Day, now forming as support. The British pound, Ilya, kudos to you. I know that we did a bunch of pieces for Luckbox magazine at the start of the month. What do we like after the sell-off? What do we like before the sell-off that we like after the sell-off? Still, I know that you mentioned the British pound, which at these levels would be closing at a fresh yearly high today. But we're going to have to put a pin in this until later on overtime when you and I both will be back. Maybe Radigan will be there if they have power in Italy. We can see here that tomorrow's calendar is defined by the JOLTS report. We have some energy inventories out later in the session as well. Consumer confidence is during the day. Tomorrow is the before the eye of the storm. This is it. And then we go into the real big bulk of the data later this week. But we have plenty of time to talk about that later, Ilya. We're going to make room right now. Dr. Jim's here up next with From Theory to Practice on Tasty Live after a quick break. So for Ilya Spivak, I've been Chris Vecchio. Good luck trading.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Monday edition of what it is that we are trying to do, man. Thank you guys for being here and being a part of what it is that we are trying to do. It is only because of you all that we can do what we do, so thank you guys so much. If you're watching over on the Tasty Live Network, then I would actually bounce on over to YouTube because you can join the conversation and join the discussion and communicate with your brethren who are also watching the show. You can celebrate if you are a Shadur Sanders fan. You can also commiserate if you are a Shadur Sanders fan, and it is a good time had by most indeed. And of course, get all of your questions from me in the chat box. The earlier the better, because I typically get to about 1 to 1.5 questions per show. So the earlier you get your question in, the higher the delta that I will get to that question. All right, before we get into the info today, do you guys have the art card for the Crash Course events, the live shows? I want to talk about those for a couple of minutes. So July, October, December. So July, we're going to be in Boston. October, we're going to be in Detroit. And December, we're going to be in Tampa Bay. So Boston, let me think. Boston, Detroit, that's where it was. And Tampa Bay, there we go, beautiful. If you go to the tastylive.com/events page, you can sign up for these events. Now, look, guys, I need you there. Like, I need you there. Like, my salary is full commission. I make full commission. It's bodies in the seats, right? It's 100% bodies in the seats. Tom gave me the same contract that I had when I sold windows when I was 18. It's just straight commission. So I need bodies. I need friends. I need family members. I need enemies. I need whatever you can give me. Put them in the room. So July in Boston, October in Detroit, and December in Tampa Bay. Go to tastylive.com/events. You can sign up for the events. It's going to be an options crash course live. It's going to be 90 minutes straight. Like, I'm going to take you from nothing to novice trader in 90 minutes. Right? So you think about that. You break that down, right? Like, use the same pie chart that you would use for a normal show. It's going to be 75% tangents, 10% B- humor, and 15% actual solid content. So that means in 90 minutes, you're only going to need to be there for about 12 to 14 minutes. And then you can go on about your day and just kind of do the things that you really want to do. So Boston, Detroit, and Tampa Bay, July, October, December. All right, so thank you, Josh. I appreciate you. Let's get into the market, though. Let's see. Are we going to... man, what are we doing out here, guys? EME S&P's down 29. There you go. Risk-free instrument, also known as the NASDAQ Futures, extremely high-risk product, down 160. Got the boomers down 61. You got the Russell 2000 Futures Index down 10 on the day. So you got a little something happening to the downside. Got oil down $1. Got the shifties are back, man. They're back at it. Gold up 48. That's some good looking stuff. You got bonds up 12. You got notes up 9. Even got UB40 up 21. And so all the oldie stations kind of hitting that guy hard over the weekend. That makes sense. You got volatility up 70 cents. Volatility futures up 70 cents. And then the old VIX spot volatility. Let's see. That is up $1.24 up to 26. And so, man, you know, again, we just talked about this last week, but let me just kind of revisit this, and I'll have you out the door in no more than 8 minutes, no less than 8 minutes. It feels pretty slow. Like, this feels pretty slow, right? I mean, maybe it's just me, but you guys let me know in the chat. Like, does this feel slow to you? Like, does it feel like, man, are the markets even moving? Like, does it feel like when you're looking at ES, you're like, am I looking at PG? Like, when you're looking at, you know, NVDA, like, am I looking at PG? Like, when you're looking at Google, am I looking at PG? Which we now know the answer is yes, because Google also pays a dividend, just like Procter & Gamble pays a dividend. But it's brutal. It's brutal out there with the VIX only at 26. And it's like, man, once you get a taste, like, you know, once it hits your lips, Frank the Tank style, it's like, man, I don't know. It's just, you know, the VIX at 26 is just not quite what the VIX at 30, the VIX at 35, the VIX at 39 was. And so, you know, thankfully, again, it is at 26. It's just still significantly over and above the historical average of the VIX, which is typically right around 16 or 17 or so. And so let's not necessarily be too, you know, I don't even know what the word is, but let's not be too upset, I guess, at the VIX being only at 26. Of course, if it was 29 or 30, it might be a bit more active and a few more things to do. But don't you worry, guys. We got all kinds of things to do in just the next couple of days as we kind of look out the window at what's coming on down the chute. So, all right, let's go ahead. In the portfolio, look at this, man. What has this show become? So can we talk for a second about what has this show become? Look at this. Guys, look at the screen. If you're only listening to the show, if you're one of my audio-only peeps out there, I'm going to walk you through the forest. Like, don't you worry. I'm going to let you know exactly what is on the screen. Guys, what has this show become? Like, are we just going to start doing dividend reinvestment plans? Like, am I just going to dollar cost average my way to greatness here? And by greatness, I mean, you know, 9% a year for the next, 35 years. Is that what we're going to do? Is that what this has become? We have an MES strangle. Thank the Lord we have an MES strangle. We got at least a little something in here that's strategic. Right? I mean, look at this. We got some theta. We're playing some short volatility. Like, we're doing, some strategic things with the MES strangle. So that's good. But then look at the next 4 positions. Right? This is like when Shadur Sanders fell, the first round, the second round, third round, fourth round, and then boom, 5th round, there he is. Right, going to Cleveland, going back home, where he belongs, where he probably should have went with the 2nd pick, but he ended up going with the 144th pick. But at the end of the day, who's really counting? But look at these positions. We've got Bank of America. We're long 100 shares. No premium, right? No premium, no theta, like no short Vega, like just straight 100 shares. BBY, we're long 100 shares. Right, again, playing Best Buy to the upside. This was a busted earnings trade, and I decided to just inventory the long shares and let's just play the clean delta, higher. You've got Nike, NKE, long shares. Starbucks, SBUX, long shares. The bulk of our portfolio is now just long shares, right? It's just straight long shares, no premium, no strategy. You just buy and hold, baby. You just buy and you hold, right? You buy them low, you sell them higher. You buy them high, you sell them higher. That's all we're doing. That's all we're doing now, apparently. And so, wow, this is crazy. When I opened up the portfolio this morning, and I wasn't quite ready for the onslaught of just long share positions. I knew we had these, of course, because we've had these for a while. But it's a lot different than what we've had in prior weeks, where we've got some vertical spreads, we've got some butterflies, we've got some earnings trades, we've got all these things. But now it's sticking out like a sore thumb. And so, man, wow, really crazy stuff. So, all right. We're actually not going to do anything with these positions because I do think that this is, I've never had anything like this before on this show because obviously, we're derivatives traders. This is a premium selling network. This is about options, it's about futures, it's about strategy. But the reality is that many of you out there are coming from a long share world. You're coming from a world where this is what your portfolio looks like. This is what, most of the assets that you have actually looks like, where you have mostly long shares and then you dabble in a little bit of premium. You dabble in a little bit of something else. Now, normally with what I'm doing and what we're doing here on the network, we have mostly short premium and we're dabbling in some long stock. And so that's what you can expect to find mostly on this show. I just find it to be somewhat comical that in this very moment, it's actually mostly long shares and a little bit of short premium mixed in. But all right, so Bank of America. This was our long share position that we bought a few months ago that was just intended to be long shares. We're just going to hold the shares, just static long shares to the upside. So very, very much like what you would be accustomed to as kind of a long-term investor, passive investor. You love Bank of America, which no one said ever. But if that happened to be the case for you, you could insert whatever stock you want there and it would be essentially the same story. So Bank of America, Best Buy, again, a busted earnings trade. It made more sense to me to just hold the long shares. I don't know how long we're going to keep that position. But I kind of want to hang tight to see if we can get, we're just one Trump truth away from another 10% face ripper. That's not even a face ripper. That's a face melter. We're just one Trump truth away from a 10% face melter, and then boom, we'll take off all of these positions because they'll all be in a really, really good spot. And then Nike, this was also a trade that we did, I think, right? I know Starbucks was our investment style covered call, so I don't want to do anything with that either. I'm looking for a good opportunity to sell premium, but I don't love selling the premium here with Starbucks down, at 83 or 84. I think Starbucks has earnings coming up. In fact, I'm pretty sure they do. It might be. Wait a minute, is it tomorrow? Hold on, let me look at this Nike position really quick because I think this was intended to be more of a trading style covered call, which is a little bit of a misnomer in my opinion. Covered calls are not typically strategies that you would use for the 45 to 21 day cycle. You can use them and some traders do use them. And I do that from time to time myself, but it's going to be a very small percentage relative to all the other things that we can do and all the other things that we do. And so here we opened the trade on 331 it looks like. Or maybe hold on. Yeah, it's so weird that the chains don't bring in the shares. It's just that's kind of weird. Let me go ahead. Let's go to the activity page. So let's leave our chains that are on the shelf. Let's go to Nike. And so when did we let's see here. Did we buy Nike? No, it can't be. Hold on. Do I have to do the history tab? Yeah, let me do the history tab. Let's go to the history tab. I think we've done this just recently, and I kind of forgot. But let's take a look at this. Let's go back 120 days. Where are my shares? Oh, we were assigned. Yeah, that's what it was. Okay, that makes sense now. Now it makes sense. It's all coming back to me. Celine Dion has had it right for many, many decades. On March 21st, we bought Nike at 69. So here it is. So this was, I remember now, because we had the in the money put going into expiration, and I was like, hey, let's just get it signed, because that's something that happens to all of us from time to time. Let's go through that process and let's try to battle our way through the forest, having been assigned on the position. So that's essentially what this guy is, which again, I mean, I know we kind of joked about it and it was, intended to be some humor right around that B- mark, which is what you guys are accustomed to. But having the 4 stock positions is very interesting because all 4 of them have essentially become long stock in different ways. Bank of America, just straight long stock. Starbucks, straight long stock, but an investment style covered call. Nike, kind of a taking assignment, now more of a trading style covered call, looking to get out at basically the first glimmer of profitability. And then Best Buy, a busted earnings trade. So, very, very different scenarios across the board with each of the 4 positions that we have on. But so now we have Nike at 69. This is why I'm not necessarily, kind of chomping at the bit to sell premium against this right now, like today, because it's at 57. So at 57, it's like, okay, I could sell some premium, but I'm going to have to sell it under 69. I don't really want to do that. Again, let's just see if we can get that Trump truth today. Well, first we got to wait for the Trump tweet. Because the way it works, you get the Trump tweet and then the Trump truth. You get the Trump tweet that says buy now, that's when you got to buy. Like my man is just straight telling you. Like he's giving you a 60-minute runway to get it done. So once that happens, then we know we're only 60, maybe 90 minutes away from greatness. And so once that happens, we'll be in a really good spot. So for now though, let's sit tight and let's just wait and see if he can bail us out. So all right. I don't want to do anything else in the portfolio because, number one, I want to get to you all. And I see you guys, man. I see you guys in the chat. Man, Ranch in the house. I see MD Tampa in the house. Man, Daniel Perkins in the house. Or Denu in the house. I see a couple people commenting. I'm just glancing really quick. I see some people throwing some shade at the P&L Open. We've already talked about this, guys. We've already talked about this. Number one, there's a very, very easy solution here. Right, the easy solution, and I'm not going to be able to do this in earnest, but the easy solution is just grab yourself a little black pen and just do one of those deals. This is very easy stuff, guys. Now, again, you don't get the spirit of it because now it actually looks more red because I'm using the red pen, but I don't have a black pen at my disposal because it's not one of my preset colors. And so we have to go with that. But secondly, we talked about this, right? If you're going to sell premium and you're going to manage your winners early, you're going to be holding on to some losers. You're going to be holding on to some big losing positions, and it's going to show up in your P&L opens. Now, it may not be as impressive as my own losing P&L opens, but hey, this took a lot of practice and a lot of training to get here to this point. So, all right, let's go ahead, though. Let's look at, if we look at Tom's watch list here. So look at the earnings coming up. Oh, look at this. Yeah, so Starbucks is tomorrow. Wow, Starbucks is tomorrow, and then the month anniversary is on Thursday, May 1st, which is right here, of course. So happy month anniversary to you all. Wow, we've got a huge week coming up. This is really, really crazy stuff. And so, so we've got Starbucks tomorrow. Okay, so we'll deal with Starbucks tomorrow because it's after the bell. But I kind of do think, so just to get this big week up and running, let's do a little GM today. Right? Because look at the week, man. We've got Starbucks tomorrow with a little Visa. It's like we're not going to do any Visa. Come on, Visa. But then on Wednesday, you've got Meta and Microsoft, right? And then on Thursday, you've got McDonald's, Apple, and Amazon. Man, that's going to be wild. This thing is going to be a really, really, really crazy week. But let's start this off with a little GM here today because GM's going to report in the morning. Now, honestly, I'm shocked they're still in business. Like with all the tariffs and all of this and all of that, I'm really surprised that they're even solvent. But given the fact that they remain solvent for the next 14 hours, let's do a little earnings trade for tomorrow morning, just as a little warm-up set. We're not doing anything crazy. It's like when you get in there, for quads, you're not blasting it on the first set. We're not doing AMRAP out of the gate. Like you've got to get loose. You got to get the knees loosened up. You got to get the hips loosened up. You probably do a little calf work before you actually do the quad work to get a nice little bounce coming out of the hole. I mean, this is just basic bro science stuff. Let's do the same thing here with GM. So if I go into GM here, again, I can't believe that they haven't gotten the Willie Mays Hayes pink slip to this point, but they haven't. So let's go in. Here's what I think we're going to do. So it's only a $46 stock, right? I don't want to do any butterflies because it's too cheap. I like doing the butterflies with the higher price names because I feel like there's more money to be made, with, stocks that are in the several $100s range. Instead, I kind of think let's shoot from strength, right? Let's go in here. Let's go to the June cycle. 53 days to go. Let's go basically right to the expected move. And I want to sell a naked call for General Motors earnings. What could possibly go wrong, right? What could possibly backfire on us with a naked call going into earnings? Now, all kidding aside, we don't do naked calls too often. We don't do standalone naked calls too often, but there can be a time and a place for them, right? Like if you really want to play short premium and you want to have a bearish bias, naked calls can really have a place, in your portfolio for very, very specific circumstances. One of the circumstances that I like to use naked calls on are when you're dealing with a lower price stock. Because when you have a lower price stock, there's not a ton of premium in the options. So it can be more difficult to do something defined risk because the premium really dries up pretty quickly. And then unless you want to layer on a bunch of contracts and whatever, it can just be a bit more problematic. But because it's a lower price stock, you can do something undefined risk a lot more easily. And from the buying power standpoint, it's going to be much easier to fit that guy in to whatever it is that you're trying to accomplish. So naked calls, naked puts, strangles, ratios, these are all now on the table. Okay, but why a naked call? Well, if you have a bearish bias on a given stock, which I happen to have a bearish bias on GM, when the stock also has a lower price point, like again, right here, it's $46.95. The big problem with naked calls is the simple fact that you don't necessarily have the same luxury that you would have with a naked put, because with a naked put, yes, it's undefined risk. You're essentially taking unlimited risk on both sides of the market. I understand that it's technically bounded by zero, but that's more of a theoretical construct. Practically speaking, you have unlimited risk on both sides of the market, short put to the downside, short call to the upside. When you have a short put, though, the benefit is, and this is exactly kind of what we're playing with Best Buy, what we're playing with Nike, right? You have this upwards bias in the market. I talked about this morning with Tom and Tony. Well, it was mostly with Tony. And then 7 minutes after the show started, Tom decided to join us, which I was very, very honored to be humbled by his presence, to be graced by his presence on the program. So Tom, thank you so much for showing up for this morning's show. But we talked about positive drift. We talked about the upwards bias. That's a huge benefit when you have a short put because you're essentially tapping into that. You're essentially playing into that. Now, of course, the other side to that is this might take months. This might take years to play out, which is not typically the timeline that we're operating within as premium sellers in the 45-day cycle, but it's still something you want to be aware of. It's still something you absolutely want to be aware of, especially if you happen to be kind of a hybrid. Like maybe you're kind of both. Like maybe you're kind of an active trader here, but also kind of a long-term investor there. I'm going to say, sight unseen, that actually describes 97% of you. And I don't care what Tom thinks. He's dead wrong. He's dead wrong. That's 99% of you. 99% of you are doing exactly what I just said, right? You are an active trader here. You are a long-term investor there. So why would we totally discount and ignore the natural overlap between these two worlds with something like a short put? When it goes in the money, you take the stock or just keep the in the money short put or whatever. Okay. You don't have all that with a short call, though, because with a short call, there is no downward bias. There is no negative drift. Like that's not a thing that exists in the equity market. And so there's reasons why the market drifts higher over time, of course. It's growth, it's innovation, it's Uncle Jay's printing press. It's all the obvious things that we all already know. But when it comes to negative drift, that's not really a thing. So you could find yourself in a situation where you have a short call on and you're battling this thing forever and the stock just continues to just beat you to a pulp. It just beats you down over time. As anyone who sold calls in Tesla, not necessarily the last 12 months, you finally, came home to roost. But anybody who was selling calls in 18, 19, 20, 21, 22, 23, 24, you didn't make it out. Like you didn't make it through the forest. Selling calls in NVIDIA, like you didn't make it out. You didn't make it through the forest. And so that's really, really difficult. But with GM, it's a lower price stock, right? If things get really, really bad, which for me, that would be like if General Motors comes out tomorrow and says, hey, listen, we're still here. We can't believe it ourselves. But just the simple fact that we turned the lights on today, that's got to be worth something. That might be a $10 boost right there. So that might be a $10 pop right there. So even if it is, that's only $10 on an options position, which is $1,000. So it's not, it's nothing to shake a stick at, or maybe it is something to shake a stick at. Either way, it's not something where it's going to put us out of business, right? And so that's why if you're going to use a short call, I wouldn't use them often. I would use them sparingly. But I think the most fitting place to apply them would be a lower price stock. So that's why I'm going to do this in GM. There's the 19 reasons why we're going to do this. And then we're right at the halfway mark of the show, so we can get to you guys. Let's go in here for $1.50. The buying power was only. Well, that buying power was only $600. That's crazy. Like that's nothing. That's really truly nothing. And so, all right. So there you go. So we did. What did we do? We did GM, short call and GM. That's what I meant to say. So, all right. So let's see here. Where are you guys at? Oh, a quick comment. Jonathan Duran. I'm going to surprise and delight one or two people in the middle here. Jonathan Duran says, my back just broke listening to Jim talk about AMRAP. You know what I'm saying. Like, if you know, you know. And if you don't know, then you need to be doing some Googling. But here we go. Larry R. at the very end of the chat. So we're going to the end of the chat today. I mix it up. Sometimes I go in the middle. Sometimes I go at the end. But here we go. Larry R. has a question. Larry, what's going on? Thank you for being here, my friend. Larry R. says, Dr. J, I could use some advice. I have a Netflix, covered call. Here we go. At 1060, it's $40 in the money. 18 days to go with $20 of extrinsic value. What do I do? Do I wait and roll closer to expiration or roll now? Okay, so you have, let me bring up Netflix. This is a great question. So Netflix is at 1100. Okay, so your call is 1060 and you have $20 of extrinsic value left. So you're in, did you say what cycle you're in? 18 days to go. So you're in the May cycle, obviously. And you have, so here's your option. Exactly. 1060 call, you got the stock at 1100, and you've got $21 of extrinsic value. Okay, this is perfect. Great question, Larry. It's going to take me, there's no way I answer this question in less than 11 minutes, but I think it's going to be good. I think it's going to be worthwhile. Again, because I'm pretty confident that 99.95% of you out there are doing both active trading and passive investing. So something like a covered call and a longer discussion around a covered call, I think is going to be worthwhile time spent. All right, so is the market going back to uns? Wow, look at this. EMI S&P is only down 23 now. NASDAQ only down 133. Gold's ripping to the upside. Gold up 58 on the day. So everything is moving together, which is kind of interesting. For the previous couple of weeks, I feel like it's been kind of a negative correlation between gold and equities. But anyway, I digress. Okay. When it comes to what you want to do, the first thing you have to do, and if you've followed the show for any length of time, you know this is where I'm going to start this conversation. Because how you answer this question, Larry, is going to determine everything about what comes next. Is this trade an investment or is this trade, an active trade? Now, you don't have to answer that. It's more of a rhetorical question. I mean, you should answer it yourself, but you don't have to put it in the chat. I probably won't even get back to your answer because there's like a time delay and all that stuff. If it's a trade, if this is a trade where you were just looking to make some money, get in, get out, whatever, then you're done. It's over. The trade's done. Close it. It was a winner. This is not a bad outcome for you. This is a good outcome for you. This is a good outcome for you with either the trade or the investment, but especially for the trade. If it's a trade, you're just looking to be done and be over with it, or be over and be done with it. Either way, it's fine. Then I would just be done with it. I would just go ahead and move on and close it, and then that's that. Okay. But what if this is an investment? So this is something that you're planning on holding for a while. Like you don't want to get out of it this cycle. This is something that you plan on kind of holding indefinitely. That's where things get a little bit trickier, in my opinion. Okay, you have Netflix. It's only $40 in the money. Okay, so there's a couple different options here. Closing the position is not really one of those options because you want to stay in it. As evidenced by your answer to the question: is this a trade or is this an investment? If it's an investment, you're not looking to get out of it. You want to stay in the trade. So closing it's not an option. Okay, what do you do instead of closing it? Well, number one, you could do nothing. You could absolutely do nothing. When it comes to an investment style covered call, you don't really have to adhere to the 21-day marker anymore because it really doesn't apply at all because the 21-day marker, that's for active trades, that's for gamma risk, that's for a bunch of things that don't apply to you here. So I wouldn't even really worry about the 21-day cycle. Not to mention, with an investment style covered call, usually you're going to be, it's going to be more of a patient position. It's going to be more of kind of a laissez-faire, kind of a hands-off type of deal. And so if that's the case for you, then doing nothing is definitely an option. You could do nothing. You still have $20 of extrinsic value that you could squeeze out of this position. You're not going to get any additional upside beyond 1060, but you have $20 of extrinsic value for 18 days. And you have downside protection all the way down to 1060. So remember, for every gimme, there's a gotcha. You've got the gotcha of no additional upside, but you've got the gimme of protection down to your strike. And so it's not necessarily all bad in terms of missing out on the potential upside in Netflix. So I would certainly be aware of that. So that's the first thing. The second thing is, what if you want to stay in the trade, but you don't want to do nothing, you want to do something? Okay, the way I would approach this, is I would start looking at, all right, if I'm going to buy back my 1060 call, right? If you roll out the 1060 call, obviously by rolling out just the call, you're leaving your shares, in the same position they were in. By just rolling out the short call, though, you're going to be able to continually pick up extrinsic value. What you want to consider doing, though, in the context specifically of an investment style covered call where you're holding this for a long time and you really want to, at some point, begin to restore that upside potential in the stock price movement higher. Okay, how do you do that? Well, here's one way to consider doing that. You buy back your call in the May cycle at 1060. Let's open up. I'll just open up June for now, but we may end up going further out than even June. If I sell the 1060 call in June, you can see that you're gonna pick up another $22 in extrinsic value, which is amazing. That's great. You could do that. That's totally fine. But usually when the stock goes in the money, especially when it's not exactly barely in the money. It's not super deep in the money either. I mean, you're kind of in the in-between zone, I guess. You're like $40 in the money. You want to start slowly kind of rolling the strike up, slowly start ratcheting the strike up. I don't like to do it really quickly because then you start to, you're kind of subject to, getting kind of whipsawed back to the downside. And from the standpoint of, if I roll all the way up to the 1100 strike, or I roll all the way up to like 1140 to put it out of the money again, I'm probably going to have to pay a debit. So it's going to kind of deteriorate my basis in the position. And if the stock goes back down after having a pretty remarkable run, which I think Netflix has had a bit of a remarkable run the last, couple of weeks or last month or so, then you're going to be kind of like, I should have been a bit slower with my rules. Just generally speaking, I don't like to chase the stock, to where it is now. This is just my own personal view on this, and you can take it or leave it. But here, I would take my 1060. Maybe you roll it up to like a 1070, right? Or maybe you roll up to like a 1080. Kind of like maybe you could go either way. You could go 1070 or 1080. So look at what has happened. So if I go to 1060, I pick up $22 and some change, right? But just to make the numbers a little easier, I pick up $22. Look at what happens if instead of 1060, I go to 1080. It's still in the money, right? So you're still missing out on the upside over and above the short strike, which in this case would be 1080. But now I'm only collecting $10. So I drop from 22 to 10. So you give up $12 in extrinsic value, but what are you gaining? Right? That's the gotcha. Where's the gimme? The gimme is you have now recaptured $20 worth of intrinsic value from 1060 to 1080, right? So it makes a lot of sense. This is a good trade for you. Like, this is a very good trade for you. Now, again, you could keep ratcheting this up, and you can play around with the specific strikes, yourself. But hopefully this discussion kind of gets you started in terms of what to think about when it comes to rolling an investment style covered call. This is what I like to think about, and hopefully that helps a little bit. So thank you there, Larry R. I appreciate you very much. Hopefully that was helpful. So let's see, where are you guys at? There you are. Man, Daniel Perkins in the house. I appreciate you, Daniel. Thank you so much for being here. Happy Monday, core positions. That is correct. And you are one of those core positions, so thank you, my friend. I'm just so thankful for you and all of you that watch the show on a regular basis. Like, it is only because of you that we can do what we do. It is only because of you that this summer I am actually going to try to renegotiate my contract away from full commission. Like, let me get a little bit of a base salary in there. Like, let me get a little something in there that's a bit more steady and a bit more reliable. But in the meantime, again, Boston, Detroit, Tampa Bay need bodies in the seats, need heartbeats in the room. Friends, family, enemies, I do not care. Bring everybody. So Don 721 in the house. Hey, Dr. J, another Monday, another PR on seated dumbbell shrugs. Man, a seated dumbbell shrug. Is there a better way to start the week than with your traps on fire? Man, nobody does traps on Monday. We've talked about this many times. So it's amazing. Like, it's amazing that any part of your body's on fire right now. It's amazing, Don. But Don, I think we've had this discussion before. Are you the front squat? Are you the front barbell squat lunge guy? Like, who's the front barbell squat lunge guy? I can't remember. Was that Scramble Everything? I'm not sure who that was. But seated dumbbell shrugs on a Monday. Man, that is so off the beaten path. I think you're actually the winner here. That is so off the beaten path. I think you are the alpha in this conversation. Like, I think that is a total power move the more I think about this. I'm like, nobody Like when you go to the gym on a Monday, obviously all the benches are taken, all the chest equipment is taken, all the fly machines, all the hammer strength stuff, gone. Nobody's doing seated dumbbell shrugs except for Don 721. Like he is probably right there in the middle of the gym doing seated dumbbell shrugs. It's a power move to do them seated too, man, because you're kind of taking out, the leg drive on a typical shrug movement. So that's amazing there, Don 721. I appreciate you, man. That's good stuff. I'm going to have to give that a try. Zap Enterprises is in the house. Hey, Dr. Jim, what's going on there, Zap? Thank you, my friend. I appreciate you. Thank you so much for being here. Scramble Everything is in the house. Here we go. This is my front squat lunge guy. I think it was Scramble Everything. Hey, Dr. Jim, it's time to visit an oil strangle. All right. How does an MCL June 16th 70-54 strangle? Let's take a look at it. MCL. I like it because it's an index, and obviously we have lots of earnings coming up. So I don't really want to be putting out a ton of new capital right now in individual stocks. But yeah, I like it a lot, actually, there, Scramble Everything. Let's do it. I don't even really need to think about this too hard because, it's an index. MCL is a great way to play oil because you can get super small. I'm not worried about sizing or anything like that. But let's go. What'd you say? I think I'm just going to go the strikes. Yeah, 54. You're right outside the expected move on the downside. And then what'd you say? 70? 70? We're outside the expected move on the call side. I'm going to tighten that up a little bit just to bring in a little bit more premium. I might do like a 69. Now I'm bringing in $2.12, and I'm a little bit closer to the expected move than what you put in the chat. But obviously markets move and things change, so it may very well have been right at the expected move at the time that you wrote that comment in, which we both know was 75 minutes ago. But let's go ahead and, I like it a lot. Let's do 212. A little MCL strangle. We'll do a little oil to start the week off. That sounds good. Let me go ahead and let me right click. Let's do we'll do 209 just to get filled. We should get filled. No takers at MCL 209. Oil's usually pretty liquid, pun intended. Let's see here. Let's do 207. That is the bid price, so we should get filled theoretically every time. All right, so we got filled at the bid price. So we're Johnny Public today, but that's okay. So thank you, Scramble Everything. That's good stuff. Brad Glazier, greetings, Professor. Way to bring the heat on the morning show, man. I appreciate you, my friend. I do what I can. I do what I can. I mean, Tom, he's coming and going, man. Sometimes he's there, sometimes he's not there. You don't really know. He's basically like a Gen Zer now. He has now transformed from being a boomer most of his life, or is he actually the generation or two before boomers? I'm not sure, but he's straight Gen Z now. He might be at work, he might not be at work. You don't know. You've just got to show up yourself to see for yourself. And so that's some crazy stuff, man. Some really crazy stuff, but I appreciate you there, Brad Glazier. Thank you, my friend. Sam L's in the house. Dr. Jim in the house. What's going on there, Sam L? Sam L says, Doc, another red Monday. I mean, for the time being, it's picking up a little steam to the upside now, though. What are we even doing here? I do not know. Only good news today. KFC is bringing back chicken and waffles. Time to bulk up since the portfolio isn't. Wow, some KFC. Yeah, nothing says just some good Monday macro slop like KFC chicken and waffles. I didn't know it existed to begin with. I mean, I feel like you do like a Monday KFC chicken and waffles. You're doing like a Tuesday, probably like a McRib, and then like a Wednesday. What are you doing on Wednesday? I guess Wednesday is wide open. You could do like a PF Chang's. You could obviously do a Chipotle, and so chicken and waffles. Man, I've never been a chicken and waffle guy. There's no good reason for it. I mean, it's two amazing things, of course, that you put together. How could it possibly get any less amazing? It probably can't. But I may have to give that a shot. Harold says, Dr. J, are you still playing chess? Yes. So I'm terrible now. I'm so bad now. And so my strategy when I play chess is I actually, if I'm watching the market and I'm wanting to watch the market and I'm just wanting to kind of pay attention, but I'm getting kind of bored of just watching the market or whatever. I'm doing emails and I'm getting ready for the show and I'm doing crash courses and I'm doing the other things I do, of course. But if I'm just sitting and I'm just trying to be one with the market, right? Just trying to absorb the market, but it's a little bit boring, then I might play a little chess. But the thing about it is I don't focus on my chess game at all. I only focus on the market. And so I'm super distracted, right? And I'm not that much better when I'm not distracted, but I am noticeably better. And so my chess game has been awful there, Harold. So bad. And so, but thank you for asking, my friend. And so let's see, where are we at? Are you more of a multi-grip pull-up guy or multi-handle attachment pull-down guy? Well, okay, so for pull-ups, I'm a straight overhand grip, just standard pull-up, just how it's always been done. But from a pull-down, I use everything. I throw the whole kitchen sink at it, right? Underhand, overhand, neutral grip, unilateral stuff. I mean, there's just so much more versatility with the pull-downs, of course. And so Frank says, Dr. Jim, less gotchas, please. Yeah, I don't think I can do that because, again, it's pretty equal. Right? It's going to be symmetric, much like that expected move that we talked about this morning with Tom and Tony. It's not going to be skewed on one side or the other. Like for every one gimme, there is going to be one gotcha. Now, from time to time, you may find an unbalanced butterfly with the gimmies and gotchas. Maybe it's one gimme and two gotchas. Maybe it's two gimmies and one gotcha. But most of the time, I would expect some pretty nice symmetry with the gotchas. So YouTube Jim's in the house says, greetings, Dr. Jim. Glad to be here via iPhone. Ready for some C- humor. Yes, it is a Monday, so I would expect there to be a significant downgrade from B- to C-. I think that's fair. But my man is watching the show on the iPhone. Man, I don't know what's a bigger power move, the seated dumbbell shrugs or like on the phone doing the show. Like on the show, on the phone with the YouTube live streaming deal. That's pretty cool, man. I appreciate you so much. That's really, really awesome. So Sergio's in the house. What's going on there, Sergio? Thank you for being here, my friend. Robert says, did anyone ever come into your class and ask if it was a bodybuilding class? Oh, do you mean when I was a professor? No, but one thing that is funny is so when I was, because I was a professor from, let me think. I graduated in August of 2009, and then I started in August of 2009. So, I mean, 2009 was a big year for me. Finished my PhD in August 2009. Started my teaching career in August of 2009. Got married in October of 2009. Well, I did several bodybuilding shows while I was a professor. And so I would be like in training, like in competition prep mode. And like, my students throughout the semester would they would see me just get like smaller and smaller and smaller. Right. And they would often ask me like, are you okay? Like, is everything okay? So that happened often, but no, they didn't come in thinking it was a bodybuilding class. But I got many questions about, are you okay? Like, do you need a sandwich or something? Which, of course, the answer was always yes. But yes. So Emmett Morrison, hey there, Dr. Jim, here for the B- humor. Yes, I mean, I know I'm one email behind on you, my friend. I will get back to you very soon. But no, it's going to be C- day, Emmett. I think YouTube Jim is right. I think Monday we set the new precedent for C-, and then we slowly build up over the week. So we start C- on Monday with slow moving upticks. We get the B- on Friday, and then we have a weekend. We reset, recycle, and start the whole process over again on Monday. And so Jeffrey Jones in the house. What's going on there, Jeffrey Jones? How do you forecast the risk curve when projecting IV contraction on an earnings play? Like an at the money calendar spread next week and 30 days on Amazon. How do I apply different IV crushes against each leg? Okay, so there's a couple different questions in there. So let me start with the simple earnings one, and we've only got a couple minutes left in the show. I may have to think about the other one a bit more deeply. But if I go into here, let's just pick. Can we do GM? Yeah, let's do GM. Are they still in business? All right, they're barely hanging on. They're still there. But if I go into GM and you go to, this is actually not a bad example. So the IV crush, just in a general sense, Jeffrey, even if I don't have time to kind of get to the specific legs of like a calendar spread, if you just look at like the front week that has earnings in it. So like GM has earnings tomorrow morning, April 29th, and the IV is 79% in the earnings week. Then just go out to usually a month or two. So like here you could go out to June, which is where we have our position actually. This is going to show you kind of where the IV stabilizes. So this is going to show you that the IV and GM stabilizes somewhere around 40, give or take. I mean, it could be a little under 40. It could be a little bit over 40 based on the neighboring cycles around June. But it looks like we're looking at an IV crush from about 80 down to 40. That's 40 vol points that are probably going to come out pretty quickly. Now, it's not going to be a straight line. It may not go from 80 to 40 in one day. But, I mean, it would not surprise me at all. I mean, you could see right here that just going out an extra week to, May 9th takes you all the way down to 57. So, I mean, we could easily see 30 volatility points, 25 volatility points come out of GM after tomorrow morning's earnings are released. And so just from a volatility curve looking out into the future cycles with volatility crush, I mean, that is the easiest way to visualize this and get a sense of, kind of how the volatility is going to impact that stock, just generally speaking. Now, the specific question about the legs, why don't you follow up with an email? Because I want to get to one or two more questions, and I won't do your question justice if I try to rush through it. I may not even do it justice if I don't rush through it. But to at least give myself a fighter's chance, email me that, because I'd have to think a little bit more about how it might affect each individual leg with the calendar spreads and stuff like that. But just shoot me an email, and I'm happy to help. So D. Lunlun, welcome back, Dr. J. What's going on there, D. Lunlun? Yes, we were back last week, and I'm not even supposed to tell you guys this, but I'm going to be gone next week. So Autumn's taking me out next week. Remember, I told you guys last week that I've got all this vacation built up in May, and it's not my call. This is not my decision. I am not the primary decision maker. When it comes to this, I'm just the messenger. I am just the one that's bringing you guys the information. But the week of May 5th, little Cinco de Mayo, I'm gonna be gone again. And so, but then I won't be gone for a long time. So again, it's gimmies and gotchas, right? Which some of you might be thinking, well, no, Jim, the gimme was you being gone, right? Not you coming back. So I can appreciate that. That makes sense. So let's see. Harold says, of course you would want to go to Boston over New York. That's correct. It was my choice. And New York was not on the list. And so, but Boston certainly was. Aureus says, I'll see you in Boston. Hey, what's going on there, Aureus? I appreciate you, my friend. Thank you for being here. Your avatar looks familiar, I think. I don't recognize the name Aureus, but the avatar looks familiar. But that's awesome. I'll see you in Boston too. Andy Tampa says I'll be at the Tampa show. And Jeffrey Jones says, because of my positive net Vega, would suggest the position would lose money if earnings came out flat. Yeah, shoot me an email. Put all this in the email. Let me think about it a bit more deeply, and I'll give you a more detailed answer. Let's see. Scramble Everything says you're going to get 110% out of Dr. Jim. That's correct. Always and forever. Orgenu says, sorry, Dr. Jim, I'm in Italy. I would love to meet you in person. Hey, man, maybe Tom will send me abroad. Maybe we can get Dr. Jim international pretty soon. You never know. Who knows what 2026 is going to bring? And so David Gallimore says, why on a Sunday and not on a Saturday like normal? I think it had to do with the venue availability. I think it had to do with the fact that A, I'm part of the C squad, and also B, the venue availability. So that's why it's not there on Sundays and not Saturdays. But let's see. Let me see if I can get to. I see Harold. I see Robert. I see all you guys talking about Boston and other things. And then that's when Daniel Perkins and others started to make comments about my P&L open, which is pretty funny. Sparky Dog says I was worried the Finns were going to take Sanders. Whew, I was kind of hoping they would, though, honestly, because I think the kid can play. I really do. I think it's a bit of a circus with Dion and all that kind of stuff, and I think the kid actually brings a lot of it on himself. But I actually think he's insanely talented, and so I think he might surprise a lot of people to the upside. But I could be wrong. And so, oh man, I'm done. The show's over. That's crazy, man. That's so crazy. But I appreciate you guys. If I missed you guys today, come back tomorrow. Please come back tomorrow and put your comments and questions and stories and jokes early in the chat, because that increases the likelihood that I will get to them. But I appreciate you guys. If I can ever help you guys in any way, shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal come up next with Engineering the Trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options, profit, and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Going on, everybody? Markets seem to have calmed down just a little bit. At least the swings are a little bit lighter. So we're going to sit here and talk about all the things we're expecting to see this week. It is a jam-packed week. I'll stop short of calling it a Super Bowl week, but it is jam-packed. Welcome to the most famous show. That's right. Most famous. That's right. I said it. On the Tasty Live Network.
You messed up. You messed up.
Engineering the Trade.
You messed up.
I'm your host, Jamal Chandler. It's Monday. That means Josh is in the house. What's happening, man?
You messed up.
No, I didn't.
Most famous? You meant to say most dangerous.
No. Said it.
You're changing it?
That's right. Mm-hmm.
Yeah. Mm-hmm. Not much is up with me. It's quiet day. This is the calm before the storm, I think.
You think so?
Yeah.
Well, what's the storm? There's a lot of things we're going to go through each one of them. I'm
There's
curious,
so much.
off the top of your head,
Biggest
what do you
ones?
think is the biggest thing of the week?
PC.
Huh?
PCE.
PCE. You think core PCE?
So here's, and I'll explain why. I think earnings are not a big deal this quarter. I think companies have a get out of jail free card at the moment with earnings because they're going to issue earnings forecasts under two different scenarios. Like one will be recessionary, one will be growth, and so nobody knows how to judge it. So they're off the hook.
With regard to tariffs.
Yeah, they're off the hook. PCE is going to have data from when tariffs, I don't even know what tariffs are actually in place. It's so confusing, but you're going to start seeing some of the tariff data filter in. And if you start to see a little bit of an increase in inflation, if PCE comes in a little bit strong, forget about an interest rate cut. I mean, that's just definitely not happening. So I think that this is the economic data in general. You're going to start seeing some of the tariff effects. And I think that the PCE is probably going to be the most important. How about you?
I think jobs report, I think is going to be the most important. An FP report. I mean, it's, well, especially if they sort of start talking about, or I should say it incorporates the expected loss of jobs from the government.
I agree with you on that. It's going to be another big number.
A big one.
Yeah.
But I completely agree with you about earnings. I think if there's ever been a good time to sell earnings, from what I can tell so far, I think this is a good time. Most of the moves have been inside moves. Most of them, I think the wings, et cetera, have been bid up. And so I believe, I just said et cetera. I believe that.
Did you?
Yeah, I did. It's real smooth though, right? See, you notice it. I know, yeah.
Should we explain it?
No. I think there's going to be a bid to a lot of these. There's always a bid to a lot of the earnings, and I think that a lot of it is a little overpriced just because people are expecting something from the tariffs, right? You're expecting moves from talk of tariffs, but honestly, like you just said, you can't really account for something that hasn't really fully gone through the system yet. And obviously, their earnings that we're looking at from last quarter don't account for any of it.
No. I mean, it means prior quarter means absolutely nothing because, for better or for worse, and I'm passing judgment when I say this, the world's changed. Economically, it's changed. So, and nobody knows exactly in what way. So that's why. But with volatility high, to begin with, just baseline VIX being high, and you get the earnings like sort of like the cream on top. I agree with you. I think that it's like this is one of those earnings seasons where I'd be selling straddles left and right if I, had enough capital to cover all the stuff.
Okay, big swinger. Well, most of us are going to sell maybe a condor.
I'd sell a wide condor, or a wide iron fly even.
Yeah,
I think that net you're going to come out ahead when it's all said and done.
Yeah, I did it last week. I did a couple of names. It didn't. Tesla, I think, worked out for me. I did have another position on kind of.
Tesla had no move initially. It wasn't until the next morning.
So right.
It popped up, and I was like, oh my god. I mean, it was literally within like $1.
Yeah. I also did it in COF. I did it in that one, Capital One.
Oh.
That was another one. I think that worked out. That actually what happened on both of them.
What happened
was not the move of earnings, but it was like whatever day that was. If I did the earnings, that night, I don't think it was the next day, but it was the day after. Whenever we had a bigger move in equity in like the market,
got swept up in it.
Yeah, it got swept up in that. So that's why my condors didn't exactly work, but it was fine. It is one of those situations where I think vol is going to be kind of bid up on a lot of these plays ahead of earnings. So I think it's a good time and I never sell earnings.
Yeah,
never. I mostly, as the people know, I'm mostly trying to find ways to get long the move.
Yeah.
I think it's a good time to sell earnings, so I'm looking for a few opportunities here and there. I'm not going to get crazy with it, but anyway, starting the week really starts tomorrow. Jolts is tomorrow. We don't really move a ton on Jolts.
Jolts, right? And the jobs numbers are going to be interesting because at the end of the week you'll have the government job losses. Jolts, I don't know, like the job openings. I don't know if anybody's going to actually care that much.
I think it's another one of those data points that was a pandemic thing.
Yeah.
Coming out of pandemic thing that we paid attention to, but now it's kind of calmed down. Like nobody gives a shit. I mean, it's not really that big of a deal.
Yeah.
So I should probably stop quoting it. I mean, that's what's going to happen with these inflation numbers. After a while, it's still a thing because we have high interest rates and potentially inflationary tariffs, but once that goes away,
there's a cyclicality to what we pay attention to, what the market is sensitive to, right? I mean, inflation is in vogue for a while. That'll eventually be replaced by something else. I mean, that's just how it works.
59 points in either direction expected for tomorrow.
Yeah.
What kind of range have we had today? Let me see. We've had
I say we were about 90 points.
85 points. 85 points today. In the actual SPX. I mean, I'm sure it's probably the same in ES, I'd imagine. Not to 86 points, basically. So that's for tomorrow, Jolts, which probably doesn't mean a whole lot. It doesn't outweigh any, it damn sure doesn't outweigh any tweets that might come out.
Yeah.
The move. Then we got Wednesday, you got GDP.
That one,
depending on who you ask, they'll tell you how important.
I don't think.
Friend Chris, who I talk to tomorrow, I'm sure Chris is all up.
Chris is, but again, it's through March, so it's pre-tariff stuff. So, I think the bias would be to discard it a little bit, just because it's old world data.
I think the biggest thing about Wednesday is it's the end of the month.
That's right.
End of the month flows. Obviously, GDP, core PC is probably more important than GDP. But yes, tweets over Jolts, Grumpy Mike.
I like that. Tweets over Jolts.
Tweets over Jolts. core PCE is more important than GDP, but I think end of the month flows. I mean, last month I thought was a little wild.
Yeah, it
Obviously,
was.
just
It
a
was
wild
wild.
market.
I remember that. It was
And I think this one could be. I mean, I think I always expect end of the month to have something happen. If not, it's surprising to me. But I just saw, just as big as this market is, the way that these ETFs trade, all of these things, end of the month flows. I think there's always a chance for some crazy move.
I thought last month may have been because it was also quarterly.
Yes.
But to your point, end of the month, I think you just have to be on guard. You have to be prepared for it.
Like when you've had a month, because again, when you have a month where it's been so dislocated, like we had a big down month for the most part at one point. When that happens, I think there has to be some type of adjustment at the end of the month for certain names, certain things. I'm expecting a big move on Wednesday. I mean, one of my positions hopes not, but and I'll talk about that position a little bit. It's Wednesday. Thursday, you're looking at ISM manufacturing PMI.
I mentioned it one time. I mentioned it this morning when I'm not even awake. I haven't even had my coffee. I'm like, ISM's on Thursday.
No, back out of it now. Go back out of it now.
Listen, it's just another. I think the measures of the economy, whether it's expanding or contracting, are particularly salient.
Ooh, look at you. Salient.
Thank you.
Okay.
I used another word the other day that was.
Well, I used to confuse salient with
saltine cracker.
Well, more like saline. But yes, along the same line. Oh my God. I know that guy. He's a good friend of mine.
I don't know what you're talking about, but I think you're seeing things. I think that it's any of these measures of the economy are going to get some attention because it's a great political talking point. If for nothing else, that's why it's going to get attention. So that's why I mentioned it this morning, semi-caffeinated, mainly tired.
You know what? I don't want to hear your excuses now, okay? You leave me in the trenches taking grenades. You know what? I wouldn't be surprised if tariffs end up really being enacted and really being a big thing, that ISM manufacturing ends up becoming something that does move the market at some point in time, right? I mean, I could see that, but I think as of yet, it's still I don't know, man. There's been some months where it has moved a little bit of the market. I feel like last month it kind of did. I'm not ready yet to say it is a big thing. I need more data. I'm a scientist. I need more data.
That's fair. But don't you think like everybody's trying to figure out the impact of the trade policies?
Yeah.
And it's grab data wherever you can get it and see if it tells a story. I think that's how economists are working in this environment. As a trader, whatever, I'll look at it because I just have curiosity. But I think that it's just everything is a bit amplified until we figure out, okay, this is how things are going to shake out.
Yeah. And then we just talked about non-farm payrolls for Friday. The move for the week, as you guys can see, there's a position here for me. So for those who watch the show regularly, you know that I put on this call butterfly actually a week ago today. The 5,400, 5,500, 5,600. Yes, 100 points wide. It's in a good spot right now. The biggest decision for me is when to take this off at some point during the week. I probably the two big days of the week that are going to make me nervous are Wednesday, end of the month flows, obviously heading into Thursday, if I still have it on by Thursday. And then if I, for some reason, the only reason I would have it on Friday, honestly, is if we tank tomorrow and Wednesday, then at that point it's just like out of my hands. I mean, obviously, like
what if we shot up? Same thing.
If we shot up, no, actually, if we shot up and we're through my strikes, through 5,600. If we did that tomorrow or Wednesday morning, I mean, I'm not touching it. There's nothing I can do about it.
Yeah, that's what I'm saying. That's what I'm saying. Yeah.
Yeah. So yeah, I mean, this really.
I think you're going to close it. This is just my professional opinion. I think you're going to close it.
Professional what?
Yeah, I think you're going to close it the day after you should have.
We'll We'll see. It's one of the things that I'm leaning on in the book. It's probably the only position I'm leaning on and trying to figure out when to close. It's obviously my most near-term position too, so that's why with 4 days to go. A lot of earnings this week, of course. Jeez. Just in the next 24 hours, I think we got SoFi, PayPal, Spotify, UPS, Visa, Starbucks. After that is like, Snap, Humana, Caterpillar, Microsoft, Hood, Qualcomm, eBay, Lilly, McDonald's, MasterCard, Amazon, Apple, Airbnb, Reddit. Outside of Amazon and Apple, Microsoft, Meta, is there anything other than you're looking for? Is it a Qualcomm? Is it Robinhood? Is it Starbucks? I mean, is there any?
No, because I think it's the same narrative with all the earnings about not knowing what's going to happen next. I think you have 4 of the 7, Mag's 7 this week. Is that right?
Yeah, Meta, Microsoft, Amazon, and Apple.
Yeah. And then you've got 11 of the 30 Dow components this week too, I know.
Does Humana, is that one that's going to go down? I mean, didn't UNH tank on earnings?
UNH did tank on earnings.
So usually when I see that personally, when I play earnings, if I see UNH went down, I would play Humana to the downside. That's just something we used to do all the time when I was at a trading firm. I mean, if one in the group and they have the exact same problems, why wouldn't you play the others to the downside? So for those who know me, this is one where I would definitely have a put calendar on. And maybe I play it that way come earnings day for that reason. Somebody asked, what's the best way to sell earnings? Pitbull 299.
Yeah.
What's the best way to sell earnings? What do you have a go-to?
No, I don't. I mean, there's no wrong, let me put it this way, there's no wrong way to sell earnings. Maybe not naked, depending on your account size.
Right.
Outside of that, no. I mean, it really comes down to risk tolerance. And I mean, let's just say in a theoretical world where you have unlimited capital, I would sell the straddle all day.
Yeah. Oh, you would sell the straddle. You like selling straddles.
I do. I like being aggressive.
I would sell the strangle.
I like being aggressive. But in the world of reality in which I visit from time to time, 20 Delta Iron Condors probably.
That's kind of what I do, and that's what I did in Spotify. I got that going on for tomorrow. The Iron Condor there. It's what you were right. This was a little bit. It's funny because you were when I was selling it, and you're like, "Isn't that one a little wide?" Option. I was like, "Yeah, you're right. It is."
Oh, this one you did this morning, right?
And I was like the second away from closing it, and then boom, got filled. Which as soon as that happens, you're like, "Uh oh."
Yeah. Well, I'm in it now.
So that's one that I'm doing. I'm going to test again, I've already tested the theory of I feel like this is a good quarter to sell earnings. I did a couple already to varying degrees of success. This will be the one. If this one works out really well, then maybe I'm going to start putting on more throughout the cycle here. We'll see. But I always like to sell. Again, my way of doing it is a lot of times it's condors. Mm-hmm. A lot of times I want to do, as a result of that, I want to do it in bigger names, like higher dollar names.
Yeah.
Because you just have a better chance of collecting some pretty good premium, and you can get fairly far away from the expected move by doing that.
Yeah, so, I'm with you. It's selling like a $30 stock where you're going to collect 78 cents for.
Yeah, I don't like that. It's not my thing.
No,
I'm really not.
I don't even find it interesting.
Yeah.
I don't like the risk reward. I don't find it interesting.
That's it.
I'll sleep through that one the next day. That's one where I'm like, some of them I'm waking up to make sure. I mean, I'm up anyhow, but I know that trade's on. Others I would completely forget.
Like, what's the minimum amount? This is a kind of a weird question. I can ask you this because you get it, but for those who don't trade a whole lot, they might not understand this really. But what's the minimum amount you would sell a strangle for?
Strangle? Well, it would depend on the notional of the underlying.
Yeah.
But I probably want to. Are we talking earnings trade or just trade in general?
Just trade in general. I mean, if it's earnings, you're obviously going to get a little more bonus. $4?
Probably around there, yeah.
Yeah, I mean, for me, it would be like $2, like even, I mean, 4 is obviously great, but I guess my point is we're getting back to what we just said a second. I can't sell for anything under $1.
No, $1. I don't
care. And again, if I don't care if it's let's say a $25 name, I still want $2. I don't care.
Yeah.
And if and obviously that means if I'm selling a $25 name for $2 strangle, and obviously if we're talking, something within a month to 2 months, right?
Yeah.
Within that time frame. Obviously, if you go 6 months, you can get more than that. We're saying within a month to 2 months. I know if I'm getting $2 for that $25 name, that's probably a very volatile name.
Yeah.
You know what I mean?
Yeah, I was just about to say you're managing.
There's a lot of things to take into account there.
Yeah.
I was just everything being equal, we're just trying to. I was just
all
curious.
things being equal. I mean, I'm just thinking about it in terms of profit taking.
Yeah.
Like, and I won't necessarily stick around for 50%. I want to get out fast.
Oh no, we know you're hit it and quit it. We know this.
Thank you. I appreciate it.
That is not true. I'm just kidding. We are kidding. Josh is very sensitive.
Very
sensitive. At least ask, how you're doing.
Very sensitive.
Yeah, I think it's going to be a very busy week. And you know what though? I do feel good about my call calendar, okay? The reason why is because sometimes in these very busy weeks, you get so much movement in so many different directions on so many different things, the actual index stays calm.
Could be.
The only thing that's going to mess me up is more discussion about tariffs.
The thing that I'm looking for, and this isn't something we talked about, is if we do get like a big move one way tomorrow, I may fade it, because I think you could have a week of back and forth where you end up on Friday right around 5,500.
That's exactly what I'm hoping for.
I know you want that. I know you got that confirmation bias on that.
Damn right.
But I do think that it's entirely possible you're going to see like offsetting swings throughout the week.
Well, let's,
That's just, I have no reason for why I'm saying that other than when you have all this stuff that happens day after day after day, you do set that up, and then Friday can be the day where you finally get a directional move.
I have a reason for that, and this is the reason why I specifically chose the strikes. I just didn't expect it to happen the way it did so fast when I put it on a week ago. But the reason is 5,500 has been that level of resistance. Yeah. We've seen that a couple times.
Yeah.
We closed above it on Friday, and now, obviously, I think the possible trend is for higher, but people need a little more confirmation bias, like you said, to make it to 5,600 at this point. And so I think we're going to hang here for a little bit. That's at least, what I'm hoping on. The other reason I think we hang here a little bit is because we still got this VIX hurdle to get over. When you look at the futures right now, May is trading 23.80, 30 cents basically above June, and June and July are basically the same. So that's like a flat term structure at this point.
Yeah.
And, basically, if we just did what we're doing, like say we just stayed right here for the rest of the week, we won't be flat. We'll be both close to contango.
You would think at that point.
You would think.
The market should be normalizing itself. You don't usually stay in backwardation for a very long period of time. So I would agree with you that we should probably normalize at that point. But who knows? We've talked about this last week too, is that the tweet risk is, I didn't used to have a problem going to sleep with like a directional futures position on. It's a little bit harder to sleep at night. Like I wake up and I look, because the guy doesn't sleep. So
the two things that are
semi-black swan.
Again, the two things that in my mind that are not settled yet is the fact that we're not out of contango. We're not out of backwardation in VIX, even though it's it's still kind of flat. It's hard to call it backwardation, but it still technically is. And then the gold that we both kind of talked about today. Gold is still hanging on there. It's still
Gold's got me confounded. That was the one thing before we went on air we were talking about a little bit, and I said that was the one thing today. It's been up all day. And the market's doing exactly kind of what I thought it was going to do today, which is a whole lot of nothing at the end of the day. But gold continuing to creep higher, it's almost, to me, suggesting that like there's gonna be some not so great stuff coming in the next few days. That's kind of what I think.
If this is up, that means dollar's down, right?
Yeah.
That's still the one thing. I'm telling you, if I just showed you this chart 3 months ago and said this is where the dollar is in 3 months, where do you think the stock market is? We're at all-time highs, baby. You would think we were at all-time highs in the stock market.
That, yes. You
would.
Yeah.
The way that the market has reacted to the dollar moves over the last 3 years, you totally would.
Yes. The way that it's reacting now is like an emerging market response. You do have finally, bonds have come back a bit, which I guess is encouraging.
True.
But I think they're fragile here. And what's the recent high on ZB?
ZB.
Like in the last week.
Oh, the last week. This is it.
This is it, right?
Yeah, this is it.
Yeah. I think
16 and change.
I think they're fragile at this level.
Yeah. The best trade hidden here has been an Iron Condor as well. I do have, you know what? I don't necessarily love Iron Condors per se, but I feel like it's been one of the better trades to do in a lot of things because we've had these huge ranges, right? And so the wings were bid, and so you were able to sell those wings.
Yeah.
And then you can just cap off your risk. I think it's been one of the better trades.
I agree with you. I mean, it's definitely been 111 has been a no-brainer, and selling puts or getting long, whatever, however you want to do it. But
I'm not adjusting a damn thing on any of these condors. Like gold, for example. I mean, I did this gold Iron Condor with 34.50 being my short strike and 30.50 being the short strikes. I did that when gold was at when it was at 3,200, figuring $200.
Probably 3,200 probably makes sense.
Well, then obviously we went towards 34.50 and change or higher, a little bit higher, and I was like, oh. But I was like, I'm not adjusting. I thought about rolling my put spread down. Nah, not this time. Not this time. Where gold was, I was like, this could easily drop back down 200 and change. I'm sitting tight, and I'm still going to sit tight.
You remember gold ever being this volatile?
I remember.
I think I remember like something that about one time gold was really crazy. Like, this is not how gold should trade.
Yeah, I remember a similar type deal. I think it was 2011 where gold and silver were kind of going crazy. I do remember.
Maybe that's what it was.
We were, oh man, that's the good old days, man. We were, look, it's great to trade the way we trade small, trade often, especially when you're a retail trader. But it's kind of fun to trade big when you're trading somebody else's money. I will not lie to you about that. And man, we had 1,000 lots of gold GLD on, like GLD just upside, and it was, we've done those trades before.
Institutional money, it's different.
When you have like 1,000 lot and say it's 30 delta, so you hedge it with you hedge it lightly, you don't hedge it all the way, but you sell like 30,000 shares against it, and you still have this long delta on. You're like, heck yeah, like this is gonna be nice. And trust me, there's plenty of times where those don't work, and you're like, damn, this sucks. You lose a lot of money on theta, but when it works, whew.
Yeah,
it's nice.
There's a rush. There's in general
it is. You're like, okay,
sure.
Well, this is nice. Earnings. What are the IV high skewed names?
Pick it. Name it. Pick your stock that's announcing, and they got high IV.
Yeah. Pick one. Oh, James wants to say, what are the earnings plays before the bell, after the bell today? I'm not trading any. I'm trading one, which is Spotify. I'm trading that at Iron Condor. I mentioned that earlier. SoFi, I'm $13 name. I have that in a long-term account. I don't have anything, so I am kind of interested. But the Spotify is the only one I'm doing. That's it. Quick question, friends. When you have a cash account, doesn't count for...
No, you are not subject to PDT in a cash account.
There you go. That's what it is. Folks, we got to go. Thanks for watching. And as always, be smart, be patient, trade them small, trade them often. We'll see you.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Hello, everybody. Welcome to a new week. This is the last big earnings week for Q1. Wednesday and Thursday being the highlights with Apple, Meta, Amazon, and some other big household names. And then it gets kind of boring again. But this is the big week. And today, the market does not know what to do with itself. We opened yesterday, futures fell and fell and fell, stopped falling, went zipping higher. When the day opened, everything was up a little bit. Then it started pushing higher, broke out, and right when it looked like the bulls were going to run away with the day, it fell. And about 100 points on the ES. And now it's rising again. So it's a complete mixed bag. The ES and incur are red just a little now. The RTY and the YM are both green. It's a mess. And it's interesting to watch the media try to come up with reasons why it's doing this or that. This morning, when the market had recovered from its nighttime loss, the reason offered was there's lots of earnings reports this week, that's not a reason. That's just a situation. But they got to say something, so that's what they said. I've got some charts to attempt to make a little sense of this, so let's jump in. And as always, there's going to be a lot of gaps all over the place, and we're exceptionally close in some of those cases. Let's just walk them through. Here's the spider. We have gotten closer to closing this gap ever since it happened. This is, of course, the Liberation Day gap, which is omnipresent. But there it is. There's the spider. Very, 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 very close to sealing it. Hasn't quite happened yet. Here's the diamond. Its own gap is way up there. I don't think we're going to seal that. So I've got a secondary lower resistance level like so. And as I mouse over it, it just highlights the price. XLI, another flavor of industrials. We've got a nice clean top on this one. This gap had been perfect today. Let's see here. There's the gap right there. Today's high. Yeah, to the penny. So that gap's been sealed to the penny. It would be awfully nice if it fell tomorrow. That would make for a very clean setup. But this is a market completely driven by emotion. It's not driven really by data or economic reality. It's driven by pure emotion. If, for example, Trump came out in front of a camera and said, just off the cuff, I've had up to here with China, and then walked away, it would wipe trillions off worldwide markets within minutes. That's all I would have to say. Just in a fit of pique, just say something kind of irritated. Nothing to do with data, nothing to do with information or trends or economic reality, just a feeling. And that feeling would destroy trillions in no time. But by the same token, he could come out and say, as God is my witness, I'm going to have a deal with China done within 3 days. Whether that's true or not. But if he said that, that would add trillions to it. So we're sort of just at the mercy of whatever pops into his head at the given moment. I don't think anything particular has happened today, which is why the market seems so lost right now. But those gaps are sealed or close to sealed. And like I said, it would be really nice from a charting perspective if this was kind of it for this mega rally we've been dealing with. Here's the IWM. Same situation. Gaps that are almost perfectly closed. There it is right there. Got closer today than any other time since the Liberation Day. The cubes, and I guess ostensibly this is because China has basically said that we don't need no NVIDIA. We got our own chips now that do the same thing. So that was created a little sinkage in NASDAQ land. The gap was sealed on this a long time ago. So the best line I've got at this point is just this lower high, not particularly significant. And SMH specifically, it's weaker still because, as I said, NVIDIA not having a great day, and its gap is right. Well, actually not gap, but it's resistance levels like so, which we got up toward last week. So in all cases, gap or no gap, there's a massive overhead supply that we've been rushing up against because the collapse after Liberation Day was very, very swift and very easy to undo, as the past week has shown. From here on out, not so easy because there's, I say, a incredible amount of overhead supply that would slow things down and gum up the works. There's NVIDIA specifically, which is down over 2.5%. and it peaked here, and since then, bang, 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 just lower high, lower high, lower high, and lower low, all the way down. The lowest of which was, of course, on the 7th, which was right on the heels of that weekend that everybody was freaking out in China-U.S. relations. Jumping out of the U.S., here we have the EEM, the emerging markets, which, yes, you know the next word, gap. There we go, 43.70, and exceptionally close to sealing that up. The EFA left this gap in us a while ago. It's curious and more than a little frustrating to me that this thing just keeps muscling its way higher. Let's change this to a candlestick. It's almost without interruption, just green bars all the way up, obviously particularly on the 9th. But, today, green, Friday, green, Thursday, green, a rare instance here on Wednesday of a little bit of a red dip, but on the whole, it has been just exploding higher since that April 7th bottom. And it's getting near, and this is really hard to believe, it's getting near lifetime highs. Not sealing the gap, not liberation, never higher in history. Very close to that right now. So that's something. A little surprising, I must say. I do have a small number, but of bullish picks that I've been touting from time to time, and those have been holding their own pretty well. EXEL is one, having a pretty good day, up about 2.5%. Gilead up almost 3%, coming off this very well-formed base. And a little more obscure, but TIGR, Up FinTech, which I believe is a Chinese financial firm. A little bit of a sloppy base there, but not terrible. And of special note, big pickup in volume, you can see here. So this is having a good day, up almost 6%. So that's Tiger. So there's some longs out there as well. But one of the big narratives being offered out there again and again is how cheap commodities are, and how, from a even multi-decade perspective, how commodities are very cheap and those should be bought. I don't know. I'm not so sure. I'm a big fan of precious metals, as you know, but the notion that commodities as a whole are just dying to be bought. As I look at DBC here, what I see is a situation in which the last best opportunity for a real rally here was really back in February. That failed. We had a breakout and that failed, and then it really failed in April. And so we've got this former bullish base, which is just died, and all the price action's been below it. And I would say as long as we stay beneath on DBC, this dashed line, this is just gone sour. And so, by way of example, like here's crude oil, which I think is going to be in trouble in the months and even years ahead. Crude oil is down about 1 2/3% on the front month now. This is a very long term. This is a multi-decade here, many decades of price data. But most recently, we have been cracking below a range that we've been in for almost half a decade. Yeah, the most recent reversal pattern of which was like so. So I think crude oil will be heading lower. And as I've said, I think that amongst the equities, there are interesting individual stock plays on the short side. Here's a few. Here's a BHP, whose symbol is BHP, but this is very gappy because it's overseas stock from the U.S. perspective. But that looks like a nice top. Halliburton, HAL, and nice clean gap on this one. And they've already lost a lot of value in some cases, but longer term, we can still see, I think they could have a much longer way to go. And Valero, which is up a little now, but I would say this pattern strikes me as being very similar to what we experienced back here. So there's VLO, like so. And in this case, my own stop loss is that dashed line right there, which is this price peak on this bar. But for a change, we've actually got a little breathing room here at the end of the show. So let's take a little time with some of the big cash index charts. The first one is VIX, which it wasn't that many weeks ago that getting even into the low 20s was cause for celebration. And there's been so much volatility, so much change, so much uncertainty with this trade war that what used to be a ceiling has now become kind of a floor. And as we look at the VIX, the gap is right there, actually at 23.86. It isn't rock hard support, but it's not bad because we have plunged here. We've lost well more than half the VIX's value. It seems to be stabilizing somewhat. So we might be in a kind of a new era of the VIX, whereas instead of banging between 13 and 21 again and again and again, it's actually broken out in a meaningful way and will stay up there so that the lower 20s is actually cheap compared to where it can go from time to time. The Indu, Dow Industrials, we zoom into this is very clean. This pink trend line here, this is anchored all the way back down to the COVID crash low. It is broken. It's been broken ever since Liberation Day, and it stayed below that line, as you can see, the whole time, in spite of all this movement, including like quadruple digit positive moves here. It has not clambered to the other side of that line. So that's an important failure. Here's the S&P 100, OEX. These lines here represent the automatically drawn Fibonacci's. We're just a little bit above this dash red one here. And here's that word again, that gap almost perfectly sealed today. So very, very clean, should be top/resistance on this one. The semiconductor index, the SOX. And we've seen these by way of the ETFs, I realize, but I'm just showing you the much, much longer term data and different price values on these. So in the SOX's case, that to me is the line limit, which we've been kind of marking them on the way down. We had this one and then this one. Now we've got a lower one like so. And as I said, this drop was very, very swift, very easy to undo with some backpedaling. But all this stuff, that represents some very powerful resistance to prices just slicing higher like they did on, say, April 9th. Russell 2000, this fib has worked out really, really well. This blue line representing exceptionally strong support. Bang, bang, bang. Didn't even get down there this time. I think ultimately we will in the months ahead, maybe even weeks ahead at some point. But as it is now, we've gone ripping higher to this dash level, which is just a little below the fib, and marks this important top like so. The S&P 500 cash, zooming on to this, very similar setup to what you've seen. Beautiful support on the fib like so, and again here, and resistance up here, and zooming in. Lovely gap right there, which, as with so many other cases today, never been closer to sealing that than with today's activity. And then just wrapping it up, here is the ES futures, along with the fibs highlighted and tinted, with similar drawings to illustrate the massive overhead supply and where we've come in terms of this counter-trend rally. And finally, remember that if there's a general theme to this show that's been in place for many, many months, it's bullish precious metals, bearish equities. We turn our attention to gold. GC is up another $64 now, having a nice recovery from a bit of weakness last week. But that trend overall, week to week, month to month, has held true, and I think gold has plenty higher prices to come. Well, that's it, folks. Got another full week ahead. I will see you here tomorrow, and like I said, the real juicy earnings will come to us Wednesday and Thursday afternoons. See you then. Bye-bye.
If you missed the live show, here's our cherry on top weekly recap. Bat, how about you? What did you get up to last night? Any shenanigans?
Watched a little hockey. Watched my pool get filled up with water.
That must be exciting. When it goes to each level, what do you do? Like,
we have a party.
You have a party?
A little party. Do you fill it with cold, crisp bottles of Saratoga Springs?
No, you use Fiji water, don't you?
Avion?
No. Hose water size enough, so I'm gonna tell the kids not to drink it. All right. Put up this picture. Can you please put the picture of me as an action figure? It looks
Did you put him in a tracksuit? Is that a tracksuit?
Tracksuit works. I don't really have tracksuits, but I do wear a lot of leisure stuff on the weekend, so I'll be good with the tricolor cookie is absolutely spot on. The coffee cup is spot on. The trading card is spot on.
It's a pink sheet, yeah, like
the
a
disco
card.
ball. I can handle it. What I have a problem with is how did Dylan Radigan get in my jeans? It looks like a collab between Tony and Dylan Radigan. Tom it looks like Tom. Like that's Tom. I mean,
that's because I did this one.
Right, that's Tom as a gnome. You're perfect. You did you, right?
Of course I did me.
Yeah, of course. I could have told you that.
So I have a can of Diet Coke. Liz and Jenny.
Can't say anything bad about that.
They have the zebra and the jade lizard. Jenny, of course, has a glass of wine. I did Jenny's. And her boat, her sailboat.
Yeah. You were very kind.
Also, I'm no dummy. I typed in the prompt, make her look younger and slimmer. I did Dr. Jones. So he has the dumbbell, a cold plunge pool, a calculator, and he's Florida man.
Jamal, perfect. The basketball, the football, the video games.
And the gears, because he's an engineer. Yeah, I did Julia's.
Yeah, perfect. She looks
She's the
great.
cat. So the thing, people think it's a chandelier. It's a quantum computer.
Mikey Butler's perfect.
Yeah,
Very
he's got the
good.
snowboard, the Chinese takeout, the dumbbell,
Yeah,
golf
perfect.
ball.
Mikey must have done Mikey. Let's go next one. Okay, who did my son dirty?
Was not me. It was not me. The same person that did yours did your son's.
Okay, they don't like Batista, so that's what I figured from the very beginning. Katie McGurgle's beautiful, perfect.
Katie is stunning. She is an icon. She has a Harry Potter wand, cowboy boots. If you haven't seen Katie try to teach Tom how to line dance, it's on our social. And then
Okay, now I know who did the Batistas. It's Gus. Okay, Gus did the Batistas. All of a sudden, he's all buff and What the? This is not. This is. Gus did the Batistas, I'm 100% sure. And Gus, I will be coming for you.
I should have been. This should have been me.
Yeah, he looks like The Rock. Yeah.
Mommy and Daddy are fighting, okay? And you guys are not getting along. I am not going to come in here and try to mend this broken bridge.
He's just having John withdrawals, that's all.
With you, it's hard.
She always has her A game. Wait, go ahead. I'll take the pressure. I'll take the heat. What do I do? I love this.
What's the line you always use? It's hard to fly like a turkey.
Fly like an eagle. It's hard to soar like an eagle when you're working with turkeys. Turkeys don't fly. We're like, I cannot with him. I just sometimes.
Wild turkeys
Did you just
fly.
call me a turkey?
What's that? Wild turkeys do not fly.
Yeah, Steph, I think you and
Did
me.
you call
I
me
think
a
this was
turkey?
more.
I didn't call you. I'm calling
No, I think
Scott.
Turkeys
it was
don't
me.
fly. They can get airborne for a second.
I called him a wild
fly.
turkey.
You can get airborne. Well, you couldn't get airborne.
Turkeys
for anything.
fly. Turkeys fly. I've seen turkeys fly.
Turkeys do not fly.
A wild turkey doesn't fly, you're telling me?
You've seen a turkey fly.
When Tom's out on those survival missions that he frequently goes out on with just a knife, and he hunts.
When I'm
yeah, he
taking a
sees
hike
wild
in the
turkey.
woods, I've seen wild turkeys flying all over the place.
Mm-hmm.
Get the full scoop by checking out the archives at tastylive.com.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tonamus, we are back, my friend, and you know what that means. It's time for a little bit more Tasty Live at the closing bell. Even the S&Ps, nothing to see here, Sadnoff. They're unchanged. Quiet day. I don't know, down 50 handles, up 50 handles in about 2 hours or so. Nasdaq down 15, Russell up almost 3, and the Dow up 107. Volatility up. Sadnoff by 23 cents. You don't see that every day with an unchanged market. Bonds up 18 ticks, 116.12, hanging steady. Bitcoin hanging steady, although it is off its high today of 96,000, just about 500. It's 95,500, about $1,000 off of its highs. Oil down $1. Gold caught itself a bid, Sadnoff up another $61.40. That's one of your bigger movers on a percentage basis. Silver is up also up almost 10 cents. We don't talk about platinum, so we're not going to mention that it's up almost 2.25%, maybe a little bit more. Net gas up 22 cents. I don't know if that's your biggest mover on a percentage basis of all the futures. 7%, 22 cents is a big move. What has been a down move for about a month has quickly turned around here today. And then for the stocks that are moving the most on the downside, you've got Lilly down $7. It's been your leader all day. Coin, no surprise, with Bitcoin down 1,000. Nvidia down $2.60. Taiwanese semiconductors down $2.50. A lot of Chinese stocks. Baba a little bit lower. Google lower by about $2 or so. And on the upside, Amazon's also down $1.50. On the upside side, if you're looking at Netflix up $7 and Reddit up $4 and change. Boeing's been strong all day, up $4 and change, and Meta up $2. That's all I got.
I would say that just as a quick overview of today, I would say this is probably the worst trading day we've had in a long time.
Yeah.
You know, this
not
is
P&L, just. Not,
oh no, not
Yeah.
P&L. P&L's nothing. I mean, I was doing good today until the turnaround in gold. Gold was unchanged this morning. Then it was up $5. Now it's up 60. So that kind of took that kind of that's the only thing that hurt me today. But as far as stocks go, I mean, literally nothing. I mean, this is just a mixed bag. Futures very light volume. Equities, light volume, options, light volume across the board. One of those rare inside the expected move days. We have not had a lot of those.
Inside the week's expected move today. We haven't had a lot of those. The week expected move, that's WEEK, has been exceeded each day. Yes, you're all right.
Yeah. So a literal unchanged day is you would think it'd be good for premium, but the reality is it's not.
No, even volatility up 35 cents and staying bid.
Yeah, that's kind of weird to me, but maybe there's something I'm missing. Maybe it got a little oversold on Friday. This is one of these weird days where vol didn't really it came in, on the opening today, and then it just disappeared after that. On the opening, we had a great opening, and then it just, they bid it up after that, and that was it. There's very few. The earnings plays tonight are slim pickings.
Yeah, they're not that great.
May he rest in peace. Pfizer,
PayPal, Royal Caribbean Spot.
I have a very small spot position on, which actually came in quite spot. Which came in really nice today, but it's been against us recently. So I don't know if it really came in that much or if it owed us.
Mm-hmm. Doesn't matter.
It doesn't matter, but sometimes it's hard to say. It definitely came in, and so we're going home with the. I bought the guts and sold the wings, so we have the 460, 740. It's exactly 2 times the expected move on both sides. $70 expected move, $1.40 away. I'm in May. Currently trading for
May has a $73 expected move. Expected move is $62 for the next 4 days. Odd enough.
Yeah, it's funny. I sold this today at $770. It's $610 now. That's a big one-day move. Yeah, it's a big one day morning. It came in $1.60 from this morning. We have a small GE position on. I'm sorry, GM. I meant GM. Small GM position. It didn't move at all. We're short the 52.5 calls on the 42 puts. There's not much in GM. I tried to sell more. It's trading right now at $1.75. I tried to sell more at $1.78. Nothing done. Sold this morning at 186. Mm-hmm. I've been working it all afternoon. Can't get filled. Don't think I'm going to go much lower. Let me just see. Is there anything here now? Let's see. GM. Nah, I thought I could get. I don't think I can get filled. I tried to get a little greedy. Nah. Can't get
even the
below
S&P is
76.
only just under 1 million traded, sound off at 241 here. That's light volume.
Yeah, I said that. And I didn't really look at PayPal. I think Philip Morris has earnings too.
It does.
MO?
Yeah. Yes, it does. I did mention it earlier today. Yes, you are correct.
Yeah. But PayPal is an interesting stock. I'll tell you why. One, it's traded 11 million shares. And two, it's not on its butt. It got down to...
Looks like the lows are around 56 or something like that. It's trading at 64, but so are the lows. I mean, you're really looking at somewhere in the 60 handle, right? 58 to 62.
Yeah. But the only thing I'd say about PayPal that's interesting to me is that if you have any interest in like crypto, it's kind of a
proxy play for it.
It's kind of a really crappy proxy play.
Markets are good. Markets are good though in PayPal. It always surprises me because
they're better. They're better than they've been. I'm not that interested in the upside in crypto. I mean, in PayPal, the downside's kind of interesting. I mean, maybe I'll sell a few. I'll sell a few puts, but there's something that you should know about PayPal. It doesn't trade off mid-price.
That's something I should know. It doesn't trade off
mid-price. It's
mid-price?
something you should know. It doesn't trade off mid-price. I mean, it doesn't trade at mid-price. It trades. It basically trades on the bid or on the offer. Yeah, it's a
very good
crapola. In that sense, it's a true crapola.
Mm-hmm.
I just sold some puts at 92. What are those? Those would be the 58 puts.
58 puts and 57.5 puts too. Did you do those?
Yes. Sold the 58 puts and the 57.5 puts because somebody needs those.
Somebody has to have them to bid them up by like 2 cents, and you just need to make sure they know who's boss.
No, I just need to make sure that I got filled a couple of tranches, so I'll just leave it there. Nothing much. I just figured that crypto's had a nice little rally. I feel like PayPal thinks they're a crypto stock now. I don't know.
Think they're all grown up?
I mean, that's what Square and I kind of think. That all these stocks think that that's kind of like they're getting into the digital payments and they're offering crypto conversions and they're offering stable coins and I feel like their message may be a little bit. I feel like they're gonna have a hard time. I actually know nothing about PayPal. I feel like they're going to have a good story to tell.
But you sounded great. I'm not going to lie.
They've been out negotiating with everybody on the street about like crypto payments and stuff like that. And I don't know if their technology truly bites. Like, to me, their technology is just horrible, and they spam you to death, so they drive me crazy, so I refuse to have a PayPal account. But I feel like this is one of these stocks that I'm not a fan. I wouldn't be a customer, but I think you can sell some puts in there and maybe make a little money. I don't know. We'll see. I sold the 57.5 puts and the 58 puts. That would be right at the expected move for May. We'll see what happens.
Okie dokie.
Worst case is you buy it at the lows where it went to last time, right?
Right. Yes. All right. Not the worst thing you've ever done.
This, no matter if PayPal went to zero, it would be the worst trade I've ever made. So, wouldn't be the best, but it for sure would not be the worst. There's nothing PayPal can do to make it the worst trade ever for me. I honestly don't think I have a position on right now which can be the worst. We're a tiny few deltas short. We were, I made like 100 trades on Friday. Today's only 40, and our deltas are a little bit short. Our thetas got way down because we rolled everything, and our extrinsic is way down because we rolled everything. Our capital usage is way down because we rolled everything. So I feel like we're locked and loaded. But I can use, I need some opportunities here. You got something else?
Oof, man. On a day like today, when really nothing's going on, you really want to press it? Like
I don't think you press it. I'm just asking if there's something out there that am I missing something that looks, interesting.
I'm curious to see how didn't you put on a UNH trade not too long ago?
No, a couple days ago, but I took $3 out of it, and the next day
you took it off already. I was gonna say I was curious to see how that was going because UNH
It went when that stock went down, whatever it was, 140, and then 100, and then 20, and then 10, whatever. Mm-hmm. On day 3, no matter what you did, what's UNH doing today?
It's up $2 change. It was unchanged down small earlier.
Yeah. So on day 3 of that UNH trade, when the IV rank got to like almost 100, you could not lose money no matter what you did. Like whatever you sold, if you just sold naked puts, naked calls, calls and puts, iron condor, every single thing. But the whole key was waiting till the 3rd day.
Sure. The Sosnoff rule, of course.
Yeah. Well, I didn't have an axe to grind in there, so that one worked. But that was the, that was the whole trade in there. Wait till the 3rd day and then let them have it, Sparky.
Let them have it, Sparky. Sure. Yeah. I like it.
Tonight, outside of gold, that's really the only risk I have on, I feel like. I'm open to doing anything. I think the market's just going to be stuck in a I think we're in a decent, trading range. I thought this morning we had a chance to get towards 5,600. We didn't really get there. And then I thought that
and that 5,000 level held again. That's decent.
Oh yeah.
Mm-hmm.
No, 5,500.
Oh yeah, like 50, you knew
5,500.
Oh yeah.
You mean 5,500?
5,500. What did I say? 5,000? Yeah, 5,500. Yeah. I apologize. Yes.
Yeah. No. I thought they were going to get to 5,600, and then you could sell them. 5,500. I wasn't a buyer when they were down 50 today. That's for sure.
Gold volatility is hanging in there, Sadno. Since you mentioned
it is, but it's really hard to make money.
62. You got to get directional some fashion.
Okay, what direction do you want to take?
Yeah, I don't have one at this juncture. Sorry.
so I want to be short. So what do you mean I got to get directional? I'm already short.
My Taiwanese sources want to know what the gold silver ratio spread is, just to aggravate you.
No, I don't. Tell them to GFY. Tell your Taiwanese sources GFY.
Wow.
Hey, tell your Taiwanese sources to buck up and get a calculator and figure it out yourself. I will only quote that spread when it's coming down, not when it's going up. So if you want to figure it out, you can do it yourself. Okay, just divide silver into gold, and you'll know what the gold silver ratio is. It's not rocket science.
Oh my God, you're so good, Sosnoff. We really are.
Yeah, well, that's what they're getting from me.
You're good.
Yeah,
you're definitely good.
That's all you get. NASDAQ up on the day. I did not think. NASDAQ.
Who would have thunk?
I did not think. At one point, I thought they'd have a hard time, even staying under triple digits.
Right.
And so did everybody, by the way.
Yes.
I think they hooked a few. They hooked a few fish today.
I think they did. I think you did. You're right.
They almost got me, but I didn't bite because I was like, it looked like a trap. It was too slow. That's what I felt. But if you followed volatility today, you would have. You probably would have.
Today volatility helped you.
No, it hurt you because you would have rolled down if you were following volatility. Because no matter what, volatility stayed strong all day.
Well, signaling a little bit of weakness in the market, right? So you would have gotten that downside move. Was the point that I was.
Oh yeah. But what I'm saying is that when we went down, you would have rolled down because you wouldn't have thought we're coming back.
Sure,
there was no. Sure. If volatility had stayed heavy today, you would have thought there's a chance they could bounce back. But volatility stayed really, really weak all day, and I'm sorry, volatility stayed really, really strong all day. That's what I meant to say. It stayed really, really strong, and there was no indication they bounced back. And this is a hell of a bounce back. They just rally
65 handles.
Yeah, 65 handles almost.
Yeah.
And that's a big rally on an absolute nothing day.
Yeah.
So, yeah. So, anyway.
Pizza sharp stick in the eye.
Yeah, we got to figure out I gotta come with more bullets tomorrow. I need to figure out where I'm gonna.
How do you say it, Johnny-like lately? So yeah, you got to start firing also. You get complacent.
I'm not complacent. I just need to take some shots here. I don't know what to do. I'm searching.
Searching high and low.
You know, it's so funny. Like 2 days ago, I'm figuring. Let's see. Did I get out of Intel? Let me just see one thing. Intel. Yeah. No more Intel. But a couple of days ago, like last week, you know, Boeing's trading like 164, and I'm like thinking to myself, is this thing going back to 139? It's 182.
I know. Right. I know.
Yeah.
When you least expect it. I can't tell you about the supply chain and everything else. All the
I know. China's sending planes back, and Boeing's going up $20. Yeah. I know.
I mean, we all we do it too. We all get like, you know, sucked into the moment. If you could just take a step back for a second, sometimes.
No, you just can't read the news. You just cannot. Like, you can't, in the back of your head, you don't want to know that China's returning planes.
Right. You just want to trade. You just want to trade price. I mean,
you just want to trade. You just want to trade vol and price.
Yep.
Because all the other stuff is complete garbage. It has nothing to do with anything. It has nothing to do with what the future price is going to be. It's just chatter. It's just stupid ass chatter.
Yeah, totally agree.
Yeah. I mean, it's unbelievable.
Yep.
And we still get hooked in every once in a while with all this chatter.
Of course.
We should ban
big. Chatter.
We should ban fundamental chatter from the network. But then we'd have to kill. We'd have to kill the overtime team. We'd have to, like, they're waiting in the wing. We'd have to kill them. We just have to. We have to basically shoot them. You know, I mean, I don't know what we're gonna do.
Hey, if they gotta go, they gotta go.
Yeah, that's all right. Yeah, I think it's a good sacrifice. But I think we should kill all fundamental chatter. Like, if you say one more thing about, this is, I think it's got to be over.
Well, speaking of that fundamental chatter, let's talk to those gentlemen right now. Hello, gentlemen.
Here's the fundamental team. See, I like to get them all a little fired up. I like Dylan when he's mad, I'm
just going to save my job here.
There you go.
I'll risk mine. I'll tell you this. Okay. You can say whatever you want to say. You can do whatever you got to do. But at the end of the day, if there was not an underlying economic reality, if there was not an underlying business infrastructure, if there were not products, services, customers, and exchange of value, there would be nothing to trade. Okay? It doesn't even exist. Like, the entire existence of a trading universe, brokerages, clearing, fees, no fees, taxes, whatever, only exists by virtue of the beauty of the underlying delivery of goods and services exchanged among people in a large and small manner. And so maybe it is best for a trader not to pay attention to these underlying variables, which is to preempt the rebuttal, but to suggest that paying attention to these things. I'm paying attention to these things is quite bad, actually, for your short-term trading strategies. I do agree with that.
You're not going to disagree, obviously.
You just heard from a best-selling
I think
author.
it matters how you pay attention and what you pay attention to. If you're paying attention to the numbers, then you're paying attention to the wrong thing. But if you're not paying attention to how the price action responds to the numbers and what that says about the price action, well, Godspeed. But it just so happens that if you've been watching the economic data and the response to it, you've had a very good 2025 so far, because the price action told you how to read the numbers.
Okay. So I'm going to ask you a question. So a couple days ago, at the absolute bottom in Boeing, which you don't know it's going to be the bottom, okay?
Of course.
The news comes out that China's sending back. They're returning. They went back to the window at Costco, and they're returning their Boeing jets. Okay, that's the message. Here, take this jet back. I don't like it. The paint job's coming off. All right. I don't know how you think that how you can interpret that as
you can't.
Okay, that's my whole point. So then
No, you can't. But that's not what. So that's exactly the point that I think is so important here. You cannot look at these things as headlines and as numbers and think they mean something until you look at the price action's response and say, what did the price action do with this information? That's the important thing. If, for example, you get that kind of information and Boeing doesn't fall, that's a signal. That's a tradable thing.
Okay, so I have an idea. I have a solution to this, but Mr. Vecchio, do you want to chime in for a sec?
No, I'm going to keep my job. I'll let Ilya dig the hole.
We can't.
I can't help myself.
Yeah.
I know a losing trade, Dylan, when I see one. Okay.
Well, what's funny is that I think maybe we should just do so instead of news, we should just do sports because we all like sports. So we just do sports and then we trade. Like,
we do
think about that.
The Mets start in 13 minutes. I'm happy to do the Mets for the 4 to 5 o'clock hour.
You know, I didn't tell you guys a story because, I mean, Dylan knows this, but I don't know if you two guys know this. When we were first building Tasty, the game plan was Tony and I were going to sit, we weren't going to be on air. And we had 6 comedians that were going to tackle all these different topics because this is exactly what I thought back in 2010, 2011. We're going to hire 6 comedians from Second City and Improv Olympics, and they're going to talk about crazy stuff. And whatever they talk about, we're going to pull out like stupid words. We're just going to have keywords, and the keywords are going to generate trades. That was the original idea, like a crazy conversation about anything, because these guys didn't know anything about markets. And we're going to pull out keywords and make up trades around the keywords. And they're just going to tell fun stories. Well, it's not that that idea didn't work. It's that they didn't work together. But conceptually, because they didn't all like each other, and so it wasn't even funny. But conceptually, the whole idea of not doing financial news and just doing comedy, improv comedy, was the original concept behind Tasty.
And maybe Tasty's future is,
I mean, that would be fun.
Sports talk, sports Zoom, a sports talk network with mandatory
That's why we had to go
trading.
get Radigan, because I had to find, I had to go search the frickin' world to find, hey, wasn't there a guy on CNBC? I need somebody who can talk about markets, because the comedians didn't work.
So you're looking for the guy from CNBC and ESPN, and instead of Keith Olbermann, you ended up with Dylan Radigan?
Kind of, yeah.
Okay.
Yeah. And because he couldn't afford Stephen A. Smith.
Radigan was the best available, as they say.
I think that's pretty damn good for what it's worth.
He was the best player on the board. I mean,
given the options,
he was the best player available. He was yeah.
That was available.
Between Keith Olbermann and Dylan, I think we definitely lucked out.
I appreciate that. Thank you, Ilya. I agree. I believe you. I also believe you've lucked out.
And on that note, everybody gets to keep their jobs. Even the S&Ps are unchanged. NASDAQ's down 23. The Russell's up 7. The Dow's up 107. Sadnov.
Hey,
peace,
we are literally unchanged today. That's the first time we've had one of those markets in a while.
Nothing to see here. Nothing to see here. Peace.
All right, boys. Have a good one.
See ya.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
It's a relationship game, so I'm going to ask you each a question to your
Who
partner.
loves the hardest?
Yes, yes, yes. So are you ready? Who's more stubborn? Who's more public? And who do you think takes longer to get ready?
Oh. He's gonna do his hair.
Who's a better driver?
I mean, for sure.
Yeah.
Like I live in Italy. Like we drive like.
I drove a truck in New York City.
I drove a tractor on a farm. I can fly an airplane.
Who loves the Fed the most? Who is more spoiled?
It's not even close. Like you got buildings full of people. What do you want, Mr. Zosnoff? I have nothing.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Stocks unchanged? That's new. It's Monday, April 28th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan as we take you through the rest of this hour. Futures market closes for Monday in about 55 minutes. If you're on the platform on the website, tastylive.com, welcome. If you're on YouTube, tell us what you're trading, what you think of this. Join the chat over at youtube.com. What do we make of today, guys? Bonds are up a little bit, gold's up a little bit, the dollar's down. Looks kind of like a recession classic kind of day, Ilya. We have stocks which rally into the close, basically turning the corner at 1:30 Eastern time and rally the rest of the session. S&P comes in now down by 0.08%. NASDAQ up by 0.2, Russell up by 0.27, Dow up by 1.19. It's a pinned kind of Monday, which, I don't think we can call this a surprise here. This is a heavy week of event risk. Wednesday, GDP. We have the earnings reports from Apple, Amazon, Meta, etc. We have non-farm payrolls on Friday. So it feels like Monday, Tuesday this week are going to be a bit slower. We barely cross 1 million contracts traded in ES. Ilya, what do we make of this Monday action now that we've put the first day of the week in the books?
I think we're looking at what you and I were talking about a few hours back on Futures Power Hour, which is that we have a week, as you just said, that's loaded with event risk, and nobody's going to be particularly enthused about jumping in front of it and showing a ton of conviction until this stuff is out and people can sort of start to figure out just how close to global recession we are, because that's the data this week. Eurozone growth, Eurozone inflation, Chinese PMI, Australian CPI, U.S. GDP, and inflation and employment. Powell wanted hard data. Here we go. Fill your boots, as our friends across the Atlantic might say. All the data you might need from the world's top 3 economies that account for 58% of global GDP that would tell you if we are careening toward recession, as the markets have clearly been fearing since the let's call it mid-February, late February turn. All the confirmations on the board this week. So is anybody going to be particularly excited about jumping in front of that? Probably not. But we can see the dynamics here are, to your point, and as we said earlier, recession classic. Weaker dollar, lower rates. This feels like March. Early March.
Dylan, we come out of a weekend with myriad tariff headlines. We start the day with a major power outage in Europe. It seems like it's a day where you could get some movement, but there's really not much of any. What's the view from across the Atlantic right now as we sunset the month of April, an April that I don't think any of us will forget anytime soon?
Yeah, I mean, obviously the headline in Europe is a complete loss of power in Spain and Portugal, which is not relevant to the marketplace, but is, I think, a reminder of the vulnerability that all of us have to our dependence on wirelessness, broadbandness, and most assuredly electricity. And it's not that often that you get an entire couple of countries taken offline for at least a full day here. I mean, we'll see whether they can get this thing powered back up. It's already late in the day in this part of the world. The thought that I was having listening to you guys chat just out of the gate here is I do wonder, and again, probably more madman's delight kind of stuff, but whether the increased sort of stabilization in pricing and sort of contraction in volatility is a trading opportunity going into the second half of the week, basically long vol going into Wednesday, Thursday, Friday. One thought. And then the other thought is, this for sure, the second thought is more dramatic and, we'll see, but are we seeing a structural shift away from the US dollar on the margin? Obviously, yes. And is the beneficiary of that shift Bitcoin, which is its own absurdity, in my opinion. But, I think you have to respect Bitcoin's trading in April.
Ilya, you want to get the bearish remarks out of the way?
I mean, I think you look at Bitcoin and you see that it's behaving as you might expect with a weaker dollar. You go, okay, this makes sense. I don't think there is any kind of reasonable argument to be made for the dollar being displaced, but I think there is a very reasonable argument to be made for the dollar being weaker because there are gradients in between. Everything is done in dollars and nothing is done in dollars, and the dollar is just a regular currency. I don't think we're anywhere near a world where the dollar is just another currency. But I do think that if the latest numbers from the Bank of International Settlements put the dollar's share of monetary transactions at 88%, that's as of 2022. This year's numbers are not out yet from what I've seen. And they go on a 3-year cycle. So 2022 is the last update. This year's the next one. So let's say 88% is our baseline. It can go down to 78, 75. That would already be a very significant weakening of the U.S. dollar. That doesn't make it not the dominant currency, but it would lose market share. And the reason that it's not going to become the not dominant currency is because there's simply not liquidity and depth of assets that exists anywhere like it exists here.
I can agree with everything you're saying and still believe Bitcoin's going to go to 200,000 over the next year.
No, sure. And so for me, it's not so much a question of, Bitcoin is so great that it's going to be the next thing. It's just anything dollar denominated that's an anti-dollar has probably some room to go. That doesn't make me a buyer of Bitcoin.
Does it make you a buyer of euros or Canadian dollars or Australian dollars?
Euro and yen. It makes me a buyer of euro and yen. And I haven't been a buyer of euro and yen for about a week now, maybe? A little bit less. I got out of almost a week. I got out of my longs mid last week, sort of the last of them. I tried to explore on the long side of the dollar just to see if maybe just speculative rebound is something that's on the board. And I got out of it today because, frankly, the price action wasn't good enough, wasn't compelling enough, and I'm not going to get stuck in a trade I don't believe in, letting it breathe when it was always just a tactical idea and not anything that I have terrible conviction in. So I was a little bit short yen. I was a little bit short the Swiss franc as well on the spot side. I got out of those things with very little change today, and that's it. I'm looking to be short dollars structurally. I think that's a story for the next several years. Obviously, markets don't move in straight lines, so if there's an opportunity to buy a little dollar along the way, I'm not opposed to it. But I think structurally, yeah, I mean, you could see Bitcoin run along with every other anti-dollar. But why you would buy Bitcoin and not euro in that environment, I'm not sure.
Mm-hmm.
Because if Dylan thinks that if Bitcoin's going from 95 to 200K, I don't think anyone's saying that the euro is going to go from like 115 to 230 in that same time.
Leverage exists.
Leverage also exists in crypto.
Yes. But I mean that is a delight that is too madmanish for me.
Dylan, I think you make a great point here. I mean, if you're a country, right, and you have all these excess dollars floating into the system over time, if you foresee reduced trade moving forward, are you more or less likely to recycle those US dollars earned through trade back into dollar denominated assets, or maybe do something else with them? And I think at the margin right now, the point that you're making is that you're more likely to do something else with them, including allocate into something like Bitcoin. There was a point several years ago where, this isn't a perfect analogy, but you would see companies that were allowing cryptocurrency to be used, like Overstock.com. They would take payment in Bitcoin, and then they would immediately transact and exchange it back to US dollars. So they weren't holding Bitcoin on their balance sheet. They were effectively using it as a payments facilitation system. I don't want to say that's the same thing that's probably happening with the dollar right now in global trade, but I would gander that at the margin, for every dollar received right now, not every dollar is being recycled back, or not even 50 cents is being recycled back into treasuries, into the greenback, into U.S. stocks. It's moving into other things. Because if you just think that the U.S. is going to pull back and not trade with you anymore, then why hold the stuff? But you still got to put it somewhere. And so you get your dollars received and you immediately put it into something else. It could be local equities. It could be local bonds. It could be Bitcoin. It could be yada, yada, yada. I think Bitcoin is, Dylan, you're right. Remarkable move this month so far. 13% or so in April, month to date, a month when stocks are still down 2% or so, depending upon where you look. Really sticks its head out and emerges as a winner alongside gold. And today, stocks are down. Bitcoin's trading sideways-ish. It's not really giving up the gains overall. This still looks very constructive to me technically. And then fundamentally, we can make up whatever fundamental story that we want, but right now it feels like it's got that narrative flexibility again, which is so important for anything to run for a long time.
Yeah. I mean, I don't see any reason to look at this Bitcoin chart and say that it's not going higher, other than it's at the underside of its range from let's call it early December through late February going into March. It's not exactly the same waypoints as you have in S&P, as you have in NASDAQ, but it's a very similar structure. In fact, it's almost long-end bonds-like. And that's a very similar structure. And so, to the extent that this is, again, some sort of reflection of risk sentiment, because that's been a fuzzy kind of link recently, but so have a lot of cross-market relationships. This doesn't look terribly different from the correction you see in Russell, S&P, NASDAQ, ZN, ZT, ZB. A lot of these things are in correction mode after a breakdown. ZN probably looks the most constructive out of all of them. But ZT looks this way, ZB looks this way, NASDAQ looks this way. All the major stock indexes look this way.
Dylan, you seem to think that Bitcoin has a better role here to play, though. Do you mind expanding upon that?
No, I mean, I was just reflecting on April in general, and the two things that occurred to me was, obviously it was sort of I think this will go years now, where people look back to April 1st, 2025 as the peak of dollar strength, maybe forever. That the dollar will be a weaker currency for the rest of time, and it will be this one possibility. Another possibility would be that it's certainly going to be a weaker currency relative, even if it's still the reserve currency, obviously, but it'll be a weaker currency for as long as Donald Trump is a president. At the shortest for the Trump presidency, and at the longest, forever as a structurally weaker currency relative to its strength of the past few years. Which leads me everywhere from Bitcoin to euros to Aussie to yen. And then the other thing was just the contraction in volatility at the end of the month with this unchanged day and some of the sort of normalization of things last week, considering that who the government of the United States is. It seems like there may be opportunities to get long volatility when it comes in like this, which I know is not very tasty trade, but there's all these leveraged long volatility items. And as sure as the volatility predictably contracts, you can see obviously this chart is a classic example of the millions of examples of this. I would argue that in the Trump regime, volatility will always have explosive days as well. And so the two things that I was reflecting on were non-dollar but dollar-related assets, meaning other foreign currencies and Bitcoin as being interesting from the long side, and then also just I still believe that what the Trump administration says and does is very relevant to the financial markets, despite everybody getting a bit more comfortable with it. And that when things are wild and woolly and out of control, that there's likely going to be a walk back. And then when things are apparently calm and normal, that there's going to be something explosive. And so it was just causing me to reflect on the possibility of something explosive, compounded by the fact that you're going to have a jobs number and you're going to have a GDP. Now, you have Wednesday, Thursday, Friday with you have a bunch of earnings. You're going to have Apple's going to say terrible things about the tariffs and this and that. And so I just think there's a lot of opportunity for expanded volatility on Wednesday, Thursday, Friday.
You mentioned the Apple and the tariffs. There was a report over the weekend that the Chinese government is making it very difficult for them to move product out of China into India. So even if they want to change where they're going to produce their iPhones, they're not being allowed to.
Or at least it'll be a very slow process. What does that mean, not being allowed to?
Typically, when Apple, again, reports over the weekend, Apple takes about 4 days historically to get approval from the Chinese government to move incomplete manufactured goods out of China into foreign countries to finish the process. And the delays now, the Chinese government has slapped 4-month delays onto the export of these unfinished iPhones to India. So, they haven't banned it, but in effect, if the transit time goes from 4 days to 4 months, it's not happening. So, looks like China's holding Apple hostage, which makes sense if you think about the monthly performance here. Apple is one of the worst performing stocks over the past month, down 6.15%. Amazon's down 6.8%. Nvidia's down 2.5%. What stands out? Walmart's up 11.2%. Tesla's up 4.67%. Netflix is up 13.7%. Utilities doing well. Consumer staples like Philip Morris, Coca-Cola, they're riding out the storm.
Well, and to your point, Chris, as we're talking about the dollar in China and India, right? The chatter over, let's call it the past 6 months, has been, the BRICS are coming for the dollar's crown. Not if China is undermining India's economy.
No, not if China's undermining India's economy. I think you guys bring up a really good point about the dollar being structurally weaker. Forget the ticker here. If this was a chart of anything, right, and we had just seen a rally back up towards swing lows that we had last year, that immediately turning lower and losing momentum again, right? Back below the 1 week moving average. There's nothing to buy here. Catching a falling knife. Maybe a nice little bounce, but this looks like it's something in a downtrend now, and the downtrend hasn't been broken. I mean, the currency markets today, maybe it's just dollar weakness because bond yields are down across the curve. Dylan, now that in hindsight we've seen the month of April play out, are we correct in thinking that the administration's pain threshold is in the bond market, not in stocks? Can we rest on our laurels moving forward as opposed to having that as a theory we run with?
Yeah, I mean, I think that a few certainties stand out. One, a recession is coming, and the stock market is behaving like a recession, a stock market anticipating recession. Two, the dollars will be weak for the foreseeable future. And three, that the bond market is the only financial market that the U.S. government, that the U.S. Executive branch of the U.S. government is responsive to. They don't that causing a recession is not something that they care about. They're proud of it almost, and crushing the U.S. dollar globally in a massive, wealth destruction for all the dollar holders around the world. Also, not a concern for the executive branch of the U.S. government, but interest rates clearly are. And so, I mean, but that's why this week gets interesting with all these different numbers, because obviously, it's reasonable to think that the Trump administration was of the opinion that we'll do these tariffs. The tariffs will cause a recession. We will get a weaker dollar, which we want, and rates will come down. And then we will begin to rebuild a massive, powerful domestic economy supported by tariff revenue. I believe that there are people, including the president, who believe that is what is happening right now. And the issue in the short term has been the failure of rates to come down, thus all the saber rattling with Powell and all the rest of it.
Mm-hmm.
I mean, there's a bunch of issues, in my opinion, with that expectation. But that my opinion, is irrelevant to that. In terms of the market, the only market that the executive branch cares about is the rate markets. They'll destroy the stock market. They'll destroy the dollar. They'll cripple the ports. They'll cripple everything, but they don't want to take the rates down. Or they don't want rates. I'm saying they don't want to. They're afraid of rates that are too high, and they will act to try to mitigate that.
So the goal is to burn down the house to cook the steak. Dylan?
That's what it looks like.
Is that a lesson learned here? Like we're now basically, tomorrow is 4 weeks since, Wednesday will be 4 weeks from Liberation Day. Dylan, I mean, what's the biggest lesson learned here to build on that? Is it the administration's pain point in the bond market, or is there some grand boy who cried wolf story throughout all this? Or maybe Trump really is the tariff man. What's the lesson here?
I mean, the lesson is that the U.S. administration will go as far as the bond market will let them. They'll be as aggressive with their tariffs and their recession and their efforts to create an economic slowdown and their efforts to weaken the dollar. And in their efforts to create economic pain and distress are a source of pleasure for them, up to the point where rates stop them. I would say that is the lesson from April.
Ilya, what's your lesson from April?
I mean, I would agree. I think what it seems like we had was in late February-ish, the market started to see terrible business confidence and consumer confidence data. And of course, you can pin it to the day, February 21st, those PMI numbers come out and scare everybody half to death because they show that before even any of the tariffs are really implemented, the rollout and the chaos is getting businesses to say, listen, I don't know what's going on. The fog is too thick. The dust hasn't settled. I'm just not going to lay out new capital. I'm going to back up. And this is basically setting the economy back to standstill. And by the way, we're expecting to see essentially a flat GDP result this week that would sort of speak to that. A rise of 0.4%. So the economy basically didn't do anything in the first quarter.
No.
So that would be the hard data confirmation of what the PMIs have been yelling about. And then what you have then from really the beginning of the year, but most acutely sort of mid-February, late February onward, is this idea going all the way into March that this is just a recession. So yields come down, dollar comes down, stocks come down. It's all very classic. And then in April, what you have is this episode of, wait, we might have to burn down the global financial order as a consequence of all of this. And things start to break down, and you get bonds and stocks and dollars selling off at the same time. Risk premia, and in particular term premia in bonds, go completely through the roof because people don't want to pay for duration, or if they are paying for duration, it's a lot more because of lots of uncertainty. And I think what we've learned, to Dylan's point, through April is we're not looking to self-immolate here. Because every time you get to that level of, oh my God, the administration seems to back up a little. And I think that's really all of what the market is finding confidence in. That there is, in fact, an amount of market discipline that works. At least for now.
We just had to go through some price discovery to find it.
Yes. And the administration had to go through some price discovery to find it, because apparently they were not aware that if you create chaos, the cost of borrowing won't go down, it'll go up. And the reason it will go up is because people are afraid of what will happen next. So if they're going to lend somebody money and they don't know whether they'll get it back, they're going to want a higher interest rate for the possibility that they won't get it back. I mean, this is sort of like a college student with no job walking into an auto dealership and going, I would like to buy a $100,000 fully loaded Mercedes. And they're going to tell you, okay, but since you don't have a job and since you're probably going to default on this auto loan, we're going to charge you through the nose. That's what happens when there is uncertainty about repayment to the cost of borrowing. And it looks like over the course of April, they kind of went, oh, yeah, that's how that works. Okay. You'd think they would know. You'd think the presence of people like Howard Lutnick and Scott Bessent would mean that these are kind of high school level realizations that people might have had. But I say high school because that's around the time when most of us wanted to buy a car and got our driver's license and said, how does this work again? So it's not shocking information, but they seem to have discovered it. And they seem to have figured out, oh, if we create chaos, rates go the other way, not the way we want. And as they've pulled back, the markets have rewarded them with somewhat lower rates, somewhat higher stocks. But forget the stocks, it's the rates, to your point. And so maybe we've established something here. But what that means is that we're just going into regular recession. And that's sort of what I've been waiting for. Weaker dollar, higher bonds, lower stocks, just a cyclical adjustment to where valuations are.
I think you guys both capture my view well. Like there was, we just went through some price discovery. The market's now figured out. There's a pain point. We know that the administration cares. There's a few days there where you get those comments from Trump and from Bessent. Like, we don't care about stock prices. Stock market? What's a stock market? Haven't looked at it. Barely know her. And you get like, oh gosh, the people who have their hands on the economic levers don't care about this whatsoever. Why on earth would I be long it right now? If it goes down, it's not going to bother them. And then we establish that clearly there's a level of botheredness within the system that just can't be tolerated. So that sets up for an interesting May. The month of May, they usually say sell in May and go away. That's not the case. It's usually sell in May and buy through July. That people want you to sell in May and go away because the market keeps going up. So they want you to sell them your stocks so that they can have them during the market uptrend. That's not necessarily the case in bear market years. Sell in May and go away actually is a pretty good adage in bear market years, and this year's shaping up to be more of a bear than anything else. Guys, we look at the sector performance here today as we turn through the halfway mark of this overtime. It's not a good mix, even as the markets kind of squeak out unchanged here. Top performer is GDX, gold miners. Telecom up 1.23%. Biotech, that's nice. On the other end, technology, consumer discretionary, they both underperform. Retail, XRT underperforms as well. Dylan, I can't help but notice that a big part of this move that we're seeing in discretionary is being fueled by Tesla, which after their miserable earnings report last week has a company back up to 285. So share prices have skyrocketed here, up another, $60? Not too bad among friends if you can get it. Is this just?
Obviously the market believes. I think the market believes that was as bad as it can get. I think part of the reason why they believe it is because I think that there's an expectation that Musk is going to be moving away. That Musk already has substantially reduced his visibility as it relates to the American government compared to where it was 50 days ago or 30 days ago. And I think there's an expectation that he will go away almost, he will significantly reduce his role in the government more, all of which will be good for Tesla. If only to diminish the massive brand damage that his involvement with the government has done to this company.
He said he's only taken a small step back from his role in the government, 1 to 2 days now instead of 7 days a week.
But he was on the cover of the newspaper every day for 2 months, like a lunatic. And, that's no longer the case.
So it's just the fact that his actions or
optics.
It's just the optics. Okay. So it's the optics. Now that the optics
he can do whatever he wants in private, obviously he will. But being the face of the American government and being a global celebrity as the first buddy, it might have been fun for him for a minute there, but I think it was super damaging. I know it was super damaging to Tesla as a brand. And I would suggest that this price action in Tesla stock price ties directly to massive reduction in Musk visibility as it relates to the government.
It's not like BYD or the Chinese electric revolution is slowing down. That's obviously picking up, and looks like China and the EU are talking about allowing BYD cars to come into the European market tariff-free. That will kill whatever's left over of the European auto industry for what it's worth. There was an interesting headline released over the weekend. Did you see that new car that Amazon's putting out, Dylan? The Slate truck?
The Slate pickup. Pretty cool. I kind of like it.
It looks pretty cool. I kind of liked it too.
The SUV version kind of looks like a mini Land Rover, if you will.
Well, just the fact that there's
smaller, like a GMC Jimmy or something like this.
But there's 220. It's like there's something like 220 iterations of that thing.
Yeah.
And that's pretty cool. And then it sort of looks like basically some version of an electric Ford Ranger from back in the day.
Yeah.
And it's cheap, and it probably goes with the wind because these electric cars fly all over the place. And I would say it's a coming of age for the industry, meaning the EV industry. for that thing to pop up. I think that car is going to be popular as hell.
I think it looks very, very nice. I think I love the minimalism of it. It is fully leaning into, we are the anti-Tesla. We are not going to slap you a crazy screen that self-updates and is basically the iPhone of cars. There's going to be nothing. Screen. There's not going to be a stereo in this thing. Bring your own.
And it's got
Bluetooth
and it's
speaker.
manual roll down windows. I mean, it's like it's like a throw. But again, you can do 220 things.
But there's a gazillion options. Yeah. All of it is a la carte, and I think that's nice. I mean, that makes sense.
But I don't think it's bad for Tesla stock.
I think it's a different audience.
Can I give you a different conspiracy?
Sure.
Slate, SLATE, can be rearranged into the word Tesla. What if what if this is actually one of like a spin-off from one of Musk's things? I know it's Bezos backed, but testing to see if his name brand is really that toxic. Like, could they launch an EV? Could a Musk-backed EV launch?
You're saying could a Ghost launch without Musk? You launch a Nuco, hide Elon, and take over. So I love the conspiracy. I like the conspiracy.
I'm only thinking of that because I remember a few years ago there were a few of these food apps where instead of it being like DoorDash and you order from a specific restaurant, it was like a special restaurant app where they rented out a kitchen for all different chefs to cook in, and depending upon who was there that night, their food options would be on the menu. And so like it was all very local, right? So like the New York City version of the app, they only took like 100 orders of each dish a night, and it changed every single night. What it turned out was that there were several like pizza companies, like Domino's, for example, and Pizza Hut, that were setting up like fake pizza places, and they were just basically selling pizza under these third-party names that you were going onto these apps and buying things like, oh, Pepe's Pizza.
Or the Chinese are famous for setting up factories in Vietnam and Malaysia and selling things as being from Vietnam and Malaysia to bypass Chinese export restrictions.
I just find it fascinating that if, we get this Slate announcement last week and, what do we see here?
Musk is hiding in the cap table over at Slate Auto somewhere?
I think that'd be a brilliant play. I mean, Slate literally rearranged as Tesla.
So, I mean, unless this is Bezos trolling him. I mean, they compete on everything.
That is also possible. But it's, the blank slate, it being a good idea. You said there's 220 iterations. I'm certainly interested in seeing how that plays out. It kind of looks like the perfect car to take to Home Depot on the weekend. Honestly,
yeah.
150 miles.
I was looking at this and thinking, like, in enough time, my kids are going to need their first car. Not getting him a Tesla, but I might get him one of these.
And easy to buy.
Yeah.
It's not $100,000 decision.
No, base options like $20,000.
Yeah, my kid's getting a bike. And like as in like a bicycle, not like a motorcycle. XRT here today, likewise up. Amazon up a little bit. We're starting to see, slowly trying to turn the corner with some momentum here and some of these beaten down names. MACD finally getting into that positive territory again here. Stochastics back in an overbought territory for the first time since late January. Not hallmarks of a down market right now, so maybe the worst has passed. Typically, even bear market rallies, you'll get rebounds in indicators, but you'll never get back above the signal line. You'll never get back to overbought. Bull markets stay overbought, bear markets stay oversold, yada yada. So there's some evidence here that maybe the worst is over. We know that there's a pain point. The administration is responsive to something in the market.
Well, yeah, I mean, I think that's really the question, is what's that worst thing that's over? Is it the recession that's coming? No, that's very much not over, clearly. And I think the markets are going to find out all about that in the data that we see this week. But the idea that the empire will self-immolate, that is perhaps over.
Instead of self-immolating, it's what? Slowly boiling itself alive? You mentioned recession, though, and I think this is worth discussing. And I know this was a popular topic on FinTwit over the weekend. Apollo has their new chart book out. Let's just go through. Yeah, they talk
echoes
about
very much what we've been talking about here.
They lay out the timeline for the how a recession could hit, which I thought was a pretty clear visual of how this would all work out. This is from Torsten Slock. April 2nd is when we have the tariffs. Early May to mid-May, container ships to U.S. ports come to a stop. Ilya, today on Futures Power Hour, we talked about the data that I saw over the weekend from the logistics tracking company Port Optimizer, which showed that bookings for the week of May 4th through the 10th, 4, 5, 6, 7, 8, 9, 10, shipments from China are down, tracking 44% down year over year. And so if that's coming May 4th through 10th is when we start to see the bite of the lack of freighters on the ocean impact our ports, then you see 1 to 10 days of truck and real-time transits to cities where this is actually filtering through. So mid to late May is when the demand for trucking starts to come to a halt. And so it's late May and early June when you start to see empty shelves and lower sales. And that's when the layoffs in trucking and retail begin to accelerate, which brings you into the summer recession.
Sometimes.
Why is that the case? We've talked about all these charts individually. Torsten Slock and the Apollo team put them all in one place. You see that revisions for earnings dropping worse since COVID, excuse me. You see new orders dropping worse since COVID. We see corporate capex plans dropping worse since COVID. We see price pressures rising fastest since the start of 2023. I mean, everything, no matter where you look. Prices paid for inventories. Everything going in the wrong direction. Truck sales down. CEO confidence literally worse than it was during COVID. Recession
you don't
seems
have
guaranteed.
to go far.
Recession seems guaranteed.
Exactly. I mean, you don't really see.
I agree with that. Do you think the stock market currently, as it is priced, reflects the certainty of a recession this year? We're already in a recession, as far as I'm concerned. I mean, because as we all know, recessions are all, you find out when they're over. But I mean, as far as I can tell, there's a total retraction of consumption of both products and services right now.
So, Chris, I think if you scroll to the bottom of this chart deck, what the team here does is it creates this matrix and says that, oh, no recession, but stagflation. And the way that they arrive at this is they look at things like the University of Michigan Consumer Confidence Survey, the Conference Board's Consumer Confidence Survey, and they note that consumer inflation expectations are surging. I actually think that's wrong, because those are surveys of consumers, and yes, consumers are rightly pointing this out, but if you look at the market implication, break-even rates are falling. So the markets are already looking through the shock that the consumer confidence and business confidence survey numbers are showing you. I'm not saying the surveys are wrong. They're not. It's just the markets have already arrived at this idea. They've priced it in. The next thing is, what does it mean for demand? And if you look at the dropping break-even rates, you already arrive at the idea that all of this is going to be a downturn, and that all of this is going to be recession, and that the drop in demand will overwhelm whatever price adjustment there is from the tariffs on the upside and actually give you disinflation. They're already looking a step forward. So I think we're actually likelier to be in the lower quadrant here, the recession one. S&P down, rates down. And that's what we're setting up for, and that's perhaps what is the non-public part of this. That part of it is perhaps yet to be priced in, because look at where the bonds are. They're still down. They're still flirting with the underside of a range they broke this month. So if you want to look at where the opportunity is, I mean, we're obviously not Goldilocks. We're obviously not overheating in this matrix. I mean, that's obvious. That's clear. But if you want to look at which part of the story isn't priced in, it's lower rates, probably, and it's weaker dollar, probably.
For those that haven't had a chance to go through all those charts, if you're not doing it individually, just to give a brief summary here, confidence among consumers has reached unprecedented lows with significant declines across income groups. You see that there is pre-purchase behavior accelerating. Consumers and businesses are front-loading ahead of anticipated price increases, which, I did that. I remember being shy for buying all that furniture in January by one Tony Batista. Feel pretty good about that now. You see corporate responses, earnings outlook, expectations are going downward, new orders are falling, CapEx plans are being reduced, businesses are increasing inventories of anticipation of higher costs. You see that the logistics manager index indicates a significant decline, indicating a disruption in supply chains. The container departures from China to the U.S. are slowing down. There are shipping delays. There's potential trucking and retail impact up front without any knock-on effects from there. So I don't know, guys. The stock market bounce is nice and all, but stocks don't like the Fed cutting for recession reasons.
No, they
constantly
don't.
Tapping the sign. Dylan, it feels like there is. It feels like there's going to be a wake-up call in a few weeks. We may be like ticking on a clock here, where if we're going to get deals done, we have a few weeks to get the deals done before the pain really sets in. A week or two of some shells being a little sparse won't raise any eyebrows. A month, 2 months, going into the summer with shells that are sparse, that's not going to fly, Dylan. So it feels like there's also a stock optimism that's in play here, which is to say that
that basically it'll be the worst case scenario, i.e., empty shelves and total, chaos in terms of the consumer supply chain is not on the table with these at the current financial levels.
The stock market's making a bet that the shelves will not be empty for long if they're empty at all.
And that the recession will be mild if there's a recession at all.
It'll be mild because deals are coming, which Fox Business News posted a story a few minutes ago saying that the Trump administration has 18 variations of deals in hand from 18 different countries, including Japan, South Korea, the EU. We'll see if that's actually going to play out anytime soon. Again, it takes about 16 months, depending upon the trade deal or adjustment to a trade deal, to get anything done. So the fact that these are trying to be
best case
accomplished in 90 days is truly, a momentous effort. It doesn't matter who's in office. Trump, Biden, the skeleton of Ronald Reagan. It's just these things just take time. So we find ourselves in a holding pattern, at least today and tomorrow, guys. Ilya, when you and I spoke on Futures Power Hour today, we were speaking of the potential for it to be a quiet start to the week, given the fact that Wednesday is when you get GDP, you get your earnings results, the big ones starting to come out. For those that haven't looked at the calendar yet, Microsoft, Meta, and Qualcomm are all after hours Wednesday afternoon, so we'll be covering them here live on Overtime. Thursday, you're going to have Apple and Amazon after hours as well, and then Friday, you have the smattering of the energy companies in the morning. Wednesday, GDP, Friday, non-farm payrolls. So this is a big week. This is a week where if the administration were to allow for it to happen, the market would have earnest price discovery around these recession odds. Ilya, the two things in the macro data that actually point to that, GDP is expected to come in at 0.4%, only 0.4%, according to the Bloomberg consensus forecast. When we take a look at our Atlanta Fed GDP Now growth tracker, it's currently sitting at minus 2.5. If we wanted to be a little bit more generous and look at something like the New York Fed Nowcast, that's sitting at something like 2.63%. I'll hold it up here on the screen. Split the baby, you're looking at basically flat growth. Flat growth and a bad non-farm payrolls print. It might just be enough for the Fed to start talking about cutting rates soon, although I would imagine that it's going to be difficult for them to do so because once we get a bad GDP report or bad payrolls, Trump's going to be demanding that Powell cuts rates, which of course boxes him into not cutting rates.
Right.
So what do we do this week? What's the plan this week?
I think it's pretty straightforward. I think if you're looking for the recession thing to happen, you're looking at stocks here, you're seeing them basically at critical resistance. They are back to where they started the month of April, when we went from just recession to hair on fire. Hair on fire seems to be not the way that we're going, because apparently the administration does have a pain point and is responsive to it. Okay, so back to regular recession. That means the rebound in stocks probably, or at least plausibly, has run out of steam. Because we bounced because the empire will not be imploded from within. Okay, but we're still back to that recession story that was there before then, February and March. So we begin an orderly descent. Bonds break higher. Dollar, we'll see. Depending on how violent the move in stocks is, if the dollar suddenly regains its haven bid, that would be curious. But I don't have as strong of a conviction level on the dollar here. I want to be short ultimately, but I don't think there's anything actionable here at the moment. And as I said earlier, my tactical log I've jettisoned because the price action just didn't show up. So with that, I think the most opportune point on the board is to be small, to be risk defined, and to look for lower stocks and higher bonds. And actually, if you're not in either of those, stocks are probably the better bet here, because they're right up against resistance. And if you're going short, that risk reward is better. Whereas bonds are up against resistance, but you're thinking about them, at least in this framework, as going higher. So maybe the risk reward on the bonds is now not great. I've been long the bonds for a while. I'm not getting out, but I'm also not adding. And I obviously just got short stocks across the board last week, basically expecting these levels to hold, or at least to trade for the possibility that they do, because the risk reward is attractive. If you're wrong fast, and you get out. And if you're right, then you get another run.
Dylan, what's your plan for this week? I know that you're hoping for something perhaps in oil to sell, as one is wont to do.
Yeah, I'm short that one too.
What do you do here before all the earnings, Dylan? What's your point of interest?
Yeah, I think you have to be long recession, and I think you have to expect the earnings, even if the earnings situation is not that bad, and even if the tariff situation is not that bad. It just feels like the incentive for the CEOs in the comments, whether it's in conference calls or written documents, is to be very pessimistic as a way to apply pressure to the Trump administration. You know, if you're the CEO of Apple or any of these big companies, and you're going to communicate with Wall Street, I just don't see how your message wouldn't even maybe be distorted and say, listen, we are gravely concerned about the situation. And we, I'm not saying everybody's going to withdraw guidance the way Southwest Airlines did, but it's not a bad idea. If you're on the CEO side of a quarterly earnings call with this administration and this kind of an economy, what's your incentive to say anything that's not cautionary?
I don't think you have any incentive yet.
No, even if the activity's pretty good, your rhetoric's going to be, I don't know.
Woe is me. Sure.
Yeah.
Well, Dylan, is it what's the best day of the week to release bad news, and what time of day?
Friday, 6 p.m., 7 p.m.
This is the proverbial Friday, 6 p.m. earnings call, right? If you have bad news right now in the market, you saw something bad happening with your company a few months ago, and you're like, oh gosh, like this is going to be bad blame it on the tariffs.
That's what I'm saying.
Just get everything bad out now. You got to do a restructuring, and you were considering whether or not to do it. You do it now, you blame the tariffs. That's the incentive for management. Hey folks, this is outside of our control. We're doing the best of a job we can. It's not our fault the business is suffering. It's this guy's fault. So
he did it.
We'll fire people. We'll keep our jobs. You'll give us more time because we have to deal with what this guy did to the company. It's not our fault for mismanaging things. That's the cleanest play right now. get all the skeletons out while you can. Make your downgrades now.
I mean, and also look at how Tesla just did it. Tesla just said, you thought our numbers were going to be bad? They were even worse. They were
worse.
They were horrendous.
Yes.
And the market was like, okay, no problem. We got it. And I think that will be a theme through all these earnings phone calls, if not through the numbers. And all the to the degree to which there's forward guidance, it will be pessimistic guidance.
Yeah. Well, as we wrap this up, I do want to point out here, and I'm going to say perhaps the most unpopular thing I've ever said here on camera. I saw that someone tagged me that a piece of legislation, the Preventing Elected Leaders from Owning Securities and Investments Act, for lack of a better phrase, the Pelosi Act, was reintroduced into Congress. You know what the easiest way to get officials from stop trading stocks besides banning it? You know, why do people feel the need to do this besides obviously human greed? In part because Congress people just aren't paid a lot of money. I can't believe I just said that. Yes, they make $174,000 a year, but that salary hasn't gone up since 2009. That's equivalent to making $112,000 this year, or $115,000 or so in 2009 dollars to this day. So like we have a system where Congress people, we want our best and brightest there, and people are turning to corruption to make enough money. So yeah, I would just chain people's salaries to CPI, so it's automatically adjusts. They don't vote on their own salaries, right? They don't feel the need to trade these things. Hopefully it passes, right, Dylan? I think the best thing for America, like if you become an elected official, put all your assets in a blind trust. 60% SPY, 40% TLT. The only way that you make money is if the country has stable fiscal standing and long-term growth prospects. So if your SPY and TLT holdings are doing well, it must mean that you're promoting policy that's long-term growth accretive. I don't know. This whole thing is
Seems
just
to make sense.
I mean, we have to find some better way to do this where we have people who are the gatekeepers who have access to inside information who are acting on it and well outperforming the market. That's offensive. And yet, I don't know. We have ourselves in a situation where ultimately if you get elected to Congress, it's generational wealth right now. That needs to be solved. You shouldn't be getting into public office and making money. The whole point of public service is to serve the public. That's what the public
and that was never the intent.
Serves you ever. But you know what? We're out of time.
Term limits might be nice too. While we're at it.
These people aren't going to do that. Overtime is out of time for this Monday, April 28th. We'll be back tomorrow, same time, same place, 4 p.m. Eastern, 3 Central, right after last call. So for Ilya Spivak in San Francisco, Dylan Radigan in Milan, Ben Chris Vecchio in New York, good luck trading. We're taking a brief break here. Up next on Tasty Live, Macro Money with Ilya Spivak.
See you there, everybody.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven. What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
So I started trading in the equities market when I was 18. Real basic ETFs, mutual funds. I didn't discover options and really tastylive until about 2012. It made sense to me from a risk perspective. And so I started trading and never really have looked back. The people you see that's who they are. They're trying to be as open and clear as they can with the trades that they're putting on. Teaching a methodology, by teaching the logic behind things. It is tried, true, and tested. They back it up with research. They share that research. It's not just trust us and do this, which is a very dangerous thing in the financial world. But learning about that in the Tasty universe, it starts to prove itself out, right? When you follow the methodology, you'll see those profits and you'll understand why a position did what it did. Sometimes the market wins and sometimes you have a 90% winner and you don't know, why don't I do this every day, right? This is easy. But you kind of have to reset that and just go, okay, close the trade and move on to the next one, which is really what Tasty's about.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Markets idle on what is the beginning of a month-end process here for financial markets. First week back after last week's would-be improvement. And we face now the decision time. Obviously, last week was a little bit more palatable for the markets than was most of this month. But this week, we are going to test whether that little break and that little ray of maybe sunshine is lasting or fleeting. And that is because an absolute avalanche of macro risk faces investors this week. I'm Ilya Spivak, head of Global Macro here at Tasty Live. This is Macro Money, and we're going to go through all of it. There is quite a bit, but it does seem to follow a bit of a story here, because what we are, as ever, looking at is the idea that the world is able to digest all kinds of things as long as there's growth. You can write off all manner of volatility provided there's money to be made tomorrow, as it were, whether you're a business or a consumer or an investor. But if there's no growth, that's a hit to demand, it's a hit to employment, well, then bad news hits different, as it were. And so the question we're going to ask increasingly this week is, are we already in a place where growth has hit the wall? We'll start the conversation with a look at what the markets did last week and posit why perhaps they did it. And from there, see what it is that is so critical this week that might get everyone back up in arms. Here's the performance across the key asset classes last week. We can see stocks manage a rebound here, and a pretty decent one at that. S&P 500 up 4.5%, NASDAQ up 6.3%. That's pretty impressive vigor there. The story in the bond market reflecting perhaps the easing concern around what looked in April like a sort of sell America dynamic, where U.S. stocks, U.S. bonds, and the U.S. dollar were all falling in tandem. There seems to be a bit of an unclenching here. The 10-year down 1.8%, the 2-year down 1.2%. That's not because the Fed got any more dovish. That's because of the term premium surge that was the hallmark of April seemed to have eased a little bit going into last week. There seemed to be a sort of peak in a level of uncertainty around this idea that we are heading into some sort of a sovereign crisis in the U.S. That, of course, was a very palpable sort of concern. It's how we ended up with bonds crashing and yields surging, even as stocks went down and the dollar weakened. That would normally be the kind of environment where you might think, oh, well, the Fed's going to come cut rates. There'll be firefighting. But no, that was not how that worked out. And ostensibly the reason is because the markets were so convinced that uncertainty downwind is elevated that they built up the highest compensation for duration risk into 10-year treasuries since the middle of 2021. That, of course, drove yields sharply higher. So last week's give back seems to speak more to this idea that maybe we're unclenching a little bit around that kind of risk. That helps to explain how you get yields coming in, bonds coming up. You don't get that kind of a response in crude oil. It continues to march to the beat of its own drum. But gold a little bit lower. The dollar stops falling, if not outright rallying against the euro, but it does manage to score a little bit of a gain against the yen, which comes in about 0.9%. The risk-on vibes certainly carry over into Bitcoin. It has a very sharp rally of 13%. So as you look at all of this, you get the sense that perhaps that kind of hair on fire sovereign risk in the economy shepherding the world's reserve currency, that kind of concern has ebbed. And it seems like it has ebbed perhaps because the administration, on two separate occasions, once the 10-year yield got to levels they were uncomfortable with, around 4.5%, seemed to walk away from the brink. First with the sort of softening of the rollout of reciprocal tariffs, saying there's a 90-day stay of execution on tariffs above 10%. That, of course, is something that the markets greeted as a welcome kind of thing, not necessarily because it's so good economically. It's not. And that's because when you have an average tariff of 2% and you go to 10, you've increased taxes on imported goods fivefold, as it were. And so that's obviously going to hit consumers, and surging inflation expectations amongst those consumers speak to their realization of what's about to occur and what's coming downwind. But that the administration seemed responsive to an emerging crisis in the bond market and acted accordingly suggested that there is, in fact, a reaction function to market discipline, and that was encouraging. There was a similar instance then again with the on-again, off-again firing of Chair Powell. The president seemed to signal that that's not an avenue that he's going to pursue, even after just days earlier posting on his Truth Social platform that Powell's termination date, quote, can't come soon enough. So there again seemed to be a walk back once fears about compromising the central bank's independence again took yields toward that telltale 4.5% level on the 10-year note. So it seems like we're in a place last week where the markets go, okay, well, it's not a great environment for risk taking, but it's not the implosion of the most important bit of architecture for the global financial system. That is the dollar and the treasury bond as a risk-free benchmark asset. That is not what this is. And with that, you get stock markets unclenching, you get yields coming in, the dollar steadies, gold comes down, and the markets now look ahead to what was the narrative before April's fireworks. From about mid-February and into March, the idea that we're careening toward a global recession, but maybe just a regular one, and not some sort of an existential crisis, though, of course, recessions aren't easily predictable. Once a drop-off in growth starts, you never quite know which skeletons it'll dredge up out of the closet. All of a sudden, debt to GDP ratios start to surge because with weaker growth, servicing all manner of debt is more difficult. And so the upshot becomes, well, now you need to do something that could be raising cash. Now you need to do something that could be laying off workers. And so all of that has significant implications, maybe downwind, that the markets are not prepared to price in yet, but at the very least, maybe this will be just a recession and not the imminent collapse of the empire, as it were. With that, we have pockets of data in the week ahead from all three major nodes of global growth to see if we can't get a sense for whether, in fact, we have some kind of a situation here where recession is either inescapable or perhaps has even kicked off already. We start on the Asia-Pacific side of things. The Australian CPI report is due. It's looking to show us that inflation continued to come down in the first quarter, 2.3% on the headline, 2.9% on the core, which is interesting because actually Australia's economy has been relatively peppy, looking at the PMI numbers over recent months. But most of it has been domestic demand. And the really key indicator here, and sort of how this data fits into the overall story, is what it means for growth in China, because, of course, China is Australia's largest export market, and that part of the Australian growth story has been terribly anemic. It is also an absolutely critical part of how Australia continues to grow and would purport to continue to grow going forward. So if we get weakening inflation, it'd be interesting to see how the markets onboard that and whether they perceive here that what this means is that the drag, the downwind effects of a weak China are finally starting to spill over into the dependent economies, and even strong domestic demand isn't helping things work out. And that's what we are going to be watching for closely here. If these numbers miss and if their internals suggest that weakness is already coming for Australia despite some recent support for the domestic economy, well, then we're starting to see China's weakness spread out. That's an important part of this global recession story. For China itself, numbers don't look all that great as we prepare for the release of official PMI numbers. We'll get the private sector versions, the Caixin and S&P Global numbers later as well. But the official figures kick us off here. And the expectation is that China's economy stalled in the most recent data. That April saw the economy basically get back into contraction mode. The composite index here seen slipping to 49.5 as manufacturing hits a wall, 49.9. As ever in the logic of PMIs, 50 is neutral. Above 50 is growth. Below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. 49.5 here on the composite index would indeed be a sharp deceleration and a move back to contraction territory for the first time for China since going all the way back to December of 2022. Now, we can see here that services are expected to remain in growth mode, but at a slower rate, 50.7 down from 50.8 in the prior month. And manufacturing is seen going back into contraction mode for the first time since January. So the story here looking weak. And the GDP numbers we've already seen out of China for the first quarter, they sort of reinforce this idea that we are now looking at 8 consecutive quarters, shocking though that is, of economy-wide deflation in China. The story here that nominal GDP is running below real GDP, which means that the inflation adjustment that one needs to make to get from nominal to real, that is negative. And for the first quarter, it's negative to the tune of 0.8 percentage points of GDP growth, which multiplied over the second largest economy in the world is a huge gap. Basically means the economy lacks for demand, and that, in fact, the gap here is the most steep since we saw the peak one at negative 1.06% in the first quarter of 2024. So this is looking like very much reinforcement of that and the idea that that economy is stuck and going nowhere. The Eurozone seen posting growth of just 0.2% in the meanwhile in the first quarter. That's a repeat of the prior month. And again, pointing to standstill. That economy, as we can see here, has been basically idling with low to no growth since the latter half of 2022. Likewise, coming out of the Eurozone, inflation data, 2.1% expected on headline CPI. That would be the lowest that we've seen headline inflation there since October of last year, where we briefly dipped below 2% in September and then hit 2% on the dot in October. This would be the weakest since then. Again, speaking to deceleration, speaking to weakening price pressure. Of course, growth and inflation tend to work hand in hand. You get more growth, you get more money changing hands, you get more demand. That demand starts putting more pressure on whatever supply there is. Supply can't keep up with demand, inflation goes up. Sort of classic story of economic acceleration. Deceleration works the other way, as we can clearly see in China's case, which again has been in a de facto economy-wide deflation now for 2 years. We have there a situation where there isn't demand, and so the entire economy is basically in the bargain bin, where you try to lower prices to clear inventories so you can start to build new things and grow again. And so in seeing this kind of weakening of inflation, not just in the Eurozone, but of course, as we just talked about a second ago in Australia, you get the sense that there is economic deceleration that's afoot. And then, of course, there is the US. Here, things get very spicy. The expectation is that you're going to get a 0.4% rise in GDP, which, relative to where we've seen these numbers, is abysmally low. The last time we saw anything like this was the second quarter of 2022. In fact, outside of that, from the third quarter of 2022 to the fourth quarter of last year, average GDP has grown 2.9% annualized every quarter on average. And of course, there's some standouts. There's some weaker ones. There's a 1.6% growth rate in there in the first quarter of last year. There is a 4.4% surge in the third quarter of 2023. But the average for the U.S. economy from the middle of 2022 onward, sort of second half of 2022 through the end of last year, is to be growing at an annualized rate of about 3%. So to go to basically no growth at all, obviously very eye-catching and is very close to getting us to confirming what would be the first step to a recession, which is 2 consecutive quarters of negative growth. There's not much margin of error for a miss here. Speaking of weakening inflation and the implications for growth there, PCE inflation data coming out. This is the Fed's favored inflation gauge. Here, you're coming into 2.2% on the headline, 2.6% on the core. And again, these are, as we can sort of just glean by looking at the chart with the naked eye, these are meaningful levels historically. 2.6% on the core would be the lowest since September of 2024, or June, of 2024. So we're talking about the weakest in almost 10 months. Then when we look at the headline, 2.2%, that's the lowest since September of last year. That was actually the reference point I was looking at a second ago there. And of course, all of this, again, speaking to perhaps diminishing demand and the impact of that on price pressures. And of course, the Federal Reserve has been screaming that what they want to see is hard data to hang their hat on so that they can begin to cut rates. But where that hard data has actually shown up already, in the inflation data, where we've seen that core services inflation has been cooling for a few months now. As we can see, most inflation lives in that core services area. That's where the U.S. economy has found growth, where other economies have not, since the middle of last year, until it abruptly hit a wall at the start of this year, looking at the PMIs, around tariff uncertainty and sort of the broader uncertainty around the rollout of U.S. fiscal policy, be it on immigration or on trade or on any number of issues. And that what this means then is that you have a solid foundation now telling you between the GDP and this, and of course the data is still incoming, which we'll get to momentarily, that recession is nigh. The updated set of PMI surveys for that matter, from ISM, the Institute of Supply Management, will report the manufacturing sector numbers this week, services next week. Both are expected to slip below 50, so both are seen in contraction mode. Accelerating contraction is what's on the menu for manufacturing, ostensibly because front-running the tariffs is no longer an uplift for that sector. Nothing else to front-run. The tariffs are here. And the service sector, we'll see that next week. That's expected to get back into contraction mode. And, of course, that's between 70 to 80% of the U.S. economy, the service sector. So, clearly not great footing there. And finally, the cherry on the Sunday here, bearish Sunday, but nevertheless, is the non-farm payrolls report, expected to give us 135,000 jobs added in the most recent data here in the sort of repeat of what was expected last time. Of course, 135 is where we saw it in March, and then the economy outperformed a little bit, gave us 228,000 jobs. We're coming back to still that 135 number here for April, and it wouldn't be so far out of the norm. As we can see here, it's kind of within the range of recent values, but nevertheless, a weak result in relative terms. And of course, the jobless rate seen holding at 4.2%. And again, while that is not terribly high historically, it also matches the high on the range that has held really since we saw unemployment back at 4.2% the last time, which was back in 2021. So here is the range of values, and we're expected to be at the top of it. The last reference point for where unemployment is like this is back here. So, in all, not a happy story. And as we just said, this is a rundown of all three major engines of global growth. Between China, the Eurozone, and the US, you have 58% of global GDP. If these numbers come out anything like what is expected, even if they are marginally a little bit better, despite the fact that global economic data has tended to disappoint over recent weeks relative to forecasts, according to data from Citigroup, even if it's a little bit better, we nevertheless are looking at such glaring slowdown that a global recession seems almost inescapable at this point. And that, of course, has been the main issue. As we've been looking at the PMIs here, we can see that since the middle of last year, China and Europe have been increasingly weakening. The US was a pillar of strength until the start of this year, when we get this rapid shift lower in US economic growth around this tariff uncertainty. And so the US is essentially converging on weakness in the other two major growth nodes. And without the US to be the offset here, there really is no safety net. That doesn't bode well for cyclical assets like crude oil or stocks, but perhaps it can finally put a bid into the bond market, because if the markets think this is going to be a regular recession and not the empire self-immolating, as they were apparently concerned about last week, then it should mean lower rates, and it should give the Fed the ammo it needs to start talking about rate cuts in earnest in May, and then perhaps even starting those rate cuts with gusto in June. And that is Macro Monday for today. As ever, we are here Monday through Thursday, right after overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go from there. I'm likewise on with Chris for Futures Power Hour Mondays and Fridays. On with Victor Jones for The Price of Truth on Wednesday this week. Back with Victor and Tom for First Call Sundays. Writing for the News and Insights portion of tastylive.com. Commenting at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money's back tomorrow. Happy trading.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tastylive.
If you missed the live show, here's our cherry on top weekly recap.
I went to the pool at the.
You went to the pool at the Soho House?
Yeah.
And you didn't go to my pool?
Yeah.
Do you think he wore his Crocs?
100%.
100%.
You can't.
100%.
You wear your jorts? You wear your booty jorts with like your ass hangs out just a little bit in the back? I'll gross myself out.
I just threw up in the back of my mouth a little bit.
Daisy Dukes in like a crop top with Crocs. Meow.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
All right, we're back. Tasty Crypto Show. I'm Ryan Grace. And with me today, would you look at that, fully loaded Tasty Crypto Show. We've got Dan, we've got Shelly. They're no strangers to the show, but we've got them both in the same place at the same time on the Tasty Crypto Show. Hell yeah.
3/4 of the cave is here.
Yeah.
Crypto people stick together. That's right. We move in packs.
That's right.
I like this. We're switching it up. We did 3 on OTCL earlier. We've got 3 for TC show. And we got the chat fired up as well.
What up, chat?
Lone Sophos is here. If anyone else is here, let us know. If you're not streaming this on YouTube, get over there and, like I say, type some crazy shit into the chat.
Shit.
We have a question for today. Anybody? What do we want to know?
What do you like on your burger?
Cheeseburgers? What do you like on your cheeseburger? On your burger? Oh, burger. I like cheese.
They're
Yeah. I like that. Yeah, I had a burger and pizza and chicken wings this weekend. I was really healthy.
Really?
Yeah.
What was going on this weekend?
Just living my life, man. That's just a weekend for me.
Yeah.
Yeah.
What about you, Dan? What's on your burger?
Ketchup, mustard, pickles, lettuce, 1 sliced tomato, no cheese.
No cheese.
Don't put cheese on burger.
What about you, Shelly?
Well, I'm gluten-free and vegetarian, so let's go impossible meat, gluten-free burger bun, and then kind of the works.
Okay.
You know, all the veggies.
Okay.
Yeah.
That way you can mask the flavor of the fake meat.
Although fake meat has gotten a lot better.
Is that what you do? Like you do the impossible burger?
Yeah, they're not bad. If you've ever had them, they're really not.
Okay. Okay.
Yeah.
I'll have to try them again.
Mm-hmm.
Lone Sovos agrees with me. Plain lettuce, onion, tomato, never any cheese.
Never any cheese.
You guys without cheese are crazy. Let's fire it up. Let's talk crypto. We've got All sorts of screens going everywhere here today. Nice bounce back up towards 95. That continues to remain resistance for Bitcoin. But if we can, let's throw this beautiful, beautiful Tasty Crypto mobile app up on the screen to check our prices. And then we're going to talk about XRP. We're going to look at the markets in detail.
This is the Tasty Trade.
This is the Tasty Trade app.
Mobile app.
I know. Normally we're showing off Tasty Crypto. If you don't have this on your phone, or let's say, presumably you do, but it might not look like this, you can add the crypto section now to the navigation bar at the bottom of the screen, and then you can quickly get real-time prices. These are super fast, as I like to describe the feature in terms of how they update. You can trade directly from here. You can transfer from here. And as you scroll down, you'll see we've added quite a few tokens. We've got a little bit of content, and you can also trade futures and ETFs directly from the screen. I like it.
I like it.
Yeah. Okay. Yeah.
Well, scroll up a little bit. We got some. No, down to the learn section. I didn't notice that before. There's actual learn content there as well, and you have the other products that are associated with crypto, but not necessarily like crypto spot.
Yeah. So if you want to see what the spot price is and kind of quickly in your head calculate the basis, you can see the difference between the futures price, the spot price there. If you want to trade ETF options, it's just the home base for crypto in the mobile app, which I think is a nice improvement. Team did a good job.
Mm-hmm.
Very nice.
Sleek.
Well, let's take a look at these prices, guys. We're going to talk about XRP in just a second. That's up 1.5% here today. Solana trading around 150 over the weekend. So we're off a little bit from where we were over the weekend. We were above 1,800 on ETH. Couldn't hold it. Bitcoin is trading a lot better. And if we go through the signals, we'll see that everything looks a lot more bullish. Momentum seems to be in our favor for the bulls at this point. What do you guys make of markets? Anything that stands out to you? What are you trading? How are you thinking about it?
ETH is quite choppy, and if you can time it right, I like it.
Upward bias.
Yeah, I don't have any like strong like quantitative views, but I always look at the market as risk on and risk off, and I think leading up to the tariff announcements, it's very clear we were going risk off. I mean, the crypto market moved well before the stock market. We broke down below 90, right? The good news is that we held 85, 80. And now we're, I think, seeing the signs of going back risk on, right? I think in the past, a lot of the narrative around crypto is that we're always trading in 4-year cycles or whatever it might be, right? That, you know, you try and create some framework that's very broad to kind of view the market.
Mm-hmm.
I actually think that market structure has changed. I actually think that you have to look at the crypto market specifically as risk on or risk off. And there's broader trends to that, right? Like you always talk about, Ryan always talks about like macro and how that feeds in and like overall global liquidity and how that feeds in. But I think there's idiosyncratic pockets in crypto specifically, if you pay attention to the market, where you see smaller cycles of like very risk on, very risk off. And I actually think one of the indicators for that is tracking Ripple. I actually think Ripple is a very good indicator to know like, okay, why is this, why did Ripple shoot up? Like what is good? Like that's a good indication of we're going to a risk on type environment. So I'm all that to be said, I'm happy we're above 90. So seems to be pretty bullish.
Yeah, I want to take a look at Ripple in just a second, but to your point, Dan, if we can just jump over to the browser here, I've got some of the data from the block pulled up, and I want to see if I can find inflows, scrolling all over the place here, but inflows into spot ETFs. Here we go. So if you look at this, here's what you're talking about. I mean, we were risk off. You saw nothing but outflows. And now you have, if you go back to last week, the biggest inflows in well over 5 months. And so it does seem to be, by just simply looking at flows as one signal, you know, it does seem to be that it's risk on. Let's take a look at Ripple in just a second. Before we do, let's jump over to our performance dashboard, and we'll see that the price momentum that we track in here using exponential moving averages and then signals derived from that has shifted back to bullish for Bitcoin. ETH has gone from bearish to neutral to bullish on the daily. When you look at a lot of different alts, regardless of the market cap, handful of other tokens that you can trade via tastytrade, we're seeing the same thing on a daily. I think there's a high probability that the bottom is in for most of these. I think very high probability that the bottom is in at 75 locally here for Bitcoin. And you are seeing all of this now reflected in the market. It all kind of trades in the same direction, as we know, sometimes with just higher degrees of volatility. Bitcoin has been the leader and has held up relatively well throughout all of this. You go back to just a couple of weeks ago and how volatile and how violent it was in the stock market. Bitcoin sold off, but volatility in no way reflected what we saw in a lot of other much, much bigger markets at the time. And so I think that's certainly encouraging. And now you're seeing that follow through. You've got Bitcoin going from 75 to 95, and you're seeing some other tokens start to pick up as well. Let's jump back to the browser and just take a look at Ripple, because I want to talk about it in a little bit more detail. And here's what I think you've been talking about, Dan. You're starting to see, as we zoom in a little bit more here, maybe right around that same time that we saw this in the rest of the market, you've got possibly a bottom in XRP. Right. There seems to be a lot, though, that's happening that supports the price action. And this has been one that, for the most part, has held up relatively well versus Bitcoin, has, for the most part, outperformed Bitcoin when you go back over the last few months.
Yeah, I mean, I think like that price action right there sort of supports everything we're seeing broadly, in the fact that like you saw the run up hit all-time highs right around January, and then it broke down, and I think we're looking at we're looking at the low early April, a couple weeks ago, and I think that trend has changed, and everything that you just showed is supporting that as well. So yeah, I mean, it's interesting. It's interesting how these cycles, like, sure, they're tied to the broader markets, right? Like, there's always that correlation to broader global liquidity. But I think that there's very, very specific indicators and specific things you can look at within crypto to tell you whether you're risk on or risk off. So, yeah.
Anything else that you follow in terms of, you look at, okay, what else is happening outside of Bitcoin? What are the narratives? Any other prices, markets, crosses, anything that you're looking at as well to kind of get a sense that, okay, we're back into that risk on environment?
So I feel like it's a question that you can answer, Shelly, as well. Like, I very much look at like chatter and like what's going on in the space. Like, if there's activity on certain things or like narratives that pick up that maybe like people that are just looking at Bitcoin, like the majors, would miss, right? There's very specific things, like meme coins are one. Like, people look at normal people that might not be engaged in these markets, look at meme coins and they're like, well, it's all vaporware, it's worthless. But they don't realize that there's a culture there. There's a deep down, very active internet culture that is doing a lot of volume. There's a lot of volatility. There's a lot of narrative and strategy to it. There's things going on in those pockets of the market. I don't think that's necessarily as relevant for us here, but those are the things I personally look at, is because you
see that come back to life.
Once you see stuff like that come back to life, it's usually a good indicator that like stuff's turning, right? But if you're asking me like broader, what can like a normal person look at and maybe not be, addicted to Twitter to find out, is just stablecoin flows. I think like what you showed before with, I think it was Koifin, maybe whatever you brought up, it's ETF and stablecoin flows. And I think that there's a lot to be, you can look at a lot from the flows moving on chain, right? Like the fact that new stable coins are coming on, there's Athena's tied to the basis trade. You can look at like perps funding to just see sort of where the market is. So yeah, I I think that there's a few indicators that I just kind of look at to get a general sense of what's happening on chain and where the attention is, you know.
And here on the screen is another metric that you just mentioned that definitely is encouraging when you look at money flow here. You look at stablecoin market cap growth dominated by US dollar tether, USDT. You can see that this is up about $4 billion in the last week and continues to climb. So total market cap across all chains measured by DeFi Llama, almost 240 billion. We were writing about this, I believe, over the summer, you know, where it was maybe closer to 1.5, and I thought that was, you know, pretty encouraging eventually to eclipse the prior peak. And I think that you're only going to continue to see this grow. I would not at all be surprised that you get to a point where US dollar stablecoin, whether it's USDC, USDT, total market cap surpasses $1 trillion.
Yeah.
I think that's well within like reason.
Right, but like you can look at this trend, and we don't have years and years of data to go off of, but July going up to 2022, right? It hits like an all-time high there. This is before the last cycle blew up, 2022 FTX, all that. It kind of hits like that all-time high of 200 billion total market cap of stablecoins. And I was telling you this earlier. Stablecoins really didn't get adoption until like 2021. Like real true adoption. Like there was a lot that was still being built out. So the fact that we have US dollar denominated stablecoins and we're in this clear uptrend of like on-chain liquidity, I think that's really a sign that market structure is changing, and like there's a lot more activity that can be supported, right? There's not going to just be this major blow up and all this liquidity is going to drain out. I think the trend has been clear since late 2023, early 2024 that people are moving dollars on chain. So, yeah.
And I think, you know, you look at what larger institutions are doing, the real world asset theme, you look at how capital is starting to be deployed into some of these products, it supports this growth. I think, again, you're only going to see stablecoin growth grow or increase, as you know, the broader space starts to leverage more blockchain infrastructure, which I guess brings me to my next point, because I want to talk about Ripple. This has been one that I have been critical of before. You know, you look at this, and at least at the time, and you look at the market cap, and naturally you kind of question, okay, what's driving this valuation? It's right up there at the very top, right? And so I spent a little bit more time on this. We talked about it over the weekend in the email, and I just want to point out a couple things because I didn't look at the Hidden Road acquisition all that closely. And when you kind of go through what's happening around XRP or with Ripple, the company behind XRP, maybe there's a stronger case to be made that supports it. Maybe there's nothing that needs to support the valuation, and if you want to trade this, go for it. But they have a pretty ambitious roadmap. So to talk about that, and stablecoins plays a role here as well, just want to point out a couple things. I'm not going to read this whole article. You can read it on the Tasty Crypto website, but 1.25 billion for Hidden Road. This is one of the biggest crypto acquisitions to date. Hidden Road is a broker-dealer, offers prime services. This is a gateway then for institutions. I don't know how many customers Hidden Road has. I think it was disclosed like 300 or so. So prime brokerage services. You have ETFs that are pending approval. You have futures ETFs. So these are vehicles for capital. Great. Maybe supports the XRP price. XRP futures trading. You've seen quite an uptick in the futures that are trading on Coinbase's derivatives exchange. CME announces it. So again, positive for liquidity, let's say. I don't think it's that impactful immediately. But what I want to focus on is this ecosystem that now kind of exists. If you think about Ripple as a blockchain infrastructure company, and I don't own any XRP. I don't know if you guys own any XRP. I'm not pumping my bags. I just think that what they're doing maybe warrants some attention. That's all. So you have a couple things that are happening in the market here, but it's really this Hidden Road acquisition where they have prime brokerage services with a stable coin that's going to sit on top of the Ripple ledger or XRP ledger. And so I think, you know, again, you can read into this a bit more, but there's a stronger argument when you look at how Ripple is trying to become blockchain infrastructure onboard institutions and kind of offer these services and to be able to facilitate clearing and settlement via either RLUSD or XRP, but keep it contained within this system. Maybe there's a lot of value to be unlocked there. So wanted to write about that or talk about it this weekend. And you can see here in orange, over the last year, XRP has been absolutely the best performer.
And I think it's interesting that they have stablecoin. The theme is stablecoins, I think. I think with everything that, everyone always talks about how hard it is to get money on chain or whatever. I think that's why all these protocols, projects are introducing native stablecoins, because they know they can move it one for one into a dollar and have it be integrated into their platform, right? That probably enables a ton of other things such as borrow lend, margin trading, whatever it might be. I didn't know Ripple had one. That's actually interesting. The other thing is they got cleared from that SEC lawsuit, right? I think for a number of years, that was sort of a big overhang, right? A lot of people were like betting on whether or not that they would get an action brought against them, or would it be cleared? I feel like
I've been holding bags since before that. So, yeah.
So you're in XRP.
Mm-hmm.
Oh, beautiful. So you must love this price action.
Oh, yeah.
And the fact that
It
we're
was actually
open XRP.
surprised. Yeah. Kind of forgot I had it.
Yeah, I think to simplify it, I kind of look at it as you have this venue now. So Ripple, Hidden Road, you have a place for institutions to participate within your ecosystem, trade among one another. You have all these services that you offer. And so you have 300 some institutions that come to this venue. You facilitate all of that via this stable coin on blockchain rails, that blockchain being the Ripple ledger or XRP ledger. I don't know what it's called exactly, but I think it's the XRP ledger. You facilitate it. You have the entry point, and you have the stable coin that's going to make this process very, very efficient and a lot cheaper, most likely. So I think that's attractive from a value prop, whether you see more institutions come to this venue and use it, time will tell. But arguably they're creating some value here with how this is all going to work together.
Right. And is there, I don't know, is there DeFi apps on there? Like what is like, it's XRPL is like the network, right? There's like this integrated network and.
Yeah, I think there are some DeFi apps. I think it's relatively limited today, but I would assume that changes and you can kind of see how these pieces all fit together then.
I also want to look at the chart too, because the Ripple chart's really interesting going back all the way to when it was launched. I don't know if whoever can bring that up, but I want to zoom out to like a monthly, and I want to see like back to like 2018, 2019. Yeah. So, I mean, I don't know that the monthly, maybe daily or weekly. Yeah. So that's what I wanted to look at.
Yeah. So what happened here?
I think that was the bubble. That was 2017.
Okay, yeah,
bubble.
So that's when it goes from $0 to basically $3 or so. I think
right.
Yeah, $2 or whatever. We've got it here.
Now, what's interesting about this trend in Ripple, I think, and this is just looking at the chart, doesn't mean anything, but it looks like it peaks around every like significant like bubble, like bubble top, right? Like 2017, 2018 was when Bitcoin hit 20K and the CME or SIBO introduced shorts, right? And that's how it blew up. And then you get into like, probably like late 2021, 2022, it wasn't as pronounced. I think they were that was like the midst of the battle with the SEC. And then you see it shoot straight up, toward the end of 2025. I think it's interesting. Maybe it continues. Maybe a new level's been hit. But just like the way this coin trades is really interesting. And anyone out there that is in Ripple and pays attention to it, I think it's something to keep note of, just like the levels and how it trades. And I think there's a lot of opportunity there. Like, I do think it's a good project. I do think a ton of people trade it, right? It's a really active market. If you can hold through some of the pain, I mean,
It's extremely volatile.
The XRP army, like, you want to talk about like where the narrative comes from, the XRP army on Twitter, super loud. So yeah. We have a question from Sal. Any thoughts on Uni? I'm scooping it up. I think it's on sale, low risk reward, 8x, $5 to 40. So Sal's thoughts on Uni?
Yeah, I mean, I think at these prices, relative to what we think might be coming from a regulatory standpoint, that should support DeFi and possibly get you to a point where, if you look at this from a more fundamental lens, if you can return some of the value, some of the real revenue that's generated on-chain by the protocol, not only to the users, which is done today, but to the token holders in some form, if you could do that, let's say legally, and I think there's a pretty strong argument that these should all be revalued at much higher prices. Or, you know, let's say it doesn't reflect that in the current price is probably a better way to look at it. So it's a bet on whether, you know, in a relatively short time frame, and what I mean by that is probably a year versus 4 years, whether there is an evolving regulatory environment that I think further supports DeFi. Seems like we're on that path, but that path, walking down it, could be a lot slower than people think. But yeah, I think there's a lot of potential value in this. It's just how much are you tying up that capital and at what volatility until then.
Right.
But I think the same thing is true of Jupiter, Radium, a lot of more so applications, or the application layer on these blockchain networks that you can derive real revenue from, because then you can actually start to value these things or price them based on the revenue. If it could be returned to shareholders or to token holders in that sense.
Yeah, I think that's what it hinges on, is whether or not the protocol revenue can go to token holders. Right now, it's all going to the labs entity, and that's actually a huge discussion as far as I'm aware of in the DAO, is how do they turn on the fee switch? How does that work? We'll probably get some clarity here in the coming years. But I would say, like, to add to that, Aave, Compound, Curve. Aave's on our platform. You guys can trade Aave. Those are profitable DeFi projects. Those generate a ton of
real users, real revenue, real use cases. Probably most importantly.
I mean, these are like the on-chain banks of, I don't want to say banks, but like Borrowland is
it's financial services.
Financial services, yeah. Like, these make money. Uniswap makes money. Aerodrome makes money. Jupiter, Radium. These are real cash flow positive generating applications, protocols, whatever you want to call them. So I do think that they're worth having like a basket of or paying attention to. So yeah, Sal, I hope that answered your question. Honestly, probably just buy it, put it in the drawer. So
yeah, I hold Uniswap. I own it at slightly lower prices and much higher prices as time has gone on. But yeah, that's what I'm not adding to the position personally at the moment, but that's what I'm holding for. I do think that as this whole space evolves, there will be some value that's unlocked. But before we wrap things up, guys, we've got to solicit some feedback here on the show. We are running a survey. I'm not sure. I think, yes, we have it posted here in the chat. So if you're streaming on YouTube, click that link. Would love to hear from everybody. We're trying to make a ton of improvements to crypto across the board at Tasty. So we've got a survey, and there's also the opportunity to opt into a call. If you'd like to talk to us, we'll compensate you for your time, kind of an interview style, 15 minutes or so. But would love to hear more about everyone's experiences around the product so that ultimately, we can build the best product for everybody that's using it. So hit the link, or if you didn't get the email, or you didn't see this in the email, sign up for the email, first of all. But check your inbox. It was linked to the Tasty Crypto Next Orange email this Saturday. Cool. Well, thank you both for coming on the show and hanging out in the studio.
It goes by too fast.
I know. I appreciate you guys joining me in here. It's a lot warmer in here, fortunately, in the cave, in the studio, than it is out there. So good to hang out. But we will be back on Wednesday. Until then, I'm Ryan.
Shelly.
I'm Dan.
Peace.
Peace.
investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
I love to take risks. I love the instant pain, the instant gain of trading. I would describe my trading style as a calculated risk taker. I like to play towards volatility, which is something that you can quantify high and low points of. Well, my favorite strategy currently is the diagonal spread. I like the idea of having defined risk, but while also having a little bit of positive decay that works in your favor if you're not directionally correct. But the best part about it is the positive gamma that you get from it. I really like that the position can grow and get bigger as you're more correct on that position. So I think that the variable of trading on a day-to-day, hour-to-hour, minute-to-minute basis is really powerful and really fun to have access to.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
What's up, everybody? Welcome to the Life Cycle of a Trade, the series where we break down the thought process behind trade entry, trade management, and closing order. In this video, we are going to cover a short call spread. All right, so looking to diversify a little bit with a short delta position here. I'm relatively flat delta with the other positions that I've put on recently. So getting a little bit of short delta in a name just to kind of hedge some of the delta that I have. I have some strangles and whatnot that would gain some long delta into the downside move, and also looking to put on another long delta position. So this trade, I'm looking for some short delta. One of the stocks that has stuck out to me here in the last couple trading sessions is Meta. Meta is trading at 570 right now. All-time highs. It's had a significant rally. I mean, we got into the 500 handle just a couple weeks ago. We were as low as the 450, 460 range. It's had a monster move. It does have earnings coming up here sometime in the middle of October, but I don't mind selling a defined risk call spread in Meta here, even into earnings. So when I look for a short call spread or a short put spread, I typically go somewhere around the 30 delta for the short option. So here on the upside, of course, I'm going to the November monthly, 50 days, 51 days to go till expiration, our typical wheelhouse. I typically look around that 30 delta. That puts us up at 625, about $55 out of the money, another 10% move to the upside until I get tested. 625 call. The width of the call spread depends on your risk tolerance. So you can go as tight as $5 wide if you don't want to put a lot of risk on the table, $300 and change. I typically like to go about $10 wide in this account. If you have a larger sized account, you can certainly go wider than that. You can go naked if that permits in your account. But for me, I'm going to move this to a $10 wide spread here, the 625, 635. You can see when you go around the Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Oh, yeah, it is Monday.
April 28th, a little bit after 5 p.m. Central Time, the best time. You know what that means? It's time for Tasty Live's evening show. A little podcast, a little podcast called The Price of Truth. The show where we like to explore the incentives that govern our world, and they're throwing some incentives at us. More on that in just a bit. But before we get there, let's say what's up to the people. Shout out to everybody watching on tastylive.com. Shout out to everybody watching on Tasty Trade desktop and mobile applications. If you don't have both, go do yourself a favor and get them. Maybe I can tilt this down just a little bit. Yeah, but if you want to be part, sorry about that. Where were we? Cut. If you want to be part of this little chat box on your screen, there's only one place you can do it, and that's on, did we get it this time? That's on Tasty Live's YouTube channel. So head on over to Tasty Live's YouTube channel somewhere over there on the evil Google YouTubes, and subscribe to the channel, and you will be able to smash your skull or your phalanges, your metacarpals, whatever you can against your keyboard, and create random ass characters. The more you type, the more we can spoof the Google algorithm into putting us in front of as many people as possible. Shout out to all of you in the chat. Lone Sovos, I see you. Kato Prime, Victoria, Night Moves, Soul Train, Catan, Mark, Emmett, so many more. I would shout you out all, for the next 90 minutes, but I'm not allowed to. I have to say something of substance. But before I do that, is anyone else loving that commercial we keep running with that deep baritone voice? We were just doing it in the green room. We were just, oh yeah, it's time for The Price of Truth after hour show. I love that voice. Either that one and the Civic Auditorium voice. If I could just do two things, just use my voice to make money, that's what I would do. Nice premeditated reversal today, says Catan. Yeah, let's get going. What a day. E-mini S&P didn't do anything today. If you just went to bed and you woke up at the end of the session, you'd be like, pretty boring day. You would be wrong. The NASDAQ down 3 basis points, and that does not tell the story. The Dow Jones up 28 basis points, and the Russell up about 2/5%. It was a pretty crazy day, obviously. More on that in just a bit. VIX cash at 25. VIX forward, near-term VIX future at 23 and change, 23.73. I can't get that voice out of my head. Let's take a quick look at the VIX term structure. Still in backwardation. We're still in backwardation here. VIX cash still at 25 and change, as we just mentioned. You can see forward the near-term futures in May, 23.73. We are still, my babies, in backwardation. Who's that? Johnny Cash. Something like that. It's that beef. You remember that beef? It's what's for dinner voice? Beef. It's what's for dinner. It's that voice. But the wild thing about today was obviously the range. We had them. I was short for the day, so I got a little greedy and I didn't close out the short as I should have. It happens. E-mini S&P still hanging out at 55.45. We had them on the ropes. We had the NASDAQ down to 19,275 until about noon. I think we rallied up almost exactly to where they opened them up. The range on the day, though, was a pretty significant range. What was it? It was like 1.5% to 2% range on the day. So you kind of would expect, just for those of you who are looking at the price action today and you go, why didn't vol contract? Well, the range on the day was pretty significant on a percentage basis, if I'm not mistaken. Let's see here. What do we have? 86 points from top to bottom. So if you get a decent range in price action, you're not necessarily going to see a collapse in volatility. Bonds was, in my personal opinion, lawnmower man voice. Bonds was one of the more interesting trades on the day. Crept a little bit higher. I
I had seen somebody, Mark Dow, I think it was, on Twitter, say that this was a classic risk-off day, and it probably was until about noontime. You had equities down for the most part, and you had bonds up for the most part, but not much. Bond rally was like 9 or 10 ticks for most of the day until later in the day when, ironically, you got a little bit more of a rally in bonds, all the way up to 116 and change. Can you believe it? Can you believe that after all of that nonsense in yields and everyone telling you it was over, we're almost back to 117. And we were at this place for a long while where literally you didn't even have to look at bonds. You could just put a Post-it note over your watch list and go bonds at 117. We were there for about a month and a half, almost 2 months. You got a 5-point rally to the upside, 5-point dump to the downside off of 117, and here we are quietly approaching 117 again. I was leaning, that wasn't so great. I took a stab, leaned against these things, which again worked. At some point today, we were actually negative. Bonds sold off from that 10, 11 tick rally. We were down. I saw them down around 4 or 5 ticks. So about a half-point move to the downside, or half-point reversal before coming back all the way up and rallying even a bit more. The shape of the curve did not change much today, my babies. So normally we like to come in here, we like to look at those big, beautiful curves that the market puts in front of us. That didn't sound right. We like to look at the implied or the yield curves. But there's not much to talk about today. I think we were at 56 basis points in terms of the 210 yield curve. We're at 56 basis points, and I want to say we're exactly there. 56. So not much change here. So unfortunately, even with that movement in the long end, you got a corresponding move in the short end, and you're still at 56 basis points. Not much to write home about. The market still pricing in one cut starting in June, another cut in July, a hold in September, an additional cut in October, and then going again in December. You've got your 4 cuts priced back into the marketplace. I'm curious, chat, tell me. What do you think, if you've got 4 cuts priced into the curve, all I want to know is who's taking the over, the under, or the push? I'm guessing I know what you're going to say, but I'm curious. Over, under, or push on 4 cuts between now and New Year's Eve? I don't want to bias it. I don't want to poison the well, so I'm going to let you guys get your answers in here for just a second, and then I'm going to tell you what I think happens, or how I'm betting it. But I'm going to let you guys get your answers in here for just a second. Why can't the USA be more like Germany with a debt break? Wow, Corey, a bold call. Brian, bold call. Both say over. I'm going to let you guys get your guesses in, because this is a fun one. I think this is actually a pretty hard call. If you're saying the over, you're basically betting that we're headed towards recession. You're betting that we're in restrictive real rate territory, and you're betting that the Fed needs to drop rates fairly quickly to get us into more neutral territory. That's what you're saying if you're betting the over. I don't know if I'll argue with that. You're probably saying that inflation is not as big of a deal as the Fed is trying to make it right now to balance their story. Mark says raise. There is no frickin' way they raise this year. No way. Huh. There's way more people betting the over than I would have thought. Shout out to you guys. Pretty bold. I would take the under. I would take the under. I think they slow walk it to start with. some part of me thinks they want to slow walk it. If they go early, or if the market thinks they're a little bit early, then perhaps the long end does not cooperate. And I think they want the long end to fall. I think they need the long end to fall here. So I would probably take the under, but I'm not mad at anybody that bets the over. I just think they're going to be able to use the CPI as cover. If you believe that CPI number, they're going to be able to use it as cover to maybe not be as responsive to growth as you should. If you believe like the true-flation number over, let's say, PCE or CPI, I think what's true-flation at, like 1.6 or something like this? So if you believe the true-flation number, they probably need to move, and they need to move a lot quicker than their rhetoric seems that they're going to move. But I think, if they've got people worried about inflation, that last SEP they put in front of everybody at 2.6, 2.7, 2.8 inflation numbers. So I think they're going to slow walk it. I'm not mad at you for calling the over, but I think the way they've set this up, I think they probably slow walk it. I would not bet 4. I'd probably bet 3. And if so, I actually think that's good for the long end of the curve. I think if they hit 4, I'd be really surprised if the long end drops through all of that. I'd be really, really surprised. They drop rates 4 times in the end of the year, and the long end falls with the short end of the curve. I'd be super surprised. Volcker. What's that line? I met Volcker. You, sir, are no Volcker. Soul Train says, growth where? I'm with you, but I don't know. Are you guys watching the earnings? The earnings don't look half bad, and I know, I get it. The last 3 months means nothing. We hit an inflection point in the economy, and Victor, don't you know, all the they're 40% light or 40% less shipments and boats and what do they call them? Shipping containers headed over to LA from China. Maybe. You guys nervous? That you're not going to find some stuff on the shelves in 2 to 3 weeks? That's what logistics Twitter is screaming out. Big week for earnings. Excuse me. Let me go over those in just a second. Oh, I did not pull them up. My apologies. We got 4 of the Mag 7s reporting here this week. Microsoft, Meta, Apple, and Amazon. Oh, it's not coming up. You're killing me, Smalls. All of these things, store shelves will be empty in 2 to 3 weeks, says Soul Train. That's not true. There's no way you believe that. You could have supply disruptions. See, people just over-rotate on this stuff. You can have supply disruptions, right? And, some of your furniture stores or things of this nature might not have available inventory, and you might be on back order. But store shelves, especially at Walmart, Target, and Costco, your big box retailers, in 2 to 3 weeks are not going to be empty. That's not true. Smaller stores are going to have a harder time managing through this. But I think I read something that last week, I want to say Walmart, Target, and Costco actually communicated with their Chinese supply chain that said they resumed their orders. So I don't actually think the big box retailers are going to have a big issue in 2 weeks anyway. Sleepy Mocha, what are we stocking up on? Mac and cheese. You guys are nuts. Apple, Amazon. I'm long none of these. I think I have a little Amazon now. Actually, that's not true. I'm long Microsoft. Microsoft, which had a nice rally up to 391. We caught that one last week. We traded against the bottom, bought the 360, 370 call spread. Worked out nicely. And Meta as well. Meta's always an interesting one because you get snap earnings like the day before, and for whatever reason, when the market is nervous, they'll look at Snap's earnings as a read through for digital advertising and all of social media, and it's one of the greatest things. Here's what always happens. I'm going to say always happens. Here's what can happen. In a period of uncertainty, companies will pull their advertising in Snap, right? Because if you're going to pull your advertising, you don't pull it in like Facebook or Instagram. You go, okay, we don't need this extra spend out here in Snapchat, so let's reduce that, depending on what your target market is. So it's so funny. Whenever we get around these periods where people are really, really nervous about digital advertising or they think we're at an inflection point, you'll get Snap earnings. It'll freak everybody out. You get a reaction in Meta to the downside as a read-through of Snap. Then Meta comes out and their earnings are better because nobody in the right mind pulls Facebook advertising at the same rate they pull Snapchat advertising. So there's always an interesting little setup here. I'm not saying it's going to happen, but it has happened a handful of times in the past, and I would be ready for that. If we can get some interesting downside reaction on Meta as a dumb Snap read-through, I am going to fade it like nobody's business. But that's really my only playbook, I think, for this week. I know there's a ton of earnings here. I think it's a little bit of a more difficult setup up here at 5,500. If we were at 53, and I think I said this a couple of weeks ago, I'm like, everyone's going to blow out their numbers. Like, all the soft data is horrible, but all the hard data is like way above expectations. Because for whatever slowing there is, people already put their expectations on the floor coming into this quarter, and they're lowering the expectations for next quarter, by the way. But the expectations were already low, and people pulled forward demand. And they're just giving blowout numbers on most of this stuff. And so in absence of really poor soft data this week, I think you can keep floating up higher. That does not mean I'm super bullish here, by the way. I'm almost flat. I'm like a couple hundred net long, a couple hundred deltas net long. So I'm not super long. I wanted to protect a lot of those profits that we picked up, throwing some chips on the table when the market was puking. I don't want to let that all go. So I want to lean a little bit long here. I think it's possible this thing could leak higher to 56, and who knows, maybe a little bit higher. But I don't want to be super greedy. I don't want to start betting on new all-time highs or getting back to 5,800 just yet. But I'm not ready to go net short. That's my playbook. I am leaning long in the portfolio. I don't really have much tech. Most of the stuff I have is materials. I've talked to you guys about that before, materials and energy. Energy's kind of taken in the teeth here as oil continues to trade lower. A lot of smart people that I follow in the space are effectively saying they're going to short this thing down to 50, man. There's almost nothing that is happening on the headline level that is creating enough fear to get upside out of crude oil. Knock on wood. I don't want to say anything crazy, but the fact that OPEC, they're increasing production at the same time that President Trump, on Liberation Day, excuse me, I'm a little bit marble mouthed here. On Liberation Day, they also made the announcement Saudi Arabia and OPEC Plus is increasing production. Not OPEC Plus, but OPEC. It seems like Trump did a deal with Saudi Arabia in some way, shape, form, or fashion. And a lot of smart people I follow are just going to short the hell out of this thing until 50. So that's probably a little bit of pain for my energy stocks. But again, I guess it always depends on the way you look at these things. I look for deals. I don't want to call myself like a value investor because it sounds boring. But I guess I'm much more like a value investor than I am sort of like a momentum type person. If oil's going to ride this, if oil's going to head down to 50, then a lot of these energy stocks are going to get super cheap. The economy is cyclical, and I'll get to pick up some solid energy companies at a discounted price in the same way that for whatever reason, the market was trading gold higher. It did not buy up all these miners. I do not know why. There was such a delayed reaction in all these gold miners. And we got the opportunity to buy up a lot of these gold miners at discounts. And guess what? Just what we said, that if gold's at an all-time high and you expect the price to stay there, it doesn't make sense that a lot of these miners are trading at such a discount to the last time gold was at a high. So the first time gold was at a high, Newmont Mining was at 58. And then the second time we're making a high, it was at a massive discount. It was like $45, $46. And people came up with all types of reasons for it. I don't know if you saw their last earnings announcement, but they just blew it away. They blew their last earnings announcement away. I think up on revenue like 100%. Crazy numbers. And a lot of these companies, their input costs are going to go up just like anyone else's with inflation. But it doesn't seem like the market seems like it's giving gold credit for sticking around 3,000 for a while or higher. They're finally giving the miners credit. So you had this massive catch-up trade in Newmont Mining, which had basically lagged a lot of these miners. But it doesn't matter what you look at, GDX or GDXJ. All this stuff is doing pretty well. I don't know that I'd put an incremental dollar here. The tough part is deciding whether or not to put an incremental dollar here. I am not. I haven't put any additional funds into any of these trades. I always find it hard to buy highs. IG. And I literally, no matter which miner I look at, almost all these things are trading at relative highs. On a valuation basis, though, there's still a couple of cheap multiples in the space. Same thing happened with Freeport. We got a nice rally in Freeport. Finally, even though you could make the case the same thing is happening here. Copper at relative highs, but you're not actually seeing the same enthusiasm here in Freeport. I think there's a decent reason for that, though, because of housing and the Chinese economy. So I wouldn't expect this one to go make new all-time highs. Other one we got or have had our eyes on is the home builders. And why? Because I thought this one would be an interesting counter trend bounce. If you could get a little bit of a rally in the long end of the curve. And that was kind of the call, right? That as soon as Trump backed off or softened on his rhetoric, we said if the market believes what they're hearing out of the administration, they don't just believe it's a headline for today that'll be gone tomorrow, we should see softening in gold and we should see a flattener in the curve. They should buy up the long end. Short end rate should float a little bit higher. And we'll see a little bit of a flattening. We did see it. I thought we might flatten 20 basis points. We've only flattened 10 basis points in the 210 curve. But if you're getting the long end lifting a little bit, that could just ever so slightly give a little bit of a bid to some of the home builders. I didn't bet it. I didn't bet it yet. And it's probably too late. We've moved from 85 to 93. But we did get a little bit of a bounce. And some part of me wonders, and I keep wondering aloud, when is the right time to buy these things? To me, I think housing looks like straight trash right now. I think it looks like straight trash. And people are starting to finally talk about it. They're finally starting to have conversations about like Arizona, some places in Austin, some places in California, a lot of these places, Miami, a lot of these places that got super, maybe not Miami so much, but like so much investment capital. And they're starting to slow down. I think, what was it, Zillow headline I read the other day? They're starting to slow down. New home sales, in fairness, the other week, though, was up like 7% on a week-over-week basis. But the narrative on housing, on home prices, the amount of inventory that's starting to show up, but the fact that it's obviously a buyer's market. When they raised rates, or excuse me, when they cut rates in September, the first thing that we said was long end rates, I don't think they're going down. I think they're going up. And if they go up, housing's got a big problem because you already have an unaffordable. I forget the average price of a home, but it was pushing $400,000. I don't think it's there anymore, but it was pushing $400,000. And mortgage rates are 6 to 7%. And long end rates, if they don't go down, why in God's name were the home builders at the time trading at highs? And we were early, but it did crack. We've gone from 126 down to 93 in the ETF. But the nastiness in some of these individual home builders has been disgusting. Oh God, this thing's gonna take forever. Yeah, the pain in the individual builders, as bad as that XHB chart looks, you got to remember that's a diversified chart of a bunch of these. So the pain is even greater on higher beta individual stocks. And I really, really want to buy these things. I just don't know at what price they're good value. And I know it seems crazy, and I think I'm too early on this. I think it's too late to short, and it's probably a little bit too early to buy. But I do think these things are gonna get really cheap, and if so, I want to be there. KB Homes got murdered, Lennar got murdered, DHI is another one that got murdered. So I'm watching all of these things. They're on my list. You know, one of the cool, I don't say it like this. One of the things I try to do, and I've learned from other people, is when you have a list of things that you want to buy when things get cheap, you're less likely to freak out when things go on sale. Right? So here we are talking about some instruments that we would like to try to build a position on if they get cheap enough. We're probably early, but I can promise you, if these things get 20, 30% cheaper than they are right now, people are going to be freaking out about housing. I mean, it's gonna go from like this thing people are kind of talking about right now. Should I buy a house or shouldn't I buy a house? If these things get 30% cheaper, they're going to be talking about this on television, and people are going to be nervous about what's happening outside. And if that day comes, we're going to sit down and have a conversation, and we're not going to be panicking because we kind of saw it coming. Unless something crazy happens here with the long end of the curve and they can actually put a bid in it, and 5% ends up being the top in yields for the short-term cycle. If we're there, then who knows? Maybe you never hear that headline, and these things are providing value right now. Maybe that's true. But I think, I don't know. I kind of want to bet that yields go a little bit higher in the cycle. Maybe not in the next month, maybe not in the next 2 months, but I think this is going to be a long, drawn-out period. I think people want to believe that all these deals are going to be made in the next couple of weeks, and that everything goes back to normal. And And I've said this before, I'll say it again. I don't think that's the environment that we're in. I think post April 2nd, I think a major shift is taking place. A re-engineering of global trade and global alliances is taking place. A high-stakes poker game is being played in front of everybody's eyes with the highest of stakes. And you might not want to be in the game. You might not think the gamble was worth it. But nonetheless, we're all in the game, and we probably want to win this hand. And for that reason, I can see some positive headlines for a while as we sort of back off these escalations. But at some point, you got to put pen to paper. And I don't think it's going to be so easy for the U.S. and China, the two biggest economies, to carve out global trade. I don't think that happens without some escalation of rhetoric to try to get a point on either side. Is that going to happen this week? I don't know. I don't think so. But are we out of the woods, quote unquote? No, I don't think we're out of the woods by a mile. By a mile. But I do think what's not being reported, if you're not following the Treasury Secretary Scott Bessent on Twitter, and if you're on Twitter, I would suggest you go follow him. For whatever reason, it's not really being picked up, but he's reporting a lot of these meetings with, let's say, Japan, I think, a handful. Over the weekend, he posted a bunch of photographs of him with world leaders and minutes of these meeting readouts. So if you're curious who they're talking to, what they're talking about, that part of the story does not seem like it's being told on any broad level. So you got to go do your own digging. I think it's worth keeping an eye on that, because there does seem to be progress. What people talk about now is there's no deals, which is true. Nothing has been signed. But I mean, if you know anything about these deals, the shortest one took 4 months, but that's sort of a one-off. In reality, the most meaningful trade deal was done in like 15 months. I think at best, on a week-over-week basis, you're going to see meetings, and you're going to see these meeting readouts until you get some in-principle MOU on paper. I think we're probably a ways off from that. Let's see what you guys are saying. If rates are going lower, would consumers wait for the lower rate and not buy? Me personally, I don't think that's how people think when buying a home. I don't think that's how they think. I don't think you wait for a lower rate. Maybe some people do that. I think that's every person's real estate agent is going to tell them not to do it. They're going to tell them to buy the house for the right price, and then as rates come down, you can always refinance. But if rates never go down, well, then it's better to buy now. That's what every real estate agent is going to tell somebody that's in the market. Don't shop for rates, shop for the price of the house. Now, will they wait if they think the price is coming down? I think the answer to that is yes. I think if you're waiting for lower rates, you probably have a bad real estate agent. Because if rates come down, think about it like this. If rates go from 6 to 2, there is a possibility that the price of your house just went up. So if you got a better rate, but the price of your house went up, did you win or did you lose? So I think you only wait if you think prices are coming down, if you think we're headed into an environment where you could get a softening market. The COVID debt needs to be rolled mid-year through 2028. Yeah, what's the number? 7, 8, 9 trillion? Long cardboard boxes as a home play. Lost decade. Do you think we're headed towards that? A decade of stagnation, of financial repression? I kind of think that's the best case scenario. That's what I always thought. When people talk about stagflation as the worst case scenario for the Federal Reserve, I do think it's a really difficult position to be in. It's the hardest one to navigate from a monetary policy standpoint. But I also thought, like, well, you do want the people want deflation, but they don't want what comes with deflation, right? You don't want unemployment spiking. But if given the choice of keeping your job and cheaper asset prices, you would want that, right? But like the massive spike in unemployment creates a really, really dangerous situation right now in the country, I think, with the political environment that we're in. So you don't want that. If you light up the printers again, and the average price of a home goes from $400,000 to $600,000, this place is going to explode. If eggs go from, $8, $10 a carton to $20 a carton or $15, this place is going to explode. So I always thought, like, while it will be difficult and painful, in a weird, very strange way, the financial repression was like, it was the best option. It was the only option. This weird period of time where we sort of have this monetary, it's like sneaky monetary inflation. And we eat away at people in real terms. Nominal, things look good. If you're just looking at the stock price, things look good. If you're just looking at the bond price, things look okay. But in real terms, they're taking it all back and inflating themselves away, inflating the debt away. I thought that was the likely best case scenario while companies shed excess labor. So you see higher unemployment levels. Sub-Zero says stagflation is base case in my mind. I agree. Trying to get the kids out of the house. Now they come back with their kids. You know what? That's what we need to get back there anyway. We need to get back to, all communities. Some communities, they already do that, big families in one home. That's the way to build wealth anyway. It's funny. Financial repression is going to force a more communal way of life. And in a weird way, I kind of feel like that's what everybody yearns for anyway. People are tired of this digital isolation. But they didn't change it on their own. Nothing like a little stagflation to get you to go see your in-laws. Sorry. Correct myself up. Gold, $33.50. I've still got a little tiny short on. So I shorted the big boys, the GCs the other week when they hit 3,500, and I got really lucky that they sold off a couple hundred points. I took that off, and now I'm just short a handful of the small contracts, the MGCs. So I'm playing with house money and seeing if they can roll these things over a little bit more. It doesn't look like they want to, though. I'm a bit surprised. So I think that one might be a loser here, but I'm going to hold them just in case. I'm really surprised at the resilience here. I thought they would pop them and let them get down. I thought we'd get down to 3,100 or 3,000, something like this. But you know what? You know what it is? I'm the only American patriot who's shorting gold. Paper gold. If we were all patriots and we just traded in our nation's best interest, we'd all short crude oil, which I think many people are, but we'd probably short gold as well. But I think we'd be standing in the way of a lot of money. Anyways, I'm still a little bit short gold. I think that move, that couple 100-point move, the biggest irony is I think Newmont Mining is my best investment on the year. I think it is. And I think short gold is my best trade on the year. Isn't that wild? The best investment is on the long end and is a gold miner. The best trade was a gold short. I don't have strong opinions here. I'm leaning a little bit short. I'm still long the gold miners, but I would like to see him run this thing down a little bit lower. And if that does happen, in my personal opinion, it probably means there's a little bit more upside in bonds. It probably means the stock market trades sideways to up if correlations hold. And it probably means, if all that happens, that the gold-silver ratio comes back down to something that's way more reasonable. So I'm long silver here against a short gold position. Not with any strategic ratio. I should have it on in a certain size. I really don't. But I am a little bit long gold, silver here through upside call spreads, and I'm short gold through just short MGC. I think I've got like some long put spreads too. Let's see. What's up, Eddie? Short dollar and long tips have worked. Yes, they have. I got a little bit long dollars. Going into the day, and I don't usually take bets on currency. I try to do my stuff indirectly. I have a position, or excuse me, I have an idea of what I think the dollar may or may not do, broadly, like the dollar index. I don't express them very often, but I do think I did want to fade the euro here just a little bit. So I'm long dollars against the euro. We'll see how that works out. Just as a fade of the momentum. I think the top is in unless we get deals. We are 90 days out till tariffs kick in. I think what'll happen is at the end of this 90 days, I think what'll happen is there will be some readout. If there's no official deal, then there's some readout of countries where we've made progress in trade negotiations. And those countries are going to get, this is a total guess, they're going to get an additional extension. In any countries where there haven't been meaningful progress in discussions, they're going to get left behind, and their tariffs are going to go live right along with China. I think that's the way this is going to play out. It's a total guess. It's total conjecture on my part, but I would guess that's how they play this. So I would say the effective tariff will go up just slightly, or it'll probably stay the same. It'll probably stay the same, I think. And more countries will go live, but not all. That's my guess. Best investment, Palantir. Best trade, XPXS calls. Palantir is a weird one, man. I love Palantir, but I'm flat here. I am flat. I shouldn't be. I think after this sort of blow-off move, I think I was short calls, and I decided not to roll them or buy them back. I decided not to roll them, so I let myself get called away from the position. And now I just don't have a Palantir position, and I'm kicking myself that I didn't buy it when it came back and it hit that trend line at 70 or 80 bucks. Kicking myself, because that would have been a perfect way to reestablish that position, but I didn't. And now I'm sitting here being a silent hater on Palantir, hoping it comes back in. But shout out to everybody that's long Palantir. I just don't see a world where that stock doesn't win. You know what I mean? Same thing with some of these things. Look at this. 2% rally here today, of course. Like, why would you? I get that they had shitty earnings, right? Look at the recovery in Raytheon too. Just crazy. Of course, man. We're in the middle of we're effectively in a Cold War with two hot wars that we are actively funding in some way, shape, or form. If they gave us defense stocks with a 10% discount over the last week, how do you not take that? They brought Palantir all the way down to $70. In retrospect, when you really think about the environment that we're in, maybe Palantir is a little bit more of a difficult play because even at 70, that's a stupid valuation. It's a cheap price relative to itself, but it's a stupid valuation. But they gave us defense stocks in the middle of World War III 10% off last week. Did you buy them? I think that's kind of funny when you really think about it. Northrop Grumman is NOC. Raytheon is RTX. What are a few of the other ones here? I'm missing a handful of them. I suppose you can throw Boeing in there. You can probably throw Halliburton in there. Kind of. That's more energy services, but it's in there. Look at Boeing. Remember that when they wanted you to puke all your Boeing stock? Every other day was just planes falling out of the sky. I had a fun time with that one. I kept telling people, like, nope, not selling, buying more. They brought that thing down to 113. That's crazy. Absolutely crazy. I mean, I guess on one hand, I do understand they had not so great earnings, and you have a situation where the rhetoric coming out of the U.S. is that we're getting close to a deal, or the U.S. is going to walk from the Ukraine-Russia conflict. So in that scenario, you're probably going to price a discount in some of these things, but like, I just think, as Jim Carson said, we're in a competition era. We're no longer in a cooperation era. And I don't see any cuts being proposed to the defense budget yet. Do you? I might have missed it. But I see cuts to Medicaid, Medicare, and SNAP benefits, and I see a defense budget that's, still near $1 trillion. So that money's got to go somewhere. It goes to somebody, and there's only a handful of these defense contractors. It all ends up in a small pair of hands, small set of hands. Palantir's earnings schedule for May 5th. Take your shot with an earnings trade. I wouldn't bet against that company. And if they puke, I'll take all you can sell. Yes, Lockheed Martin. Thank you very much. That was another one I was missing. LMT. Thank you. A lot of people don't mess with these things, but I think it's a hedge for a world you don't want to see. I mean, I don't know. Some of you guys might be war hawks, but I'm not. I'm a bit of a non-interventionist. I guess you could argue I'm a peace through strength person, but I sort of think that's a logical fallacy in a way, because peace through strength only works if people believe you, and in order to believe you, you have to make good on your threats. I'm probably actually a hippie in my heart of hearts. No debt, growing faster than weeds, and adding contracts. No competitors. Exactly. They're on the. I'm not going to pretend to know exactly what Palantir does, but I think, from what I know about what they do, they're like all the buzzwords wrapped in one right now. You're in geopolitical conflict. Well, They are a military contractor. You're in an era of AI. They're a incredible technology company. You're in a period of social instability with sort of this populist, I don't call it revolt, but uprising, a populist uprising, not just in the West, but globally. And they sell technology to municipalities and local governments that helps them to effectively anticipate crime or problems, to keep control of society. I don't see how that doesn't win right now. And especially if you're in a lost decade, in a competition era, I get it. It might be a stupid valuation, and it might get cheaper at some point. But I don't know why you wouldn't just sneak a little of this under your pillow and just go to sleep on it for like 5 or 10 years. I'm kicking myself for not rolling those calls. I really am. Bitcoin. Palantir is big data surveillance. Yeah. 94,834. I'm so pleasantly surprised and happy we didn't panic and puke this trading position in Bitcoin. It ended up working out. It ended up working out. Good Lord. It's funny how there's almost no fanfare about being at or near 100,000 again. I remember when people were betting on whether or not it could get to like 69,420 by the end of the year, and that was going to be that. We're so immature, but like that was going to be a big deal. And now this thing could go from 75 to 100,000 and doesn't even print a single headline. Soul Train says no Bitcoin. I don't think that's going to work, bro. I think for a trade, I do think 95 is getting up there. And I think if you see a massive risk-off correlations to one marketplace, and I think the odds of that happening are elevated, I don't think Bitcoin holds up. But it's not. That's not the part that you buy Bitcoin for. You buy Bitcoin for the response to that. So if you get slow moving financial repression, which is I think best case scenario for the fiscal authorities and monetary authorities, you want to maintain volatility. So if you can keep this thing going down but at a slow pace, that's their best case scenario for both sides, I think. But if you get a correlation to one market, that means you've tripped something. That means the market is going to go find somebody's pain point. And that pain point means you need to trigger a response. And if that happens, the market goes and throws a temper tantrum until it gets what it wants. And what it wants could be, who knows? It could be yield curve control, could be lower interest rates, or just, I shouldn't say yield curve control, I should just say QE more broadly, or yield curve control. If that happens, man, Bitcoin is going to moon. And so the question is, are you willing to hold the asset through the volatility? So I would say on one end, for an investment, I'd probably be holding a little bit of this stuff. And I'm actually increasing the percentage of my net worth that's in Bitcoin. I'm getting aggressive with it. And I do think I'm going to get a better price at some point over the summer. I think I'll get a better price than 95. So from a trading perspective, I'm not super bulled up here at 95. I have still a little bit of long deltas on the trading side of things, but not much. Got a YOLO 3%. I don't get it. Doge plan involvement and a CEO with Einstein hair. I said this before, I'll say it again. I don't think enough people are talking about the disappointment of Doge. That thing was the most hyped government program I have ever seen. And if you're going to create that much media on that type of program, it probably should have netted more than $160 billion. And not all of that $160 billion has receipts. So bummed about that, you know? Mostly because I was one of these people that said, hold on. I felt there was way too many people jumping to conclusions about what they were going to do. There was too many people jumping to conclusions about what it was going to be and how much they were or were not going to cut. And I was like, hold on, let's see. Is it going to be 2 trillion? No. Is it going to be 1 trillion? Probably not. It's going to be maybe 300 billion to 800 billion. That's what my range was. To come in at 160 on year one, and you got to imagine, because people have told me this, they go, yeah, but it's only the first year. It's like, no, but in theory, the first year is where you get all your low-hanging fruit. If you can't find it in the first year, it's not going to get easier in year 2 or year 3 or year 4. So those numbers are going to go down, and they're going to go down significantly if they do anything at all in future years. So I don't see how you can look at, I mean, don't get me wrong, 160 billion is money we shouldn't be spending in some way, shape, or form. I haven't looked through all the cuts, so I don't want to just make that claim, but assuming that's $160 billion of things we shouldn't be spending our money on, and that's, I mean, it's something. I don't care if it was $5, but I think it's time to start having that conversation on whether or not it's a disappointment or not. And they didn't come anywhere close. And now we're sort of in this situation where you go, okay, you barely found any money. I don't say that. You didn't find anywhere close to the money you thought you were going to find. You thought you were going to try to get to $1 trillion in cuts, which would then help to offset the money that's going out of the door towards these tax cuts. And you also thought that these tariffs were going to bring in some additional revenue to help offset these tax cuts. But you didn't find anything in Doge. And there's a real question mark around what the revenue that these tariffs are going to drive. So we get left in the same situation. You go, how are you going to pay for this? And you get the same dumbass answer that we get every time. Well, the growth will pay for it. It's like, give me a effing break, man. Can you do that at your bank? Can you go show up at your bank and ask for a loan, and then they go, how are you going to pay for this? I guess this is kind of a bad example, but it's just like, no, it's not. It's not. What's going to happen is we're going to increase the deficit, and that's it. Money's value gets money gets devalued just a little bit from all of us, and that's how we pay for this thing. And we can't say that. That all gets wrapped up in this stupid slogan of a saying, growth will pay for it. All right. Return our Social Security lifetime contribution to invest for ourselves. We should, man. I'm in favor of that. I'm definitely in favor of that. They're going to reform it because really all it ends up being, it's a direct contribution for government spending. You know, we get these special bonds, the paper goes to the government, the money gets spent, and we just got a bunch of IOUs yielding nothing. I think the average yield on the instruments in the Social Security account is like between 2 and 3%. I think they were like 6 to 8% prior to ZIRP, and then we dropped interest rates to nothing, and then everyone forgot that the that the only thing funding Social Security are these pieces of paper, is yields, and when yields go to nothing, that whole portfolio is just going to get, the yield's going to go down to nothing. I'm so salty about that. That's one of the things that we don't talk about, that our monetary authorities explicitly pumped assets in order to recover from the great financial crisis, and not a single person in government or running the Social Security Administration ever thought maybe we should change the investment mix of the Social Security to be an asset owner in some way, shape, or form during this period of time. They all knew what they were trying to do. They were trying to make assets go up, and they were doing that by dropping interest rates down to zero. And almost everybody benefited from that. The only person who didn't benefit was the person who stayed in bonds the whole time. And guess who that was? All right, I'm done. Elon just cut that program, Victor. What? Social Security? No. That's the one thing I didn't like. It's like the amount of fear mongering that went on about Doge. It was insane. It was so insane. Like people just run with anything. It was clear you're not allowed to touch these areas of spending. You cannot touch Social Security. You cannot touch. Like he doesn't have the authority to touch those elements. Only Congress can do that. But that didn't stop. It didn't stop people from printing it, and it didn't stop people from posting it, and it didn't stop people from believing it. Elon Musk is going to cut our Social Security. Like, oh my God. All right, let's see if you got a couple more before we get out of here. Return our Social Security. I'm okay. The problem is you still need a solution for a safety net. Society still needs a safety net. So I hear what you're saying, Mark. But we still have a problem. Yeah, Ben. That's the other part. I'm terrified. Ben says the max Social Security monthly payment is like $1,900, equivalent to working 40 hours a week at $11.87 an hour. So you know you're lucky if you've got a retirement, maybe you've got a pension and you got Social Security, or maybe you got pension and Social Security, or you saved up some money, you got a retirement and Social Security. But if you're trying to make it work on Social Security, that's really rough. And I'm terrified. The thing I'm terrified most of is that we get ourselves in a difficult situation here, and they have to do the funny money game again, and all those people on fixed incomes right now that are just barely holding on. You're just will inflate those people into poverty, man. And we have such, I don't know, maybe I'm being too big of a worrier, But we have such a big problem. We have $80 billion in unfunded liabilities, and or $80 trillion, and we're just not talking about it. All right, that's going to do it for me here. Thanks for hanging around. I know we went a little bit everywhere today. I did way more stocks than usual. I don't know if it's appreciated or not, but I just think it's a big week. And I wanted to get more symbols up in front of people. The only one of the four, as I said before, of the Mag 7s that I am currently long is Microsoft. I believe that's true. I'm going to stay long Microsoft. And if we can get Meta to puke on a bunch of nervous Nellies on Snapchat results, then I'll look at scooping up some there. Probably through options, not long stock. That's going to do it for me here. Do me a favor, hit the like button, subscribe to the channel if you haven't already. Follow me on Twitter. I'm squawking a lot on there lately. At Victor Jones, the Owen Jones is 0 because I like to be difficult. I'm also working on something new on the side. So we'll talk about that more as it gets rolling here. But I will see you back here tomorrow. I believe Ilya is on. I'm not sure if we switched it or not. I believe Ilya is on tomorrow. And then we've got Chris Vecchio on Wednesday. Maybe I'll get a special guest on Thursday. There's a gentleman who is just on fire right now. And I'm going to see if I can invite him to be a guest on Thursday. So that's going to do it for me. I'll see you back here tomorrow, same time, same place, same great network, only on Tasty Live. Till then, peace.